good going on that. Let's get in Chandan Taparia this morning. Hi, Chandan. Good morning. Good to see you win. What's your trade on the Nifty?
Good morning, Nigel. Thanks for having me. So we have seen a decent run-up of more than 900 points in Nifty. It gave the breakout about 24,555 marks, which is a 61.8% retracement of the entire decline from 26,277 to 21,743 marks. So I believe that till Nifty holds about 24,555, ongoing momentum could continue and declines could be bought for the final target towards 25,200 to 25,500. So I'll continue to be with bullish stance. Market has seen the really strong bullish grip. The India VIX fell down by more than 15-20%. I believe VIX can go down below 16-17. So till it holds about 24,550, I believe buy on decline could continue in the Nifty index.
Okay, all right, gentlemen, we'll want to hear from you all in terms of, what are your stock picks as well. So request you to stay with us. We'll slip in a short break. We'll come back. We'll get you pre-open rates. We'll get, the picks from our technical experts. And also we have the Macquarie analyst as well as an industry expert to join in to weigh in on the pharma sector. Don't go anywhere.
Okay, welcome back. Sudarshan and Chandan are with us. Gentlemen, morning. Let's get the stock ideas going. Sudarshan, what do you have?
Well, I have Indigo as a buying. It's an all buy list. That's what we should be doing. Indigo is a buy to stop under 53.70. NBCC is another buying opportunity. Buy under 97 with a stop under 97. Wipro, which is coming out of a very long trading range, is looking interesting as a buying idea. Stop under 252. And finally, we'll take a chance and buy Sun Pharma. Yesterday, Sun Pharma had a big decline and then recovered all its losses. So let's see what happens. So Sun Pharma is a buy with a stop under 1655.
Okay, got that. Chandan, what about you?
So first, it will be buy on LTI Mindtree. We have seen a decent bottom out approach in most of the IT counter. And Nifty IT witnessed a rally of more than 3-4% during the day, led by short covering and support based buying. So LTI Mindtree will be the first trade. The stock has given a breakout from its rounding bottom on the weekly chart, a rough head and shoulder on the daily chart, which has bullish implication. It has given a consolidation breakout of last 45 days, holding well above 50-day exponential moving average. Short covering trigger is also visible, so that's why recommending to buy with support of 48.25 for an upside target towards 5100 zone. Second trading idea, that is buy on LNT. The stock started to form higher top, higher bottom on the weekly chart, surpasses falling supply trend line. Bullish bias is clearly visible, led by coal unwinding in the put writing position. So one can buy with support of 35.25 for an upside target towards 37.50 marks. Last trading idea, that is buy on SDFC Life. The stock has been moving upwards with the support of rising trend line, holding well above its key moving averages. On weekly chart, it has formed a narrow range price pattern, which clearly indicates that a small follow-up could lead to the fresh breakout. And stock has behavior of moving upwards and then consolidation and then fresh leg of rally. So expecting a run up towards 770, one can buy with support of 720 marks in SDFC Life.
Look at the rupee, which is coming through. Chandan, thank you very much for that. Sudarshan, thank you very much for that as well. 84.62 is where the currency is now opening at. And this is, of course, the dollar, which has seen a big bump. 85.37 was... why are we putting out Friday's close? Okay, rupee market was closed yesterday, beg your pardon. Forex market, actually lots of markets, Forex markets were closed yesterday. 85.37. So there's all that adjustment has to take place now. 84.62, which has happened, in terms of the significant announcement, so much stronger on the currency as compared to the dollar. Well, let's put the spotlight on the pharma space now. The Trump administration has ordered drug companies to voluntarily cut prices of their drugs or face regulatory actions. The aim here is to align US drug prices with peer countries. We discussed how this will impact Indian pharma. So this has been going on for the last 2 days. Pharma stocks sold off on Friday in the US. Last night, of course, there was an executive order which was signed. It looked like perhaps it's a little better than what was expectation. Some of the innovator companies in the US actually were slightly higher. We have Anaswamy Vaidish, former managing director at GSK Pharmaceuticals. Sir, good morning. Good to have you with us here. Prashant this side. Could you give us a sense on everything we've seen? Is this going to really impact Indian generic pharma companies? And I think at the heart of that question is the point that many have made, which is that there is very little room for Indian generic pharma prices to go south from here. Your sense, sir?
Good morning, Prashant. Thanks for having me. See, first and foremost, this particular issue came up even in April 2020, if I'm not mistaken. I think it went through the whole hoop, and then due to some legal condition, it got shelved again. Now, as far as this particular point that is being raised again, is focusing on the Part B of a Medicare spending, which is approximately, it's a medical insurance, so 310 billion. And to some extent, Part B, which is a prescription drug, which is 130 billion. Largely, they're all related to innovative drugs. Basically, the drugs which are in patent, like, for example, Keytrudas and weight loss drugs and all those, primarily the companies in U.S. companies. As far as the generic, the non-branded generics, the comparative pricing compared to the other OECD country versus U.S., it's not that significant. So I think, in fact, U.S. prices are relatively lesser, if I'm not mistaken. Some expert could do that. But based on my understanding, the non-branded generic prices are already lower. So frankly, in my opinion, for Indian companies, the people who are selling generic drugs, I'm not sure how it's going to have an impact. Of course, more detailed work needs to be done. Largely, it concerns the innovative drug companies. That's where I stand right now. Please go ahead.
Right. Mr. Vaidish, thank you very much for that, sir. I think it sets the context for our next guest who's now with us. Thank you for joining us, and we'll have you back on camera in greater detail. We have Kunal Dhamesha, Pharma and Healthcare Research Analyst at Macquarie Capital, also with us. Kunal, good morning. Prashant this side. You heard Mr. Vaidish there. Would you broadly agree with it that the fears around Indian pharma is unfounded? That's kind of the base case, although prices have been reacting here. I mean, Indian pharma generic companies, stock prices have been reacting. But generally, the base case, from what I understand, is that impact should not be all that great. So weigh in on that. And are there any risks? Are there any way that Indian generic companies can lose because of what has happened? Go on.
Sure. Good morning. So the way I would put it is the final executive order, which we saw yesterday evening from the US president, it's a much diluted version of what he had put out in September 2020, which, as Mr. Vaidish said, eventually faced legal challenges and was withdrawn by the Biden administration. But the yesterday's version was much more diluted in a way that, the focus is on patients who directly want to buy drugs from manufacturers. They will get the drugs at the most favored nation pricing, right? Versus that the earlier version was that the government will set top 50 drugs in Medicare Part D, Part B as a target segment. Versus that now the discussion has moved to the patients who actually directly want to buy. Now, if we look at this patient population segment, it's only 8% of the US population, which is currently not covered by any health insurance. And hence, those 8% people will only be using this channel to buy drugs at a lower prices. But the
Right.
other channel, the earlier version which had said Medicare or the government buying will get impacted, that is not there in this executive order, and hence this one is a much more benign executive order without having much impact on any of the companies, whether it's branded or generic company.
Kunal, hi, morning. I was going through your note, which interestingly points out that on average, I think US drug prices are 2 to 5 times higher than other comparative countries, right? Because they're saying we are comparing with other developed countries and seeing where prices are, and our prices should be as low as the lowest country. So a two-part question. There are Indian generic manufacturers. What happens to them? Because if the original drug price has to come down so much, then wouldn't the corresponding generic price also have to come down? And then there are the specialty product makers like Sun Pharma, and we saw the pressure on Sun stock yesterday. So what happens to them?
Yeah, so I'll take up Sun Pharma first because they have a direct branded exposure in US, and they have roughly around 20% of their revenue coming from this branded drug business, which is called specialty business. Now within that, everyone has their own estimate, but almost 80-90% of that revenue comes from US. The company doesn't disclose it. Now within that, the biggest product is Illumia, which in my view has some form of Medicare exposure, which is higher than the usual drug would have. And in that case, that is why, when the social post came in from the US president, the stock was down. But I think with looking at the exact details of the executive order, I think the stock will recover. The impact is much more benign. It's just for the 8% of population which doesn't have insurance. The pricing would remain same for anyone who is buying drugs through either commercial insurance or through Medicare or through Medicaid.
Kunal, this most favored nation, very simply, actually, it was mostly for me. Could you explain what is that channel? What you're talking about? I mean, just in the context of pharma, how would it work? Yeah, what's been done? Sorry, go on.
So most favored nation is a pricing framework, right? So in a Trump 1.0, they came up with a pricing framework saying that why are we paying higher prices versus the other developed countries? So let us benchmark that, and we will pay the lowest price that any other developed country with a similar GDP per capita is paying.
Sure.
Right. And at that point in time, the channel that they targeted was Medicare Part B, that this is where the top 50 drugs, we will kind of benchmark the prices of this drug, and we will lower the prices of these drugs in US using this framework or the benchmark pricing. Right. Now, what they are saying is there's no mention of Medicare or Medicaid, which are basically where the government of US is buyer, either the federal government or a state government. There is no mention of those channels. The only mention is that patient who wants to buy the drug directly from manufacturer, they will be able to buy at MFN pricing. Which would
this is important. You're saying the reason why this would not be a big blow is that as of now, there's no clarity that drugs being procured under Medicaid or Medicare, they will also have to come at these lower prices. That's a huge relief, right? Because that's the bulk purchasing of drugs by the US government. Just to complete the wheel here, the other part of my question was, so Sun Pharma, you're saying, is likely to recover. The other part of my question was that generic companies, now even for the population that is buying through the insurance channels or buying directly, not through Medicare or Medicaid, now, for those drugs, if the prices are going to be lowered dramatically, then their generic equivalents, won't there be pressure on the generic medicines?
No, generic, typically the first so I would say the generic prices would still be lower than any branded drug, even after the benchmarking, right? Because generic drugs, typically when the first generic enters into the US market, it enters at around 20 to 30% price discount to a branded alternative.
No, sorry, my bad. I didn't frame it properly. What I was trying to ask was that now the actual drug price itself is going to come down in a big way. Then why should someone look at generic? Will there be enough price differential? Will it not, quote, in some small way, kill the generics market?
No, so the average price decline that the executive order mentions is around 59%, right? So basically $100 drug would be available at 40. When we look at generic, when there are more than, let's say, 5 generics in the US market, the typical price discount would be 85%. So $100 drug would be available at $15. This is as per the US FDA data.
Got it.
Just last question. Kunal, we're running into market open. Your top ideas. I mean, just the names. I don't have time for explanation, but we'll love to have you back again. Go on.
Yeah, so I have coverage on hospital sector, CDMO sector, and pharmaceutical sector. Within these three, I'm preferring CDMO sector the most at the moment, given the entire China plus one tailwind. The loss of Wuxis of the world would be the gains of Indian CDMOs, and hence it would be the fastest growing sector, followed by pharmaceutical sector, where there are a lot of negatives which are already priced into the current stock prices. And then hospital, I remain cautious given a significant expansion coming over the next 3 years in the industry.
All right. Thank you very much, Kunal. It's a pleasure. Appreciate your time here on CNBC-TV18. And as I said, would love to have you back on for a more exhaustive discussion. But I think we got the gist of what the points that you're making, and very helpful, really. So keep an eye on the pharma space, stocks like Sun, etc., which Kunal really pointed out as a standalone name. Let's get the 9-10 calls out of the way. Sudarshan is here. Sudarshan, what do you have?
Wipro, consider buying Wipro with a stop under 252.
Wipro with a stop under 252. Thanks very much for that, Sudarshan. We'll speak again later. Nimesh is here with the standout brokerage notes. Nimesh.
Hi, Prashant. Actually, I'm highlighting a few reports which stood out for me today. Couple of names. The first one is Reliance. Citi has put out a note. They have a buy rating with a target price of 1585. And Citi sees a couple of near-term triggers for Reliance to outperform. So one of the reason is the O2C improvement, driven by higher refining margins. So that's going to be a big trigger for Reliance, at least in the near term. And the second is the YOY comparables in Q1 FY26 will look much better because of the weak, same quarter last year. So, and of course, the AGM would be an interesting thing to watch out for, because there is a lot of expectation that there could be some clarity with regards to the geo listing. So at least in the near term, Citi sees a couple of positive triggers to watch out for, and that could lead to an outperformance in Reliance stock. So that's the first interesting report to watch out for. The second one is CLSA on Tech Mahindra. Today they have upgraded the stock to high conviction outperform, and they've written a target price of 1976. So a potential further upside on Tech Mahindra. CLSA believes that the company's vision of a 3-year plan, turnaround plan, seems to be adhered to in FY25, and they expect that the targets been set for FY27 is quite achievable. So that's the reason why they've upgraded Tech Mahindra to high conviction outperform. And the last is on IFL Finance. HSBC has today upgraded the stock to a buy, and they've sharply raised the target price to 550 now from 380 earlier. And they believe that lower interest cost, a bit of improvement or recovery in the MFI business, and lower cost of funds will mean that there could be an EPS upgrade for IFL Finance. So there is an upgrade from HSBC on IFL as well.
All right, no, absolutely. We'll keep an eye on all these names. Nimesh, thanks very much. Right on cue, market opening. It's a flat start, right? I mean, it's not a 100-point lower start. It's a flat start. And I think the GIFT Nifty had calibrated that by the time we ended. So 8 points lower on the Nifty. The Sensex is down a little bit. Maybe, nothing actually. It's flattish. The broader market is starting much better. Midcap index is up about 0.2%. I think the small cap index is also higher. It should come up. And, Sun, I can spot. Actually, Pharma is a pack. Sun is up 4%. So it's basically reversed. Yesterday is 4%. By 3:30, there was a 4% cut. Intraday was down a lot more. But it's recovering the closing losses from yesterday. It's a good start. It's not a bad start at all. Remember, yesterday you had a 3.5% pop on the Nifty. So after that, to start with an 18-20 point bump up is not bad at all. The Nifty heat map, 20 odd names lower, but the bulk of it is starting up in the green, and I see a lot of pharma up there as part of it. Surabhi.
Okay, let's quickly get to individual stocks and then see what's moving and what's working here on the Nifty. On the upside, Sun Pharma, the stock that we were just discussing, and very nicely explained by the Macquarie analyst Kunal there, that they're a specialty products company. Branded generics is not so much their domain. And for specialty makers, the product makers shouldn't be too much of a concern. Apart from Sun, Tech Mahindra, IndusInd Bank, BEL, these are some of the gainers. Actually, most of pharma is recovering, even Dr. Reddy's, Cipla. The explanation is simple. The order right now is not hitting the drugs that are purchased under Medicare and Medicaid. So therefore, Indian pharma companies, perhaps for now, don't have much to worry. Okay, beyond this, Reliance, Lever, these are some of the larger names that are seeing some buying traction. On the upside, Tata Motors up about 0.5%. That's the gainers list. On the losing side, Hindalco is down about 1%. Infosys, Wipro, HCL Tech is cooling off after yesterday's mega rush, as is a name like Eternal. Eternal also had a very good day yesterday. So that's slightly lower. Let's just check on Tata Steel after numbers. Very flat. Numbers were in line. Stock is flat for the time being. Nigel.
Well, let's focus on a couple of big volume movers. KFin, I think there was that block trade that needed to take place. So that stock is down 6.5%. Paytm as well down closer around 3.5%. Paytm actually has come off the lows of the day. Swiggy, after seeing a big rally, that's come in for a sharp cut. It's down closer around 6% as we speak. UPL came out with its set of numbers yesterday, and in fact, it appears it's coming for some profit taking. It's down closer around 3.5%. What's doing well? JM Financial up close to around 8.5%. Big up move is what we're seeing out there. IFL Finance up 4.5%. Sun Farm, I think you've already spotted, so that stock is up. RBL Bank, well, that's the other big mover in today's trading session on high volumes as well. So the breadth of the market is firmly in favor of the number of stocks advancing. You like that. A few more stocks actually that are coming on your radar. Care, that's up closer around 6%. Big up move is what we're seeing, closer around 1 lakh shares traded out there. Ventive Hospitality, well, that's up closer around 5%. So good move is what we're seeing. Senco, well, the stock is in a 5% band, but that as well has opened up well in the green. So good going out there. The Nifty, though, now is down closer around 45 points or thereabouts. The breadth of the market is something that's now narrowing a little bit. From around 1,700 stocks advancing, it's come down to around 1,380. Par for the course, one would have to say.
Absolutely. And it's 24,870-ish or so. Just to, if you can pull up Swiggy, our colleague Shilpa yesterday reported that Zepto is seeing another round of fundraise, another round of large fundraise. So that's an unlisted competitor. But Zepto, of course, is the player which has been keeping the heat in terms of what the listed players and everyone can do in terms of prices. And so will we see another round by well-funded Zepto now with more money in the bank in terms of pricing strategies, etc. So Swiggy is the one which is down 7. Eternal, Eternal is down about 1%, but that's not down sharply. So there is that. What else? JM Financial is up 9%. JM Financial is the third largest volume-led gainer right now. It never shows up in the top 10, top 15 gainers list with this kind of volume. 4 million shares, by the way, on JM Financial coming through.
This is result reaction. Results, and especially the bottom line look quite good.
IIFL, Nimesh was talking about. IIFL is back above 400. I think after a while, should be after a while, but it is. And there's that HSBC upgrade, which Nimesh pointed out, is the second largest volume-led gainer. And of course, Sun remains at number 1 in terms of volume-led gains. Zentech is up 2%. Zentech 50 back above 1,500 now. 2 days, 10% gains on this one. And there is a lot of pharma stocks which are moving around. And I think the Nifty Pharma should be able to quickly give you a sense of how much interest there is. Oro and etc. So they're all doing pretty well. On the downside with volumes, there is the block stocks, which is K-Fintech, Paytm, etc. Swiggy, I think we've already mentioned. UPL is down. Some of these chemical names, right? So UPL is down 3.5%, and it's got volumes on it, by the way. So keep an eye on this one. The other one is SRF. SRF is down about 2.5%. Both have got decent volumes for this point in the day. So again, something to keep note of, keep track of. At this stage.
Just one more thing on on Swiggy. In December, the stock hit a high of 617.
Yeah.
So from the peak, it's actually halved after seeing such a big run. And last week, actually, there were a particular number of shares that got free for trading as well. So the lock-in period has ended. So I think that's what's weighing on the stock, down closer on 7%, 617 to sub 300 rupees. Difficult times.
Yeah, absolutely. Even some of the guys who got in the pre-IPO round, etc.
325.
I think there would be pressure there now. Well, let's welcome in Shreyas Devalkar, who's with us now, head of equity at Axis Mutual Fund. Shreyas, good morning. Good to have you with us here. Thanks for your time. As a local money manager, Shreyas, what is your sense and what is your team's sense on what markets are likely to do from here? How much does the cloud of US-China full-blown trade war lifting a little bit, clearing a little bit, help equities, help us get a bit of a lift? So let's just start with that and then we'll get into what you like, don't like, etc. Go on.
Sure. So
there are two, three things happening actually around. One is obviously the de-escalation of conflict between India and Pakistan. And that is obviously one of the key measure, and because of which obviously the market has also gone up in last few days. Especially on your question of your China and the negotiations there. So with US-China agreement to reduce tariff almost for now 90 days, and that reciprocal tariffs are now the history. So with that, the focus at least will shift to how the global growth will shape up. So the uncertainty in decision, which was actually hurting most of the sectors, most of the global capex cycle and global growth cycle, with this they coming to a conclusion probably over the next 90 days, that indecision will go away. And in our opinion, generally the drag on the global growth, which has been there around 0.5, 0.3% of that may come off. So that is a really good news. So that is first time thing to start with, and whatever exporting companies out of India, that will be a positive way. That is the end clients will start taking decisions as such. Now the next step of will start with what are the real benefits to us with this China plus one trade, which companies will shift here, which companies are actually trying to set up plants in US. There are some companies which are talking about setting up plant in US. There are some companies, global companies, which are coming in India and setting up plant in India on the China plus one policy. So these two are the key thought processes for us, and we are tracking and getting into more details of all our investing company and the universe as to what exactly will shape up there. And that will chart a part of portfolio in a way forward, because the easy trade, which is, yes, the overhang on global growth is behind, or is going to be behind, if not today, but in 3 to 6 months, that probably is already in price. That what you are seeing, the sharp move in IT, etc., in last in yesterday's move especially.
Shreyas, hi. Thank you for joining us this morning. So let's talk about the pockets of the market that you like the most, given that things are still in a phase of transition, so to speak. Purely from an earnings and valuation perspective, earnings growth, that is, potential earning growth and valuations, where do you see maximum comfort?
To that, actually, when it comes to growth, if you look at the broader growth numbers are not as exciting. Obviously, for India, for some time now, it's the macro which is good, has helped a lot. In that macro, especially the currency, the forex reserve, fiscal deficit, and especially the liquidity which is being infused at various point in time by RBI. That is also helping a lot. And in all this context of all these things, one need to also look at the volume growth numbers. And when you look at that, and if you go by especially the recent result season, and if you go sector by sector, then there is not much positivity on as far as the volume growths are concerned. So if you just start talking about, say, auto growth. Now in auto, the volume growth is subdued. Even now in staples, it remains subdued, barring one company, or only the positive I would call out is there is no further deterioration. So that is definitely a positive. But otherwise, the growth numbers, if you take even the credit growth numbers and the deposit growth numbers, it has not deteriorated, but absolutely these numbers are not, as of now, good. So in this context of good macro and not so good bottom-up growth numbers in various key sectors of investment. Obviously, in mid and small cap, there are always some bottom-up stocks, but in the key sectors of economy, the growth numbers not being good, there goes back, the viewpoint goes back to the risk-reward framework on the relative valuation basis. And in that, now more and more. So probably last 6 months ago, we also took that call, yes, because banking as a sector has underperformed over last 6 years, and that's where the valuations are good, and then it should be the at forefront. In my opinion, now such calls will be at back burner, and you need to really get into the details of the individual sectors and companies. Now, just based on good liquidity, the entire sector, banking sector doing well, may or may not be the right thing from here on, because there also that somewhat the catch up has already happened, and the valuations are in the context of relatively slower growth. So we are really focusing on individual stock across sectors. It may be in pharma. Pharma also has shown some correction. It may be in IT. It is in banking and lenders, especially. Lender space also looks good. But there is no particular bias towards a sector per se now.
Okay, all right. Hi, Shreyas. Good morning and good to see you in. I wanted your take on Indian hotels, the travel and tourism space. I think that was one of the stocks that you had in your portfolio. Aviation as well as travel and tourism stocks came in for some profit taking, but now the world is a better place to live in, because the border tensions have cooled off as well. And it appears geopolitical tensions on the whole are cooling off. How would you approach this theme, keeping in mind that some of these stocks have already had a very, very good run?
Right. So as far as travel and tourism as a sector is concerned, that sector has started doing well over the last 2-3 years. It's not actually today's story. And that's where obviously it is in price. But point is that whenever any stock, particularly, and not only in this sector, it can be retail or it can be in any other sector, whenever it is a high valuation, we give importance to certain other aspects of the industry structure per se. The aspect of industry structures are how is the market share, how the market share is growing, how whether there is a monopoly, duopoly kind of situation. Because if market structure is in your favor, then the business cycles you can bear with. One can trim the position somewhere here and there, which is okay based on the small short term because of maybe the war-like situation, and it could have been there could have been some impact on the earnings of some of these names, but over a period of time, if the market shares are growing and companies are showing that and the industry structure is evolving in their favor, I think that is the key criteria for long-term investment. While near-term and short-term calls one may take based on the near-term numbers.
Okay, all right. No, absolutely. And I think, some of this stuff really interesting and good to track. By the way, Shreyas, the market has taken a bit of a dip, and maybe I can just quickly mention it. 160 points down now. So we're at the, I should say, 15-minute low, because that's how long we've been trading. That's it. Yeah, I mean, market breadth, 1450 stocks are higher and about 900 stocks are lower at this point in time. But there are some new additions as well. Top of the volume board, Redington was not there. Redington is up about 6%. Stocks at about 276 right now. There is Sagility, which I saw right at start. It had gains, but it's got large volumes on it now as well. Sagility is up about 5%. Birla Corp, we'll have the management with us in just a bit. 6% gains there, 1350 or so. There is India Glycols, there is EPAC Durables. Godfrey Phillips is up about 3.5-4%, decent sized volumes. There is KPI Green, which is up about 3% or so. So this is a pretty decent looking screen, in terms of broader markets and broader stocks, even as the Nifty is down a little bit. By a little bit, I mean about 0.75% or so. So that's the picture which is emerging for now. On the downside as well, there are names and there are volumes as well. So it's not, it's a well-traded session right out of the gates for now. Surabhi.
Yeah. So from the peak of yesterday, we've given off about 200 odd points. Let's see. Nifty is lower. Midcap still seeing individual level buying. Shreyas, thank you very much for being with us and taking us through the market opening and your perspective today. Really appreciated. Let's move on to our next corporate conversation. And Ather Energy is the next company on our radar. Ather, of course, started its listed market journey very, very recently. The numbers for the fourth quarter are steady. In fact, the losses have been narrowing. The loss has come down to 234 crore rupees. The revenue is up by 29% and volumes have also been looking strong. To talk about the trends going forward, we have with us Tarun Mehta, co-founder and CEO and executive director at the company. Tarun, great to have you on. Thanks very much. I'm just recapping the full year numbers as well for our viewers to have the perspective, because even at a full year basis, I mean, the performance has improved. The losses have come down. The losses are down to about, I think, 800 odd crores for the full year versus over 1,000 crores in the previous year, FY24. So what's the trajectory ahead, Tarun? Tell us, I mean, these break-even timelines, obviously people are watching carefully, but it's also a very competitive market when it comes to EVs, right? There's a hot competition. There are incumbents who've started an EV portfolio. Then there are, your immediate rivals like Ola. So just take us through what this year looks like for you and how are you moving on the break-even trajectory?
Right. Thank you for having me here. So fourth quarter was an important quarter for us. Overall, FY25 was a pretty pivotal year for us. Our portfolio expanded quite significantly with the introduction of our family scooter Rista. And that's made a pretty massive contribution to our business. It's now accounting for the majority of our sales already. On the back of that, while revenue grew 29%, units sold actually went up almost 42% for the year. So a pretty important year overall. What really worked out well for us is the way we positioned our product, the overall premium positioning, and our ability to sell software on top of the vehicle. Both of these contributed really favorably. Our gross margins, adjusted gross margins, were up almost 1,000 bips. So they almost doubled from 9% to 19% in this financial year. And that doubling of gross margin has contributed quite immensely to the narrowing of losses.
So can you tell us about the future trajectory as well? I mean, at the PAT level, the net level, and also at the EBITDA level, when do you see black? And also in the quarter gone by, there was an increase in your expenses. Not sure what led to that, whether that was one-off. There was almost a 48% jump in expenses. So just going back to the same question on profitability, tell us more.
Right. Expenses compared to the same quarter last year would have gone up, but that was more than offset by the increase in gross margins earned. So as the business scale is increasing and as we're expanding pan-India, some of the expenses are bound to go up, but they're going up significantly slower compared to the scale of revenue and margin growth. And I think both are very crucial to watch for us. So as this happens, there is a narrowing of EBITDA and PAT losses. In our case also, the journey from EBITDA to PAT is not very high because we are a relatively more CapEx lighter business. What's ahead for us? Gross margin trend, very favorable. There is a transition to lithium iron phosphate LFP battery packs that's underway as we speak. And there is a transition to a lower cost scooter platform, the EL scooter platform that we've already guided for in the coming time. Both of these will help immensely for our cost structures. Also remember, our margins are without PLI and the overall subsidy support has come down quite a lot. So in some sense, these margins are now fairly resilient, unlike in the previous years.
Okay. Got it. Tarun, I will come back to questions on when you go into black. In a bit, good morning, Prashant here. Could you give us a sense when you said, you started by saying you focus on the premium end, but now you're going into sort of, slightly more, not at the lower end, but more affordable scooters as well. Could you define in the EV space and scooters, what is how do you define premium? What is affordable? What percentage of the how will this move going forward? Just some sense.
Yeah. So, see, the overall two-wheeler trajectory has been that of premiumization. If you see our scooter industry, the share of 125cc scooters has been rising steadily. They've gone from 19-20% of our industry to almost 50% of our industry in the last few years. And that's the wave that we are trying to ride. So early on, and we started at one end and we are moving more and more mainstream. Early on, let's say a few years back, our products were priced, the lowest products were in the 1.4, 1.5 lakh rupee range. About a year and a half, 2 years ago, they came down to about 1.3 lakhs. Last year with Atherista, they came down to 1.1 lakh rupees. So we've come pretty close to the 1 lakh rupee barrier. We're not right now looking at going meaningfully below that barrier because we believe that does not augur well for profitability, nor is the customer headed there. Overall, in our industry, I would say the premium end is basically 1 lakh plus. And the ultra end of this is 1.4, 1.5 lakh plus.
Yeah, okay. What, so then the question is simply this: how many more scooters will you sell in FY26 as compared to FY25 in terms of volumes? If you can give us a number, and will you, what needs to change? Because, there's a long runway for adoption. EVs are the future. I mean, I think all that is well understood, but you need like a aha moment for it to really pick up in a big way, right? Not just for you, but for the industry. And what will that be? You're saying you don't want to go down much below that 1 lakh price barrier. You're close to it now. What will that be? But start with the volume question, Tarun, if you will.
So honestly, we are in the midst of what I believe is the fastest growing category anyways. Even the sub 1 lakh rupee category saw a lot of volume spike last year, but you will see in the last few quarters, most people are trying to move away from it because profitability there remains extremely, extremely weak. And the large Indian consumers anyways migrating upwards. So that's a 110 to 125cc transition. I believe the majority of our industry will be more than a lakh, is probably already more than a lakh. We'll wait for formal industry numbers in the next few months. We grew 42% in FY25. And remember that happened with Ather.
Tarun, the reason, the context is two-wheeler sales, even ICE, right? I mean, they're struggling. If you look at overall industry, I mean, just look at last month's sales of players like Hero, etc. I mean, they're sharply lower. So while, yes, I mean, the premium, and then you get to, one step away, EV scooter. So hence the question. Go on, Tarun.
Yeah, no, actually, EV is all about cannibalizing ICE first. So EV is on a EV is actually the real growth area in ICE anyways. So while the two-wheeler industry grows at its own pace, EV is going to see a growth many times higher. And that's what it is seeing even now. Premium remains the fastest place to grow in. For us, we believe FY26 will be a higher growth year than FY25, fundamentally because our distribution is growing in this year. Last year, in December, we had 260 stores. We've added 80 stores in Q4. And we believe that pace can continue for the next few quarters because our peers are already hovering around 700-800 stores. So the big upside for us, almost uniquely this year, is that of distribution that we can now play on because we got the right products. So we are extremely bullish on distribution-driven growth in FY26 because it's the lever that we haven't exercised yet.
Hi, Tarun. Good morning. I count myself lucky this morning. And I'll tell you why. I'm getting to speak to you thrice in the last 1 month. So I'm going to push you for a couple of numbers this time around, Tarun. As you said, you grew phenomenally last year, 42% growth in terms of volumes. But your market share still held at around 11.4%. That's more or less stable on a year-on-year basis. Given the tailwinds that you're talking about, and given that you're saying that volumes are going to spurt even this year, what is the targeted market share? In the past, you've told us that in South, you're doing quite well. In Gujarat, that market, in fact, your market share had gone up as well. Yeah. For on the whole, from this 11.5%, where do you intend to head to end the year at? Please go ahead.
So you must see the trajectory. While the full year volume came out at 11.4, we began year at about 7.4, and we ended the year at about 13.3 with a consistent growth for all quarters. And that's the trajectory that we're excited about. In fact, if you see the month of April, the Vahan data will show you that we were at about 14.4% market share, plus Telangana, so almost 14.8% market share. There's a continuous upward swing in market share. A lot of it is distribution-led, and that's not stopping anytime soon. What's the rightful market share for us? So I'm looking at markets where Ather has been able to crack meaningful distribution and good brand equity. That's the South Indian markets where we've gone from about 13% market share to now about 20 to 23% market share in Q4. Okay. Or it's even Western markets like Gujarat, where we've gone from 4.9% market share to almost 20% plus market share.
Tarun, you have told me this before. From 11.5%, you'll be satisfied if you end the year at around 15%. Can we take that number on board? Or more than that, since you've already, in the last quarter, as you said, I think you're at 13% ballpark. Actually, you should be more than that, right? Or where do you intend to year? Give us a range. It's fine.
I believe where South India and Gujarat is, that's the right near-term target for our business. So roughly about 20% is the near-term target for our business. Let's get there. And we're going to win market by market. South, okay. Then West, and now Central India. So Gujarat, Maharashtra, MP, Orissa, these are the big markets for us. And this is where we want to replicate the Gujarat and South India success and get to over 20% plus market share in the near term.
Okay, all right, Arun, we'll leave it on that note. Many thanks for joining in and good luck with all of those plans. Thanks for taking up all the questions today. Market's down about 0.5% on the Nifty. So it was almost a 180-point cut, but then now it's stabilized to about a 130-point cut on the Nifty. So not too bad. And mid-caps actually are seeing a fair amount of green at this point. So looking quite okay. A little bit of a pullback after yesterday's big move.
Absolutely. And the breadth of the market is still positive. And one stock that's really caught everyone's attention in the last couple of days is Birla Corp because they delivered solid numbers. EBITDA per ton coming at the highest we've seen in 18 quarters. To find out more about the way ahead, we're joined by Mr. Aditya Sarogi, the Chief Financial Officer at the company. Hi, Mr. Sarogi. Good morning and thanks a lot for joining in here on CNBC-TV18. First of all, congratulations. The last many quarters I've been saying, Mr. Sarogi, when will things improve? This time around, it's going to be more about sustaining this kind of improvement. Now, on a base of around 18.1 million tons first, tell us for FY26, what kind of volume growth can you deliver? And also weigh in on demand. Is it as strong as expected?
Thank you, Nigel, for having me on the show. In terms of volumes, in this year we expect the industry to grow between 6 to 8%, and I think we should also clock in that kind of a number, if not more. So that will translate into volume in terms of specific number. It will translate to anything between 19 to 19.5 million in the next financial year. And as regards demand, although it has come off from what we saw in March, but if you see on the year-on-year basis, definitely there's a healthy improvement.
Got it. Okay. All right. What about incentives for, I think the last year it was around 103 crores. For FY26, what kind of a number should we work with?
This year also it should be around those numbers only. Next year with the Kundanganj line 3 coming into operation full-fledgedly, it should improve definitely.
All right. So it'll be ballpark per 100 crores odd, right?
Yeah.
Okay. Now, you've specifically mentioned that realization improvement of around 7% on sequential basis is because you have exposure to North as well as East India. Right. What is your current sales mix? Because, your key focus used to be Central India. So break it up for us. Central, North, East, what is the current mix?
See, before I give you the mix, let me tell you, across the board, there was an improvement in the sale prices, although it was slightly more prominent in North and East. So even Central and West, we did see price improvement. So it's not that it was specific to only North and East.
Okay.
Now, coming to the split broadly, we are about 50% in Central, 18-19% in North, 18-19% in East, and about 13% in West.
Got it. All right. Now tell us about realization, sir. You have given us a broad split about your sales mix. How is realizations today on a blended basis? If I compare it with Q4, is it higher?
It is at similar level on a blended basis.
Okay, what does this mean then in terms of EBITDA per ton? You have clocked more than 1,000 rupees per ton. And I have to give you credit for that. I recall when you all didn't deliver a good quarter, you said you'll end the year close to around 18 million tons. And you guided that the EBITDA per ton will improve. But I don't think anyone was factoring in this sort of a number of more than 1,000 rupees. What is the range we should work with? Volumes will be there, so you'll get operating leverage. Realizations are more or less stable. And you have input costs that will cool off with, you're changing your fuel mix and various other measures at your end. EBITDA per ton guidance, broadband?
I think, Nigel, you are bang on in terms of all the factors that you highlighted. And on top of all of this, we have got some efficiency improvement measures also, which has yielded us about 150 rupees per ton over the last couple of years. And that is continuing and that will continue to give us benefit. So definitely in terms of EBITDA per ton, the margins, we are expecting a healthy improvement over the last financial year, although we are not putting a specific number to it.
You can be in this vicinity of Q4, maybe minus 100?
No, that is not possible, Nigel, because you will appreciate Q4 is
got the incentive.
Cyclical industry. No, incentive is accrued every quarter. Although it was marginally higher at 41 crores compared to the run rate of 26 crores on a quarterly basis. So that's not a significant increase. It's more to do with the cyclical nature of the industry. Q4 is typically the best quarter of the year. So you can't just extrapolate it to the remaining part of the year.
Okay, so 850 to 900 rupees per ton is doable.
I'm sorry, I cannot give you a number.
Okay, you give me another number then for Mukutban. You know, you're going at a run rate, quarter four at least you did close to around 750,000. For the year, you did around 2.5 million tons. Now, don't disappoint us on this. What was the EBITDA per ton in Mukutban, sir?
Nigel, I'll tell you, instead of giving a specific number, I'll tell you with the incentives coming in, it is in fact better than some of the other units that we have, IUs we have.
Okay, all right. It's a little bit better. You know, that used to be the drag when it just got commissioned.
Yeah,
But as you're saying,
yeah.
it's turned around and now, in fact, it's a booster. Final couple of questions before we let you go. Net debt in the books, it's come down. That was the cherry on the cake. What is the absolute net debt number we should work with? Because you have got 1,000 crores of capex on, you know, that's will be spent this year. So what do you end this year with in terms of net debt? And the last time around, I was, you know, quizzing you whether you have some asset monetization, some non-core assets. Any such asset will get monetized in this year, which could help you keep the debt number under check?
In terms of debt, we should probably close at a number around 3,000 crores. But in terms of debt to EBITDA, definitely we expect it to be less than 2. And that is the more relevant number insofar as Beda Corp is concerned. Because when the company is growing, you should see the debt in the context of the EBITDA that we are earning. And that is a number we track internally. In regard to the non-core assets, yeah, we do have some non-core investments which probably will be north of 600 crores. But we don't have any plans to sell them. They have been giving us good returns. So unless it is really required for business purpose, we don't intend to dispose them off as yet.
Okay, all right, Mr. Sorogi, appreciate you joining in. Congratulations on a solid quarter. You're guiding for pretty okay times going ahead as well. We look forward to chatting up with you as the year progresses.
Thank you.
For the time being, we slip in a short break. You come back, we'll get chatting with the management of Happiest Minds Technologies. Don't go anywhere.
Welcome back. We're staying with a lot of the corporate conversations coming out of the Q4 earnings season, and Happiest Minds reported a sluggish set of numbers for the quarter gone by. Wage hikes for senior level employees impacted margins. Our colleague Mangalam caught up with the company's management and started off by asking about the areas that the company will be focusing on over the next couple of quarters, specifically after the trade deal between the US and China.
I think that was positive because there was quite a bit of uncertainty which was holding customers, especially in the manufacturing, industrial, and maybe even in the healthcare space. So that was a real, positive news over the weekend. As you know, in a month and a half back, when we had our press conference, we had guided that we would do double-digit growth, and that was based on some of the transformations that we had initiated. So this gives a little bit more impetus to what we had guided. We are seeing traction in a couple of verticals, BFSI and healthcare and life sciences. As you see, the contribution from Pure Software and Aureus, both in terms of revenue and capabilities, has helped BFSI become our largest vertical and show good quarter-on-quarter growth. Healthcare and life science, again, as we announced in our press release, we're able to close 2 SOWs, cumulatively $20 million for this year, and hopefully will give us close to that revenue next quarter as well. We expect these two verticals to drive our growth, and we also are expecting manufacturing and industrial to start showing growth with the deal that's been signed with China.
All right, Venkat, your thoughts. You couldn't meet the FY25 guidance earlier. Now, what is your target for FY26 when it comes to revenues and margins?
So as far as FY25 is concerned, we had talked about 28 to 30% forecast as far as revenues in constant currency was concerned. We are at about 26%. Yes, you said that right. We have maybe a couple of percentage points below. We had already, updated markets and the media about that. As far as margins are concerned, we had said 20 to 22%. FY25, we have ended with 21.4%, well in line with that, guidance that I had given. Adjusted for that one unfortunate bad debt that we had to take in this quarter, our adjusted EBITDA would have been close to 22%. So the upper end of the guidance bracket that I'd given you. So in terms of profit, we are on course. We could do better. We should do better. But these profits are adjusted for the investments that we have made into GBS, the GBS business and the new sales business unit, that sales team that we have put in place, both of which should pull in and start contributing big time in FY26. As far as forecast for the next year is concerned, on the revenue side, yes, we are holding on to a double-digit growth. And as far as profitability is concerned, again, 20 to 22% of EBITDA is a number that we are looking at right now, and would like to try coming in within that, but also try to improve on that front.
Double-digit is a wide range. If you could specify some of the ranges that you're looking at in terms of revenue forecast, and if you could break that down into how much are you looking at it coming in organically, how much of that on account of the investments that you've made in GBS and the acquisitions that you've made earlier as well?
Look at it, we don't specify by the company and the growth because, the acquisitions were completed in the first quarter of last year. So as we go into the next year, we are going as an entire company, Happiest Minds, integrated. Aureus is very well integrated. Pure Software is integrated at the business front. SMI, which was acquired a couple of years back, is fully integrated. So we are going as an integrated whole for the next year. So it's a full force number that I'm talking about as far as revenues are concerned. In terms of GBS, today their revenue contribution is about 2% of our revenue. So if you take our numbers to be about $250 million, that's coming to about $4.7 to $5 million in terms of direct and influence revenue. We would like that to go up to 25 million over the next couple of years. That's our target because, most of the projects that we do has an impact or an element of GBS weaved into it. On the margins, it's at the company level. Last year when I made the guidance was also the company level. We continue to hold at on the same basis.
All right, we take that point. What about utilization? I remember, Joseph, the last time we spoke, you said that utilization increasing is one of the big levers of growth for the company. Where does that number stand, and do you have a target for FY26?
Yeah, so if you look at the utilization, it did tick slightly lower, and that was primarily because of that customer that we had to stop working, where we had the bad debt and which impacted our profitability for the quarter. We stopped work. We had ramped up in Q2 and Q3. It was almost at $1.5 million per quarter. So as you can understand, it was a significant ramp down, and that impacted our utilization. We've been launching quite a few initiatives to push this number up. Part of it is also looking at our internal people as we do our performance evaluation. And that's the reason you've seen a little bit of a tick up in attrition, going up to 16.8% from 15.3%. We expect that in Q1, we will get the utilization moving back towards maybe 80 or so percent. We're comfortable with 80%, and that will be one of the levers for improvement in margins.
All right, the attrition is high, but at the same time, there were wage hikes in the fourth quarter that impacted the margins as well. So if you could give us a sense on what the wage hike target for next year is largely, would it be inflation-led, a little more than that, revenue-led? How do you calculate that?
We would like to take that as it comes, Mangalam, because right now we have planned for something which is in line with what we see from the industry. Compensation as practice is more market linked. We have to see what the others are doing in the market. because we have to attract people from there, and we lose people to the other industry participants. So it's largely market led. Right now, we have planned on that basis.
All right, and final question. What is your current revenue contribution coming in from BFSI? You had called out looking to increase that structurally. What's your target?
So I think the current contribution that we have, around 26%, is optimal. My hope is, our expectation is that we continue growing BFSI, but others will grow at the same pace or a little faster. What we are seeing out in the market is that the BFSI segment, along with healthcare, probably is showing the more best traction and green shoots. And this is reflected in the quarter-on-quarter as well as year-on-year growth that we've shown in BFSI, even though quite a bit of it has come from the acquisitions that we made of Pure Software and Aureus. But we feel quite positive about both of these segments.
Venkat, let me try this once again before we leave. Double-digit revenue growth implies what? 10 to 12%, low teens, mid-teens? How should we look at it?
No, I would like to hold it with double digit as of this point, Mangalam. Would like to, revisit that as we come closer, because while we do make plans and we are quite upbeat, given the order pipeline and seeing the, numbers flowing in, you don't know that all of these skirmishes that we're seeing across in various parts of the world, the trade patterns and the disputes that you see on the business front, it all has an impact. And, at a company of our size, it can mean a percentage, 2-3% here and there, because we're working across a spectrum of industries. So I would like to hold it at double digit right now. Maybe we'll come back with better numbers for you in the later half of the year.
Okay, that was Mangalam's conversation with Happiest Minds. Stocks down about 2.5% right now. The market also is kind of, keeping a little easy this morning, still about 200 lower on the Nifty. That's what we have. I'm just checking where the correction is coming. And actually, Happiest Minds is not the only IT company which is seeing a little bit of red today. In general, and that was the best performing sector yesterday. Remember, the Nifty IT had surged about 7%. So that is a sector that's giving off this morning. So it's across the board. Infosys, HCL Tech, you've got Wipro, TCS. Most of these names are on the weaker side. But the other big watch point for the market is going to be banking. Right now, the bank Nifty is lower by about 0.5%. And a lot of the bigger names, HDFC Bank, ICICI Bank, they're all looking at a little bit of pressure, about 1 to 1.5%. So let's see. IT and banks both on the back foot, at least for the time being. And the pressure on internal is now beginning to show up. Remember, we were talking about Swiggy, where the 6-month shareholder lock-in period has ended. And it seems that there's someone out there who's probably come and decided to put the stock in the market. So 6% down on that stock. Eternal also is now looking at some pain. Eternal rallied very hard along with the rest of the market yesterday. But right now, there's profit taking about 3% lower there as well. Just very quickly checking what's the counterweight to all of this. And it's really pharma. So to that extent, we don't have too many big heavy hitters for the large cap bulls right now. It's only pharma that's seeing a relief move, because it's become clear now with all our conversations as well that this executive order on lower drug prices in the US is not going to be too punitive for Indian pharma companies. So that's your green island today in the market. It's pharma all the way. And do watch for BEL. Actually, let's pull up some of the other defense stocks maybe as we do this, because BEL has shot up. Big move on BEL, almost 4% higher. Let's get the intraday chart. There's a 4% up move. Maybe we can get a Hindustan Aeronautics, the usual. Your Garden Reach and Cochin Shipyard. Let's see if it's a sector-wide move. Seems to be. And the others will come up as well. So it seems defense continues to be very much in favor with investors.
Okay, just a couple of other things, right, before we sort of slip into a break. By the way, 1,700 stocks are still higher if you can put up the advanced decline ratio up. And you got about 700 stocks which are lower. So this is the Nifty down 200, but market breadth is 2 plus in favor of advances as compared to declines, and it's good going. Tanla Solutions. I mean, actually, you've got a fairly new bunch of names occupying the leaderboard in terms of volume-led gains. Tanla is number one in 9% gains on Tanla Solutions, 537. I mentioned Reddington earlier. So that's about 5%. JM and IIFL, of course, IIFL is up to $410 now, so 5.6, 5.7% there. There is Man Industries, which is up 9%. Again, I mean, it's a new one in the mix now. So 342 on Man Industries. Care Ratings, I did spot it in the morning, but it's picked up on volumes quite a bit. So 1428 on Care Ratings. It's got very large volumes, actually. Doesn't show up at this point. India Glycols, 5.5% higher. Stocks at about 1628. EPAC Durables, 5%. Aarti Drugs is up 8.5%. So 464 on Aarti Drugs at this point. And Suvain is up 7%. There is 63 Moons, which is up about 5%. I can go down, but then this is essentially the cutoff with regards to volume-led gains that you've got going at this stage. So, you know, enough and more activity on the upside in terms of the broader market, but not to say there's no volume on the downside. There is. Sudeep Shah is Head of Technicals and Derivatives Research at SBI Securities. Sudeep, good to have you back. What would you recommend viewers do now, Sudeep? Near-term price action.
Good morning, Prashant. Prashant, what I feel is that this initial knee-jerk movement in Nifty from higher levels, I feel that was quite on expected lines. Although the overall undertone now remains bullish, but we will still have that volatility before we are able to successfully cross this 25,000 mark. So overall now from here on, I feel 24,550, 24,600 will act as a strong support. And gradually we'll see the index going towards 25,000, 25,100 in the coming few sessions. From a bank Nifty perspective, that could be an index which will outperform also. So here we feel that 54,700, 54,600 zone will act as a strong support. Until we hold this zone, bank Nifty would continue its upside momentum up to 55,500, 55,700 in the coming few sessions.
Okay, got that. Sudeep, in terms of specific trades, anything comes to your mind?
Yeah, there are a couple of stocks, Prashant, that are there on our radar. The first one is Canara Bank. Now, we've seen since morning a lot of momentum has been built up into the PSU banking space. And specifically, if you see Canara Bank, which has been outperforming out of all the stocks in the last few sessions, here the stock is now sustaining above its 200-day moving average, as well as the key resistances right from the month of December 2024. So the stock is now successfully has crossed that, and now it's holding about 101, 102 levels also. So we feel that this stock could be bought with a stop loss at 101. And on the upside, we are looking at targets which is closer to 110 to 115. The second stock that is on our radar is HDFC AMC. Now, here we have seen an outperformance over the last 4-5 months. The stock was consolidating between February and April between 36, 3,700 and 4,000. We've seen a structural breakout here, and the stock is now heading towards 4,750, 4,800 in the coming few weeks. So this can be bought at the current levels around 45.30, 45.40, and on dips to 44.80. Keep a stop of 4,400, and we feel 47.50, 4,800 zone could be achievable in the coming few months.
Okay, all right. So they've got that. Thank you very much for the ideas for trade. We'll take a break on that note. Come back on the other side, and it's time to talk commodities. Manisha Gupta is going to join in. Okay, welcome back. We do have this 180-point cut on the market, but there are individual stocks that are sort of doing their thing. IFL Finance is the next one on our radar. Nimesh is joining in. Nimesh, what's happening here?
I should be, I highlighted in the morning as well, there was an upgrade from HSBC and hence the stock is up 5%. So today, HSBC upgraded the stock to a buy. They've raised the target price to 550 versus 380 earlier. And HSBC says that moving ahead, a recovery in the microfinance business, high system liquidity and lower cost of funds can drive the EPS upgrade. So that's the reason why they've upgraded. They've also highlighted some risk to the stock in the very near term, which includes higher competition in the gold loans, lower yields on the unsecured loans, as well as some rundowns and higher expenses. So, but net at these valuations of close to 1.5 times FY27 price to book, they believe the valuation is attractive and hence a big upgrade on IFL Finance to a buy now. And target price is to 550. In general, we have seen a bit of recovery in the MFI businesses across the street for most of the names, and you're seeing the same for IFL Finance as well.
Okay, all right, got that. So that's a big move on IFL Finance this morning, thanks to the brokerage commentary. Let's now talk about commodities as well, because there's been so much news flow over the last 24 hours since this trade window of 90 days was arrived at between the US and China. Manisha, so what are you tracking and what's happening in the commodity world?
Well, thank you for that. Well, I'm looking at metals because this is an area which has seen very strong gains. I mean, overnight markets have seen anything between 2 to 3% of gains coming in. So when you look at the base metal prices, we are trading firm, reacting to the US-China, reaching temporary agreement to lower tariffs in 90 days. We do understand, as per those statements and the conference as well, that there would be more broader sense of engagements and conversations happening in the next few weeks as well. Having said that, the reason that you're looking at a bit of a cap in the base metal prices right now is because the US dollar index also has reacted. It's trading at a 1-month highs, holds above 100.5, 101.5. At one point in time in the New York session yesterday, it did go to 102 as well. I want to start with copper because we've seen a percentage point of gains in the overnight markets onto this one. Copper essentially is trading quite firm on LME and the Shanghai exchanges, not so much in the US markets there. Remember, April was the worst month since mid-2022 for copper, but since May has started, we've been looking at positive cues coming in for copper there. Well, the weak economic data from US and China is something that the markets believe will overturn now for the month of May. Having said that, when you look at copper inventories, and that will tell you on how the world is trading right now in sense of inventories. So when you look at China, month-on-month inventories for copper have declined by 60%, and China right now has just about 89,000 tons of copper. In contrast to that, US has seen 60% increase in sense of inventories, and we're standing at a strong 156,000 tons of copper there. So much of this copper ahead of tariffs has flown into US, and that is the reason you are looking at arbitrage opportunities coming in here. Another important point to prove is that when it comes to copper processing, well, remember, copper mining is a different thing, but when it comes to copper processing, 53% of global market share lies with China, 15% with US, and 5.5% with Russia. So you do understand that when you look at US and China, essentially China, it is where the metals and the commodities will take cues from. But it's not just about copper. Aluminum prices gained up 2% in the overnight markets. We are trading at a 1-month highs onto this one. Zinc also gained up almost 2% overnight, and this one is trading at a 5-week highs. Asian markets right now are no different. After those overnight gains, we're looking at some more gains continuing right now.
Okay, all right, got it. Manisha, thank you very much for the updates over there. Take a break, come back on the other side to our special segment, It's the Economy. Today, Lata speaks with economist Andrew Tilton about the impact of the number of trade deals that the US has been signing with countries like the UK and, of course, now this thaw with China.
Welcome to It's the Economy. The United States slashed its tariffs on China from 145% to 30% at its weekend talks in Switzerland, leading to, as we have been seeing, a 3 to 4% rally in US stocks and, of course, in equities globally, India included. But US yields rose 10 basis points yesterday to 4.45%, the highest in a month. So do these stocks completely alter the global growth picture, the recession picture in the US, interest rate picture? Joining me to discuss the impact of the US-China deal on the United States and the global economy is Andrew Tilton, Chief Asia-Pac Economist at Goldman Sachs. Andrew, good morning and thank you very much for your time. Well, 2 trade deals have been signed, one with America's biggest trade adversary, China. Are you changing your growth forecast for any country now?
Yes, we are. Our U.S. economics team has upgraded their growth forecast from 0.5% over the next 4 quarters to 1% and lowered their probability of recession in the U.S. from 45% to 35% on the back of the U.S.-China trade announcement yesterday. I think it's fair to say this was better than expected, more dovish than expected by most, if not all, observers going into the weekend.
Are you saying, 30% tariff is lower than the threatened 145, or is it lower than even what you thought it will come to after the talks?
Yes, we had expected it to come down. There had been more friendly talk last week, including messages from the U.S. administration, but we had thought perhaps we'd settle somewhere in the 50% range for U.S. tariffs on China. In the end, the temporary, I should emphasize, temporary agreement is, for 90 days at least, is a reduction to a 30% increase this year relative to where we came into the year, a 30 percentage point increase, so coming down from triple-digit levels. Nonetheless, that was better than expected, and China to lower its increase to 10%, as well as remove some non-tariff barriers. So from that perspective, it was better than we had anticipated. I think it was better than almost any market observer had expected going into the weekend. We had already upgraded slightly our China export forecast last week, given a little bit more momentum heading into the tariffs, and also signs that export competitiveness for China remains very strong outside the U.S. In addition to that, we've changed our view late last week on the renminbi. We think it can now appreciate gradually versus the dollar, again, on the back of a weaker broad U.S. dollar and a slightly better export outlook. If anything, the weekend's agreement poses further upside risk to that.
The renminbi has appreciated all right, but look at the DXY. The DXY has actually jumped up as well from 99 to 101.5 right now, even as we speak. So what should we expect from the dollar and therefore from other Asian currencies like rupee?
I think some bounce in the dollar is not too surprising given how bearish sentiment had shifted and how far the dollar had moved this year. So speculative positioning was very short the U.S. dollar. Sentiment was very negative on the U.S. dollar in the wake of tariff uncertainty. That said, that provided perhaps the basis, particularly on this, better than expected, so to speak, deal. That provided the basis for a bounce in the dollar, which I think is what we're seeing. Over the medium term, we would still expect at least a little dollar depreciation. The dollar remains significantly overvalued on our long-term currency valuation metrics, around 15% or more, 15% or more over the longer-term valuation metrics. So we still think the longer-term trend is for dollar depreciation. Irrespective of that, if we just look at China versus the U.S., we think there is some room, perhaps informally as part of this deal to, avoid further depreciation against the dollar, though I would emphasize nothing was said publicly about currency being part of this deal.
No, I agree. I got that doubt as well. I mean, the Chinese currency at 7.18 today is actually the sharpest it has been. It's the strongest since November 10th. So we have to watch out the renminbi. There's some appreciation there. Okay, let me come to growth forecasts. Are there any change in Asian growth forecast? You said US you have upped. Goldman Sachs had cut GDP forecast for almost all Asian countries post that April 2nd deal. But now the trade deals are being signed. Are you increasing our growth forecasts?
We haven't made changes to other Asian forecasts at this time, although I think it's fair to say there's some upside risk to our 4% forecast of China growth. But I also think would note that we never assumed the full reciprocal tariffs would be implemented. We had discounted that somewhat back following the April 2nd announcement, and it still seems as if we will get average tariff levels above 10%. There'll be a 10% tariff, it appears, for pretty much all countries outside North America. And then on top of that, the so-called critical goods tariffs, which so far have been 25% in a number of sectors. So the weighted average of those things varies by country depending on what proportion of their exports are critical goods, but would be somewhat above 10%. So from that perspective, ex-China, the tariff picture for the rest of Asia doesn't appear to have changed too much. On the margin, the news is a bit more positive from a growth and markets perspective, but no new news really for the rest of Asia.
No new news, but the trend appears to be more benign than the April 2nd announcements. What are your forecasts for India? I mean, in our case, there is a border tension too that you may want to, discount.
Well, clearly there's risk of short-term economic impacts, hopefully short-term, from the recent disruptions. Nothing, in our view, has changed in terms of the medium to long-term forecast for the Indian economy. We've seen, meaningful policy tightening over the last couple of years in the form of lower fiscal deficits, until recently, a steady policy interest rate and some, credit regulation tightening a while back. Now we appear to be moving into a period where policy is more neutral or even more supportive for growth, with rates starting to come down. So from that perspective, we do think sequential growth in the Indian economy could pick up later this year and headed into 2026.
Okay, good to hear, 7%. Well, what are your recession fears in the United States? And hence, have you altered your expectations from the Fed? I just want to point out that US bonds rose very sharply yesterday after the China deal.
Absolutely. And markets have pushed back, expectations for Fed easing in light of what appears to be a better growth outlook, and so have we. We've first of all lowered our estimate of recession probability to 35% over the coming year from 45% previously. So still significant recession risk, but again, not the base case. And then on the Fed, we'd previously seen a few cuts in the second half of the year, but we've pushed those back to start in December. So we continue to see 75 basis points of what you might call insurance cuts starting in December and occurring every other meeting. There's not as much near-term pressure to cut policy rates as it appeared. And given that inflation is still meaningfully above the Fed's target and likely will rise further, given that some tariffs are being imposed, we would not expect Fed cuts over the next few months.
Oh, your rate cuts start only in December, is it? Well, let's see. Let me come to the underlying medium-term fear that dominates Asian currency traders, and we don't speak about it much. Do you think there is actually a chance of a 100-year treasury being forced on Asian countries like India, or even a restructuring of the existing treasuries they hold? When the Taiwan dollar rose 10% last week, there were these fears. So do you expect sustained Asian currency appreciation?
Well, we've had a lot of questions about the potential other dimensions of the trade talks. Would they include discussions on currencies or, as you mentioned, potential agreements to buy U.S. assets? We haven't seen hard evidence of those kinds of arrangements. But going into all this, it's important to note the dollar was very strong for a number of years. We've really had, frankly, more than a decade-long cycle of during which generally the dollar has been appreciating, and as I mentioned previously, is overvalued on a lot of long-term currency valuation metrics. And so that created incentives over that period of time for, say, exporters across Asia, including in Taiwan, as you mentioned, to accumulate dollars rather than repatriate those foreign currency earnings. They often kept them in dollars, which were yielding pretty high yields.
Yes.
And we're seeing dollar appreciation. Now that trend may have turned, their incentives have changed, with the possibility of rates, at least it looked like the possibility of rates going lower and the dollar weakening. You've started to see some repatriation of those funds, which probably was part of the story about the strong Taiwan dollar and very sharp Taiwan dollar appreciation that we saw recently.
Okay, but currencies actually are an under-discussed topic here. We'll come back to it later. We are, let me come to the economy picture. We were expecting supply chains to be redrawn. And, this China plus one wave to bring more investments to India because of all this 145%. Now with the rates going down, does this lessen? Because, US and China appear to have smoked the peace pipe.
The immediate pressure for those kind of moves may ebb a little, but the larger picture is still, as you put it, that supply chains are being rethought, that there still are meaningful tariffs going into place. I'd emphasize, even if we stay at these levels, these temporarily agreed levels, this would still be the largest U.S. tariff increase in a century. That we'd still be raising the effective U.S. tariff rate by nearly 15 percentage points from where we started the year. So this is still a very big tariff increase. We've clearly seen an increase in geopolitical uncertainties. And so I think directionally, we're still very much in the world you described, where there will be a rethinking of supply chains. There will be a desire for larger firms to have potentially multiple sources of production in the event of future changes. And so I don't know that we're going to rewind this. I think still directionally, we're headed towards probably greater diversification.
Oh, that's actually good for us. Well, just the last question on global GDP forecasts of Goldman Sachs. Have you all changed that lately because trade deals are getting signed quickly?
The key global change has really been the upgrade in the U.S. forecast. So that's the half-point increase from 0.5% to 1% on the U.S. economy, where we had been quite cautious. Collectively, we haven't made other changes at this time. So the U.S. was the place imposing the highest tariffs. Collectively, the biggest impacts are really felt on the U.S. itself.
Yes.
And that's really where we've made the change so far.
Okay, yeah, and the mother economy always emanates growth pressures for the others. So we'll take that with both hands. Thank you very much, Andrew Tilton, for joining us in what perhaps was a busy day for you with all these markets up and about. The Indian GDP forecast is what we should take home. 6.3 unchanged for the current year, but 6.5 next year and 7% going into the medium term is the Goldman Sachs forecast. On that positive note, wrap up on Bazaar chart process coming up after a break.
Pharma stocks trade higher as Donald Trump's executive order on pharmaceuticals and drugs turns out to be not as bad as feared earlier. The Nifty Pharma Index is the top sectoral gainer right now.
JM Financial climbs on the back of the results. The stock is up close to 4.5%. The company's other income rises 61% sequentially. Operating expenses decline as well.
Paytm slips more than 2% following a large trade where 4.1% equity gets exchanged. Sources say Antfin is the likely seller. Meanwhile, KFin declines more than 4% after 10% equity gets exchanged. Sources tell CNBC-TV18 it's General Atlantic Singapore, which is the likely seller.
And Swiggy trades under pressure. The stock is down 5% after the 6-month lock-in period for the pre-IPO investors ends today. The stock is seeing some selling pressure.
Aether Industries slips nearly 4% after the company announces an offer for sale worth nearly 629 crore rupees with a floor price, which is a significant discount to the current market price.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And after the big run that we saw yesterday, some kind of cooling off on the headline index, but that's par for the course. We had a super duper run yesterday. The positive though today is that the mid-cap index continues to outperform, and that's trading in the green.
As part for the course, Nigel, I'll most definitely keep an eye out on the FII flows, whether in the very near term, because of the US-China trade deal, flows move from India to China or not. But be that as it may, 24,500, which was an earlier resistance for the Nifty, will now become an important support. And the Nifty Bank is very close to its support of 55,000 itself. So that's something we'll most definitely keep an eye out on. But we'll also watch out for a lot of earnings that have come by. Zaggle Prepaid, the company reported an overall set of numbers in the fourth quarter. Good sets that has come in, though the stock mildly in the red. Abhinash Gorkindi, who's the MD and CEO of the company, joins in now. Thanks a lot, Abhinash, for joining in. A two-part question. Last time you joined us, you said that, you will cross that 63% revenue guidance for this entire year. You've grown at 68%. So the obvious question, what are you targeting this year? And the second part that I remember very clearly, you said you're in advanced talks for an acquisition and you might hear something soon. It's been over 3 months. We haven't heard anything yet. What's the update there?
Thank you, Nigel, for having me today, and good to be on your channel. I think, yes, we are delighted to announce a great set of results. We far exceeded our guidance of 63%, and we closed at 68%. And we've grown on all metrics, whether you look at EBITDA, whether you look at PAT, where we doubled our PAT. And cash flow has improved considerably, so we are delighted, absolutely delighted with our numbers. Of course, there's more to do. This year, our guidance right now, given all the volatility around the world and all the uncertainty, we are right now guiding for about 35 to 40%, which is organic, which is on a standalone Zaggle basis, not including any benefits that we accrue through acquisitions. So that's the first question. The second question, yes, these acquisition conversations are on. There are a lot of great opportunities that we are looking at, and there are quite a few which are pretty close to closure. I don't want to jump the gun and say that, yes, this has happened or that has happened. So kindly, wait for the news. Some of these things take, a little while in closure. So that's where we are. We are pretty close to closing, at least a couple of big acquisitions in this year. So
all right. Hi, Avinash. This is Nigel. Mangalam had asked you the first question, but congratulations on outpacing the guidance that you put up. Couple of questions here now. What are the odds that this year as well you go ahead and you outdo this 35% growth that you're guiding for? That's point number one. Point number two is you were guiding that margins to start moving towards mid-teen. That's the longer term, right? In the near term, what kind of a margin expansion should we expect for FY26?
Take the second one first, Nigel. Margins we have already guided for this year and said last year we had given a guidance of 9 to 10%, and we stuck to that range. We were as per our guidance. This year our guidance for margins would be 10 to 11%, and over the next 4 years, we look to move that to about 15%. That's where we are aiming for. And we are absolutely on track. Margin expansion, we are seeing all the green shoots across board, whether you're looking at uptake in revenue, cross-sell, more usage, and AI helping us build in a lot of efficiency in terms of costs, how much manpower we deploy, how much AI can be used. It's just mind-boggling, and we're leveraging it very aggressively.
All right. And what about Zoyer and Brom? You said that the contribution from both of them will increase all the way up to 45 to 50%. Last year, it ended at around 35%, if I remember correctly. So if you could give us a sense of how much Zoyer will grow as an overall contribution to the revenue. And in that, Brom, what does it stand at right now and where does it go?
Yes, Manglam. What we've seen is while Zoyer and Brom continue to grow very well, we were pleasantly surprised how much momentum we were able to get in our other, products like Propel and Save. And one of the realizations that we are having is that there is a lot of untapped business. There's a lot of opportunity across all our lines of businesses. And as we are getting better known, as people are building more confidence in Zaggle, a lot of businesses coming to us from great brands, great companies. So Zoyer today is, around 40%, but we see that to grow further, and eventually we'll see that to be about 50%. Brom is a module within Zoyer, which has tremendous potential, and it's growing well. In all these cases, we see a lot of, contracts first, and then over time, they fructify in terms of revenue and profits. So we are in that initial phase of Brom. The first 6 months is how I would say, where we are really gaining those contracts, and many of them are going live.
All right, Avinash, final question from my end before we let you go. The promoter stake is holding at around 44%, 44.2% as of March 2025. You had plans, I think, to go ahead and increase stake further. Where do we see the promoter stake headed to? You have a 5% window every year. Do you think they'll use that in this year?
Fingers crossed, Nigel. Let's see how the year pans out. Both Dr. Raj and I are extremely bullish about Zaggle, and we are always buyers. So we are always looking to up our stake, to be honest, because we see there is so much opportunity, so much potential, and so many good things that we are doing internally, which will result in great margins and cash flows in the coming years. But too early for me to comment whether we'll increase our stake this year. But as such, we are absolutely, always buyers of the Zaggle stock.
No, the intent is but to go up, right? Towards that 50%. And now there's a sale going on because the stock has come off drastically from the top. So if you don't back your stock, who else will? So we'll have to keep an eye on that. Yeah, Manglam.
That's exactly what I was saying. It's down about 40% from the highs as well. And you're saying not this year, maybe not, or maybe we don't know yet. But at 40% discount from the top, maybe if you're bullish on the prospects of the company, this would have made sense. But then again, you're the promoter, you know a lot better than everyone else out here as well.
We did buy last year significantly post the QIP, right? And there's also the practical point that we should have the cash.
Yeah, we understand that. We totally understand that, Avinash. Just a final question before we let you go. Your cash flow from operations improved a lot from last year. From negative, it's turned into a positive 20 crores, but it's still just 1/5 of the annual EBITDA that you generate. So what's your target of cash flow from operations this year? Because operating leverage typically shows itself most in the CFO.
Great question, Manglam. See, these are things where we consistently have kept the stance that let our numbers speak for us. We are working very hard. We are working diligently. And the numbers are absolutely showing that, right? I mean, the movement is very strong. I don't want to, bite my tongue by speaking too much. This year also, we are quietly working in the background, and we're very confident that our cash flow position will improve significantly. I don't want to, wrap myself by saying it's going to be this much as a percentage of EBITDA, etc. But, rest assured that's a key focus. Margin and cash flow are key focus for us. while growth obviously is the lifeline of a company like Zaggle.
Take that point entirely. Thank you so much for joining in. Before going to the numbers, the street was excited. The stock had already rallied about 9% ahead of the numbers. And now I think the street likes what you're saying, because when we started the show, it was slightly muted from there on. As soon as your commentary did come by, 35 to 40% growth with 10 to 11% margins and higher contribution coming in from some of your star products. The street likes that. There's a mild smidge up on that stock itself. Take a short break. In fact, before we take that, let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Nitin Agarwal joins into the stock that he's tracking.
The company that I have chosen for today is SJS Enterprises, which is an auto ancillary company. First, let me touch upon its Q4 number. Despite industry challenges, the company reported a strong growth of around 7.8% in its top line. Its EBITDA margin remained above 25%. This is primarily due to the increase in content per vehicle. Now, there are a couple of factors that make us upbeat about the company. First, and one of the key growth drivers for the company is the increasing demand for premium vehicle, be it cars, SUVs, and the two-wheeler. Premium aesthetic products offer a higher value and a higher realization, and they are very high margin products. And the company has been aggressively focusing on the new age products, which offer significant value to the company. And in fact, the contribution from those new age products has been rising significantly for the company. In addition to that, in the quarter gone by, the company has onboarded Hero MotoCorp, which is a leader in the two-wheeler segment, as its client, which offers a significant opportunity for company to grow in the quarters to come. Lastly, in terms of valuation, the company currently trades at around 20.2 times FY's 27 projected earnings, which we believe is reasonable given the earnings growth outlook for the company.
All right, with that, we'll take a short break. On the other side, we have Anjay Shah, who's the chairman and managing director of Prudent Corporate Financial Services. Sanjay Shah, I beg your pardon. He joins in to discuss the quarter that went by.
Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, let's focus on another company with Prudent Corp Advisory Services. The company reported actually a good quarter. The revenues came in line with estimates. The margins and the profitability beat what analysts were estimating. Mr. Sanjay Shah, the chairman and managing director of Prudent Corporate Advisory Services, joins us on the show. Hi, Sanjay. Good morning, and thanks a lot for joining in. Well, you have been growing at a very, very solid pace. And even in the past year, you grew by around 37%. However, now the base is higher. Do you believe you can continue to grow at this sort of a run rate? And if yes, what does a revenue mix shape up to be?
So thank you for having me. I think I can tell you frankly because we are a part of entire wealth management piece of the country, and I believe entire retail wealth management piece is poised for a significant growth from here on. So if you look at our revenue comes from majority from the mutual fund distribution business and the insurance distribution business, and I believe that the mutual fund retail growth, if you look at last Amphi Vision paper, it says that similar to what has happened in US between 1980 to 2000, the same story is going to happen in India from now onwards for next 20 years. So I think I can assume that bare minimum, definitely keeping in mind some volatility over a longer term period. I think the 20% kind of a CAGR in the AUM looks reasonably better to project for next 5 to 7 years for sure. So
All
I
right,
think
20% CAGR over the next 5 to 7 years at least, and that's the AUM for the mutual fund industry. I presume that you would grow a clip faster than that if you have to gain market share. Speaking about market share, monthly SIP flow, you had a target of 1,000 crores per month. You fell short of that in the previous month, but in the previous quarter, but the last month once again saw SIPs move to a record high. Do you believe you can hit this 1,000 crore per month target on SIPs this year? And what about your market share there? It's increased from 3.5 to 3.8%. What are you aspiring for this year?
Yeah, so I think you are absolutely true. I think we would have reached by this time 1,000 crore, but you are right, because the month of February and March was a little bit subdued in the industry. That's the reason I think we were sort of etching those 20 crore. In the current year, we assume that we should reach by end of this year a book of about 1,200 crore. So we are assuming that the run rate of SIP coming from the retail should continue at a healthier pace. And today we have a market share of 3.8%. And I believe we'll try to maintain this market share because regularly you have been seeing some amount of traction coming from the direct piece also. So I'm talking about the market share of prudently the total SIP book, including the direct piece. And as direct is trying to contribute more and more from the tech platform, if we can maintain our 3.8% market share in the current year, it's going to be a good thing for us.
And the monthly SIP book goes to around 1,200 crores, right?
1,200 crore by March 26, sir.
Got it. All right. Just to reiterate, the top line growth you're talking about for this year is how much?
The AUM growth is about 20% on a point-to-point basis. But I believe as far as top line growth is concerned, it may not be the same what we have seen last year, because this year, my last year full year average AUM was about 99,000 crore, on which I earned the revenue. When I'm talking to you now, I am now at 1,09,000 crore. So we are already positive about 8-9%. So full year revenue growth should be in the range of 18-19%.
18-19%. Got that. Also, distribution of insurance on a small base, that's growing at a fast clip. I think currently it's early teens as a percentage of your mix. Where do you see that number headed?
So I think we are seriously concentrating on the retail health side, and our retail health book is growing very, very rapidly. We closed the year at 150 crore last year, and we are projecting that we should add another 60-65 crore in the retail health side. On the life, we are concentrating purely towards the term and the the guaranteed product for the retail investor. So there also we see a good scope for us to grow at a better pace. So overall, internally, we feel that the insurance should do reasonably better than the mutual fund. There are two reasons: because of the lower base, and secondly, it has a very small, very less penetration in my system.
Okay, so let's talk about the mix itself. 11.5% is what came from insurance products. Mutual funds was actually down 5% in the fourth quarter. Was that lower because, there was softening commissions from AMCs? Do you believe that this is a trend that will continue? Are there any further cuts out there? And in light of that, where do you see your share from mutual funds and insurance be by the end of FY26?
So I think the last quarter insurance has done better than the mutual fund industry, and
Yes.
historically insurance is always better in the last quarter. That's the reason you would have seen that the share of mutual fund has came down. Otherwise, mutual fund is a very predictable revenue, sir, because you'll see it is linked to the AUM and very, very predictable, you can say. So my belief is that gradually insurance should occupy 1 or 2 more percentage on a year-on-year basis. So today, let us assume that the insurance is about 12% my overall kitty. I assume gradually it should go towards 15-16%.
Okay, all right. Let's talk about operating profit then. The margins actually on a year-on-year basis, on a sequential basis as well, actually it improved. The operating margin that we are working with is around 24.3%. Where do you see this number headed, sir?
I think operating margin should, considering the full year of FY25, I believe FY26 should also reasonably remain steady. Only one thing which I'll just communicate, that we are the very large B2B2C player, and in my system, 90% of my revenue and AUM come from mutual fund distribution partner network. If that ratio tilt more towards partner, then you might see some amount of pressure on the payout ratio, because 1% more money coming from MFD, then I have a 64% payout. So I think that is the only thing which I think, if the mix change towards the MFD more, then the payout ratio might change, but otherwise I should be able to maintain the operating margin.
Operating margins around this 24%, correct?
Yes, sir. Yes, sir.
And when do you go back to that 28% mark? At some point, do you aspire to do that?
I don't think so, because I think because incrementally, as we are growing, some amount of margin pressure which is already built in. So I think I'll try to maintain the current margin.
All right, 24 to 26%. Thank you so much, Sanjay, for joining in. 18 to 19% revenue growth, 20% AUM growth, a percentage or 2 points higher in terms of contribution from insurance, and SIP monthly book at 1,200 crores by the end of this financial year, with margins between 24%, 23 to 24% is what they've guided for. Stock up around 3%. With that, what we'll do is take a short break, and as we do that, let's give you some good news. The good news is that India's business news leader, CNBC-TV18, is now available at your fingertips. An all-new app, which is up for you on the screen, gives you instant access to breaking news, in-depth articles, all financial world updates at your fingertips. What you got to do is download the app from the Apple Store or the Google Play Store, or just scan the QR code, which is up for you on the screen.
Network 18 is now the clear leader in digital media, with 55% more users on native platforms and social media than Times Internet. Network 18, the undisputed leader of news networks, way ahead of the times.
Welcome back. We'll focus on a few stocks in the broader markets that are moving on rather large volumes. Z Enterprises, well, that stock is bursting away as we speak, currently at the high point of the day. Remember, the promoter entity had gone in there. They chipped in at around 100 rupees or thereabouts after a very, very long while. Valuations as well comforting, and they're guiding for better times ahead in terms of profitability. So explain, that stock is up close to around 3.5%. Jain Irrigation is another stock that's suddenly seen a big spurt, particularly in the last 60 minutes. So that one comes up for you on the screen. Edelweiss as well is perking up. So that's another big gainer from the broader markets. And you have Stovecraft that's seen a sharp correction from the peak. Well, that one's getting its act together, and that in fact is up close to around 600 at around 630 rupees or thereabouts. If you pull up a few more names, Sterling Tools, that's another stock that's come on the radar. And Wokart, after seeing a very, very sharp correction, well, that as well is bouncing back in today's trading session. So keep an eye out on a few of these names. Well, on that note, though, we'll wrap up on this edition of Chartbusters. Stay with us, though. Trading Hour comes up next.
What was the one that surprised you? What was the one that you were absolutely sure of?
Barfi was one which was the most difficult to pin down, but you knew it at a visceral level, you reacted to the material. Chennai Express actually was another film where, you know, there was a full narration that happened with a group of 20 people, and we were laughing our off and like falling off our chairs.
What was a casting call that you made that kind of worked out the way that you had imagined it to?
I think probably Dangal. And at that time, of course, Irfan, he was someone we had in mind. He would have done a wonderful job. But then I got a call from Amir at that time. Many other stars of his stature might not have been okay with playing an overweight wrestler who's like a bit of a has-been, who's living out his dreams through his daughters.
Hello, good morning and welcome to Trading Hour, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala, along with me is Hormaz Pataki as well. Hormaz, very good morning to you as well. But yesterday, what we saw in terms of a morning coming in, that run-up in the Nifty, today it's a bit of a different story. Muted day coming in terms of a performance. Nifty down almost 0.8%. Broader and managing to still perform well, right, Hormaz?
Yeah. Par for the course, right? You go up 950 points in a session. It's only fair that you give up some of it and take some profits off the table, and that's what's happening here. But still holding on to important levels on the downside is the index, and of course recovering slightly from the lows as well. There's around about a 70-point recovery from the lows now for the Nifty, 170 points lower for the index. The broader markets too, of course, more than the index, the focus has always been on specific stocks, be it earnings reactions, be it earnings that you're going to report today. Of course, it's a very earnings heavy day. We have 4 Nifty results, a lot of broader market results as well. So it's an important day that you will have to watch out for going forward as well.
Absolutely important day to watch out for. Pharma today is trending in trading session as well after yesterday's executive order that came in last evening. Though it's still an open-ended order, we'll wait out for more clarity. But at least today what we're seeing is Nifty Pharma among the top sectoral gainers, as well as the Nifty PSU Bank. That's also a top sectoral gainer. Keep an eye out on that. On the flip side, Hormaz, we have IT that's not managing to hold on to gains. So that'll be something that we are watching out for, right?
IT also went up almost 6-7% in yesterday's session, so still giving off some of that. But the big story that we have been tracking over the last week and the upcoming developments as well, the India-Pakistan tensions have subsided over the last couple of days with no fresh reports of firing, shelling in areas of Jammu and Kashmir, Rajasthan or Gujarat. We are now being joined by Shireen Bhan to take this conversation forward. Shireen, couple of days of calm, but what are the latest developments that we are tracking so far?
Well, that is right. Another night of relative calm, Hormuz. But let me once again, for the benefit of our viewers, recap what we've seen happen. Now, there were reports coming in last night which were acknowledged by the Indian Armed Forces that there was drone sightings in Samba, which is near Jammu and Kashmir. Now, this happened post the Prime Minister's nation's address. But what the Indian Army had also said is that these were engaged and there was nothing to be worried about. So there was drones sighted in that region. They were engaged by the Indian Armed Forces, but post 10 p.m. we are given to understand that there was no further activity, so it could have perhaps been a message, so to speak, post the Prime Minister's address. But as a result of this, what has happened is that we've now seen airlines like Indigo, like Air India, issuing advisories saying that they have cancelled operations to airports like Jammu, Leh, Jodhpur, Amritsar, Bhuj, Jaipur, Chandigarh and Rajkot, because obviously you don't want to be in a situation where you will be turning back and so on and so forth. There will be an assessment done of what is the threat perception at this point in time as far as civil aviation, civil airlines are concerned, and so a decision has been taken at least for today that there will be cancellation of operations by Indigo as well as Air India, and I would imagine other airlines as well, to these sectors. Now, just yesterday, we had seen the government remove that notice to airmen, or NOTAM as it's popularly called. 32 airports that were shut through the course of the week on account of the military operations were asked to reopen yesterday. We did see a resumption of services. Some flights did in fact take off and also land on their designated airports. But so there is no new NOTAM, i.e. these airports have not been asked to close. It is only airlines saying that they are cancelling certain flights to certain airports. We are also given to understand that there is a crucial meeting between the Civil Aviation Ministry and the airlines later today. So we will, of course, keep you updated on that. One of the other important aspects to focus on is that crucial meeting that took place between the Director General of Military Operations of India and Pakistan. Now, remember, that meeting finally took place at 5 o'clock in the evening. It was a scheduled meeting. It took place after the Indian government, the Prime Minister, had held a meeting with the armed forces, with the NSA, with the Defence Minister, etc. The Prime Minister's meeting took place in the morning. And this meeting, which was scheduled to happen at noon, was finally pushed to 5 p.m. and that meeting took place. Now, at the end of that meeting, what we are given to understand is that both sides came to an agreement that not a single shot will be fired by either side, that there would be no aggressive or inimical action by either side. But secondly, And more importantly, there was an agreement arrived at in that DGMO talk between India and Pakistan that there would be an immediate, in those words, immediate reduction of troops at the border as well as forward areas. So that is a significant development. We are going to have to see if that troop production has already started, whether it is underway. But as of 5 p.m., post the DGMO talks that took place between India and Pakistan, there was an agreement arrived at that there would be no further perpetration of any kind of violence, of any kind of drone activity, firing, shelling, any of that, and that there would be a reduction, immediate reduction of troops in the forward and border area. So that's going to be something to watch out for as well. Now, let's come to the elephant in the room, and that is President Trump's latest set of comments, and there was plenty of them. And remember, Trump spoke ahead of the Prime Minister's address to the nation, one reiterating, which is in the usual Trump style, that the U.S. played the key role, the U.S. played the central role in the mediation between India and Pakistan. Trump going so far as to say that the U.S. averted a nuclear conflict between India and Pakistan. But what's important to note, and what's also worrying to note, is what he said post that. He said that one of the things that forced a cessation of military operations, forced a cessation of hostilities, in Trump's words, were trade. He said, we said stop, 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 or we will not do trade with either of you. Now, this is something that is being refuted by the Indian government sources that we've reached out to for a comment. Indian government sources telling us that there has been no mention of trade in any form or fashion in any conversation that took place between Indian officials and US officials. In fact, the Prime Minister reiterating what India has maintained so far, that the call for any conversation, dialogue, cessation of hostilities came from Pakistan. The Pakistan DGMO dialed his counterpart in India only when Pakistan realized that it wanted an escape route because of the offensive operations that India pushed forward, targeting air bases, targeting Pakistan's military infrastructure. This is what we heard from the tri-services as well as the Prime Minister in his address. Now, where does that leave us? President Trump also, in the same breath, saying that we're negotiating a trade deal with India, we're also going to be talking trade with Pakistan. Now, what's the logic for that, for instance, one may ask? When it comes to India, we all know the size of the Indian market, the size of the Indian economy, the fact that it is the fastest growing large economy at this point in time. And that is why the US is interested in doing a trade deal with India, because it wants market access. What is in it for the US to do a trade deal with Pakistan? It's an economy on the precipice. It's an economy that is at this point in time on a lifeline of bailouts from multilateral organizations, including the most recent bailout package that's been cleared by the IMF. So what is it that Trump is attempting to do when it comes to doing trade with Pakistan? Perhaps the obvious answer lies there in defense and defense equipment. And remember, what we have seen in evidence, even through the course of the past week, is the use of Chinese military equipment by Pakistan and by Pakistan's military establishment. So is that what President Trump is looking at this point in time? Pakistan, remember, does have the F-16s to start with. So this is going to be important to watch, whether any of this has any impact. It colors the current trade negotiations in any form or fashion. We'll have to wait to see. It's important, we've been speaking with experts who understand the nuancing of these things much better than you and I do. And Kaval Sibal, former diplomat, ambassador to many countries, was speaking with us yesterday, and he said that let's be mindful of not letting the US peace diplomacy or alleged peace diplomacy have an impact on the current trade negotiations. We are, of course, waiting for more details on the next round of talks between India and the US, and that is expected towards the later half of this month. But what's also important, and I go back again to what we've heard from people like Kapil Sibal, what we've heard from people like Shashi Tharoor, what we've heard from people like Jeffrey Sachs, is also to say that India must not put all of its eggs in the US basket. This is, as is very clear and evident, a transactional administration. I mean, we saw that yesterday with the manner in which the trade deal with China has been inked after calling China the biggest adversary of the US, a deal that's been done in Geneva between the US and China. So we need to be mindful of how much to rely on the US and what the red lines will be. So that's going to be crucial, but that's where things currently stand. Relative night of calm. DGMO agreement to halt any kind of military activity, as well as a reduction of troops in the border areas, in the forward areas, and of course civil aviation still impacted. There is no full-scale resumption of activities because of what transpired last night. We'll update you on the meeting that will take place with the Civil Aviation Minister and airlines. Back to you guys.
Thank you so much for that, Shireen, for rounding it up for us in terms of what has happened so far and what we're watching out for going forward as well. But on that note, we're going to slip into a very short break. Up next, we'll discuss what's buzzing in commodity space with Manisha Gupta, so don't go anywhere.
Welcome back, and 24,750 is where the index currently is, and some recovery from the lows of the day. Still, that recovery is now getting sold into a 200-point cut now on the Nifty 24,725, but of course nothing alarming, especially considering the session that we had yesterday. On to commodities now, and Manisha Gupta is joining in today with gold losing a bit of luster. We put the spotlight on silver, Manisha.
Oh, well, yes, have to go with the gainer right now. But, you know, silver really seems slightly confused because yesterday, as the gold prices fell by 3%, silver also declined by 2%. But we saw the base metal prices doing well. And let's remember, because silver is part precious metal and part base metal, especially with more and more industrial uses now coming in for silver. With the strength in base metal prices, we have seen silver gain up by a percentage point and a half more today there. Well, also, when you look at the markets there, while we keep tom-tomming about gold on how it has gained 45% in last 12 months, I want to put limelight on silver as well, because it was in Feb 2024 that we seem to be meandering around that $23, $24 an ounce, but currently holding at around $33 an ounce and gaining above that as well. We have seen 45 to 48% of gains come in for silver as well in the last 14 months. And with the kind of numbers that we are looking at right now, where you have US-China trade agreement going through, so that would mean more silver demand from green energy, from photovoltaic, from solar as well. That could be supportive for silver. And silver also is on positive cues there, because the gold-silver ratio is still above 100, and that means perhaps some more profit-taking in gold or some buying in silver. Also, when you look at the markets itself in sense of supply and demand, and there you can see it, this is the 5th straight year, 2025, that we are looking at a deficit in silver markets in the global markets therein, and that has to be supportive. The markets also are looking at strong supplies concerns coming in from Mexico and Peru as well, and that could lead to further gains.
Okay, Manisha, thank you so much for giving us the roundup in terms of what's happening in the world of commodities. But moving on, Bank of India recently reported their Q4 numbers. Interest income was flat. Net interest margins was up 3% sequentially. Meanwhile, the net profits nearly doubled on a year-on-year basis. We have Rajneesh Karnatak, Managing Director of and CEO at Bank of India, joining in with us to discuss their numbers as well as talk to us about the outlook for the bank going forward as well. Thank you so much, sir, and good morning for joining in with us on the show. What I want to start by talking about is in terms of the profits of the company. This time we know in Q4 mainly that was driven by recoveries. So I want to know in terms of what is the recovery pipeline looking like for FY26? What should we be expecting on that front?
Yeah, as regards our recovery is concerned, see, this year we have done a gross cash recovery of nearly 9,500 crores. This was against the backdrop of gross cash recoveries of around 7,800 crores in FY24. So very good recoveries we have done. In fact, we have been able to contain our fresh slippages also. So fresh slippages, if I tell, our slippage ratio has come down to 1.36% as against 1.53% as on FY24. So this year also, if I tell you our gross cash recovery internal management target, we have kept it around 11,000 crores on the cash recovery, which will help us overall improving our operating profit and net profit in FY26.
So 11,000 crores is what you are anticipating as recoveries in FY26. Mr. Karnatak, good morning. Thank you for joining in. But on the other side, sir, your yields, your NIMs are on a bit of a downtrend, and with the economy currently heading towards a lower interest rate scenario, what is the kind of margins that you are anticipating, A, for the first quarter and B, for the full year as well?
So our NIM is at 2.82% global NIM as on FY25, and it has come down by 15 basis point only on a YOY basis. Now, if you see our domestic NIM, it is at 3.10%, which is quite healthy. We have an international book of around 12%, because of which the overall global NIM was on the lower side, but domestic NIM is at healthy at 3.10%. With the kind of rate cut which has already happened, 25 basis point in February and another 25 basis which happened in the month of April by RBI on the repo side, there has been some pressure in margins. Without that, the transmission in deposit is yet to take place fully. The transmission would take another 6 to 7 months for the February and the April rate cut which is about to happen, which is there. So the NIMs will be under challenge in the first half of this current financial year, no doubt about that. But after it, it would stabilize and normalize.
Okay, so maybe first half, maybe we could expect some pressure on the NIMs, but later on, we are expecting that to stabilize going forward for the company. So, what about your CD ratio? Because that also has seen a slight bit of a dip in Q4 FY25. At what levels are you looking to maintain this? What should we be watching out for in terms of FY26?
So on the CD ratio, if you see, we have a very healthy CD ratio still of 40%. As you rightly said, it has come down from 43% to 40%. But nonetheless, we are one bank which has a CD ratio above 40%. Overall, if you see in the numbers, if I tell you the number on the CASA side, we have improved our CASA numbers from 2,69,000 crores to 2,80,000 crores. There is a YOY growth of 10,000 crore plus. As a strategy, we are very clear that on the domestic deposit side, we want to keep our bulk deposits within 14%. We are at somewhere around 13.8% only as on FY24, and majority of our domestic deposit will be either CASA deposit or retail term deposits, through which we will be able to contain our cost of deposits, which presently is also at a very healthy number of only 4.90%.
Mr. Karnatak, your credit costs have also gone up in the quarter gone by on a sequential basis. What are the credit cost trends looking like currently in this quarter, and what do you expect them to be for the full year as well?
So credit cost, if you see, in fact, it has come down from 0.78% in FY24 to 0.76% in FY25 on a YOY basis. It has come down by 2 basis points. So flat if you see FY24 and 25. That is why, in fact, the slippage ratio also has come down by nearly 20 basis points, and it has come down to 1.38% only in FY25. And this 7,500 crore of fresh slippage in FY26 is also contributed because of one large PSU account, which was nearly 1,000 crore. Had it not been there, our credit cost and our slippage ratio would have been far better. In spite of that, we have been able to bring down our gross NPA percentage to 3.27%, a reduction of nearly 171 basis point, and our net NNPA to 0.82%, And there also we had a good reduction of nearly 40 basis points. So this year our asset quality will be even better for FY26, both on gross NPA, net NPA, slippage ratio, and also the cost of credit.
Okay, better asset quality is what one could expect from the company in FY26. So, what about OPEX cost also? This time mainly sequentially, if I'm looking at it, mainly driven because of that staff expense, which has seen an increase. So going forward, are we expecting any further more rise going forward here? And what is behind the sharp increase this time as well?
So OPEX expenses overall, they are within control for us. And this staff expenses, which is a 12% YOY rise, is also because of the wage revision which happened and certain PLI performance links incentive that we have to give in this financial year, we have fully provided in FY25 itself. If you see our cost to income ratio, that has improved. So in fact, our cost to income ratio in FY25 has now come down to 50.84%. In fact, it has on a YOY basis come down by nearly 22 basis points. So we are very much in control of that, and we are trying to control our controllable expenses so that the overall operating profit, which has this time has improved by nearly 17%, and our net profit, which has improved by on a YOY basis 45%, shows the same kind of growth trajectory in the FY26.
Well, clubbing two questions into one, Mr. Karnatak, you mentioned that slippages you're not expecting too many slippages this year. But when it comes to recoveries, you mentioned that there is an 11,000 crore rupee target. Do you see that coming in from the agri and MSME sectors where there were slightly higher slippages in the fourth quarter? And what about your write-offs as well? Because your write-offs were slightly higher in the fourth quarter as well. So do you expect that number to trend down as well?
So we have done very good recovery in the return of accounts. So if you see our numbers from the non-interest income, the recovery has been much better. In fact, we have a OTS scheme for recovery in the return of accounts. There we have given targets to our field functionaries where we are doing very good recovery, and this recovery goes straight away into the P&L through the non-interest income. That is the first part. So other part being whether we'll be able to do better recovery overall. As I said that yes, around 11,000 crore of cash cost recovery we are targeting for ourselves, and this year we have done a recovery to fresh slippage of nearly 1.25%, which was only 1.10% in FY24. So in FY26 we are targeting this number to be even better than that, and overall what we feel is that our asset quality will be much better in FY26 at the backdrop of good recoveries, less of slippages, and overall the ratios of gross and net NPA would be better.
Okay, sir, thank you so much for joining in with us, giving us an insight and light into what we should be expecting from the company in FY26 in terms of better asset quality coming in for Bank of India as well. Thank you so much for joining in with us this morning. But on that note, we're going to slip into a very short break. When we return, we'll discuss market technicals with Apurva Sheth of Sample Securities and also discuss the top trading bets. Welcome back to Trading Hour on CNBC-TV18. We have Apurva Seth of Amco Securities joining in with us to give us a quick check on the technicals on the market. Apurva, good morning. And in terms of levels that we're keeping an eye out on now for the Nifty as well as the Bank Nifty, yesterday surely was a run-up. Today is a bit of a profit booking. What are we watching out for there as well as in terms of your top bets?
So from the levels perspective, I think that Nifty is likely to trade in a range of 25,000 to 24,500. We have seen a sharp rally, and so there will be some consolidation, and now the action will shift towards small caps and mid caps. On the stocks front, we have Dr. Reddy's Laboratories. It has formed an inverse head and shoulder pattern. The numbers which it announced yesterday were good, and the volumes on the daily charts were also nice. So we would recommend Dr. Reddy's Laboratories with a stop loss of 1150 and target of 1350. And another stock is GSFC. It is forming a flag breakout pattern, and after a month of consolidation, it is now moving higher. So our stop loss will be 185 and our target will be 215.
All right, Apurva, thank you so much for sparing time and joining us with your views on the index and on specific stocks as well. By the way, just before we go into that break, Swiggy is now around 4% higher. It has 4% lower actually. It's recovered from the lows of the day. At one point was up down around 7% after its shareholder lock-in came to an end. So substantial recovery seen there in Swiggy off the lows of the day, now just 2.5% lower on the stock. Take a short break. On the other side, we get to a conversation with Kiran Mazumdar-Shaw from Biocon over the US President's decision of signing an executive order to cut drug prices in the US. Stay tuned. Welcome back. The recovery continuing on the Nifty from lower levels, now just 130 points lower for the benchmark index. It remains to be seen whether this recovery gets sold into or not, or do we see a sustained recovery as we go into the second half of the trading session, nearing levels of 24,800 now on the index. But speaking of some positive movers in today's session, Tanla Platforms is now up 9% as we speak. It's the top gainer on the Nifty 500, and some of the others as well, right? IIFL Finance is up 5% after the upgrade that came in from HSBC earlier in the day. So positive reaction to IIFL Finance as well. And some of the others, JM Financial is an earnings reaction. And of course, can't not talk about the defense names. They continue to move higher in today's session as well. Bharat Dynamics is now up 6%, the second best performer on the Nifty 500. Zen Technologies is up 4.5% as well. And some of the others besides the defense names include the likes of Reddington, that is also up 5.5% in today's session. But US President Donald Trump has signed an executive order giving drug makers 30 days to lower the prices of their medicines to align with what other countries pay. My colleague Ekta Batra spoke to Kiran Mazumdar-Shaw, the chairperson of the Biocon Group, and began by asking her about her views on this wide-reaching order. Listen in.
The discussion on reference pricing started in President Trump's first term, and he did introduce reference pricing at that time, but it was never carried through. And I think it's been very obvious that one of the ways of reducing healthcare costs through drug prices is through this price reduction. I think President Trump clearly called out the huge price differential between developed markets, especially Europe, and the US. And he asked why companies are adopting a dual price strategy when it comes to the US, where US is almost paying in some cases 50 or 80% higher than European countries. So I think that's his first target, where he wants to basically reduce this big disparity that he sees. And the second one that he called out is the middleman, which obviously refers to PBMs and wholesalers, who also, he believes, keeps drug pricing high for patients. So I think the approach that they're taking is not about tariffs, but about drug pricing. That's the way I look at it. As far as generics are concerned, as far as biosimilars are concerned, they are clearly being called out under the Affordable Care Act, and I don't think that's the target.
Okay, so you think that the steps under the executive order were basically limited to big pharma, innovative companies, and not really anything to do with the generic biosimilars as well as the generic drug space?
Absolutely. It was very clear from how he articulated his position on pharmaceuticals and drug pricing and bringing down the cost of drugs. It was clearly aimed at big pharma. In fact, RFK clearly said that although the pharma industry did sort of support his election campaign, our president cannot be bought. And he basically referred to the fact that they will do what's best for the American patients. So this is the way they are going about it.
Companies which have branded or specialty drugs in their portfolio in the US be impacted by this?
So it's largely, as you said, it is really the big pharma products, because if you know how the market is split, 80% of prescription drugs by volume only account for 20% of the value. And it's 20% of prescription drugs by volume account for 80% of value. And that's the 80% he wants to shrink.
For India, the kind of the drugs, the patented drugs that we do import or in license from branded pharma, are they going to get more expensive?
No, according to him, he believes that the drug companies price it at a lower price in the developing world, but he said he's not going to bother about the developing world prices because he said they need lower prices. But he said Europe doesn't need lower prices, is what his comments were.
Okay, so it's probably just going to be limited to Europe and Canada. That's where...
Yeah, the reference pricing is going to be limited to those countries.
All right. What might the impact be on CDMOs if big pharma companies look to actually reduce their cost of manufacturing? Do you think that they're probably going to get more business?
I think they will benefit because there are two sides to this. One is they want localization of manufacturing. On the other hand, drug companies will look at cost reduction to make up for the kind of dent that drug pricing in the US is going to make to their business. I think Roche already made a comment saying that they will have to rethink their investment in US manufacturing if this policy is carried through, because it would certainly impact their profitability and their ability to support investments in manufacturing. So I think there are already going to be some concerns that big pharma will express in this policy. So a lot remains to be seen. But personally, I believe that big pharma will have to look at ways of cost reduction, cost containment, and I think CDMOs, CRDMOs will benefit in India.
Okay. What will happen to R&D according to you if in case there is a change in terms of the structure and the pricing? Most of R&D is fueled by these high-priced innovative drugs. Is there going to be any kind of impact on R&D?
No, I think we actually provide a good, affordable cost option for R&D to be done in these parts of the world. I think that will benefit. I think they will actually invest more in contract research. And I think the drug manufacturing will go up to a phase 3 clinical trial, because I think they would largely like to then bring back large-scale manufacturing to the US, is the way I see it.
Okay.
And that's why I think Syngene also recently acquired a large biologics facility in Baltimore, because we see that they'll be quite happy, sourcing clinical supplies from outside the US. But, if the make in US strategy for novel products is going to be an important aspect, then I think you do need to manufacture the final product in the US.
Okay. On the other hand, we also have US and China, which are renegotiating their trade deal. Do you think that could be a spanner in the works for India's plan to become a +1 when it comes to CDMO and CRO manufacturing?
No, I think there will always be a balanced de-risking approach by all pharma, because, you can't depend on one geographic, area to do everything for you. So I think the +1 is always going to be a strategy followed by big pharma or anyone.
Okay. The US is going to, announce import tariffs on pharma in the next couple of weeks. What's your expectation, Ms. Shaw?
Again, I'm not so sure it will impact us. As you've seen, the US UK trade deal actually saw a soft landing for pharma. I'm hoping that it does the same for India. So we have to wait and see, but I don't expect it to be a major impact.
Are you looking at any kind of onshoring manufacturing in the US?
We've already invested in creating a manufacturing footprint in the US. We have a solid dosage plant in New Jersey. We have as I said, we just acquired a biologics facility in Baltimore. And we've just announced a very big insulin manufacturing partnership with Civica. So I think all these have been done with the aim of being closer to the market, closer to the patients. And of course, it also serves certain regulatory aspects of supplying to certain US market segments.
Okay, on that note, we're going to slip into a very short break. Up next, we'll discuss the market fundamentals with Madan Goparamu from Sindoor Alternate Assets. So don't go anywhere.
At a visceral level, you reacted to the material. Chennai Express actually was another film where there was a full narration that happened with a group of 20 people, and we were laughing off and like falling off our chairs.
What was the casting call that you made that kind of worked out the way that you had imagined it to?
I think probably Dangal. And at that time, of course, Irfan, he was someone we had in mind. He would have done a wonderful job. But then I got a call from Amir at that time. Many other stars of his stature might not have been okay with playing an overweight wrestler who's like a bit of a has-been, who's living out his dreams through his daughters.
Welcome back, and it's time for the MSCI and their FTSE quarterly reviews as well, which will take place later in the month. Vivek is joining in with the list of expectations. Vivek, is Paytm set to make a comeback to the MSCI index?
Well, it appears so. So what we are basically tracking are the passive indices, like you mentioned, MSCI, FTSE, as well as Sensex. All of them will be going out and announcing a rejig as far as their constituents are concerned. So when you're talking about the MSCI, remember the rejig is or the announcement is scheduled for May 14th. So tomorrow early morning is when we will be able to see the developments or the changes. So the likely inclusions, there are 3 expectations, and the source is IIFL Capital. Coromandel International could make its way. Inflow of close to over $200 million is what is anticipated. Nika as well as Paytm are expected to enter the MSCI Global Standard Index. On the other hand, Thermax could see an exclusion of close to, and there could be selling pressure of close to $126 million. Now, coming to FTSE, the announcement date is on May 23rd. There are 5 likely inclusions as per IIFL Capital. Hyundai Motors, Vishal Megamart, recent listing NTPC Green Energy, Swiggy as well as Wari Energies are the ones that could see their entry as far as the FTSE indices are concerned. Hyundai Motors is likely to see the highest rate with inflows of close to $131 million. And lastly, remember, May 23rd, you will actually see the Sensex come ahead and announce whether there are any inclusions as well as exclusions, whether there is any rejig as far as the 30 constituents of the Sensex are concerned. IIFL Capital expects Bharat Electronics and Trent to come into the Sensex. So Bharat Electronics could see inflows of close to $275 million. Trent could see inflows of close to $278 million. And they could come in at the expense of Nestle as well as IndusInd Bank. Nestle could see outflows of close to $210 million, and IndusInd Bank could see outflows of close to $135 million. Very important to track, given the fact that there is quite a lot of passive funds as well as a few active funds that actually track this quite closely. MSCI is the one that will come the soonest, so that those are the stocks that are expected to react post the announcement.
Absolutely, Vivek. Thank you so much for that. We'll be keeping an eye out on those stocks in tomorrow's trading session. But on that note, let's bring on board Madan Gopal Ramu from Sindoor Alternate Assets, joining in with us to discuss market fundamentals and his top sectoral picks. Good morning, Madan. Thank you so much for joining in with us. Let's start by talking about the current scenario in terms of markets. For India, where we've seen FIIs selling for some time, now has started coming back. But there's a lot that is happening on the global front. Obviously, India-Pakistan issues were there last week as well. So that's something that everyone is keeping an eye out on. Do you think the FII flows will continue? Where do you see the market headed from here on now?
Yeah, hi. Good morning. We feel that with the recent correction that has happened in the market, particularly in the mid and small cap space from the peak of valuations, there are a lot of these manufacturing, capital goods segments, and even some of the financial names have become pretty attractive. And I think there is an interest coming back from the FIIs to buy into some of these names. So we feel that with FIIs being at the lowest level in the last decade in terms of their holding in India, I think there will be interest on every dip that can happen in India. So we are constructive on India from a medium-term perspective. Are we constructive on the overall market at this point of time from index point of view? Probably not. We have seen a good recovery at this point of time post this noise around tariff war as well as the India-Pak war. I think the market has bounced back quite quickly. Probably at the overall index level, you will have to wait and see whether you will make big money in the medium term. But if you're going stock specific, I think a lot of opportunity got created in the last 3 months with the noise being around. And that's I think, very important for you to create alpha, making use of those opportunities.
So where are those opportunities that you're finding, Madan Gopal? How are you positioning yourself, or how had you positioned yourself when the markets were at their lows, say around 21,900, 22,000, and now that you have seen a recovery of almost 3,000 points from those levels, how are you repositioning yourself?
While we continue to hold our structural calls in consumer and NBFC, we have repositioned some part of our holdings in e-commerce business, and then we deployed, and also some portion that we had in the renewable energy business where the valuations went a little higher. We got out of some of these positions and got into some of the financial space where the valuations became very attractive with the noise around the NPA cycle. We expect these noise to come off in the next 2-3 quarters. So we repositioned ourselves to get into some of this MFI related noise and the impact of that had in some of the stocks. We have to understand that when the markets is in a correction mode, and particularly there are additional short-term related noise levels increasing for certain companies, you can get really good value bargain in those markets. Obviously, you have to wait for these values to get realized in your holdings. At least it takes 1 to 2 year time period. But the opportunity that they are throwing, and if you give that time period for them, the alpha that these ideas can create for you is meaningful. And that's what we saw happening. So some of the financial calls that we took in the last 2-3 months, we expect that to create good alpha for the investors in the next year or so. Also, we got into some manufacturing companies where, again, in the period when markets were volatile and short-term news related to competition increasing in those spaces came off. These stocks where the earnings growth is very impressive. Even in the last quarter, I'm referring to some of the cable companies. The earnings growth in the last quarter was pretty impressive, and they are giving a reasonable guidance of growing around 20%. Valuations have become pretty moderate in these spaces, so we got into some of these names as well. So broadly, I would say we got out of some of the high valuation names in the e-commerce space, as well as some of the names in IT also, and we got into some of these manufacturing and financial space. IT, actually, we have come back and we have added back because the valuation correction was too steep in the last 2-3 months. And given the noise around the US slowdown, we could get some of these ideas back at a reasonable discount post exiting them, say, 3 months back.
Right. So IT then also, that also you're looking at, those mid and small cap IT names, or are you looking at large cap IT names? You've seen a correction coming in there, like you were mentioning. So which one are you picking?
Large caps, we are generally underweight for a long period on IT large cap, pharma large cap, consumption large cap, even banking large cap. We mostly look at those opportunities beyond the top 50 stocks. So in IT also, it's about mid-cap stocks where the growth is very impressive. When their valuations from the peak have come off, and given the growth guidance that these companies are giving from a medium-term perspective, and their ability to deliver it last year, despite weakness in the IT sector, gives us more confidence that a reasonable valuation, you should be going back to those segments rather than going to large caps. So I think large cap, I don't know whether you know this data, the largest sector loss in terms of weight in the Nifty 50 was IT sector in the last decade. And it will continue because IT sector large caps are not going to deliver a double-digit earnings growth for you, except for 1 or 2 years, probably if they get back some momentum in spending. So that's the reason I think mid-cap IT makes a lot of sense.
Okay, mid-cap IT makes a lot of sense. Also in just terms of, I want to understand, you were mentioning pharma as well. You're not looking at large cap pharma, but pharma as a sector, do you think CDMO players, that is something you will be looking at? What are you looking on the pharma side? Or you are avoiding it completely?
No, generic pharma is a avoid for us. I think, again, a sector which is, from a long-term perspective, has delivered very low earnings growth, except for 1 or 2 stocks in the large cap who have done well. We are all talking about single-digit earnings growth for in the next 2-3 years also. But if you look at CDMO, that's a big opportunity, irrespective of what is happening on the trade war. It is this one sector where we saw clearly the China plus one story has been continuing to happen, right? You are seeing companies in this space continue to get orders. A lot of blockbuster drugs are going off patent slowly over the next 5-6 years time period. And also there are some new innovative drugs which are becoming larger. And see, these are very, very specific to those companies that we are talking about. We cannot make a very generalized statement, but CDMO is clearly a big opportunity. And given the de-risking that US companies want to do out of China, and also keeping in mind what yesterday's news flow from Mr. Trump on reducing the tariffs for the pharmas, generic pharma or branded drugs, both I think they will do something about it. I think outsourcing to India is going to get bigger and bigger, and particularly if you're acting in CDMO space, the opportunity can only become larger. So given the recent correction in these stocks that has seen in the last, say, 3 months, I think if you take a 2-year view and enter in them, you can make a decent amount of alpha from these ideas.
You know, Madan Gopal, you mentioned that you are looking at opportunities beyond the top 50 companies. Does the capital market names feature among them, or have they become so big that they've gone beyond the realm of the opportunities that you are looking for, be it the likes of BSE or CDSL, or even for the asset managers for that matter?
Yeah, so marketplace are clearly double beta play on the market itself, right? So you actually make a lot of money by being in those stocks when the market itself is moving up or flows are very strong. I think some moderation will happen on both these counts. So really to go and be overweight on these ideas at this kind of valuation from a medium term perspective, you probably may not make big money. We had positions in some market players in last year. We have come out of those ideas now because valuation wise we found it difficult to convince ourselves, and given that market is getting into a moderation, the growth rates will come down, and therefore we may not continue to give such high valuation. So marketplace are out. We are putting more weights on the NBFC space within the financial space at this point.
Okay, Madan Gopal, thank you so much, for joining in with us this morning on the show, giving us an insight in terms of most of the sectors and what you're liking as well, and the markets. Thank you so much for that. But on that note, we're going to slip into a very short break. We'll get you a look into what to expect from the fourth quarter numbers of Hero Motor, Tata Motors, Cipla. So stay tuned in.
Network 18 is now the clear leader in digital media, with 55% more users on native platforms and social media than Times Internet. Network 18, the undisputed leader of news networks, way ahead of the times.
Welcome back to Trading Hour on CNBC-TV18. Let's move on and talk about earnings that are expected to be reported today. We have Tata Motors in the list, and Sudarshan is joining in with us to tell us what the street is expecting. What should we watch out for this time? Good morning, Sudarshan.
Good morning. So Tata Motors is expected to report a muted set of earnings with volumes declining across the segments for both Tata Motors and JLR. And with these headline numbers, profit is seen falling 55%. Revenue, though, may increase by 3%. EBITDA may fall by 3%. And margin, too, can slip by almost 100 basis points and can come at 13.4% against 14.2%. As far as JLR is concerned, here profit may increase by 19%. Revenue, too, can increase by 2%, while EBITDA may fall by 5% and margin too can slip by almost 100 basis points. In commentary, we'll be looking if after recent tariff decision by the US government and JLR again starting the shipment to the US, if there is any improvement in the demand in the US as well in the Chinese as well as for Chinese market. Also, if there is any guidance that company is looking to provide for.
Sudarshan is going to have a busy evening today. So since you already mentioned Tata Motors, tell us about Hero as well.
So amongst all the two-wheelers, Hero is the one company which is likely to be reporting the weakest set of earnings, and here also it's because of the volumes that have declined both on a sequential basis as well as year-on-year. Here profit is seen rising 7%, revenue too can increase by 2%, but EBITDA might come flat at around rupees 1,362 crore, and margin too can fall and can come at 14%. Volumes were down 1% year-on-year and down 6% sequentially, but the recent price hike that company had taken will support realization, and realization is seen rising 3% year-on-year and 1% sequentially. For Hero MotoCorp, we'll have to see how is the demand looking in the rural area, because it's the number one player if you take a look at 100cc and 125cc. So rural recovery, if there is any recovery, Hero MotoCorp would be the biggest beneficiary.
Okay, so Darshan, thank you so much for that. But let's move on. We have Ekta with us to tell us what to expect from Cipla in terms of their Q4 numbers. Good morning, Ekta.
Thanks for that. Well, for Cipla this quarter, we are expecting a revenue growth of around 9-odd%, the EBITDA to grow probably 20-odd%, with margins coming in at around 24% and a profit growth of around 13-odd%. US sales, watch out for that, expected to probably decline on a year-on-year basis. Now, domestic sales are expected to see around a 9 to 11% growth. Growth in the domestic business is expected to be led by the base business as well as Sanofi CNS portfolio. US sales expected to be around $218-odd million and could probably see a decline of 3 to 4% Q-on-Q, and could be probably impacted by issues such as lower sales of lanreotide impacted by supply challenges. Revlimid generic sales likely to be flattish, so estimates are around 54 to 55 versus $55 million the previous quarter. Margins, like I mentioned, should be between 23 to 24%. A couple of key things in terms of commentary would be, the update on lanreotide, albuterol sales, launch of Advair generic as well as a Brixon, and obviously all what is taking place in the larger world of pharma.
Indeed, promises to be a busy second half for all of us as the numbers start to trickle in. Ekta, thanks a lot for that. By the way, just as we mentioned numbers, you can't take your eyes off the defense stocks. Bharat Dynamics has now extended gains, is now up 7.5% as we speak. And some of the others as well, including the likes of Zen Technologies, BEL, those two are trading with gains of around 4 to 5% in today's session. Some flashes on your screen there. Lupin has launched the tolvaptan tablets in the US with 180-day exclusivity. We've been talking about this over the last couple of weeks. The tolvaptan tablets that are used to slow the kidney function decline in adults. It's an important drug for the stock, and so important developments coming in there.
A big opportunity for Lupin as well, because around 150 million to 200 million is what FY26 opportunity one is expecting, is what analysts had highlighted the last time we had this announcement.
And indeed,
as well.
So positive developments coming in for Lupin as well. So important pharma continues to be in focus, and their estimated annual sales in the US of around $1.5 billion. So it's a big drug for tolvaptan, for Lupin, and the stock now at the highest point of the day, 3.25% higher on that name as well. Among the losers, UPL continues to remain the top laggard on the Nifty 500, 5% down on that stock. KFin Technologies, after the block deal, has recovered from the lows, still down around 4%. And Bharti Hexacom, another broader market name reporting results today, is down around 3.5% ahead of its results. But KPR Mills too was down almost 10 to 12% in yesterday's session after its results, and it's extending its losses down another 3% in today's trade as well. But with that, we call time on this edition of Trading Hour. From Winnie, me, and the team that put this show together, thank you so much for watching. Halftime report on the other side.
Hello and welcome to Halftime Report on CNBC-TV18. I'm Ekta Batra. Well, it's turning out to be a session where we are definitely seeing some amount of nervousness on the screen. At this point in time, we have the Midcap Index, however, which is just about holding up. But nonetheless, we have a lot of top stories to track in this hour, so let's get going on that. Stocks slip as investors remain uneasy about the US-China interim trade arrangement and its implications for China, for India. Caution over the India-Pakistan conflict also lingers. Healthcare and industrials are the big gainers, while IT and financials drag. The US order on drugs calls for setting prices at most favored nation levels only for a direct purchase by patients from manufacturers, significantly diluting terms of the original draft and propping stocks. Hindalco slips after US arm Novelis withholds guidance on macro uncertainties after posting an in-line quarter. Analysts, however, remain upbeat on the outlook for FY26. Block deals seem to be making a comeback with some cheer in the market. Paytm sees a trade of 4% of its equity, while KFin Tech has 10% of its equity change hands. Hello and welcome to a Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra. Well, it's turning out to be quite a good session in terms of the broader markets and a lot of the pharmaceutical stocks which continue to be in focus. The spotlight, in fact, is on the entire pharma space, which has actually seen some amount of recovery today after the executive order that came out last evening. Now, Trump, remember, signed the executive order to align US drug prices with peer nations. The mechanism is basically to let patients buy drugs directly at the most favored nation prices. Now, US drug prices, remember, are over 3 times higher than in other OECD countries. US funds 75% of global pharma profits despite being under 5% of the population. And Americans subsidize foreign discounts through inflated domestic prices, according to the executive order. Now, the impact, the reason why you're seeing a lot of the pharma stocks higher is because the executive order is not as binding as the April 2020 version, which was any which way blocked by courts. The order focused on patients who want to directly buy drugs from manufacturers, and around 8% of the population is not covered by any health insurance as per Macquarie. So the number of people impacted by this is around 8% favorably. There is no mention of Medicare or Medicaid channels in the executive order. The focus, according to the experts, is basically on big pharma and innovative drug companies. The aim is to equalize pricing of patented drugs available in Europe and Canada as compared to the US, because the prices are cheaper there. Aim is to eventually remove the middlemen in drug pricing in order to reduce the prices. And there is no direct fallout, according to experts, on generic drugs and biosimilars. As you can see in today's trading session, all of the stocks are reacting positively. The street will, however, wait to see the steps on import tariffs on pharmaceuticals. Macquarie has written on it. They spoke on Sun Pharma specifically, where they said that 20% of sales comes from their specialty drug business. 80 to 90% of the specialty drug business sales come in from the US. So it was impacted on account of the possibility of what could come out. And specialty drug Illumia has some amount of Medicare exposure. Now, with the executive order being benign, Sun Pharma has seen some amount of recovery, and Macquarie is of the opinion that the impact is not as much as anticipated.
All right, Ekta, take that point. That's about the pharmaceutical pack, which is the only pack which is actually doing well in a sectoral way today. But we have a bunch of stocks which are buzzing around. We have Bharat Dynamics up 7.5%. So defense stocks which had been doing well earlier is now coming back. So but that's the one which is higher, and the others are as well in focus. But let's talk about Tata Steel that reported an inline set of fourth quarter numbers. The revenue impacted by drop in realizations across geographies despite rise in volumes. Nigel spoke with TV Narendran, who's the managing director and CEO of the company, started by asking him about the prices. Listen in.
Yes, prices have moved up a bit. In India, I think it's about 3,000 rupees higher this quarter than last quarter. That's the way we see the prices in India. In Europe, it's about 20 to 30 euros higher, in this quarter compared to the last quarter. So that's the situation that we see in both geographies.
Okay, coming to India then, Indian prices, as you said, they've moved up considerably. Now you have that a safeguard duty as well, which will protect the domestic industry. My question to you is, the landed cost of steel is actually cheaper today. That is, the Indian steel is at a premium in comparison to the landed cost of imported steel. If that is the case, do you see this pricing sustain, or do you think there is a bit of a risk to pricing going ahead?
I think the pricing can certainly sustain at this level. Whether it goes higher depends on what happens in the international markets. I think the concern continues that China exports about 10 million tons a month. They exported that much in March and in April, and that certainly has a dampening effect on international prices. But I think when you look at importing into India, there is a risk of forex. There is a risk of material arriving 3 months later. You don't know where the prices will be at that point in time. So that's why imports are not yet significant. I think the safeguard duty has helped stem the flow a bit. And so we're looking forward to some stability in prices and some positive movement in prices going forward.
Okay, all right. What about the cost of coking coal? You know, because the cost of coal is another big variable that will help us determine what is the EBITDA per ton. So what was the cost in the past quarter? How much did it cool off from the previous quarter? And on an average for this quarter, what should it look like?
I think we're guiding that this quarter will be about $10 lower in terms of consumption, coking coal, because we got a lot of the benefit in the last quarter. So the drop in coking coal prices has stopped. It's stabilized. In fact, it's gone up by about $10, $15 in the last few weeks. But from a consumption point of view, we expect a consumption cost to be about $10 lower this quarter compared to last quarter.
Okay. You've guided for big savings in the coming year, sir. That's around 11,500 crores between various geographies.
Yeah.
What does it mean in terms of the profitability going ahead?
Yeah.
When does Europe move into the green? And for India, what is the rough EBITDA per ton we should work with for the coming year?
So if you look at Europe, as you're aware, we are in the middle of transformation, both in UK and in Netherlands. I think the challenge in Europe has been that we need to continuously transform to stay ahead of the curve. So in UK, a lot of the transformation is already underway. As you're aware, we closed the blast furnaces last year. We will have the electric arc furnace coming up in 2027. But in between, we'll be taking out a lot of costs. We've already taken about 230 million euros of, or rather 230 million pounds of fixed costs in UK in the last year, and we'll be taking out another 200 million pounds of fixed costs in the UK this year. So a lot of the cost saving is coming from that. In Netherlands as well, we are in the middle of a major transformation. If you look at the Netherlands numbers, we have actually swung from minus 450 to 500 million negative EBITDA to 80, 90 million positive EBITDA. So that's a 500 million swing in a difficult market. And we expect to move in that direction this year as well. So to go back to your question, I think we expect Netherlands to continue to be obviously EBITDA positive and get better as we go along because of the actions that we are taking. And if the prices move up, that's going to help us even more. As far as UK is concerned, we are pretty close to, break even as far as EBITDA is concerned. Some of these cost takeouts of last year will play out this year. So you'll see that playing out during this year. So we expect that this year, certainly Europe between Netherlands and UK will clearly be EBITDA positive. But there's still work to do there. As far as India is concerned, yes, the EBITDAs, I can't give you specific guidance on the EBITDAs, but certainly we expect this year to be better than last year.
All right. On Europe in particular, could you tell us by which quarter do you expect European business to move into the green? And you mentioned that UK as well is moving in that path. So when does UK turn positive?
Yeah. So I think Europe will move into the green from this quarter itself. Okay. But UK will still be marginally negative this quarter. And we hope in the next couple of quarters, we will turn green there as well. And we are expecting that UK will be green for the full year.
Okay. All right. So that's encouraging to hear then. Well, Mr. Narendran, tell us about the debt number as well, because there has been some release of working capital. So that's why we've seen it come down, I think, from around 88,000 crores. It's come down to around 82,000 crores. However, you have a capex plan as well that's underway. And I think last year it was roughly around 15,000 crores. This year, I think you're guiding for a similar number. So tell us, what is the capex plan for this year? And in an absolute number, where does the net debt head to?
Yeah. So I think the capex plan stays around the same, around 15,000 crores, because we will be completing the Kalinganagar expansion, at least the spends. A lot of the spends are happening between last year and this year. So that's on the capex side. Last year was a year where we were coming out of a difficult market, the peaking of the Kalinganagar capex, and not really getting the volumes that we were to get out of it because Kalinganagar was still ramping up. So we expect better cash flows this year, and we expect to bring down the debt. I'm not giving you a specific number, but we will certainly bring down the debt during the year.
So net debt number at the end of FY26 will be lower than FY25. Is that correct?
That's correct.
Could it be $1 billion lower?
Well, that's what we are always chasing, but we are still some distance away from that, but we are working on it.
All right, Mr. Narendran, we cannot wrap up any conversation without talking about the man of the last few months, Mr. Trump. These tariffs, is it impacting demand? How do you see things panning out? China, as you said, they continue to export, which is putting pressure on the globe on the whole, the global ferrous industry. But because of these tariffs, what kind of changes are you seeing both on the supply and demand side?
I think what it has done is obviously provoked everyone to look at themselves. So if I look at Europe today, Europe is looking at how can they work in an environment where they can't depend as much on the US as they did in the past. So you see a lot more positive thinking in Europe about manufacturing, about investing in defense, etc. So over the medium to long term, I think it's positive for Europe because they will spend more in Europe, whether it's what Germany has already announced and whether it's about the other countries planning to spend more. So there is a medium to long-term positive impact on Europe because I think manufacturing will get a boost in Europe. But having said that, in the short term, of course, we are dealing with these tariffs. UK has got into an understanding with US, so we don't see the impact of that. We don't see a negative impact of the Trump tariffs because UK has got itself a deal. But as far as EU is concerned, they're still negotiating. About 700,000 tons of steel goes from our Netherlands operation to Europe. Some went to the US. Some of those steels are not made in the US. So to that extent, our customers in the US are also struggling with these tariffs. And part of those tariffs will obviously get passed on to the customers there. But that's a discussion we are having. We're also waiting to see what the EU government and the Trump government concludes in their discussions.
Final question, sir. For the India business, what is the volume growth you're looking at for this year? And also on ground, demand is as strong as you expected?
Yeah, demand has been quite reasonable. I wouldn't complain much about the demand. In fact, it's because the demand has been strong that Indian steel producers have managed without exporting much, because international prices are not great and export markets are not really attractive. So from that perspective, I think the Indian demand is holding up okay. It could be better, but it's not too bad. So this year we are expecting about 1.5 million tons more than last year. We have another blast furnace relining coming up in Jamshedpur, and that's why we have some loss of volume in Jamshedpur because of that. But net, we should be about 1.5 million more this year compared to last year.
All right, 1.5 million more this year. When it comes to volumes for India this year, that's the word coming in from the management at Tata Steel. Meanwhile, before we slip into a short break, a couple of stocks that notice mention or required mention. We have the Midcap index, which has moved to the high point of trade, 0.2% in terms of gains. Allied Blenders, that's the one which is up about 6%. We're also seeing some traction in Latravenues Tech, which is basically the owner of Ixigo. Travel and tourism stocks have been doing well for the last couple of trading sessions. So we've moved higher on that one. Rallis India continues to see some gain, up around 6%. And finally, we have Zaggle Prepaid. This is up 7%. This morning, we had the management join us here, talk about their growth guidance for this year. At the same time, look at margins around that 10 to 11% mark in this year itself, with management saying that they may perhaps look at buying stake in the company as well. Take a short break, and as we do that, let's give you some programming notes. CNBC-TV18 and HSBC India are back with Season 2 of the SME Championship Awards. This prestigious platform celebrates the SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. You can do that by scanning the QR code and submitting your entry for the SME Champion Awards Season 2.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. But let's talk about a specific company now. Borosil Renewables is the next management on the show. It reported what was a good set of quarterly numbers. The sales volume came in healthy. To discuss more, we have with us Pradeep Kheruka, who is the Executive Chairman, Borosil Renewables, joining in now. Mr. Kheruka, thank you very much for taking the time out. Well, you know, what stands out is the EBITDA recovery, which has taken place year on year. EBITDA of around 15.5 crores versus a loss on a year-on-year basis. Can you tell us what led to this turnaround and what is your guidance? Okay, I think...
Sorry, I was muted.
Yeah, yes. Go ahead.
Actually, the EBITDA turnaround has come principally from higher prices. We have been selling in the past at a very, very low price, trying to match the dumped prices coming from China, which were selling well below the actual cost of production, even for them. And the other thing is also a growth in volume. So we've achieved a growth in volume as well as a growth in prices.
Right. How much have been the growth in prices? And if you could tell us what the current prices are versus the previous quarter so that we can get an estimate on how the EBITDA run rate will be. Because you've gone through the cycle of the downside and now it is looking up. So are the current quarter prices better than what they were in the previous quarter? And to that extent, what's your EBITDA uptick likely to be this year? If not this year, at least the first couple of quarters where you have visibility?
So I'll tell you that the EBITDA uptick is looking better for the current quarter. The last quarter from January to March was a time when we'd just gotten the provisional duty announced in December, and then we were increasing prices gradually. You can't do these things abruptly. We are now pretty close to the minimum import prices, which have been declared by the government. And so EBITDA currently is higher than what it was in January, March. So EBITDA should do well. We are also producing and we are selling. There's robust demand for the production. So at the moment, everything is looking like it's on track.
What's the absolute pricing right now? Because I remember you had said that 56,000 per ton is a fair price as seen by the Government of India. Imports that time were close to 28,000 rupees per ton. This is as of November, December that we were speaking. Now, currently, what are the prices at?
The current prices are nearly at the rate of EBITDA, nearly at the rate of the imported price, which is about...
Sorry, how much is that?
About 154 rupees per millimeter. Sorry, 54,000 rupees per ton. My apologies. 54,000 rupees a ton.
Okay. All right. So, you know, just wanted to focus on the European market for a bit. We do understand that there's been some amount of demand pressure in the European market. Can you just take us through what the current scenario is and what is the dumping like which is taking place from China?
So the European market, I can share my knowledge and information with you. You see, for the last calendar year 24, the Chinese dumping had reached unprecedented levels in Europe. They were dumping modules at an alarming rate, at alarming prices. Now, this did show that the installation in Europe went up to 65 gigawatts during the year, which is a very high number. And but most of it came from China. And Europe had very little to do with this installation. In fact, the module manufacturers, the leading ones, all shut down. This sad state of affairs was because of a political problem in Germany, and that led to elections. And now the new government, which has just been sworn in, has already announced that manufacturing of solar products in Germany is very high on their priority list. And part of the deal that they have struck with their coalition partners is $100 billion of investment in solar. So that's a very strong number. And the European Union Parliament has mandated that with effect from the 1st of January next year, 40% of all installations must come from European manufactured modules. So all of this portends very strongly for a resumption of production in a very big way in Germany and in the rest of Europe. This has already been activated in Italy and in Austria, and demand from these two countries has surged, which has led to a reasonable resumption in the manufacturing of solar modules. So right now what we are doing, we are looking at sourcing annealed glass from outside and tempering it and processing it and selling it in Germany and elsewhere in Europe, which will reduce the loss numbers that we are currently seeing. And hopefully with the new government having assumed office last week only, soon enough there should be a proper program to sponsor and to relaunch production in Europe. The moment that happens, we are the only solar glass producers in the entire European Union.
Right.
So we'll have the first count on that, and I don't know if it becomes very good. We may even have to double our production there.
So operationally, what is the loss that you make in your Europe subsidiary right now? And does it break even in the next couple of quarters so that we get a swing factor? What's the kind of EBITDA that is expected from there?
You see, we are losing a lot of money. We're losing about nearly 800 to 900,000 euros every month right now. But hopefully from July, we should see a downturn in that. If we start production of tempered glass there based on imported glass, then that should reduce the EBITDA loss. That should reduce the loss by more than half. And the moment we have a little more firm news about resumption of production, then that will cause hopefully the loss to go away and maybe even some profits to be seen.
Okay. But what about profits on a blended basis? While your margins have done well, and considering that you do have these variables coming in from Europe, what can you guide on the bottom line for the year?
That's quite challenging for me to give any guidance on the bottom line for the year, because even when we were looking at anti-dumping duty, I was quite sure, I was very positive that it's going to come, but it did come as a provisional duty in December, and then we had to wait virtually till the last date when the final duty was announced. So right now, at least so far as India is concerned, the duty is final, and it is there till the 5th of December 2029. So for the Indian operation, it kind of gives us a clear runway ahead on what needs to be done, and we'd already taken permission from the board to step up production by 500 tons per day. Now, when I'm looking at the equipment which is available, maybe we could aim for a little bit higher production than 500 tons per day. But since so far the announcement in the board and the stock exchanges is 500 tons, I shall not go beyond that today in my conversation with you until this is being made public. And then, then it becomes public.
Take that point. So you are for sure going to increase your productions by 500 tons per day, and it could actually be more than that as well, which you will apprise the exchanges of. Final question, during peak periods, your margins were upwards of the 20% mark as well. We've seen that move to around 4% with the European losses coming down, with the Indian prices increasing, and now you have this certainty of, duty regime over the next 5 years as well.
Yeah.
Do you see them trend towards those levels, at least in the second half of this year? Is that a possibility?
We look, this is a forward-looking statement that I normally do not make, but in this case I shall. And I would say that an EBITDA margin hovering around 30% is something that I cannot disclaim.
Okay. 50% is what you said, huh?
No, 30.
30%. Got that. Take that point. Thank you so much, Mr. Kheruka, for joining in and giving us those details. The next year looks good for you, and the year after that as well, perhaps even better, with the European loss-making operations turning profitable for you. The stock holding up fairly in the green. Take a short break. Come back on the other side. We talk trade with Sachidanand Uttekar of Trade Bulls. spoke about a couple of broader market stocks. Just keep an eye out on Paradeep Phosphates. That's one which has surged right now. Keynes Tech is the other one which is up 5%. And another one which is spiking from the lows of today's trading session at the high point is Vishal Mega Mart. Reported a good set of numbers this time around. Value retailers have been doing well this quarter so far. And Vishal Mega Mart is one of them, which is up around 3.5% right now as we speak. But good time to look at the F&O setup of the day. You have to divide the indices in two parts. One is the indices which are seeing profit booking after a big rally yesterday. So this is Nifty as well as the Nifty Bank. The good part is they're holding on to important levels. The Nifty Bank went just below that 55,000 mark today, has recovered from there, holding above that. And we have the Nifty, which is holding around to that 24,700 mark itself. Though we're seeing strong outperformance in the pharmaceutical space, Ekta told you why. And we have some traction in the mid-cap end of things as well. And if you look at the advanced decline ratio, the portfolios might be feeling a lot better no matter the state of the Nifty right now, because we have nearly 2 stocks gaining for every stock which is declining. On the way up, however, after a big rally that we saw yesterday, maybe some bit of cool-off was warranted, and that's taking place out here as well. 24,800 call writers fairly active, telling you closer to 25,000 we might face some supply. As is the case for the 24,900 call writers as well. They're fairly active as well, and these are options that expired this Thursday. So 25,000 thereabouts could be some supply. At the lower level though, support has moved higher. Remember, from 24,000 we moved all the way up to 24,900 yesterday. The earlier resistance of 24,500 will now stand as strong support. Why do I say that? Because you have the 24,700 put writers, which are fairly active, pocketing a premium of nearly 200 rupees. The India, put call ratio for the Nifty. Yesterday we had pointed out that at 1.2 is slightly overheated. Now it's cooled down to around 1 itself, and that is supportive of a rally in the market in the near future. We have BEL, BSE and IIFL Finance, all of them seeing a lot of long positions being added. But on the other hand, we have UPL, which reported its numbers during markets yesterday. Street not very happy with those numbers, down 5% today. A big surge in short positions out there. Ekta.
Okay, all right. So that's on the F&O space. Thanks, Mangalam. For that, Sachidanand Untikar joins in to discuss what he's targeting and what his strategy is today. Sachidanand, thanks very much for taking the time out. Well, it is definitely a down day, but let's start the conversation with the positives, which is the entire pharmaceutical space, which is buzzing around. What is your call?
Good afternoon, Ekta. Good afternoon, Mangalam. Clearly, I think there has been a very strong price action when it comes to Nifty Pharma. The expectation was that there are signs of consolidation, but looking at the news flow, the anticipation was that there could be a breakdown. But if you look at the price action closely, even yesterday when we saw the Nifty breaking or surpassing that 11 days of consolidation, we saw a very strong recovery from Nifty Pharma itself. I think the base at around 21,000 was well maintained, and if you look at the daily chart, it exhibited a bullish hammer formation, which is again a very strong sign of a reversal. So I think going forward, we may see Nifty Pharma itself scaling towards 23,000 levels. The base which it maintained in yesterday's trading session at around 20,500, I think that particular base may not be violated in this particular series itself, and we may see this particular rally getting extended towards 23,000.
Okay, what about other stocks and strategy today?
Well, the focus is on stock-specific action. If you look at the Nifty, we are firm with a view that Nifty could scale towards 25,180 during this particular expiry itself, and that's why we are continuing building long positions here. Even right now, the pullback is very meaningful. One can keep a stop loss at 24,580 on a closing basis and try to add more long positions. We are expecting that this particular decline may extend towards 24,640, 660, which will be an ideal level to add more long positions when it comes to index. On the stocks front, there are a lot of stocks which are showing consolidation breakouts, base building breakouts. So one of them is LIC Housing Finance. Now, if you look at the overall structure, for the last 5 months, the stock was consolidating. It was forming a rounding bottom kind of a formation. The neckline of this particular pattern was placed somewhere close to around 600 levels. But if you look at yesterday's price action, we saw its 200-day exponential moving average plus its 50-weekly exponential moving average, which is placed at around 595. This particular level was breached with a gap. Since then, there has been long additions which are seen in this particular counter, and that's why we believe that there could be further momentum in this counter. Keeping a stop loss at around 607, one can accumulate this particular stock for a pattern target of around 660. The trading target is placed around 642. The second counter which has come up on our radar is Concor. Now, even here, after almost 6 weeks of consolidation, we are seeing a very strong OI breakout at around 700 levels. So probably we may see further elevation in levels. The momentum can extend towards 746 on an immediate basis, but the positional target is placed somewhere close to around 780. So it's a consolidation breakout, and that's why we believe that the moment the stocks dips below 684, this particular pattern will be void. So keeping a stop loss at 684, long positions are recommended in Concor. First target would be around 746, positional target would be around 780, and a disclosure would be that we have recommended this stock trade setup to our clients as well.
An important milestone achieved for Concor as well, because the Western Dedicated Freight Corridor has been completed. We have seen some notifications coming in from the government, so that's the fundamental part. Sachi, thank you so much for joining in and giving us individual stocks and index trades. Take a short break. On the other side, we have the management of Chalet Hotels joining in to discuss their fourth quarter numbers, which was a good set. Welcome back. Metro Brands is another one which is up 4%. So a lot of these holiday stocks as well as consumption stocks doing fairly well. Good news, flight operations have resumed at Srinagar Airport, so that does well for all the travel and tourism stocks too. Speaking about travel and tourism, Chalet Hotels reported a very good set of fourth quarter numbers in line with how the industry has performed so far as well, a tad better if you must. The revenue and margin came in fairly strong. Average room rates increased by 21% as well. So to discuss this and the demand picture going forward, we have Sanjay Sethi, who's the MD and CEO of Chalet Hotels, joining in. Thanks a lot, Sanjay, for joining in. Always a pleasure speaking with you. Good end to the fourth quarter, or rather good end to the financial year. Question is, what are you targeting for this year when it comes to revenue? And if you could break that up for us in terms of, increased occupancy, increased rates, and at the same time, increased revenue coming in from your real estate vertical or annuity business, which is margin accretive.
Sure. Mangalam, always a pleasure back being on the channel with you. Thank you for having me. Look, we've had a very strong quarter four. It's been record-breaking on all parameters. And it's in line with what we've been saying, that the industry continues to have tailwinds for the foreseeable future. And on the macro front, I see 3 to 4 years continue to be very strong, where demand will outpace supply. And therefore, we'll see some small occupancy improvements in stabilized hotels. But more importantly, we should see rate improvements going forward. The current situation in the last couple of weeks obviously had us a lot concerned. We took contingency steps to freeze costs and watch monitor the situation very closely. We also worked with the local authorities in helping in whatever way we could. It's always nation first for our team at Chalet, and we sort of followed that. Going forward, I'm hoping with the way things are, and I cannot confirm that, but if things continue to settle down from here onwards, we believe business for June will be back to full pace. In May, we've lost some business. So whilst April did well, May we've had hit some losses and cancellations. So far, June looks strong. Having said that, and having said that May we saw some cancellations, we've still grown at 12% over the May of last year. So the growth is still on. And we believe that we will see double-digit growth on existing hotels. And as we add new hotels, the inorganic growth will start kicking in very sharply. The office assets are moving into fruition and leasing activity very quickly. We've had an exit rate of 21 odd crores in the month of March. And I think this month onwards, we'll probably be at 25 crores, which means 300 crores of rentals from the office assets and around 95% flow through from those rentals. So they will assist us. Hospitality continues to be the largest part of our business, which we now have in two segments, which is leisure as well as business hotels.
Okay. Mr. Sethi, I just wanted to touch a little more upon the cancellations that you faced in the month of May and the impact that you've seen. Can you quantify that for us? See the percentage of cancellations and what might the impact be specifically in possibly properties that you have up north?
Sure. So the leisure hotels obviously saw cancellations of MICE movement because it was very uncertain last week. We hope that some of them will come back because they're not all canceled. They've actually pushed back the dates. So we expect them to come back and maybe subject to availability, it'll help us grow the business going forward from this what we lost here. As I said, we are still, despite what's happened in the last 2 weeks, as of 11th of, actually as of May, 12th of May, we are 12% over last year for the first 12 days of May. We are still shy of our targets by about 6 to 9%, but it isn't by any imagination a massive hit.
Got it. Just from a growth standpoint, I remember, Mr. Sethi, you have been earlier saying that FY26 is a year where a lot of your assets will come on stream. FY27 is where one should see growth. So I'm just plugging in some of the numbers. You have around 3,300 keys right now with about 1,250 under development. So that's an immediate 30% push through when it comes to capacity. Even your, annuity assets should increase by about 10 to 20% over and above what they're doing right now. And FY25, you ended with revenues of close to 1,700 crores. Assuming you do 2,000 crores, basis what you've been talking about in FY26, are we looking at numbers close to 2,500 crores on the top line with 40% plus margins in FY27? Would there be a fair estimate?
So we don't give forward-looking numbers, but I would say your numbers are not too far off. We have our own assessment of the situation. We believe we'll do better than that.
Right. So 2,500 crore is achievable by FY27 with 40% plus margins. Also in your balance sheet.
We have delivered 46, 47% margins now. So it's not just 40% margin, it's north of 45%. And as office assets mature, the margin will also improve.
I was just being a little conservative out there, given the sort of operations that would come by and, all those assets requiring some of the investments, etc. But 45, 46% is what the street will take. What about your balance sheet? You had delivered a little bit because of the funds that you raised via QIP, sub 2,000 crores. But then thereafter, you made an acquisition of Western Himalayas, which added about 500 crores to your debt. So where does that picture stand at right now in terms of net debt? And what's your deleveraging plan?
Yeah, net debt is a little shy of 2,000 crores. We've taken enabling resolutions for raising 1,000 crores sometime in future, but those are only enabling resolutions to keep our gunpowder dry for further growth activity. Most of the pipeline that we've announced, in fact, almost all of it, will be serviced by internal cash flows. But if we get some opportunities going forward, we'd like to keep the balance sheet in a situation where we can actually activate some of those. Our overall goal is to go north of 5,000 rooms in between pipeline and operating hotels.
Okay.
And we expect that to get through that in the next 4 to 5 quarters.
All right. You do have 2 properties, one in your Western Hyderabad as well as your Khandala property. When exactly does that start reflecting in terms of your P&L?
Western Hyderabad is already operating. It is Western Himalayas, which we acquired on I think around 10th or 12th of February. So it is reflected for about 40 plus days in the last financial year. But this is a ramp-up property. The occupancies are in ramp-up phase. The average room rates on that property are very high. They're currently hovering around 28,000. Occupancies are about 43 to 45%, and we believe they will stabilize at about 60% going forward. On the Duke's Retreat in Khandala, we have 73 rooms operational, but we didn't have a banquet hall ready. That's getting ready by end of this month. And with that and the expansion on rooms to 145, we expect this property to really kick in from October of this year.
All right. All right, Mr. Sethi, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Shali Hotels. That stock is down around 0.5%. Yes, they did see some amount of impact on account of the geopolitical tensions in the past week odd, but nonetheless, on a year-on-year basis, the month of May is still up around 12%. So that's important to note. We need to take a short break, but on the other side, we'll get you more on the market. Stay tuned.
Network 18 decimates Times Internet with over 6 times more unique users on social media. Network 18, the undisputed leader of news networks, way ahead of the times.
Investing.
Welcome back. Well, before we just get talking about the currency space, just want to point out Lupin because they have launched the tolvaptan tablets in the US markets. It's a big drug for them, around $1.5 billion in terms of market size. And 180-day exclusivity is what Lupin has. That stock is higher on the back of that particular piece of news. Factored in, but nonetheless, they finally launched it in the US markets. But Tuesday has seen a strange case of all-round rise in key currencies. The rupee is 0.5% higher versus the dollar. The yuan has also climbed sharply versus the dollar for the second day. But the dollar index is higher against GS currencies. Lata is here for a roundup on what's taking place. Lata.
Well, there are actually multiple forces rocking the currency market. The rupee is higher because it didn't trade yesterday. So it's actually, versus its Friday close, it is tracking in the de-escalation of the last 3 days. And, on Friday, it had touched a low of 85.80 also. And now it is almost 1 rupee cheaper to buy the dollar. It has gone up to, 84.80 and more. So a 0.5% gain in the rupee because it is giving you 3 days of appreciation. And that's largely because of the de-escalation in the war. For the yuan, it has been 48 hours of a climb. I mean, just imagine what the yuan's plight was all through April when there were zilch exports to the US after the reciprocal and the 145% tariffs were announced. So yuan fell all the way to 7.33 to the dollar. And now suddenly there is a gush of exports after the weekend tariff reduction. Expectation is that US importers are going to import like crazy, practically for the entire year. And therefore, that is getting factored into the yuan. It became as strong as 7.18. And I think it was Goldman Sachs which put out a report saying that it will go even to 7 yuan to a dollar because of the aggressive exports that is expected out of China. And the dollar in its own way has been rising, not so much against Asian currencies, but it has been, the DXY is more pitted against the G3 currencies. So it's more Swiss franc, euro and yen. You've seen the dollar appreciation because it had depreciated a lot. And now it looks like the worst of the US trade tariffs are already factored in. Now, if anything, the news is incrementally better. Already a UK deal signed, a US-China pause signed for 90 days. That covers, more than 6 months of this year. And therefore, the dollar is now appreciating against the G3 currencies. All told, let us prepare for a very rocky period for currencies, whether it is the dollar or whether it's Asian currencies. The larger expectation is that Asian currencies will be on an appreciation trend.
Right, Lata, thanks a lot for that. All-around rise in currencies is what we're seeing. Speaking about currencies, we'll take a short break, come back on the other side. We speak about commodities as well. Manisha Gupta joins in with Peter Maguire of Trading.com. Stay with us. But it's a party at the mid-cap end of things right now. Even though the index is mildly off highs, when we started about 15 minutes ago, we had the mid-cap index seeing a gain of 0.2%. Now it's come down to 0.3%. But that's not stopping a few stocks. We have Star Health, which has moved to the high point of trade. A 7% up move is what we're seeing out there. TD Power is the other one, which is again up around 7%. And Bharat Dynamics as well as Bharat Electronics. We've seen a rise in defense stocks. Look at the double-digit rally that we're seeing on Bharat Dynamics right now, up nearly 10.5%. And Bharat Electronics as well is the other one, which is doing well. But that's about the equity space. We do have all things commodities coming in with Manisha, who's joined us in the studio. Manisha.
Well, thank you so much for that. And joining us on the show also is Peter Maguire. He's CEO at Trading.com. Peter, hi. What interesting last 24 hours have been. Well, that's really been the case for most part of 2025 till now. But the US-China trade agreement, even if temporary, even if for 90 days, has had knee-jerk reaction coming in for many of those commodities. I first want to start with the gold prices, where we did see 3% of decline yesterday. It's trading 0.5% on the higher side right now. How are you reading this price move?
Well, good afternoon, Manisha. I mean, what we've seen has been dynamic, and as you highlighted, off 100, and now it's back up a little bit, 32.58 at the moment. I feel as though that's probably going to, it was oversold and it's just incredibly volatile. We had, days last week, you're up 100 and now it's down 100 in a session. So that just demonstrates, I think, you've got US dollar, you've got what's happening as far as the trade talks and that agreement and, the 90-day period for it to be worked through. And that US dollar index has had a big run up. So, yeah, that's naturally the heat came out of gold. But, you had to be very focused yesterday. NASDAQ was up nearly 4.5%. And all the Asian equities will well bid up as well.
Oh, well, absolutely. So what's your sense on gold prices now? Because all kind of news, and we've seen gold prices perhaps factoring that in, but 3,200 to 3,400 really seems to be becoming a narrow range for gold prices. How do you look at gold for this quarter now and until the end of this year?
Well, first off, yeah, I wouldn't be surprised to take another little bit of, more heat to come out of it just in short term. And when I say that, we could see another 100 stripped out of it. You may not. But I just feel as though that US dollar seems to have very strong momentum. It could take a 102, 103, because it was at 102 only a matter of probably 12 or 15 hours ago. And now it's given up some of that. A bit of hot air's come out of that as well. You're running, the best part of that, 101.60. By probably end of quarter, and we're halfway through, Manisha, I'd say I wouldn't be surprised to touch a 34 or 3,500, 36. And then by end of year, well, I think it's got the capacity, probably 4,500, as, Goldman's have stated. And, we're not going out on a limb. It's probably, that's where all the brains trust is working together, and they think that number's achievable.
Peter, also, how would you look at silver? Because yesterday it fell with gold, but today it seems to be rising with gold and base metals. Do you see a slightly confused silver market right now?
I think, yeah, if I look at the industrials, copper, aluminium, zinc, tin, they're all up. Tin had a good night. It was up, best part of 2.1, and aluminium up 2.6%. Silver, yeah, it's bid up, and, the gold to silver ratio is way out of kilter. So I think that there's plenty of upside yet for silver, as we keep on saying. It's 33.20 at the moment, 33.25, and the critical shortage as far as silver globally, and the underinvestment across the whole sector over the last couple of decades. So that's the one to keep a very close eye on, and I think that's best days are certainly ahead of it over 25, Manisha.
Peter, I remember you saying that 38, even 40 is a possibility in this year for silver. Are you staying with those numbers?
Oh, I think that'll be on the low side. Yeah, I think it'll be well through 40. I think you're running at 33 now, and as gold continues to climb, it'll take silver with it, and when it rolls, it's going to be game on, because the overall momentum, I think that's where everyone will be stacking positions. Big interest as far as physical buying from the retail land. And of course, when the paper market, people will just be, game on.
And do you see also game on in some of these base metal prices? Because copper definitely is seeing some support, but even more coming in for aluminum and zinc.
Yeah, copper 95.20, aluminium still, I just can't see to get, aluminium, it's still under 2,500, Manisha. We're nowhere near that 3,000 handle. Zinc's nearly at 2,700. That's got a little bit more momentum to it. So I think that they'll both edge higher naturally over the next couple of months, leading into that, 90-day decision, as far as what Treasury Secretary Scott Bessent said, as far as the trade talk. So, yeah, over the summer period, I think, those industrial metals will trend higher.
Right, we take that point. Peter, incredible insights on the precious metal space. And I heard the word game on a couple of times from you. You spoke about silver, you spoke about gold. But for me, the true diamond, Virat Kohli, decided to hang his number 18 white jersey. He's one of those who, Australians would say he's the best Australian that we know of outside of Australia. You want to chime in on that?
Well, yes, Mangalan. When you think about the might of what he was truly a legend. And, well, these things happen. Not everyone plays forever, and no one does. And we wish him well in retirement or wherever that takes him.
And you're chuffed about him not playing the next Border Gavaskar Trophy?
Yeah, well, we're going to let you guys have a chance. That's all I'll say.
I think the next 3 trophies would be ours itself. Let's put it out here on national TV, and let's see how that goes. But until then, good luck for the World Test Championships that happen.
Thank you very much. May the best team win.
And the best team being New Zealand, or? All right, Peter, that was a great conversation. Manisha, any word on precious metals, or would you like to chime in with your expertise?
Well, may the best team win.
May the best metal win, as per Manisha. All right, with that, we'll wrap up on this edition of Halftime Report. We've had our bellies full with conversation right now. But on the other side, you have Business Lunch, taking all the market action ahead.
Stock slip as investors remain uneasy about the US-China interim trade arrangements and its implication for India. Caution over the India-Pakistan conflict also lingers. Healthcare and industrials are the big gainers, while IT and financials are the top tracks. The US order on drugs calls or setting prices at the most favored nation levels only for direct purchases by patients from manufacturers, significantly diluting terms of the original draft and propping the stocks. Hindalco slips after US arm Novelis withholds guidance on macro uncertainties after posting an inline quarter. Analysts, however, remain upbeat on the outlook for FY26. Block deals seem to be making a comeback with some cheer in the market. Paytm sees a trade of 4% of its equity, while K-Fintech has 10% of its equity change of hands. Hello, good afternoon. You've tuned into Business Lunch, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in, as always. Markets, we've seen a sharper fall coming in for the Nifty in the last 1 hour as well. Look at it. Nifty, as of now, is trading at the day's lowest point, down more than 300 points, 1.25% decline, 24,600. Nifty Bank down 0.8% as well. 54,940 levels is what the Nifty Bank is trading at. Now, obviously, yesterday we had seen a very sharp run up, so that's why we're seeing a bit of a decline coming in also, and some bit of a profit booking that we could say. And on the other hand, mid and small cap, that's managing to see the outperformance coming in. Nifty Midcap is holding on to gains of 1/10 to 2/10%. Small cap is holding on to gains of almost 5/10% as well. That also has seen a bit of a fall coming in from the day's highest point, but outperforming the benchmark indices is what we're seeing coming in from the broader end of the market. Clearly, in terms of the movers that we're seeing today, we have contributors coming in from Sun Pharma, Adani Port, Cipla, as well as Bajaj Finance. So you have those pharma names on the positive side, and the negative side, you have the banking names coming in. So those private banks is something that is a bit under pressure. Pharma is the top sectoral gainer. Pull up the Nifty Pharma, that's buzzing away in trade as well. And this is also coming in after yesterday. Obviously, you had that executive order that came in from Trump. So on the back of that, we're seeing Nifty Pharma today managing to hold on to some bit of a gain of 1.25%. Obviously, it's still quite open-ended. We have to get some more clarity in terms of what's finally going to be happening in terms of pricing. But yes, that's what we're keeping an eye out on. PSU banks also among the top sectoral gainer, while in terms of the losers, we do have Nifty IT, which is down and out in today's trading session, and clear pressure of 2% coming in for Nifty IT. So yes, that's how the market setup is looking like. Broader end doing much better than the benchmark indices. But let's move on and get started with the top story for today. Prime Minister Narendra Modi today visited Adampur Air Base in Punjab and interacted with defence personnel. Now, his visit comes hours after his address to the nation, in which he saluted the valor of India's armed forces and reiterated the Operation Sindoor has not ended. We have Parikshit, who's joining in with us to give us the latest update on this front. Afternoon, Parikshit. What more are you picking up here? What should we be watching out for now?
Well, we've not seen the last of Operation Sindoor. It's definitely not over. The deployments at the border remain high. Let me start off by speaking about Prime Minister Modi's visit to the Adampur Air Base in Punjab this morning. This is India's second largest Air Force station. Indian Air Force personnel briefed the Prime Minister on Operation Sindoor, and the Prime Minister also interacted with airmen and air warriors there as well. Having said that, the situation at the border, well, the Air Force deployments, the Navy deployments on sea, and the Army deployments on land remain on high alert. We've not moved back troops just yet. And this is going to be the situation. We are going to see a tense situation at the border, or an uneasy calm for a few weeks before troops can be moved out as well. We've not seen any ceasefire violations since about 11:30 p.m. on Monday, but there were suspected drone sightings at Samba, Jammu and Kashmir at 10:05 p.m. Yesterday. At the same time, there were drones sighted at the international border by the Border Security Force as well. What is the consensus right now between India and Pakistan? Well, the DGMOs had a conversation at 5 p.m. on the 12th of May, and issues regarding continuing the commitment on both sides to stop firing and not initiate any aggressive action was discussed. Both sides also decided to consider immediate measures to ensure true production. Right now, we're not seeing true production, but the situation at the border is calm, and there will be more discussions between the two sides in the next few days. We've also seen how the Indian government has rejected claims of mediation which came from the United States. Yesterday, Donald Trump said that he managed to bring the situation, the conflict between India and Pakistan, to a halt by telling both the nations that if you want to do trade with the United States, if you want to have trade deals with the US, then you need to stop fighting. So sources tell us that there was no reference to trade in any discussions with US since Operation Sindoor began on the 6th night and 7th morning as well. The Parliamentary Committee on Foreign Affairs has also taken up the India-Pakistan conflict. On the 19th of May, the Foreign Secretary is set to brief the committee in Parliament House.
Okay, Parikshit, thank you so much for that. Now, on that note, let's listen into the comments that came in from PM Modi made on how India plans to deal with the encroaching terrorism from Pakistan. So let's hear it.
अगर पाकिस्तान से बात होगी तो टेररिज्म पर ही होगी। अगर पाकिस्तान से बात होगी तो पाक ऑक्युपाइड कश्मीर पीओके उस पर ही होगी। प्रिय देशवासियों, आज बुद्ध पूर्णिमा है। भगवान बुद्ध ने हमें शांति का रास्ता दिखाया है। शांति का मार्ग भी शक्ति से होकर जाता है। हमने पाकिस्तान के आतंकी और सैन्य ठिकानों पर अपनी जवाबी कार्रवाई को अभी सिर्फ स्थगित किया है। आने वाले दिनों में हम पाकिस्तान के हर कदम को इस कसौटी पर मापेंगे। अब ऑपरेशन सिंदूर आतंक के खिलाफ भारत की नीति है। ऑपरेशन सिंदूर ने आतंक के खिलाफ लड़ाई में एक नई लकीर खींच दी है। एक नया पैमाना, न्यू नॉर्मल तय कर दिया है। पहला, भारत पर आतंकी हमला हुआ तो मुंह तोड़ जवाब दिया जाएगा। दूसरा, कोई भी न्यूक्लियर ब्लैकमेल भारत नहीं सहेगा। पाकिस्तान को अगर बचना है तो उसे अपने टेरर इंफ्रास्ट्रक्चर का सफाया करना ही होगा। इसके अलावा शांति का कोई रास्ता नहीं है। भारत का मत एकदम स्पष्ट है। टेरर और टॉक एक साथ नहीं हो सकते। टेरर और ट्रेड एक साथ नहीं चल सकते। और पानी और खून भी एक साथ नहीं बह सकता।
And post the Prime Minister's address to the nation, we spoke to a host of former diplomats as well as retired armed force officials on their views on the Operation Sindoor. Listen to what they had to say.
This is only a pause. Should they misbehave again, okay, then they'll be dealt with a force that is absolutely unprecedented. We haven't, revealed all our cards right now. What I know and what most senior people know is that this was just a beginning. We just wanted to tell them that, yes, we can address your military targets. Should they react? Should the terrorist infrastructure in Pakistan now react? And they want to, they are non-state actors. I don't know how much control ISI has on them. But should they do something, then the consequences will be suffered by the Pakistani government, by the Pakistani military, and unfortunately by the Pakistani public. Okay, if he has helped Pakistan fall in line, and if he has helped Pakistan realize that they have no choice but to listen to what we are saying, then he's done a great job. I don't grudge him any credit. Okay, it doesn't make any difference to us as to who forces or who cajoles Pakistan into behaving like a responsible state. That is what we want. And if President Trump has done that, that's fine. We are too big to be told by somebody, okay, do this and don't do that. We are a reasonable nation. We think logically. We have achieved whatever we wanted to do, and we don't grudge America any credit. Okay, they can take whatever credit they want for getting Pakistan online.
Terror and trade won't go together. This is in direct response to the American president's postulation that he told India and Pakistan that forget about fighting, let us do trade. Trade is the beautiful, trade is the great thing. Indian Prime Minister made it very clear, terror and trade do not go together. And finally, he has made, again, a very basic point, blood and water do not flow together. You can choose, and this is addressed to Pakistan. So in short, to answer your direct question, India's political, military, and diplomatic machine has performed very well. It is working in a coordinated manner.
We in the United States, and I assume in India as well, know that you have to take the remarks of our president with a grain of salt. He would like to take credit for anything good that happens, and anything that bad has happened is Joe Biden's or somebody else's fault. And of course, that's just not the situation. I do think that the dehyphenating policy of the United States, which has been followed by Republican and Democratic administrations alike, is the right one, and the attempt to put this back together and hyphenate it is a wrong approach.
In fact, listening to those comments that US President Donald Trump said about the ceasefire reached between India and Pakistan.
On Saturday, my administration helped broker a full and immediate ceasefire, I think a permanent one, between India and Pakistan, ending a dangerous conflict of two nations with lots of nuclear weapons. And they were going at it hot and heavy, and it was seemingly not going to stop. And I'm very proud to let you know that the leadership of India and Pakistan was unwavering, powerful, but unwavering in both cases, and having these, they really were, from the standpoint of having the strength and the wisdom and fortitude to fully know and to understand the gravity of the situation. And we helped a lot. And we helped also with trade. I said, come on, we're going to do a lot of trade with you guys. Let's stop it. Let's stop it. If you stop it, we're doing trade. If you don't stop it, we're not going to do any trade. People have never really used trade the way I used it. That I can tell you. And all of a sudden they said, I think we're going to stop. And they have. And they did it for a lot of reasons. But trade is a big one. We're going to do a lot of trade with Pakistan. We're going to do a lot of trade with India. We're negotiating with India right now. We're going to be soon negotiating with Pakistan. And we stopped the nuclear conflict. I think it could have been a bad nuclear war. Millions of people could have been killed. So I'm very proud of that.
Okay, on that note, we're going to slip into a very short break. And after the break, we'll get you more updates and news on the US-China trade deal. Stay tuned in. Welcome back. Thanks for staying tuned into Business Lunch on CNBC-TV18. Now let's move on. The US and China have agreed to slash their steep tariffs on each other for at least 90 days. And this is tapping the brakes on the trade war between the two world's largest and biggest economies that had brought in some fears in terms of global recession. However, uncertainty is something that is still there and remains. Take a look at this report.
Yesterday, we achieved a total reset with China after productive talks in Geneva.
U.S. President Donald Trump touted his administration's agreement with China to slash tariffs on each other for 90 days, saying it was proof his aggressive strategy was paying dividends.
Think about it. We opened up our country to China. They have very few restrictions. And they didn't open their country to us. Never made sense to me. It's not fair. And they've agreed to open China, fully open China. And I think it's going to be fantastic for China. I think it's going to be fantastic for us.
The two sides said that under the temporary truce, the U.S. will cut extra tariffs it imposed on Chinese imports last month from 145% to 30% for the next 3 months, while Chinese duties on U.S. imports will fall to 10% from 125%.
We've gone from okay to apocalyptic to sort of merely bad.
Marcus Noland is the Executive Vice President and Director of Studies for the Peterson Institute for International Economics.
Where they were last week was absolutely apocalyptic. It would have resulted in supply chain disruptions that would have been something like the pandemic. There would have effectively been no trade between the United States and China. So a tariff of 30% is a high tariff, but it's a tariff that at least has a certain degree of flexibility and will allow life to go on, albeit at higher prices and maybe with greater uncertainty and delays.
Financial markets cheered the reprieve in a conflict that had brought nearly $600 billion in two-way trade to a standstill, disrupting supply chains and triggering layoffs. Shipping industry representatives said many companies may restart loadings of goods to get shipments in while tariffs were still low. But the uncertainty around any eventual deal may leave businesses wary of ramping up orders dramatically. U.S. Treasury Secretary Scott Bessent, who led the weekend talks with China, said the next meeting had not yet been set, but that the sides were ready to continue negotiating.
Let's also get in a view from Goldman Sachs' Andrew Tilton on the significance of the tariff deal for the U.S. economy.
U.S. economics team has upgraded their growth forecast from 0.5% over the next 4 quarters to 1% and lowered their probability of recession in the U.S. from 45% to 35% on the back of the U.S.-China trade announcement yesterday. I think it's fair to say this was better than expected, more dovish than expected by most, if not all, observers going into the weekend. We had thought perhaps we'd settle somewhere in the 50% range for U.S. tariffs on China. In the end, the temporary, I should emphasize, temporary agreement is, for 90 days at least, is a reduction to a 30% increase this year relative to where we came into the year, a 30 percentage point increase, so coming down from triple-digit levels. Nonetheless, that was better than expected, and China to lower its increase to 10%, as well as remove some non-tariff barriers. So from that perspective, it was better than we had anticipated. I think it was better than almost any market observer had expected going into the weekend.
And shifting focus, U.S. President Donald Trump signed wide-reaching executive orders directing drug makers to lower the prices of their medicines to align it with other countries as well. We spoke to the management of Biocon on the impact of this order. Here's what they had to say.
It is really the big pharma products, because if you know how the market is split, 80% of prescription drugs by volume only account for 20% of the value. And it's 20% of prescription drugs by volume account for 80% of value. And that's the 80% he wants to shrink.
Meanwhile, Macquarie's Kunal Dhamesha believes that Trump's new pharma order is a lot more diluted than what was proposed in September 2020. Listen in.
The way I would put it is the final executive order, which we saw yesterday evening from the US president, it's a much diluted version of what he had put out in September 2020, which, as Mr. Vaidi said, eventually faced legal challenges and was withdrawn by the Biden administration. But the yesterday's version was much more diluted in a way that, the focus is on patients who directly want to buy drugs from manufacturers. They will get the drugs at the most favored nation pricing.
Okay, on that note, we're going to slip into a very short break. And as we slip into the break, here's some good news for our viewers. India's business news leader is now a click away. CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you can just scan the QR code on your screens.
News18.com marches way ahead of the Times of India with 38% more users on native and social platforms. Network 18, the undisputed leader of news networks, way ahead of the Times.
Welcome back to Business Lunch on CNBC-TV18. As of now, Nifty is just managing to hold on to 24,600 levels. We'll keep an eye out on where it's headed. As of now, down 300 points. But let's move on. And the Chief Justice, Sanjeev Khanna, will demit office today after the brief tenure as the Chief Justice of India. He will be succeeded by Justice B.R. Gavai. And we have Ashmit joining in with us to tell us more on this one. Afternoon, Ashmit.
Well, just moments back, I had the benefit of a conversation with the CJI, and he said that as journalists, it's our job to be inquisitive. It's his job to be decisive. And well, that's one aspect of his tenure, a 6 months tenure at the helm of the judiciary as CJI, which stands out. Decisive action being taken, especially in light of some very difficult situation that he found himself in. I'm referring to cash being discovered at the residence of Delhi High Court Judge Justice Yashwant Verma. Now, bear in mind, this was something that was out in the public domain. There was heavy criticism. Public confidence was at an all-time low, and that's when Justice Khanna at the helm as CJI took the action of putting out all the details on the Supreme Court website. This has never happened before. All the details, visuals of cash, reports by the Delhi High Court Chief Justice, all of those reports being put out, and then subsequently he appointed a 3-judge inquiry committee which submitted its report, and that report importantly has been sent to the President and to the Prime Minister. The only case where a report needs to be sent to the President or the Prime Minister by the CJI is if there is substantial evidence found against the allegations, in terms of the allegations, and if there is cause for removal of that judge. So decisive action being taken there. Another bit of decisive action that he'd taken under his watch has been the disclosure of assets. As of today, out of 33 sitting Supreme Court judges, 24 of them have put out their assets and investment details on the Supreme Court website for disclosure, for public scrutiny. This has never happened before. There have been resolutions in the past but the judges traditionally have been shy of scrutiny, have been shy of disclosing their assets. So again, another key message being sent out by CJI Justice Khanna. On the judicial front, important decision that he took was with light to the Waqf Act. Bear in mind, the Waqf Act was passed by the Parliament. Subsequently, it was due to take effect. However, concerns were raised by Justice Khanna, and it is on the back of that the centre then went back to the Supreme Court, said that fine, we'll pause the execution, we'll make sure that until further directions there is no change in status quo as far as Waqf properties are concerned. And finally, on the issue of Mandir Masjid politics, there were a spate of litigation that was done at the trial court level, which raised religious tensions, which raised religious violence. Justice Khanna, through a spate of judicial orders, had put a pause to that by saying that there will be no such orders for surveys of religious sites being passed by trial courts. So a short, brief tenure, but nonetheless an impactful tenure that CJI Justice Khanna has had. Tomorrow, Justice B.R. Gavai will take over as the 52nd Chief Justice of India.
Okay, Ashmit, thank you so much for that. But now shifting focus, Hamas has freed the last Israeli-American hostage, Eden Alexander on Monday, ahead of US President Donald Trump's visit to West Asia. Listen to this report.
Israeli-American hostage Eden Alexander was released by Hamas and safely transported to Israel on Monday. Video released by the Israeli army shows Alexander being embraced by his family after 19 months in captivity. He was the last living American held by Hamas. Fighting stopped at midday in Gaza after Israeli Prime Minister Benjamin Netanyahu said Israel would pause its operations to allow Alexander safe passage. But there was no agreement on a wider truce or hostage release, as a global hunger monitor warned of famine in the devastated enclave. Hamas said it freed Alexander as a goodwill gesture to US President Donald Trump, who was visiting the region this week. Netanyahu said Alexander's release came thanks to Israel's military pressure in Gaza and political pressure by Trump. Netanyahu said there would be no ceasefire and that plans to intensify military action in Gaza continued. The release follows four-way talks between Hamas, the United States, Egypt, and Qatar. Witnesses reported Israeli tank shelling on eastern Gaza City after the handover.
Okay, on that note, we'll actually wind down this edition of Business Lunch on CNBC-TV18. Thank you so much for tuning in. But here are some of the visuals of US President Donald Trump arriving in Saudi Arabia and being welcomed by the Crown Prince Mohammed bin Salman. Thank you so much for tuning in. Up next now, you have Midcap Radar.
Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Mamakshi Doria and with me is Vivek Iyer. Vivek, after the fabulous rally that we saw yesterday, the market seemed to have now taken a breather, but the broader end of the market that continues to do well. Both the mid-cap as well as small-cap index are building onto the gains that they saw yesterday.
That's right. Good afternoon, Vamakshi. So that's the good part as far as today's session is concerned. We're starting mid-cap radar, and the mid-cap and small-cap end of the markets continue to hold steady in the green, building on, as Vamakshi just mentioned, to the gains that they've seen in the last couple of trading sessions. What's doing well? Well, the defense pack is doing very well. Pharma pack is doing quite well. On the other hand, quite a few other sectors are seeing a bit of slip. We have quite a lot lined up on the show. Let's start off with the top headlines. Stocks slip as investors remain uneasy about the US-China interim trade arrangement and its implications for India. Caution over the India-Pakistan conflict also lingers. Pharma and PSU banks are the big gainers, while IT and realty caps surge.
The US order on drugs calls for setting prices at most favored nation levels only for direct purchases by patients from manufacturers, significantly diluting terms of the original draft and propping stocks.
Block deals seem to be making a comeback with some cheer in the market. Paytm sees a trade of 4% of its equity, while KFin Tech has 10% of its equity change hands.
Care Ratings and Zaggle Prepaid gain post their Q4 numbers. Care Ratings saw its EBITDA surge by 65%, while Zaggle Prepaid saw its revenue rise 51% on a year-on-year basis.
Ahead of MSCI Global Standard Index reject slated tomorrow, Coromandel International, Nykaa and Paytm are in focus as they are likely to be included in the index. On the other hand, Thermax could be excluded in the MSCI reject.
Well, it's a 300-point cut as far as the Nifty is concerned. It's trading close to the day's lowest point. The advanced decline ratio, though, is in favor of the advances. It's an advanced decline ratio of almost 2:1. So that bodes well for the broader indices. And the mid-cap index is well reflecting that, up nearly 0.2%. As far as some sectoral indices are concerned, most of them are trading in the red. Yesterday, IT was the top sectoral gainer. But in today's trading session, it is the top sectoral loser, down almost 2%. On the flip side, when we look at the PSU bank space, barring SBI as well as Bank of Maharashtra, all of the PSU counters are surging higher in trade. Look at the move on Canara Bank as well as Bank of India. Both of these counters are trading with gains upwards of 3%. But apart from this list, we have a lot more lined up. In our special segment, Midcap Movers, we now have Hormas to take us through the midcaps that are moving around in trade. Hormas?
After you see a session like that we saw yesterday, it's only par for the course that you see some bit of profit booking off the table. But you can't, of course, take your eyes off the defense names. They're seeing profit booking all across, but defense stocks continue to move higher. And take a look at Bharat Dynamics now at the highest point of the day, 10% higher for that stock. Zen Technologies, another 5% upper circuit. HAL will be reporting results soon, 4% higher on that stock. And Data Patterns too has surged to the highest point of the day, 4% higher on that name as well. Now, some of the others that are moving around in terms of newsmakers today, look at the recovery that you've seen in Swiggy after its shareholder lock-in came to an end. The stock at one point was down 7%, has narrowed its losses now down to just 2%. KFin Tech saw a recovery as well, but that recovery has been sold into after the block deal, 5% lower on that stock. UPL, the street seems to be divided on its prospects, 5% lower on that stock as well. And IIFL Finance, after the upgrade that came in from HSBC earlier in the day, is trading with gains of around 5%. And to move on, and you see PSU banks, which is the top sectoral gainer in today's session, meet Canara Bank, Bank of India, after the management spoke to us, focusing on recoveries of around 11,000 crores this year. Bank of Baroda too, seeing some gains in today's session. And some of the other earnings reactions, if you could pull them up, and you see JM Financial off the highs of the day, still holding on to gains of around 3%. But Tanla Platforms, the top gainer on the Nifty 500, and Jyoti Laboratories was down yesterday and is extending its losses in today's session, 4.5% lower there as well. And lastly, some of the movers on the volumes front, Sagility is another upper circuit today for 5%. Afcons Infra and Star Health is 6.5% higher at the highest point of the day on very strong volumes. Back to you guys.
Thank you so much, Hormas, for joining us, giving us a sense of the list of stocks that are buzzing as far as the broader end of the markets are concerned. Well, moving on, Somil Mehta from Mirae Asset Sharekhan joins us for a quick technical check on the market. Thank you so much, Somil, for joining us. First up, your view on the Nifty, and do you think the broader market outperformance that we are seeing today can continue from here on as well?
Sure. I think the broader market is much more stronger from here, and I think the overall trend will remain positive in the short term, in the medium term outlook, and the broader markets are looking stronger. Nifty overall is correcting a little bit. Did not expect this sharp of a correction in the very short term, but 24,600 will remain a very, very crucial support, as it was a resistance previously, because there was a range between 24,600 and 24,000, and that range we broke on the upside yesterday, and it was an excellent rise yesterday. So I think the medium-term outlook still remains positive, and the upper end of the Bollinger Band on the daily charts will be the target, which is 25,200, 25,300 levels. So that would be the short-term target for Nifty. In Bank Nifty, same. I think this range is broken on the upside, and we can see the outperformance very soon. I think it will outperform, and the targets would be close to 57,000 levels in Bank Nifty. Of course, the support would be 53,490. That will be a very, very crucial support for Bank Nifty, but Bank Nifty should outperform.
Well, thank you so much for that, Somil. But, this is Vamakshi joining in. And in such a market, what would be your top stock recommendations?
PSU banks are doing great. I think autos would do good very soon, but my stocks would be from pharma. First one would be Lupin. Stop loss would be 2,000 and the target would be 2225. A small triangle pattern has broken on the upside, high top, high bottom formation already. So a good buy stock for a positional view as well. The second would be Policy Bazaar. It's a mid-cap stock, very high beta stock, so the stop loss should be very strict. The stop loss would be 1650 and the target would be 1845.
Thank you so much, Somil, for joining us, giving us a sense of market levels as well as your individual stock picks for the day. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
And so forth. Why has it been so elusive? Because we've been victims of our own success in a way that traditionally India has never really had to reach out to the world.
What's exciting you about the stuff that you're seeing being made today?
A show like Kohra, for example, right? It's very local, very rooted. But I think the beats of the way that the story unfolds is told in a very international.
Welcome back to Midcap Radar. Well, as you can see on the bottom of your screen, pharma major Cipla has just declared its Q4 FY25 numbers. Revenues coming in largely in line, a slight beat to what the CNBC-TV18 poll was anticipating. The CNBC-TV18 poll had pegged the revenues coming in at close to 6,700 crore. The EBITDA, as you can see on the bottom of your screen, appears to be a slight miss, 1,537 crore versus our expectation, or the CNBC-TV18 poll expectation, of close to 1,582 crore. We are still awaiting the PAT figures. I believe the PAT figures have come in at close to 1,214 crore. While we are just standing by for Ekta to join us with her first cut as far as the results are Cipla of concern, we are looking at what the EBITDA margin figures are. The EBITDA is coming at 1,500. Well, margins at 22.84% versus the CNBC-TV18 poll of close to 24%, which is what you can see on the bottom of your screen. The stock largely flat, has cooled off a little bit from the day's highest point. What we are still awaiting is, number one, the breakup as far as the domestic sales business and the international or the US business is concerned. The US business, as Ekta had mentioned in her preview, was expected to decline on a year-on-year base. There were multiple factors. As soon as Ekta is ready, we'll just go across to her as well. Ekta, can we come across to you now?
Well, yes, absolutely. Well, it seems as though there's, a little bit of a margin disappointment which has come through for Cipla this quarter. As you can see, the margins have come in at around 22% versus an expectation of around 24%. EBITDA on, coming at around 1,537 odd crores. This time round versus an expectation of around 1,582 odd crores. Well, we wait by to see what the domestic sales growth has also been for Cipla, because that is expected to be around 9 to 11 odd %. The US, like I mentioned, could probably decline, and like Vivek was saying, could probably decline around 3 to 4% on a sequential basis. So that could be something which the street would watch out for. Net profit, I'd really like to see what's below the margin level, because the margins have come in, maybe there is another income element or something that we need to watch out for. Revenue has come in just a little higher than what the expectation was. We were working with around 6,700 odd crores. They've come in at around 6,700 plus. So we'll just wait by for the revenue to come through again. But nonetheless, I would just like to see what the P&L looks like in terms of a more detailed form post the EBITDA, as well as maybe with an other income element overall. For Cipla, Lanreotide in the US market, there could have been a little bit of a decline in terms of sales in Lanreotide. Revlimid, what they've done this quarter would be important to watch. And, what they are probably guiding for in the coming couple of months with regards to a couple of key drugs in the US would be something that the street would be looking out for. As of now, revenue up around 9 odd %, that's in line. The EBITDA up around 17 odd %, that's a little lower than what the expectation is. And we'll wait by for what has propelled the profit this time. Maybe post the EBITDA. Vivek, any more details on that?
Just waiting for the PPT. The PPT is not yet uploaded. I think, Cipla has actually made a habit of going ahead and surprising positively as far as EBITDA margins are concerned. That hasn't transpired this time around, but we'll wait by in case we get any more details. For the time being, what we'll do is we'll have a quick look at what MSCI as well as FTSE are they will be coming out with their index reviews later this month. In fact, MSCI will come out with its list tomorrow itself. So post-market hours tomorrow, we will expect the MSCI rejig. So what are the expectations as far as the MSCI Global Standard Index is concerned? We are expecting 3 stocks to go into the MSCI. So Nykaa, Coromandel, as well as Paytm are the 3 stocks that are expected to enter the MSCI in this particular rejig. But on the other hand, with Coromandel actually seeing the majority of the flows of close to a little over $200 million, on the other hand, Thermax is the stock that is actually expected to see a bit of a decline. We are also expecting to see later this year both FTSE as well as Sensex, those indices too will see a rejig. When it comes to FTSE, 5 inclusions are expected. May 23rd is when that particular date is. So Hyundai Motors, Vishal Mega Mart, NTPC Green Energy, Swiggy as well as Wari Energies are the stocks likely to enter the FTSE as far as May 23rd is not concerned. And Hyundai Motors is the stock that is expected to see maximum inflows of a little over $131 million. Now coming to the Sensex, May 23rd is when that particular rejig will be announced. Bharat Electronics, $275 million. Bharat Electronics and Trent could enter the Sensex, and this would be at the expense of both Nestle as well as IndusInd Bank. So a lot of key passive indexes rejig is what we are looking out for, and on the back of that, there will be quite a lot of inflows and outflows that we will be looking at. MSCI, the closest one, Vamakshi.
Well, absolutely. All of these, names will be in focus over the course of the next few days. But, let's focus in on one stock that has declared its numbers post-market hours yesterday. The stock is GM Financial. When you look at the revenue from operations, that has dipped by almost 9% quarter on quarter. Total operating expenses on the flip side have declined much more significantly, down nearly 15%. Resultantly, when we look at the EBITDA margins, they have improved by almost 274 basis points. The EBITDA overall, given the kind of decline that we saw in the revenue, saw a dip of almost 4%. But nevertheless, when we look at the other income, that has propped up by almost 62%. Given that, net profit has come in flat at 209 odd crores. Let's also look at how the different segments for the company performed. As far as investment bank is concerned, they saw a dip of almost 12% out here. Alternative and distressed credit also saw a very sharp knock, down nearly 29% sequentially. Mortgage lending was also down nearly 8%. On the flip side, AMC Wealth Management and Securities did quite well. As far as profitability is concerned, we saw a dip in the margins for investment bank, down nearly 690 basis points. Mortgage lending too was, saw an uptick of almost 2,460 basis points. And the management in its commentary said that ECM activity was the lowest seen in the last 4 quarters. The pipeline, to be executed was delayed, but however, they're penciling in an improvement in the first quarter. They're expecting break even in the asset management business in FY27. So resultantly, it's a good set as far as the operational performance of the company is concerned. GM Financial up in trade as of now has cooled off from the highs, but nevertheless up in trade.
That's right, cooled off a little bit. But Ekta has had a chance to look through the internals of Cipla. A couple of key points that she's noted. Ekta, over to you once again.
Well, I just want to point out why the profit is higher despite, the margins, in fact, be 9.46 crores. It's higher versus the 249 crores same time last year and versus 221 crores last quarter. And if you just look at the tax outflow, it's 279 crores. Versus 324 crores year on year and versus 332 crores Q on Q. So that is basically the picture for Cipla. Revenue marginally better than estimates. Operationally a little bit of a miss. And then you have the profitability, which is higher because of a lower tax outflow.
Well, thank you so much for that, Ekta. Quite helpful insights coming in for you as far as Cipla is concerned. That stock taking a knock in trade today as of now. But on that note, let's slip into a very short break. The management of NIIT joins us next to discuss their Q4 numbers and more.
Network 18 decimates Times Internet with over 6 times more unique users on social media. Network 18, the undisputed leader of news networks, way ahead of the times.
Welcome back. You're watching Midcap Radar on CNBC-TV18. Well, we have a couple of stocks in focus on the back of their numbers. Care Ratings saw an uptick of almost 12%. Another stock that is in focus on the back of its numbers is NIIT. Vijay K. Tandani, Vice Chairman and Managing Director, joins us now after the numbers. Well, good afternoon to you, Vijay. Let me first start off by understanding, Q4, we saw some muted performance come through. Revenue was down almost 12% on a quarter-on-quarter basis. The net profit too, saw a downtick of almost 1.5%. So what is your outlook going forward into FY26? And if you can explain the muted performance that came in the last quarter.
Right. So first of all, I think thanks for raising that question. You saved me the trouble of explaining it. The quarter 4 is a seasonally weak quarter. If you see in the previous years also, last year, for example, quarter 4 was 13% lower than the previous quarter. This year it is 12% lower. In fact, if you look at it, the performance is to be looked at on a year-on-year basis for seasonal businesses. So as a seasonal business, year-on-year, quarter 4 performance has grown 16% year-on-year. And in the profit after tax, which is the other one which you referred to as a parameter, that has gone up 18% year-on-year. Having said that, quarter 4 does have a little bit of slowness, because if you see our overall annual performance, which is also the last quarter of the year, we've grown 18% year-on-year, and the profit after tax has grown 20% year-on-year. This has been because of the business uncertainty in the economic environment, as well as which led to hiring freeze in the beginning part of the year, which is now beginning to open up. So we started with a very strong BFSI performance, which is what caused the growth in the first 2 or 3 quarters. And then in the 3rd and 4th quarter, I think there was a tapering of BFSI growth given the economic uncertainty, but meanwhile, technology has picked up. And that's what overall has resulted in an annual growth of 18% in revenue and a 20% increase in profit after tax. I also want to mention we are in an investment cycle. We have been saying this in the past. So to that extent, our EBITDA does not reflect the overall EBITDA of individual businesses, because some of the businesses, we are still in an investment cycle.
So 18% growth in your top line, 20% growth in your net profit. But what's the guidance for FY26, sir?
Well, I'm sure we will do better.
All right. And how much better would that be, if you can just give us a range in terms of revenue as well as net profit?
I think given the uncertainty in the environment, the very fact that one can say better and grow better than 18% year-on-year, I think is quite significant. And the reason I'm again saying is that the investments that we have made so far, those are helping out. And we do believe that we can take advantage of those. We also have a new member in the family. We just did an acquisition of a very interesting company. It's called IMNEO. And IMNEO brings a missing piece in our puzzle in many ways in terms of the offerings that we had for our target customers. It's an AI-powered deep skilling SaaS platform, which will get very well integrated with everything that we offer to our customers in every part of our business, whether it is enterprise or consumer. And I think it will also open our minds, or open the doors for the higher education segment, which at this point of time is given the NEP wanting to integrate very strongly with the skilling space. So I think bringing skilling and higher education, IMNEO will also help us create that bridge. So we are very excited about acquisition, and I think all that will also contribute to the growth that we have looking forward for the next year.
Right. Mr. Tharani, just to push you a little bit further, you said you will do better than the 18% growth as far as top line is concerned for FY26. On the bottom line, are you expecting to do better? And as far as EBITDA margins are concerned, will you be at the same range at FY25? Can you give us at least a ballpark figure as far as FY26 is concerned?
I think at this point of time, EBITDA numbers, we are still in this year, coming year, we will still remain in an investment cycle, which will remain calibrated. So to that extent, EBITDA percentages will remain in the same range that we have done this year. So we shouldn't expect anything better as far as that is concerned, as long as the overall growth picks up the way we are looking at. And we also want to make sure that the business overall remains profitable and continues to grow very fast.
Well, thank you so much for that, Mr. Thadani. It's a pleasure talking to you right after your numbers. Wishing you luck for the quarters ahead. But on that note, that's all we have on Midcap Radar from Vivek, me and everyone who put this show together. Thank you so much for tuning in. But don't go anywhere because MF Corner comes up next.
Hello, good afternoon. You've tuned into MF Corner on CNBC-TV18. I'm Vinny Motiwala, and thank you so much for tuning in as always. Now, today what we're going to be discussing and what's going to be important is, because gold prices have seen a rise, they're at record high, we're seeing Indian investors that started pouring in unprecedented amounts into gold ETFs. Is now the right time to join this rush, or should you be cautious now? Going forward, what should be your strategy for gold ETFs? Not only that, silver ETFs, they have seen an explosive growth in the last few months. What's fueling the surge, and how would they stack up, or how should this stack up against overall, whether you see a gold or silver, physical gold and physical silver, how should that be stacking up? What should you be doing in terms of your strategies? What should it be in your terms of your holdings as an overall portfolio? To discuss all of this today, we have Anil Gilani, Head of Passive Investments and Products at DSP Asset Managers, joining in with us to talk to us about that. Anil, thank you so much, and a very good afternoon to you as well. Let's start by talking about the surge we've seen in gold prices, right? YTD, an amazing surge in gold prices. should investors now still continue gold ETFs? You know, we did see in the last couple of months when we were seeing the AMFI data coming in that some profit booking did come in on those levels. But is the trend still going to continue? Should I look at it at current levels?
Great point. And I think we need to constantly re-evaluate our risk tolerance and our total asset allocation. So though we have seen gold run up, I feel if it is certain percentage of our portfolio, it depends on like your number, then maybe even at current levels, it's a prudent way to own some kind of a good diversification in your portfolio. See, we have to keep in mind that we should not go by just the significant run up recently, like you described, to keep it as a precedent, you know, that year on year we'll keep saying like that. Last 2-3 years, yes, we have seen it, but we need to keep in mind as recent as, let's say, after 2020 COVID pressure, when gold rallied in the discomfort and uncertainty, next year, 2021, gold was down. I mean, about 4 or 5%, if I look at calendar year 2021 as compared to 2020, you know. So yes, if our horizon and our risk return objective of the overall portfolio warrants it, then definitely even at current level, it does make sense to continue having gold in your portfolio in some fashion. Though if you are increasing new gold right now, maybe it could be more suitable to do it in a sort of like a staggered manner, like some kind of a SIP, STP type approach is something which you can definitely think of basically, you know.
Okay, you know, like you were saying as well, right? Like in the past, you've seen that just because in 1 year you saw that sharp surge coming in, the next year we'd seen a fall coming in gold prices. Now, in terms of an investor who wants to interpret returns, how important is historical returns in such a case to judge? And overall, as a part of asset allocation also, what portion should actually be coming from these gold ETF size? And also for investors who have substantial gold ETF already, what is that percent that one should hold in their overall portfolio?
See, from percentage to portfolio, I would feel it depends on person to person. Anything between, let's say, 5 to 10% would be a good number. Suppose if you feel based on consulting with your trusted financial advisor, for me, let's say 8% should be broadly the number. And maybe structurally, let's say 2-3% I have got silver. So around 10% is there in commodity precious metals. And great point you said that if in the recent run-up, the mark-to-market of gold and silver, gold specifically, versus let's say equities or fixed income has resulted in that percentage to go up above that particular indicative threshold, then yes, certainly we could look at trimming some of that amount and in that sense, some kind of a so-called prudent profit booking as well. If not, and if you feel it is within that range, then certainly you can maintain it. Just to take a pause on that, because you asked a very good question, and it's a question very close to heart. I get asked that very often that, Anil, what percent should I own, basically? Now, it's very challenging. If we are discussing with some large family office or some HNI family, then maybe a responsibility a little bit different. If we are talking to some retail individual, salaried employee like you and me or many of the friends watching your show regularly on the channel, then it would be a little different. I would feel anything in the range of, let's say 4-5% to 8-10% should be a decent number to hold.
Okay. From 5 to 10%. In that range, if you're holding, it's a decent percentage to hold coming in. Obviously, depending on how you will rebalance it also, if you feel the necessity, you can obviously rebalance it or book some profit as well. If it goes above that percentage, you can look to do that as well, is what Anil is saying. And then, you know, how do I compare? Like, why should I go for a gold ETF versus physical gold, right? What are my benefits in terms of returns, liquidity cost, or tax efficiency over the long term? What is it that, you know, trumps gold ETFs over gold physical?
2 to 3 things come to mind. First and foremost, the convenience. So what happens is that to buy a physical gold, we might have to go to a dealer or a shop or a bank, which, I mean, you know, and purchase that physical bullion, have some way to store it safely. Second part, over the long period of time, it could very well be that storage and safekeeping can be a challenge. Recently I shifted my home. There was a renovation going on in my home. Now, I didn't have to really bother that, oh, what is there and how I will move that, let's say, my gold investment away from my cupboard and move it into a bank locker or take it to the, a new place. Here, in a very convenient manner, my gold ETF is held in a demat form in a smooth and convenient manner. So convenience is one point. Second is in terms of the liquidity. We all know because of our capital market efficiency, any particular ETF traded on the NSE or BSE, typically speaking, within T+1, you will get the liquidity. So you sell today, tomorrow morning, you will get the, morning or during the day, as per the cycle, you will get the money in your bank account. So liquidity is very easy. Taxation is a very important aspect. So about a year and a half back, there was a little bit anomaly whereby gold ETFs were taxed negatively as compared to physical, because there was no concept of long-term capital gains tax for ETF. But now, in fact, there is a very clear-cut guideline that if you own gold ETF, up to 12 months, you will pay maximum marginal rate, short-term type gains. As soon as you cross 12 months of holding a gold ETF, you will get the lower tax rate, 12.5% tax you will pay. Whereas physical gold, if you own it, then that holding period is 24 months. Of course, like we spoke earlier, it is a more structural asset allocation. You would probably land up holding it much more longer period, beyond much beyond 24 months, maybe much more longer. But still, if somebody wants to take some tactical call or as a comparable between the two, definitely the gold ETF would be more superior in terms of the taxation. And I think one more angle to keep in mind, which we sometimes tend to take it as a granted, is the clarity about the purity of the owning. So let's say if I am owning a gold bar or a gold bullion or a jewelry, of course, in today's world, everything is very transparent, very efficient. I know the purity of the gold, but still over here in the ETF, I have a high level of comfort that the ETF fund manager is going to buy the highest form of the gold and own it as a backup to my investment. So that gives a high level of comfort.
Right. Anil, why we spoke so much about gold, silver, that's not behind as well, right? Silver ETFs, silver funds, that has picked up pace. We've seen a sharp surge coming in. Now, do you think investors, when you are talking to them, they are looking at silver in a much more matured way, and silver is something that could, in the next few years, be seeing a very good growth? What are you picking up on this front?
Oh, absolutely right. So, gold ETFs were permissible to be launched since a very long time, I think 2006-7 onwards. Silver ETFs got approval much later on, but they have picked up in a very good way. Now, today, if you see, silver is a parallel to gold in terms of the safe haven precious metals type buying, most certainly. But more than 50%, approximately 55 to 58% of the annual demand from silver comes from industrial use. So that makes it very different in terms of its risk return characteristics and its drivers for the price movement. So while gold has some industrial use, maybe 8%, 10%, silver has a much more higher proportion of industrial use. And hence, in the recent couple of years, we have seen a good positive trend emerging out of the fundamentals of the demand supply drivers of gold, silver, which have resulted in silver prices also doing good for the investor's portfolio in terms of the growth or in terms of the performance. Second point about whether silver ETFs are picking up, most certainly, like I said, though they were permissible to be launched much later on, many of the players, including like myself, ourselves and most of the other players have offerings of silver ETFs now. So though in absolute terms, the gold ETF size looks larger because it is there for much more longer period of time. Silver ETF size and number of products also has been catching up, and hence investor interest also is definitely increasing.
Okay, sure. Anil, I just want to ask in terms of mutual funds and ETFs, right? So why should I maybe go in for a ETF and not a mutual fund? There are options, right, for gold mutual funds as well. There are some of these companies who have that. So what is the difference when someone is picking up? And are there such options even for silver side in terms of mutual funds as well?
Yes, certainly. So since you said gold mutual fund, I will clarify two parts. One is the gold fund of funds or fund of ETFs.
Yeah.
And another is a gold mutual fund which offers exposure to gold mining companies.
Okay.
So there is a subtle difference between these two, a very big difference rather, if I may say. In the gold mining companies, we get exposure to the underlying companies which are involved in the production and distribution of gold. So it has a very different risk return drivers. Typically, it enjoys the operating leverage to the gold prices. So often if gold price is up by 100, then this is up by 1.25 times, because of the operating leverage that these companies enjoy. But I think let us focus on the gold ETF fund of funds, which is the simplest form of, instead of buying an ETF, for which I need a demat account and a trading account, and I need to be able to get time out during market hours rather than focusing on watching great, innovative and informative shows on your channel. I have to log into my trading account and say, okay, what is the bid offer, and put a trade of the gold ETF or silver ETF. Instead, I can very comfortably go to my trusted fund house and buy the fund of fund. Both it is available for gold fund of funds as well as silver fund of funds, and that will give me access to end of day pricing, and my risk return will be pretty much similar to what I would get in my ETFs itself. But one thing to keep in mind here, again, very subtle point of the tax implication.
Right.
So like we spoke, for a gold ETF as well as silver ETF both, beyond 12 months, I get long-term capital gains taxation. But if I invest into a fund of gold ETF or fund of silver ETF, I need to wait minimum 24 months, means 2 years holding period, after which it becomes long-term capital gains tax. That is a subtle difference, but otherwise, yes. So if you are an investor who does not have either a demat account or trading account or the time and wherewithal to log in during market hours and purchase a gold ETF or silver ETF, by all means, keep it simple. Come through your trusted financial advisor to your trusted fund house and take the exposure to fund of the ETF.
Okay. Anil, thank you so much for that explanation and the difference coming in as well when investors are looking at different options coming in for gold, whether gold physical, mutual funds, ETFs, fund of funds, whatever you say in those terms. But viewers, on that note, we're going to slip into a very short break and continue this conversation after the break as well, so don't go anywhere. Welcome back to MF Corner on CNBC-TV18. We still have with us Anil Gilani, Head of Passive Investments and Products at DSP Asset Managers. Anil, while we spoke a lot about gold ETFs, silver ETFs, the difference that one should have, how do both these differentiate with each other? What should I be picking now to make better returns? Is it time for me to pick up more in terms of silver ETF and look at more on the silver side versus gold, given that gold has already seen such a sharp run-up?
Very interesting question, and I'll try to give a very easy response to this very difficult and complex question. Structurally, both gold and silver form part of your precious metals small allocation, let's say between 5 to 10% like we spoke. Typically, silver is much more volatile as compared to gold historically. If we look at the silver movement in the last about 1 year as compared to gold, you will see that it is not yet played so much catch up. And this is very commonly tracked by multiple angles or ratios. One very simple ratio is a gold to silver ratio. Just indicates how much silver is needed to buy one ounce of gold. So a ratio of the gold to silver currently indicates that the silver is relatively undervalued or relatively more attractive in terms of the valuation as of today as compared to gold. Now, that does not mean that immediately one should disregard the gold allocation and move to silver or focus more so on silver, because like I said, silver is typically more volatile. And very naturally so, because a lot of the demand is coming from industrial use. So the natural hedge element of the precious metals, that it is hedge against uncertainty or slowdown in the economy, that little bit is important to focus that if there is a slowdown in economy world over, then those industrial demand utilization also will go relatively down possibly. We spoke earlier about one example that after 2020 COVID, gold and silver both were down in 2021. Gold was down about 5%, silver was down about 10% in that year. So we need to be conscious that, yes, certainly silver does appear very attractively valued right now. Silver does have very good drivers of its risk and returns. Currently, from a demand supply fundamentals, silver appears very lucratively positioned, and valuation wise also it's very attractive. So definitely you should look at silver, but kindly be mindful not to have it as a very large percentage of your portfolio allocation.
Okay, that's a good advice coming in there, Anil. You know, we've spoken gold, silver, ETF, right? Both passive form of investments. Passive investment as such is very close to your heart. So
yes,
could you tell me the pros and cons of investing in commodity, passive investing in commodities for an Indian investor? If they need to know it, why should they be looking at it, and why should they maybe not looking at it that much?
See, I think other than gold and silver, right now, if you want to invest in any other commodities, it is only through MCX, which is a F&O, like a derivative contract. Very, very useful, no doubt, but you need to be able to track it closely. Regularly, you have to pay margin calls, etc. So it might be a little bit challenging, if you want to do any other commodities. One thing is very clear, that owning some part of commodities as your total asset allocation definitely is a prudent approach. Within that, if you are a well-informed investor who can track the commodity movements, then definitely you can consider other allocations to, let's say, base metals, agri-commodities, etc. Otherwise, best is to focus on these two precious metals in some good proportion and in ratio, and own them in your portfolio. By saying this, I don't mean that you should not look at other commodities, but you need to have the little bit more awareness and skill sets for that. I'll take one more minute, sorry, to also, in case even for gold and silver, for many of your viewers who are watching the show today, it would be that, I really can't take a judgment that now I should be 5% or 10% or, from that little allocation to silver, when to move or how to own it. Okay, you are kind enough and bringing useful shows to me on your channel, but still I don't want to do it basically. Then I recommend one more class of mutual funds, which is called multi-asset allocation funds. Very good, and you've done many shows around that also. So many of your viewers, of course, are very familiar with it. So through a multi-asset fund also, indirectly, you are giving the fund manager some allocation to be taken to gold and silver typically. So, so overall, it meets your objective of a well-diversified portfolio across different asset classes by also considering some money going into multi-asset allocation fund.
Absolutely. Anil, while you did mention that, right, for in ETFs, so gold and silver ETF kind, you mentioned that range of around 5 to 10% and between that in the previous conversation we were having. What is it that overall I should have as an investment in passive funds, debt, equity, and commodities? What is the percent? If you could just highlight it for our viewers, what would be the ideal one?
To hold in passive funds versus active funds, if that is the question.
Yes.
Well, in my view today, if the question was asked about 10 years back, I would give a very different answer. Today, if you ask me, I would say 100%. You can hold 100% of, I'll clarify, you can today hold 100% of your mutual fund investments through passive funds solely because, I make this statement solely because you have entire range of products available, right from different asset classes. We spoke about equity, fixed income, commodities, right from different market cap ranges, large cap, mid cap, small cap, and the entire spectrum of whatever you might need to do your prudent asset allocation. So you can do that. Having said that, maybe I'm not saying that move everything into a passive allocation. Maybe you can keep it like a 50-50 allocation. Maybe some component, definitely you should look at a core allocation, relatively low cost, simple, easy to understand passive funds where you are not worried about style changes or named fund manager or analyst changes, but there is a process or a rules-based approach to managing your money. And for additional satellite allocation or second layer of your core allocation for long-term portfolio building and wealth creation, maybe look at certain good active funds which could give you long-term growth, which could give you exposure to, let's say, small cap as a segment of the market. So like that, you can do a mix and match, use both active funds and passive fund as a complementary strategy to build a strong portfolio. That is how I would recommend. The first part was just in theory that I like you said, because it feels so nice to see today that how our industry has evolved.
True.
If one wants, definitely entire 100% allocation can be in one particular segment, but maybe better to use it complementary. The power of always and versus or is more strong.
Absolutely. Absolutely, Anil. Quick question. We're almost out of time now, but you said about, investing in a staggered manner. Could you just give us a quick guide in terms of how is that going to be possible? Because ETFs is just exchange traded funds. So if investing in gold or silver commodity side of mutual funds, is that the only possibility for SIPs?
Most certainly. So like for example, we at the DSP, we have got a gold fund of fund. There is a silver fund of fund. Everybody would have it. So if you do a monthly SIP, then on a systematic basis, money will keep going out from there. Also, many of the large stockbrokers also through their digital platforms today offer what we call as a SIP equivalent of a, different people call it differently, stock SIP or ETF SIP, whereby based on your standing instruction, some amount will get debited from your bank account, and on a predefined day, it will go and hit the ETF counter on the stock exchange on a predefined date. So that also possibility certainly is there. But in a classic simple form of SIP, if you want to do, then I would strongly recommend to consider the fund of fund route of both gold ETFs as well as silver ETFs. There are a lot of fund options available basically.
Okay, Anil, thank you so much for that. Thank you so much for explaining us gold ETFs, silver ETFs, as well as passive funds. So thank you so much for joining in with us and helping us understand all of that. And viewers, with that, we're absolutely out of time on this edition of MF Corner on CNBC TV18. Thank you so much for tuning in. Up next, you have Closing Bell.
on market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng, though, is a bit of an underperformer today, down 1%. The Taiwanese index is up close to 2%.
24,027 is the 20-day moving average for the Nifty as of yesterday's close.
Keep an eye out on the broader markets as well, because yesterday the breadth of the market was spectacular.
8 points lower on the Nifty. The Sensex is down a little bit. Maybe, yeah, I mean, nothing actually. It's flattish.
Given that some tariffs are being imposed, we would not expect Fed cuts over the next few months.
Muted day coming in terms of a performance. Nifty down almost 0.8%.
We are going to have to see if that true production has already started, whether it is underway.
CDMOs, CRDMOs will benefit in India.
Navy deployments on sea and the Army deployments on land remain on high alert.
It's a 300-point cut as far as the Nifty is concerned.
Well, it is still a 300-point cut on the Nifty, so 340 to be precise, 24,580, 24,600 broadly is where we're at. So yeah, I mean, taking a bite out of the outsized gains that you saw yesterday. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, very amused Surabhi and Nigel.
You know the reason, right? If I'm amused in the studio, more often than not, this guy's the reason.
What happened?
He was taking the bite out of yesterday's game. So you do it again for Prashant. I was taking the bite. Bite out of yesterday's big move.
But yeah, I mean, though the markets are down, the headline index is down, but select portfolios will still be feeling good because the breadth of the market is still positive, 2:1. So maybe, in fact, the bite is not taken out there.
Did you do it with his mouth or hands?
It was just a bite. So maybe after lunch, right? So maybe. Okay, guys, let's get back to the market. But on a more serious note, I mean, Prashant, what's your thought around this? That is this just slight normalization given yesterday was this monster rally?
Yeah.
Or does this kind of reflect that maybe it was a bit excessive because it wasn't backed by too much of cash market buying? Yeah. It was more like we were discussing, right? F&O market action.
Yeah. So yeah, I mean, I'm still thinking that tactically the market goes up rather than down. That's essentially my view. It was, I mean, 3.5% gain in one day. And you're giving back about 1.33%. I mean, yeah, it perhaps is maybe more than what one thought you'd give back, but it is what it is. So that's the way I would kind of look at it. At the margin, I was wondering whether this India-Pakistan is still lingering in some way, right? I mean, but not really. I mean, I don't think people are really. I think the response from the government, the armed forces, Prime Minister Modi himself yesterday has been extremely strong. Has been very, very. And I think as emphatic as it can get. So there's not really anything new in that sense, which perhaps is worrying the market at the margin. So yeah, I mean, the question is, will conviction really come back? Will long onlys come back with full force, with full vigor? And I think we'll wait and find out. But as I said in the morning as well, maybe a little bit of pullback after the monster move yesterday, but tactically, maybe it's still risk on and you'd look for ideas to buy at this point in time. Guys.
Okay, let me just quickly then recap what is off on the red side today in this 350-point drop. Some of the stocks are already on your screen. Let's actually get that contribution played back on because it's IT and there is banking. These are the two vectors that are moving to the south side today. IT is, of course, correcting after yesterday's big move. IT was the biggest beneficiary of yesterday's rally. And today it's Infosys, TCS, Wipro, the entire set. It's all stacked up on the lower side. And then there's financials. HDFC Bank, they're contributing 60 points to that downward move. ICICI Bank is also weak. But even beyond that, now that's the contribution. Even beyond that, there are names on the consumer side like Tata Consumer, ITC, Trent. They're all seeing a correction. Eternal is down about 3% as well. So consumer is weak. You have to take that on board. And even leaders like Mahindra and Mahindra, I mean, leaders of this market for the past year and a half, even there's a little bit of a cool-off coming in. One sector that's worked well today is actually pharma because the market seems to have taken that view that this executive order on lower drug prices in the US, it won't bite Indian pharma companies maybe as much. It's not going to be that onerous. That seems to be at least the wisdom, the market wisdom in the view right now. And then there is defense. Very clearly, that's still the sentiment, that's still the favor, the flavor, whether it's a BEL, HAL. We'll be looking at HAL's numbers also soon enough. So a lot of these stocks on the defense side are still having a good day. That's defense index. And many of the constituents are up and about in green today.
Well, there are select stocks and sectors that are still reacting to news. And from the broader markets, you need to pick a stock like TD Power Systems.
Yeah.
Which is a mid-cap name, but that's up close to around 10%. The con call, I think, just got over. And that stock has, in fact, now moved to the high point of the day. Star Health, the stock is, I think, less than half of what it was at the IPO price, or at its high, actually. I remember it being at around 900 rupees. But in today's trading session, Sunny is seeing a bit of a volume spurt, though the stock has come off the high point of the day. So there's plenty of buzz on that particular name. A few more names talking about some of these other defense names that are moving on decent volumes. You have Centum Electronics. I recall a couple of large trades at around 1,400-1,500 rupees odd. Now the stock is a 2,000 rupees stock. Centum Electronics is the one that I'm talking about. Big up move. Well, Gale's numbers as well flashing for you on the screen. The numbers look a little lower actually on the net profit number. But if I look at the margin performance, it's actually looking better. So the margin number should come up for you in comparison to our poll. A wee bit better than what we are working with. If I saw that correctly, it was at around 9%. That compares with around 8.8%. So the EBITDA number has moved up by close to around 13.3%. Let's find out what you do, though. On the Nifty, we have Nagaraj Sethi of HDFC Securities who joins us on the show. Hi, Nagaraj. Good afternoon. Good to see you win. The markets are down 350 points after having a monster rally yesterday. Par for the course, you would say. Will you be looking to buy around these levels? Or do you believe the market wants to go and, maybe correct a little bit more?
Hi, good afternoon, Nigel. Market is showing consolidation after a stellar move yesterday. Though there is a strong resistance around 25,000 odd levels, market is showing some kind of a volatility at the highs. I'm expecting this is going to be a buy and dips opportunity. At the lower levels, 24,500, 24,400 is going to be a strong support. And I'm expecting an upside bounce in a day or two. Even Nifty could reach towards the 25,000 mark, which has tested recently, just below that in the next at least 3 to 4 sessions.
Stocks, Nagaraj?
Yeah, I have two stocks from my side, one mid-cap and the side. Ujjivan Small Finance, the small finance banks were in a stellar move recently, and this one too has moved up after forming a higher bottom around 40 levels. Currently trading around 44, one can look to buy at this point of time. 48 is going to be the upside target for that in the next couple of weeks, and one can place a stop loss at 41. Second one is NBCC. NBCC was in a consolidation phase in a range-bound decline. Recently, it has witnessed a sharp upside bounce from the support of around 90. Currently trading around 101.40 odd level. One can look to buy at this point of time. The upside target would be around 112. One can place a stop loss at 95.
Okay, all right, got that. Hero MotoCorp's numbers coming in largely in line. You can say maybe a shade above, at least on the revenue front. It's slightly higher. The margin is also in line with estimates. Sudarshan's poll was saying that the margin should come in at 14%. I think it's flashed by just at that. And the profit number is absolutely in line, pretty much 1,081 versus a poll of 1,089. So this is looking quite steady. Let's see if we can get, revenues up 4.4, which is slightly better than estimates. Volumes in this quarter were down 1% for Hero. It wasn't the best of quarters. Year on year, there was a decline. And quarter on quarter as well, the total volumes for Hero were down about 6%. So that way it's been a bit subdued. That's Hero Motor. We'll discuss this with our fundamental experts as we go on in the show. But for the time being, let's put the spotlight on the big story around pharma. US President Donald Trump has signed that executive order. The mechanism will let patients buy drugs directly at most favored nation prices. Ekta is here to decode the impact on Indian pharma companies. Today, pharma stocks, Ekta, are heaving a sigh of relief. Tell us what this all means.
Well, yes, it's definitely a positive which has come in because the executive order which is signed by Trump was actually not as binding as the street was anticipating. The mechanism is which they are focusing on is to let patients buy drugs directly in the most favored nations' prices mechanism. So now the US drug prices, he's gone on to say in the executive order, is 3x higher than in other OECD countries. Also, the US funds 75% of global pharma profits despite being only under 5% of the population. Americans subsidize foreign discounts through inflated domestic prices. So these are a couple of key issues which he's really focused on. So like I said, the US pharma stocks as well as the Indian pharma stocks have been higher because the executive order is not as binding as what he had proposed in April 2020 and which was then shut down by the courts. The order is focused on patients who want to directly buy drugs from manufacturers, and only around 8% of the population is not covered by any health insurance such as Medicare or Medicaid as per Macquarie. Now the focus, according to experts, is that is going to be on big pharma as well as innovative drug companies. His aim is to basically equalize pricing of patented drugs available in Europe as well as Canada, and aim is to eventually remove the middleman in terms of drug pricing. There is no direct fallout on generic drugs and biosimilars as of now. The street is expected to wait and see what happens with the tariff position that he has on pharmaceuticals, which could probably have a greater impact when it comes to generic drugs. Macquarie did speak on Sun Pharma. Remember, that stock was in focus yesterday. 20% of sales come in from specialty drug business, and 80 to 90% of that is from the US. And Illumia is one of their key drugs, which is basically a part of which has Medicare exposure. But because of this particular executive order not being as binding or as harmful as anticipated, Sun Pharma and the other stocks have seen a recovery.
Okay, all right, got it. That explains it. Sun Pharma, remember yesterday when this news had first come through that there is an executive order coming, Sun had fallen almost 5-6%. And there was a mild recovery by the end of it, but it still had ended lower, over 3%. Now that the fine print has been understood by the market, it seems that it's not going to be so onerous and so bad. In fact, we discussed this with Macquarie's Kunal Dhamesha earlier in the morning. Listen in to the Macquarie view.
The way I would put it is the final executive order, which we saw yesterday evening from the US president, it's a much diluted version of what he had put out in September 2020, which, as Mr. Vaidi said, eventually faced legal challenges and was withdrawn by the Biden administration. But the yesterday's version was much more diluted in a way that, the focus is on patients who directly want to buy drugs from manufacturers. They will get the drugs at the most favored nation pricing.
All right, so that was about the piece of news that came in overnight. But we have news flow coming in on Cipla, which came out with their set of numbers. And Suvin, they're doing an issue to a couple of non-promoters as well as the promoter entity. Ekta, run us through that piece of news.
Well, yes, Cipla is in focus on account of its numbers. So the revenue was up around 9-odd%. It was in line with expectations. Margins came in below what the street was anticipating at around 22% versus estimates of around 24%. Profit was higher because for lower tax this quarter. But what stood out was that the US business was $221 million. Street was expecting $218 million. So that was okay. India was a bit lower than anticipated. It grew at around 8-odd%. Street was anticipating around 10% growth for India. So those were the Cipla numbers. Lupin was in focus because they've launched tolvaptan tablets in the US. Remember, they have exclusive first to file status on it. They have 180-day generic exclusivity on it. It's used to basically slow down the kidney function decline in adults. It's a big drug, around $1.46 billion in terms of market size, and it could possibly contribute around $150 to $200 million for Lupin going forward. Suven Life in focus because they will be issuing up to 6.4 crore convertible warrants on a preferential basis, raising 857 odd crores, and this is going to be to promoters as well as non-promoters. The promoters, Venkat Justi is probably going to put in 425 crores via this, and they are going to issue warrants to non-promoters including Quant MF, Tejas Trivedi, Apicus as well, and Prashant Jain. So that's the reason why you're seeing the stock in focus today.
Okay, all right, got it. Thank you very much for that, Ekta. Well, with that, let's focus on Hindalco. Now, Hindalco has been... Okay, before we get to Hindalco, Nigel will tell us a little more about those Novelis numbers and what's the read-through. But before we get to that, we have Deepak Shenoy joining in. Deepak, good afternoon. Great to have you on. So a bit of a pullback today, given the mega move yesterday. Let's talk about some of the earnings that have come in. Fag end of the season, there's Tata Steel that came in. Hero Motors numbers are looking flat. The quarter was itself fairly muted for them. Anything that stands out for you last 2-3 days of earnings?
Nothing major. I think we've been more consumed by geopolitical news than fundamentals. But since the year end, I think some of the steel numbers were good. I can't talk specific on stocks, but I think overall in the two-wheeler space, the leadership seems to have changed. In the four-wheeler space, the leadership seems to have changed as much as we're seeing the earnings and results combinations. We're also seeing decent numbers from a lot of manufacturing companies, companies in the electronic space, companies in some of the other manufacturing areas related to defense as well. I think some of these numbers kind of coincide with an increasing focus on domestic manufacturing, domestic consumption as well. But by and large, I feel like this has gotten overshadowed by more geopolitical issues, tariffs, and international news. But after the end of the results, I think we'll have a better picture. Right now, things look quite decent overall on results front. Last few days haven't been any major aberration in that sense.
All right, Deepak, I wanted your view on the metal stock since you said that a couple of those steel names did well. Hindalco, in fact, from the non-ferrous space, well, that came out with its set of numbers. And in fact, the numbers looked pretty okay because shipments on a year-on-year basis were flattish. However, on a sequential basis, they were up between 5 to around 6%, which is good news. So the sales numbers, there was some improvement that we saw there. Pricing did play a role as well. But the adjusted EBITDA on a year-on-year basis, it did see a decline. But that was on expected lines. The point is that the EBITDA per ton, adjusted EBITDA per ton, has seen a good jump up on a sequential basis. Remember, quarter 3 was a washout. That's a softish quarter because you have Christmas and other holidays in the western part of the country. So that's why we did see the EBITDA per ton get smacked back. But they had guided that quarter 4 EBITDA per ton will be as good as quarter 2 and bang on. So that's why these numbers go down pretty okay. The debt number as well was really unmoved, on a quarter-to-quarter basis. They have guided that the capex for this year will be around 1.8 to around $2.2 billion, which is also in the price. Then what was the issue if the numbers are more or less in line? Then why is the stock down in today's trading session? One is it's a bit of a risk-off day, and yesterday the stock ran up, so that could be one factor. The other factor is they are factoring in a $40 million per quarter hit because of the tariffs that were implemented. So on a quarterly run rate, it will be a $40 million hit. The other point is they have withheld their guidance for volume as well as EBITDA for the year. So the street didn't like that. There is a bit of uncertainty in short. And that was the point. Brokerages, though, they remain fairly positive on the stock. Both Nuvama as well as Equerris, they have a buy as well as an add rating on the stock. So numbers in line. The guidance is a little bit disappointing and it's a bit of a risk-off day. So that's why we're seeing some profit taking. Deepak, your pick from the metal pack. Do you like ferrous or do you like the non-ferrous names?
Honestly, I don't like either. I find metals very boring because they're a very cyclical commodity. I can't talk individual stocks though, but there may be some short-term opportunities in some of them, especially because there is some news around tariffs that could be changing quite dramatically how the results will be going forward, considering tariff numbers are shifting. Therefore, I don't think we should play these in the long term. In the end, we have to remember that both in steel and in aluminium, we have considerable competition from the largest manufacturer, at least in steel, by far, and by other countries like Korea and Japan as well. So if you expect that America is going to be putting tariffs in at some level, India is already going to have to start putting in safeguard tariffs to protect our economy, but also expect that a lot of other countries will see flood of inflows from China / Korea / Japan because America becomes relatively less accessible. So I think longer term, this is not a great story to play with. Very volatile news. I'd rather follow the price on these stocks in the short term rather than play them longer term.
Got that. Well, let's just quickly run you through the hero numbers, right? So Darshan is here with a quick snapshot view of first cut, as they call it. on Hero. So take it away.
So by the first look, earnings are looking much better than estimates, and it looks like what has worked for the company, the recent price hike that company had taken has helped company improve its realization. We were expecting realization to improve by 3% year-on-year, but company has reported an increase of 5%. Even on a sequential basis, it's up 3% versus expectation of 1%. Even if you, and when you look at the headline numbers, those numbers are also looking slightly better than estimates. If you look at the profit, it has come at 1,081 crore. We were expecting almost at the similar line. Revenue has come around 9,940 crore. We were expecting 9,700 crore. So here, company has reported revenue higher than expectations despite volumes falling both on a sequential basis as well as year-on-year. EBITDA too has come at 1,417 crore versus expectation of 1,362 crore. And margin too has come at 14.3%. So it's good for the company that it has held on to margin above 14%. Now, what will work for the company in the Q1 of FY26 is the number of marriage dates this year is more than what we had in 2024. And with Hero Moto being the leader, especially in 100cc segment, we are expecting a healthy Q1 FY26. Even company is saying that going forward in the near term,
Sudarshan, I think we just lost your audio out there, but we got the gist of it. Let's see, we'll get Sudarshan back, maybe in a bit on Hero Moto. That's commentary coming through from the management, and that commentary is, at least is being well received by the market. They're talking about growth in the 125cc category. Do we have Sud back? If we do, let's see if we can finish that point. Yeah, the stock is reacting really well. So back to you. So is it the commentary? Is it the fact that there's no disappointment? What do you think is working for Hero Moto?
Besides earnings, what will work for the company in Q1 of FY26 is first, Hero MotoCorp is the leader in the entry-level segment. And this year in 2025, number of marriage dates is more than what we had in 2024. So if the demand company sees a recovery, the biggest beneficiary amongst all the two-wheelers is going to be Hero Moto. It has almost 30% market share if you look at the entire two-wheeler segment. But in just in 100cc, it holds market share more than 50%. So with more number of marriage dates, it's going to benefit. Also, companies saying that it's optimistic on the outlook in the near term.
Okay, all right, got it. Sudarshan, thanks very much for that. Deepak, before we let you go, just your thoughts on how to play autos. In the morning, we caught up with Ather. I mean, that's on the EV side. They're talking about reducing losses going forward, talking about building on the market share. There's Hero. You know, it's a question of what you want to do here. M&M has been the clear leader, but beyond that, would you keep auto in the portfolio? How much, and how would you approach it?
So I believe, honestly, Surabhi, that India is under-penetrated in a lot of ways in terms of transportation in general. I think India will see a lot more four-wheelers being sold, a lot more, possibly back to the 2018 levels of two-wheelers being sold. By the way, we have not even reached those levels even now, I think, in terms of two-wheeler sales. Ever since that Supreme Court asked, for mandatory insurance and the sales fell, we haven't seen those sales recover, at least for some of the top companies. But we're seeing a difference, a shift. India was always thought to be the place where the cheapest car would sell the most. Some of the largest selling cars are now SUVs, and they're not cheap. They're not the cheapest car. I think this will happen in the motorcycle area as well. And perhaps EV will have a small dent, but it'll take 10 years for EV to come in meaningfully. But I believe here that the premiumization of the motorbike will also kind of happen in the next going forward. So it may not be the leaders of the past that will take the mantle in the future. So you should be, I think, cognizant of that. But I'm very bullish on auto as a whole. India does not, we don't have enough public transportation, especially outside the cities and perhaps even in the cities. And therefore, people need private transportation in order to kind of survive and get to places. As India develops, I think there will be more. And perhaps the focus will go beyond just marriages, because the people need to commute even if they're single. So, I think that is something that I'm long-term bullish on. Unfortunately, the data in the two-wheeler space has not proved me right at all. We have not had any meaningful growth. though some companies have done significantly better than the others. I believe the broad industry will do better, perhaps, hopefully with the tax cut this year, some of it will start as well. But long-term, very bullish on auto. I think it deserves a position in your portfolio.
By the way, this India-UK FTA, you know, a lot of I think I saw it on social media. I've not confirmed it, but Tata Motors is high-priced cars, Land Rover, etc., which right now, when you get it down to India, it costs whatever 80-90 lakhs or something. I mean, the cost basically goes down to half of it. I mean, all those cars become, in a way, competitors to. So, in a way, competition increases. Would you agree? Have you looked at that, by the way, Deepak, in any way?
Yeah, I mean, I think coming down from 90 lakhs to 45 lakhs still makes it compete mostly with, the pricing of, a lot of the Volkswagen cars and some of the mid-end SUV cars, which would actually still be higher than most of the high-selling SUVs in India, which are between 15 and perhaps 30 lakhs. I don't think anybody's coming there. And there will be some limits, volume-based limits on these duty exemptions. It's happening for the US for sure. I don't know whether the UK FTA has that, but I believe that while these cars will become slightly more affordable, they will still be only afforded by the richest part of the segment, which is where there's volumes, but the volumes are relatively small. It's in the thousands, not in the lakhs. So I would say that, some impact, yes, but not meaningful. And I would, of course, love these cars to get cheaper, but I think I'm not the audience that makes the GDP here change in any meaningful way.
But 15 lakhs, you get SUV starts 15 to 30. I think the starting is 25, right? 15 lakh में तो गाड़ी नहीं आती है.
नहीं, I think आप थोड़ा सा मतलब आप high end SUV देख रहे हो. You're seeing the higher end, but there's Nexon and all that available, which is a mini SUV of sorts. The M&M cars are available. The XUV700 is about XU700 is about 30. Of course, if you look at the foreign names, they're at 45, 50. But I'm talking of the Indian name manufactured.
Yeah. Any thoughts on pharma, Deepak, as a space? All this news flow, and we've covered quite a bit of it.
Yes, it's quite interesting. I mean, if you look at Ozempic, it's sold at $1,000 a month in the US. It's sold at $120 or $150 a month in the Netherlands. So obviously somebody in the US is unhappy and maybe they wanted it and therefore decided to do this executive order thing. But it's relatively mild. It's almost like, please bring down the prices. Otherwise, we'll do some more action. But for India, it might not affect directly right now. I think it will be an indirect impact on some companies which have more of these generics going around. Though I don't know, if this is actually more impactful to US pharma companies and to European pharma companies who generally make a lot more money in the US. And the whole healthcare system in the US is ridiculous. I mean, it is just, a price gouging exercise and a profit-making exercise of gargantuan proportions. Whatever happens here will go through a lot of legal challenges. So I think we should eventually focus simply on these companies trying to continue to build market share in the US rather than, or all over the world, rather than, looking at these current actions. They will take a lot of time and they will take a lot of attention away. We're not invested in pharma yet, but if prices were to fall considerably, I think maybe we will take a chance. But right now, not keen on making big entries in this space.
Okay. All right. Got that, Deepak. Good to have you on. Thank you very much for joining us today. You have a good rest of the afternoon. We look forward to connecting again soon. By the way, before we take a break, I just want to mention that on the mid-cap side of the screen, there's a lot of individual level action going on. Look at stocks like Bharat Dynamics, 10% move on this one. Look at Vishal Mega Mart, 7% on this one going on. IKS, the recent listing, up about 6-7% as well. Lots and lots of names. TD Power, Nigel has mentioned. Care on numbers. Care is reacting very well to numbers. Up 12-13% last I saw. Lead, Travenues, Tech, Ixigo.
Yes.
Now that travel is back and airports, at least most of them are reopening, so that travel theme is also very, very strong. So yeah, at an individual
Out
stock
of
level,
all the names,
not a bad day.
out of all the names you mentioned, I don't know what's happened with the IKS.
Yeah.
All of them are like, this one is a hockey stick.
Yeah.
Suddenly 2 o'clock, it was at 1560. It's moved up 100 rupees since, in the last 40 minutes or so. Actually, in the last 1 hour. So yeah, it's a big move. I don't think numbers or anything came, right? Am I missing something? But that's a very large bump up on IKS suddenly. So they work in the recent listing, and they work in the healthcare space, providing services to hospitals, smaller hospitals, doctor-owned hospitals, etc. in the US. It's a niche kind of business which they operate in.
Just one more thing on Hero MotoCorp. Besides the numbers, being a little bit better, there were a lot of shorts in the system. That's another reason that the stock is spurting up. It's up close to around 2.5% or thereabouts. And I'll tell you what, the point is that actually in comparison to our estimates, a little bit better. Some sales notes are saying it's a little bit lower, but there are shorts in the system. So even a inline set of numbers to a mildly positive number is causing those shorts to get squeezed out. I think the realization as well was a little bit better. I'll tell you what, we'll slip into a short break. On the other side, we'll get you updated with some D-Street chatter. Don't go anywhere.
India works. We may not agree with it driving through Bombay traffic and all of that, but it does work.
Manufacturing is the road to ultimate prosperity, right?
We are not a smaller Asian economy where you cater to 5% of global demand and it changes your whole world. We are as big as China.
How should investors understand rural India, and are there any opportunities here?
Smaller cities, other cities across the country are growing very rapidly. You go to any state capital, the real estate market, even in the slowest state, is very, very strong because of migration.
Is earnings growth becoming a real problem?
It is. If you look at the tone of earnings that have come out so far for the March quarter, or the likelihood of earnings in the coming quarter, it's not going to be great. How do you make money in this market is by being patient.
Welcome back. So like we've been telling you, at the index level, it's a quiet day. There's a bit of profit taking going on, but individual stocks, well, there's plenty of action beneath the surface. So let's go back to Nagaraj Shetty for some final trading ideas and thoughts. Nagaraj, just remind us index trades and levels to keep in mind, and any final maybe mid-cap ideas, because there are a lot of stocks bouncing around in the mid-cap arena.
Yeah, I think defense stocks are moving up very well. MTR Tech is the one that was underperformed recently. It has been finding hurdle around 1500 levels. Once it breaks above 1500 levels, I'm expecting an 100 rupees up move around 1600 towards the next resistance, which is looking attractive at this point of time.
Good. Okay, so defense stocks, Nagaraj, is something that you're looking at. There were a couple of other names that we were just mentioning, and I'm just quickly, checking this out with you in case you have a view. There's Vishal Mega Mart, Some of these travel stocks are doing well. Care is reacting very well to earnings. And I think IKS you won't track because it's a recent listing. But any of these other names, and within defense, what's looking the best? Even IdeaForge, by the way, IdeaForge is suddenly now up 6-7%. I don't know if that makes for a trade.
Even VDL is continuously moving up. Chartically, we're looking very strong. Today placed at the 10% up move. I think the more upside is likely in the near term for the VDL as well.
Okay, all right. Nagaraj, thank you very much for joining us. Good getting that view and good getting that perspective as well. Markets down about 300 points, 24,615. Let's talk about IIFL if we can. And IIFL, of course, crossed the 400 rupee mark yesterday. So it's done well after sort of being completely bombed out. And it's adding more because there is an upgrade. Nimish highlighted this pre-market. This is from HSBC. Nimish, take it away.
Hi, Prashant. You rightly pointed out, I mean, the stock is reacting very sharply because after a very long time, you're getting an upgrade on a stock like IIFL Finance, and this has come from HSBC today. So they've upgraded the stock to a buy. They've raised the target price to 550 versus 380 earlier. So it's a significant upside even from current levels. Now, coming to the specific report, there are a few things which needs to be highlighted because of which the stock is reacted. And HSBC believes that the two key segments for IIFL, which is gold finance and microfinance, both have been struggling for the last many quarters. And now from here on, it looks like that's going to change. So they expect a recovery in the microfinance business. They believe that the higher liquidity in the system and also the lower cost of funds should drive the EPS going forward. So that's the key reason why they've upgraded the stock. They also believe that earnings are going to improve from here on. The only risk that they pointed out is the higher competition in the gold business, as well as in the unsecured loans. There could be further rundown. So that's a bit of a risk to IIFL going forward. But at the margin, given the valuations at 1.2 times or close to 1.5 times on FY27 price to book, it's attractive. So that's the key reason. One, they believe that earnings are going to improve. And two, the two biggest segments, which is microfinance and gold, that HSBC believes is likely to improve from here on, and hence a big upgrade coming in. So that's the reason why the stock is reacted 5% after the recent up move.
Okay, IIFL definitely doing well today, 4% higher. Nimish, thanks for that. But do come back soon because we want to, of course, know about Chatter and everything that's going on. Yesterday, told us about, a couple of blocks that could be happening, and that happened. So coming back to you in just a bit. In the meantime, let's get you a snippet from our digital offering, Market Cafe. This week, I caught up with JP Morgan India Head of Research, Sanjay Mukim. Now, JP Morgan as a house is betting big on the Indian urbanization story. They think that this is a mega theme, a mega trend that can drive not just GDP growth, but also, create sizable investment opportunities as far as Indian equities are concerned. Take a look at how specifically JPM is looking to play urbanization in India.
Developments in the last few years are very encouraging because smaller cities, other cities across the country are growing very rapidly. You go to any state capital and you can have a view on the economy in that state, doing well, doing badly, doesn't matter. The real estate market, even in the slowest state, is very, very strong because of migration. Right? So this urbanization is a very strong driver of India's economic growth, and it is what will support the migration of labor and drive a services economy as well. If you look at, let's say, the US, which is an ultimate service economy right now, I mean, they want to go back to manufacturing to some degree, but this is it's not everybody doing technical jobs. It is teachers, doctors, nurses, government administrators. Those are the bulk of your jobs in the economy. And again, that cannot happen in a rural setting. So what I think India has been doing and will probably be a bigger driver of growth than manufacturing deltas, which should still be positive, is the urbanization theme in the country.
Urbanization.
Right.
And how do you play that? I mean, I understand the concept, but what kind of companies are the best play? Because it sounds pretty vast, the whole theme. Yeah.
And there's a lot of associated things that should benefit from urbanization. One, of course, very obviously real estate. Okay. There is this data from a little few years ago. If you look at the per capita constructed space in India, not land per person, but floor space of residential, all India per person is about 10 square meters, 100 square feet. Okay. It's like a jail cell. Okay. Tokyo, which is the densest urban city in the world, is twice the India average.
Wow.
Right. China is 4x the India average.
Okay.
And I won't even tell you what the US is. Right? Because we have not built enough homes for a variety of reasons, right? Policy and, culture or whatever you call it. But if you were to take that 10 square meters Surabhi and grow it to 15 square meters, still lower than Tokyo, I would need a bare minimum $2 trillion worth of steel and cement.
Wow.
It's
Just
massive.
to build so much of real estate, so much housing.
Yes.
Okay.
There is almost infinite demand for all of this. So real estate, housing construction can be a very big theme in India, and it drives growth because as you demand more cement, as you demand more steel, as you demand more appliances, that drives other demand in the country as well. Okay. So I think that can be very, for a longer term investor. Of course, the debate will be which company is doing it, which is not doing it, those are other issues. Education is a very, very strong growing sector in the country. The data, top-down data on household spends on education are very robust. Okay. Very difficult to find stock plays.
Yeah, stock plays, because in the
market.
listed universe.
Yes.
Yeah.
But when you look at the category spend, education is doing very well. Wow. Healthcare similarly is very, very robust. Now, because of sampling issues, you will assume that everybody goes to private hospitals. No, the penetration of private hospitals, even in urban India, is extremely low. Okay, a majority of people still use the public healthcare system. And as incomes rise and as the country urbanizes, you should see the services of private healthcare continue to grow at a very high compounding rate as well.
Okay, so let me recap this. So the ways to play the great Indian urbanization story, real estate could be one straight, materials, steel, cement, which will be used in building that whole piece, and healthcare services.
Healthcare
and education. Services, you say.
And I will throw in one more, which we may be ambivalent on how we approach it, is the consumption of processed foods.
Oh, okay.
Right. Now, people who've evolved to a certain degree of income realize that processed foods are bad.
Nothing out of a can, as they say.
Yes. But as incomes rise at the lower end of the income cohort, the aspiration for processed food is very high. Because I could not afford a packet of chips when I was younger, I will provide it to my kid. Right. And this is a conversation I've had with doctors in rural India, that they're facing malnutrition problems because the kids are now consuming a lot more junk food. So again, like I said, you will be ambivalent about how you think about it, but the consumption of processed foods in India is growing.
And in rural India, it's really growing. It might be peaking in urban centers.
That's right. So there are a variety of ways that this urbanization, the J curves that are hit when incomes reach a certain, there's a variety of categories that do very well.
Big theme that JP Morgan is bullish on. There are several others, and we discuss, of course, earnings as well, and whether structurally there's an earnings slowdown in India. That episode is dropping on YouTube tonight, and then eventually it plays out on television as well. So don't forget to catch it 7:30 on YouTube. You can hear the entire conversation. But for now, it is time for D Street Chatter. As promised, we have Nimesh back with us. Nimesh, so a slightly, cooler day, taking some steps back after yesterday's rally. What's the latest you're picking up?
I said, I would call it more of a consolidation day. We saw yesterday a big move, right? I mean, a lot of the Nifty stocks were up 8-10%. And unfortunately, we didn't see a very large FI or a DI number yesterday. The feeling was you'll see $1 billion kind of buying, and that didn't turn out to be. So it looks like yesterday's rally was more of short covering. And we've given us some of the gains in sectors like IT and pharma today. So pharma is actually doing good, but IT has given up. Even today, the sense is that the flows are quite mixed. There is buying, but it's very selective, both in the large cap as well as in the broader markets. The broader markets have actually done much better today, up 0.3%. So that seems to be a bit of a catch-up happening in the broader market stocks, at least in today's market. Look, today's FI data will also look a bit skewed because of the two large block deals, and that will have an impact on the FI DI number. Outside of that, I haven't heard any large buying or large selling from larger institutions. So there's a lack of participation as well. We have the MSCI rebalancing tonight, which will have an impact on many individual stocks. Plus, I guess there's going to be a buying of close to $1 billion because of the rebalancing. So that's going to be important to track. But net, a day of consolidation with a bit of bias or the move shifting towards the broader market stocks.
In terms of specific names, Nimesh, what's on the list?
Well, Prashant, so I'll continue with the theme of block deals. So the first stock in my list is Asian Paints. But the stock has been under pressure for various reasons in the last couple of quarters and weeks. Now there is a buzz that there could be a large block as well in Asian Paints very soon. So that's adding further pressure on stock like Asian Paints. So that's the first name. The second stock is Zota Healthcare. The overall pharma has done well today, but Zota stands out. Good up move in that name as well. The volumes on the higher side. I understand a very large leading domestic AIF has been an active buyer in Zota of late. So there was a fundraising as well. A lot of large investors did put in money in the QIP as well in Zota Healthcare. So that's the second stock. The third stock is Granules. Again, a pharma name doing good today, is buzzing in trade. For Granules specifically, I understand there was a selling pressure from a large FII fund. That seems to be largely over in the last couple of days. So now there is a bit of fresh buying as well. And the selling overhang seems to be out of the way. So that's the reason why Granules is buzzing in trade. And the last is UPL. We saw a bit of a reaction in UPL yesterday as well after the earnings and the management interview. But I guess the stock is under pressure again today because of very aggressive selling. So expect high delivery volumes on the sell side in UPL today.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's get in Mr. Pashupati Advani, founder and chairman at Global Foray, who joins us on the show. Hi, Mr. Advani. Good afternoon. Good to see you, and thanks a lot for joining in. I believe you're overseas, but we're lucky to have you. Well, Mr. Advani, how are you feeling about the Indian markets? You know, the markets went down to 21,700. We have bounced back a good deal, and in this period of time, we have gone through Trump's tariffs, the skirmish that we've seen on the border, and earnings as well haven't really picked up. Your outlook about the Indian markets from here on?
Well, everyone is saying that Donald Trump bought the index at 21,000. So I guess we have to follow him. Now, jokes aside, I think that, the market has been going up and down on news, some real, some false. Right now, he's taken the gas off the pedal on the tariffs with China. And, the information that's coming out is so mixed that it's very, very difficult to get a handle on what's really going on. So the only thing to do is to say, okay, I'm in the market, I'm going to be there. I'll just, if I've got money, I'll buy more of what I have. If I need money, I'll sell a bit of everything and just be participating, because I think it's very, very difficult for us to manage the kind of machinations and movements that we've had in the market. Yesterday was crazy. Today we've given back, half of what we went up yesterday. So, who the hell knows what's going on? And as Nigel said, that the FPI and DI numbers yesterday were not much to speak about, even though the market jumped up a lot. So, I don't know what today's numbers are going to be like, but certainly what I am seeing is a company like ANP saying, I want to now sell some Paytm. And, we had some momentum. So now they're going to sell 4% of the company, which is a big sort of outflow. So, I think those are the kinds of things that are going to happen. So the trend is there that whenever there are jumps, the foreigners seem to be bailing.
Okay, all right. And today as well, the flows are going to be skewed because we had a couple of large trades, as you mentioned, on Paytm and a couple of others. So we won't really get a clearer picture out there. But I'll tell you what, Mr. Advani, in the last few days, last 10 sessions or so, a lot of smart HNIs were raising money. So it seems yesterday, the buying that came in was from actually the retail as well as the HNI audience. That aside, we want to know, what are your top picks? In the past, we've spoken about Paytm. I recall we spoke about, an infra name, J. Kumar Infra, if I remember correct. Tell us what's new on your radar and name a couple of stocks for us, please.
Well, it's kind of difficult, but, I think that, this market is a market which is kind of event driven. So, there is a point at which it's probably worth taking a punt on IndusInd Bank, but this is a punt. This is not a real recommendation per se. The infra companies are still continuing to do well because there is a lot of business going around. But I think that, they should continue to be invested in, because that's not a sector that's going away, and it's being driven by government spending. So I think that, I took J. Kumar because it was an interesting stock at that time. It hasn't really moved in the last month or so, but I think that, it has done well from when we started getting in. But I don't know, it's very, very difficult to predict actual stocks and actual sectors. And, a lot is going to happen when China's tariffs with the US settle, because once those rates settle, then, say, for example, our chemicals may be back in business. Now, it's gone back to 30%, our chemicals are going to be sidelined for a little bit. So it's trying times, and it's very, very difficult to just this thing. But I do not like IT. I just feel that the US is closing the IT doors. The H-1Bs are going to get more and more difficult. And a lot of AI is coming into play, and so I think they're going to be hurting. And I don't know what this new information on pharma has been, that we're going to start buying generics at Indian prices.
Yes.
Let's see if President Trump can actually make that happen.
Okay, all right, Mr. Advani, a short but crisp chat as of now. I don't know whether we'll see 21,700 odd, but you have given us a hint who was the buyer at those levels. And in fact, from the infra names, you continue to like Jay Kumar Infra. From the banking pack, IndusInd Bank is what you like, while tech is something you choose to stay away. Thanks a lot, Mr. Advani. Have a good holiday. And when you're back, we'll have a longer chat with you.
Thanks, man.
Well, Mr. Advani briefly mentioned chemicals, and I think SRF, we're getting some important commentary from the con call, and our ticker team is putting it up. The chemicals business is likely to grow by around 20% in FY26, and they're saying that they'll build on momentum from there on. So that's why you're seeing a bit of a perk up in the stock. The initial commentary was a little bit subdued, but from there we have seen a bit of a recovery because of this line that's flashing for you on the screen. Chemicals business set to grow by 20% in this fiscal and build momentum from there on. Slip into a short break, come back. I think we'll have Jay Bala of Cash the Chaos. He'll be giving us his technical trades.
News18.com marches way ahead of the Times of India with 38% more users on native and social platforms. Network 18, the undisputed leader of news networks, way ahead of the Times.
Okay, welcome back. Let's get the price action analyzed a little bit. Technicals in focus, right? You heard Pashupati Advani, and they were saying, who the hell knows? Let's ask Jay if he knows. He's, of course, with cashthechaos.com. He was in Goa, and he's back in London. Jay, what's your sense? Price action, purely price action-wise. Yesterday was a very large move. Today we've given back about 40% of that. Is this broadly up and looking to buy the dip kind of a market, or what's your sense? Yeah, go on.
Yeah, thanks, Prashant. I'm anticipating this market to pull back a bit. I don't know if it will come as deep as 22,975, but if the markets can drop to somewhere close to 23,700 to 23,300, that will be a good bullish reset for the market. And this is as far as I see the markets, it's from the price action perspective. This is a pause to refresh. And people have been talking about Donald Trump being moving the markets, but that's not the case. No, we saw the markets top out in September, and we even called the markets to drop on the 1st of October on CNBC-TV18 to drop to the June 4th range. So the markets don't move on exogenous events. The markets react, have their own endogenous reasons to move up and down. And so as far as I'm concerned, the markets is in a bullish space, and any fall here will be an opportunity to buy the dip.
All right. I think the trip to Mumbai and then Goa turned things around. Jay, you've been sounding bullish at least for the last couple of interactions. So good. You believe that you should be buying the dip. I want your view on two asset classes, moving away from equity. One is the dollar index, which has perked up. The other one is Bitcoin. Woohoo. From where to where, right? It breached 80,000 and now it's at 1 lakh. What's your take?
That's right, Nigel. Bitcoin's price action is very important. It's indicating that animal spirits are possibly back. And if you recall, going through a short interview notes that I've been preparing, I'd said that if Bitcoin were to hold 72,000, that will be a shallower retracement than I had anticipated, and that will be a good possibility that Bitcoin would go back to record highs. I'm anticipating Bitcoin to touch about 125,000 to 130,000 in the short to medium term. But so that will be another tailwind for the equity markets, because as Bitcoin's price action signals, so does the risk-on indication for the markets. So, and when it comes to the dollar index, it's come very close to long-term support, about 96.5 to 95.5. The low was about 97 and change. I'm anticipating a short-term bounce for the dollar index to take it to somewhere close to 103 to 104, and then possibly come back to retest the long-term support at about 96.5, 95.5.
Jay, the other, just one more global thing. Oil, do you think there is a little more upside? I know your broader, bigger views, but near term, it's kind of felt a little out of sync with everything else, seeing so much risk on. Oil's come up to about $4 or $5 from the lows, but what's your sense, near term?
Yeah, watch 65.1 on the NYMEX variety. If that's taken out, I'm anticipating Brent, both varieties of crude to rise to about another $10 from that position. So I would anticipate NYMEX to hit about 78 to 82 if that's taken out. So if NYMEX crosses 65.1, that'll be a double bottom. And depending on how it gets there, we can evaluate if that's going to be a longer-term trend reversal or just a short-term blip. But as things stand, I am anticipating 65.1 to get taken out on NYMEX. And along with equities, I expect tailwind to take crude markets also up.
Okay, that's on the global front. Jay, finally, I just want to ask you about some of these defense stocks, because they still seem to have a fair amount of momentum, even though the headlines have now subsided and the action on the border has subsided. Would you look at any trades or sort of positional buys here at all in this entire basket, or do you think this is just momentum and it'll fizzle out?
No, I think some of the defense names are definitely looking interesting. And if you look at something like GRSC, Garden Reach Shipyard, they're looking, it's looking pretty good. I was already bullish on Masgo and Docks, but it's a bit late now. Possibly Garden Reach possibly could mimic Masgo and Docks movement. And as a sector as such, now I'm more bullish on the capital goods space, where some of the defense stocks are also there. HAL itself might be a good bet there. And besides that, I also like ABB and Schaeffler from the capital goods space. India might not have a equivalent of Dow Transports and Dow Industrials, but I would consider capital goods and autos as an equivalent. And capital goods has clocked a double bottom. And that's actually, we can classify some of the defense name within that. And, probably they're probably likely to clock fresh 52-week highs past what is registered in 2024. I'm talking about the BSE Capital Goods Index. So, yeah, so even BEL, BHL, they're all looking quite interesting. And they are also components of Capital Goods Index.
Okay, all right, Jay, we'll leave it there. Thank you very much for joining us. Good speaking with you. and we'll talk again. We'll take a quick commercial break here. There's about, 5 minutes to go, 4 to go for market closing. We are back. We'll get you some previews as well and just wrap up things. Stay with us.
Well, last couple of minutes of trade today, well, it's been a bit of a down day. The Nifty is actually going home closer to the low point of the day. So a total reversal of what we saw yesterday. Yesterday, we went to the high point of the day and we went into close at the high point of the day. Today, we're winding up at the low point of the day, though we have given up less than 50% of the gains that we put on in yesterday's trading session. What lost out? Stocks that did well yesterday, in fact, came in for profit taking. So IT as well as metals, both of them did see selling. Infosys, HCL Tech, TCS, all those stocks were under pressure. Hindalco, numbers in line. Problem is in terms of the guidance. The globe is still in an uncertain place. So Hindalco was down closer on 2.5%. What did well then from the Nifty pack? BEL, that was up close around 4%. Geo Financial, I'd made this point a few sessions ago that Reliance corrected and then we said Geo Financial that did correct as well. But Reliance bounced back, Geo Financial was yet to bounce back as much. So that one in fact actually did a relative outperformance today in comparison to Reliance Industries. From the broader markets though, plenty of stocks did well and that's why the portfolio will be feeling quite good. So explains why the Midcap index in fact ended well in the green in today's trading session. Few stocks that were in focus. TD Power, that one reacted to its numbers, good gains out there. CARE, well, solid gains out there because a solid set of numbers is what we had. So that as well went home with gains of more than 10%. Suven Life, well, they issued some warrants on a preferential basis to promoters as well as non-promoters. Big volumes on that one. KPI Green, that's the other one, in fact, went home with gains of close to around 10%. Some of these stocks have seen a sharp correction, but they pulled back big time in today's trading session. Tanla Platforms as well was up close to around 11.5%. So in short, we did see that the Nifty did give up some part of yesterday's gains. The Nifty Bank as well was down close to around 400 points, but it was less than 30% of the gains that we put on yesterday. However, the breadth of the market tells you that it's still pretty much a buy on dips market, going by the kind of action we saw in the broader markets. Number of stocks advancing, 1,800 stocks. Number of stocks declining, just around 800 stocks in today's trade. Well, we'll wrap up on this edition of your closing bell. Stay with us though. Markets forward. comes up next.
Monday, Nifty and the Sensex fall over 1% each. Midcaps outperform, end in the green. Donald Trump signs an executive order that cuts prices of some medicines in the United States to align them with those paid in other developed countries. Cipla meets the street in the fourth quarter. Net profit grows by 30% on a year-on-year basis. Hindalco falls after its fourth quarter numbers after the US arm Novelis withheld guidance due to macro uncertainties. Tata Steel also falls after an in-line set of numbers for the fourth quarter, but Hero Moto gains on a mild beat. Hello and welcome to a brand new edition of Markets Forward, your go-to show where we get you the highlights of the day's trading action and, of course, prep you up for the next one. I'm Surabhi Upadhyay. With me is Nigel D'Souza. And Nigel, today was a bit of a pause day, a little bit of a pullback because we had the mega Monday rally. But not bad, right? Individual stocks, there were lots of action beneath the surface today.
Well, that's right. Surabhi, the way I termed it this morning was that we're running a marathon bull market, and in the midst of that marathon, we had a quick 100-meter sprint, and that was yesterday. But after you run so hard, you need to pause for breath, and I think that's the way it played out today.
Perhaps that's exactly how it worked out. So we'll discuss all of this as we go over the next 20 minutes. All the key developments coming up of the day, of course, a lot of the big earnings, the key market voices. But first up, the day's market action. So, as the graph will tell you, for the large cap screen, it was a slightly down day. And there's no denying that because the Nifty was kind of struggling from the start. And there was some profit taking, especially in areas which did very well yesterday, for instance, IT. But the broader market did well. Relatively speaking, the mid-cap index was better off. And if you saw the micro-cap index, let's actually see if we can pull up the micro-cap index. That was up more than 1.5%. So at an individual stock level, things did really well. And I just want to point out two sectors that really stood out in green. One has to be the defense space because a lot of defense stocks are continuing to see a fair amount of buying. The Nifty defense, look at that index, 4% higher, the best performer of the day. And there was pharma, because the market wisdom now seems to be that overall speaking, this new executive order in the US on lower drug prices, that's not going to hurt Indian pharma companies too much. So pharma was a bit of an outlier as well today.
Well, so some mild profit taking after a stellar run. That's the way I'll put it. Stocks that ran very, very hard yesterday, that included tech as well as metals. Both of them came in for profit taking. We'll talk about select stocks as well later on. And finally, your portfolio could still be feeling good because you had more than 2 stocks that were advancing in comparison to 1 stock that was declining. 1800 to 800. Your portfolio may be feeling quite good. Actually, let's get the metal index up for you and let's get the crisscross lines. We'll tell you a better story.
Okay, yeah, there we go. There they come up. So it's not too bad. The green line was still, way above the red one today. Let's tell you what's on the show. The lineup includes, of course, the movers and shakers of the day. Hormuz will bring us all of that action. And then, like we've been saying, pharma was definitely in the spotlight after US President Donald Trump signed that executive order directing drug makers to align drug prices with other peer nations. Cipla, of course, in focus as well on the back of numbers. So all of that coming up in just a bit. Then we'll, of course, dive into some of the key events to watch in tomorrow's trading session. But let's get the day's stock account with Hormuz first up. Over to you, Hormuz.
The green line that you saw on the advances was primarily led by a lot of these defense names that continue to move higher after, of course, the Prime Minister's call for Made in India's defense equipments. And look at Bharat Dynamics now up 11% at the end of the trading session. Any good days for Z Technologies, BEL, HAL will be reporting numbers soon. So a good session for the defense names in today's session. The newsmakers, of course, there were plenty of them. Suven Life at one point was up 12%. After the preferential issue of shares that they issued to investors like Sunil Singhania and to Prashant Jain and the funds managed by them. KFin Technologies was one of them. Swiggy too at the lock-in period ending. Z Entertainment as well ending 5% higher in today's session. But earnings reactions also. We'll look at Hero MotoCorp reversing losses to end 2% higher. The street remains divided on UPL. But, of course, Jyoti Laboratories also continuing to extend their losses after the results. And as you mentioned, IT saw a bit of profit booking in today's session, but that profit booking was confined mostly to large cap IT, be it TCS, be it Infosys, HCL Tech, Wipro, all of them seeing losses of anywhere between 2 to 4%. Where it was red for IT, it was green for pharma. It was red for pharma yesterday, and reversing all of those moves were stocks like Ajanta Pharma, Granules, and a lot of its peers. Back to you guys.
Thanks a lot for that, Hormuz, for that neat list. Well, let's hop across to our guest. We have Jay Bal of CashTheChaos.com who joins in to help us out with the technicals, and Sudeep Bandyopadhyay of IndiTrade Capital who helps us out with the fundamentals. Jay, coming across to you first. You have turned the corner the last time around. You were talking about higher levels on the Nifty. Today was a bit of a down day. So do you maintain that bullish bias both on the Nifty as well as the Nifty Bank?
That's right, Nigel. I'm seeing this as a pause to refresh for the bull move. And I'm expecting the market to drop somewhere close to 23,750. That'll be a nice pullback. And it won't my view won't change even if the market were to drop somewhere close to 22,900. While that is not my base case, I'm willing to even look at the market's drop as deep as 22,900. That's the point. But 23,750 will be a good entry point for people who are waiting to reload or waiting for fresh entries.
Okay, Ajay, sorry to come in over there, but I think that address that PM Modi is making to our armed forces, that has begun. He was visiting one of the country's air bases today. Let's go and listen to him.
एक ही अंजाम होगा, विनाश और महाविनाश। जिस पाकिस्तानी सेना के भरोसे ये आतंकी बैठे थे, भारत की सेना, भारत की एयरफोर्स और भारत की नेवी ने उस पाकिस्तानी सेना को भी धूल चटा दी है। भारत माता की जय! भारत माता की जय! भारत माता की जय! आपने पाकिस्तानी फौज को भी बता दिया है, पाकिस्तान में ऐसा कोई ठिकाना नहीं है जहां बैठकर आतंकवादी चैन की सांस ले सके। हम घर में घुसकर मारेंगे और बचने का एक मौका तक नहीं देंगे। और हमारे ड्रोन्स, हमारी मिसाइलें, उनके बारे में तो सोचकर पाकिस्तान को कई दिन तक नींद नहीं आएगी। कौशल दिखलाया चालों में, कौशल दिखलाया चालों में, उड़ गया भयानक भालों में, निर्भीक गया वह ढालों में, सरपट दौड़ा करवालों में। ये पंक्तियां महाराणा प्रताप के प्रसिद्ध घोड़े चेतक पर लिखी गई है। लेकिन ये पंक्तियां आज के आधुनिक भारतीय हथियारों पर भी फिट बैठती है। मेरे वीर साथियों, ऑपरेशन सिंदूर से आपने देश का आत्मबल बढ़ाया है, देश को एकता के सूत्र में बांधा है और आपने भारत की सीमाओं की रक्षा की है। भारत के स्वाभिमान को नई ऊंचाई दी है। साथियों, आपने वो किया जो अभूतपूर्व है, अकल्पनीय है, अद्भुत है। हमारी एयरफोर्स ने पाकिस्तान में इतना डीप आतंक के अड्डों को टारगेट किया, सिर्फ 20-25 मिनट के भीतर सीमा पार लक्ष्यों को भेदना, बिल्कुल पिन पॉइंटेड टारगेट्स को हिट करना, ये सिर्फ एक मॉडर्न टेक्नोलॉजी से लेस प्रोफेशनल फोर्स ही कर सकती है। आपकी स्पीड और प्रिसीजन इस लेवल की थी कि दुश्मन हक्का बक्का रह गया। उसको पता ही नहीं चला कि कब उसका सीना छलनी हो गया। साथियों, हमारा लक्ष्य पाकिस्तान के अंदर टेरर हेडक्वार्टर्स को हिट करने का था, आतंकियों को हिट करने का था। लेकिन पाकिस्तान ने अपने यात्री विमानों को सामने करके जो साजिश की रची, मैं कल्पना कर सकता हूं वो पल कितना कठिन होगा जब सिविलियन एयरक्राफ्ट दिख रहा है। और मुझे गर्व है, आपने बहुत सावधानी से, बहुत सतर्कता से सिविलियन एयरक्राफ्ट को नुकसान किए बिना कमाल करके
that you do.
Yes,
Thank you.
yes,
What
thank
a
you very
pleasure.
much.
Well, this was a lovely conversation with Dr. Debjani Dasgupta, an academician, innovator, and an institution builder who continues to shape the future.
क्या आप सभी अपने लक्ष्यों पर बिल्कुल खरे उतरे हैं। पाकिस्तान में आतंकी ठिकानों और उनके एयरबेस ही तबाह नहीं हुए, बल्कि उनके नापाक इरादे और उनके दुस्साहस दोनों की हार हुई है। साथियों, ऑपरेशन सिंदूर से बौखलाए दुश्मन ने इस एयरबेस के साथ साथ हमारे अनेक एयरबेस पर हमला करने की कई बार कोशिश की। बार बार उसने हमें टारगेट किया, लेकिन पाक के नापाक इरादे हर बार नाकाम हो गए। पाकिस्तान के ड्रोन, उसके यूएवी, पाकिस्तान के एयरक्राफ्ट और उसकी मिसाइलें हमारे सशक्त एयर डिफेंस के सामने सबके सब ढेर हो गए। मैं देश के सभी एयरबेस से जुड़ी लीडरशिप की, भारतीय वायुसेना के हर एयर वॉरियर की हृदय से सराहना करता हूं। आपने वाकई बहुत शानदार काम किया है। साथियों, आतंक के विरुद्ध भारत की लक्ष्मण रेखा अब एकदम स्पष्ट है। अब फिर कोई टेरर अटैक हुआ तो भारत जवाब देगा, पक्का जवाब देगा। ये हमने सर्जिकल स्ट्राइक के समय देखा है, एयर स्ट्राइक के समय देखा है, और अब तो ऑपरेशन सिंदूर भारत का न्यू नॉर्मल है। और जैसा मैंने कल भी कहा, भारत ने अब 3 सूत्र तय कर दिए हैं। पहला, भारत पर आतंकी हमला हुआ, हम अपने तरीके से, अपनी शर्तों पर, अपने समय पर जवाब देंगे। दूसरा, कोई भी न्यूक्लियर ब्लैकमेल भारत नहीं सहेगा। तीसरा, हम आतंक की सरपरस्त सरकार और आतंक के आकाओं को अलग अलग नहीं देखेंगे। दुनिया भी भारत के इस नए रूप को, इस नई व्यवस्था को समझते हुए ही आगे बढ़ रही है। साथियों, ऑपरेशन सिंदूर का एक एक क्षण भारत की सेनाओं के सामर्थ्य की गवाही देता है। इस दौरान हमारी सेनाओं का कोऑर्डिनेशन वाकई में कहूंगा शानदार था। आर्मी हो, नेवी हो या एयरफोर्स, सबका तालमेल बहुत जबरदस्त था। नेवी ने समुद्र पर अपना दबदबा बनाया, सेना ने बॉर्डर पर मजबूती दी और भारतीय वायुसेना ने अटैक भी किया और डिफेंड भी किया। बीएसएफ और दूसरे बलों ने भी अद्भुत क्षमताओं का प्रदर्शन किया है। इंटीग्रेटेड एयर एंड लैंड कॉम्बैट सिस्टम ने शानदार काम किया है। और यही तो है जॉइंटनेस। ये अब भारतीय सेनाओं के सामर्थ्य की एक मजबूत पहचान बन चुकी है। साथियों, ऑपरेशन सिंदूर में मैन पावर के साथ ही मशीन का कोऑर्डिनेशन भी अद्भुत रहा है। भारत के पारंपरिक एयर डिफेंस सिस्टम हो, जिन्होंने अनेक लड़ाइयां देखी हैं, या फिर आकाश जैसे हमारे मेड इन इंडिया प्लेटफॉर्म हो, इनको S-400 जैसे आधुनिक और सशक्त डिफेंस सिस्टम ने अभूतपूर्व मजबूती दी है। एक मजबूत सुरक्षा कवच भारत की पहचान बन चुकी है। पाकिस्तान की लाख कोशिश के बाद भी हमारे एयरबेस हो या फिर हमारे दूसरे डिफेंस इंफ्रास्ट्रक्चर, इन पर आंच तक नहीं आई। और इसका श्रेय आप सभी को जाता है। और मुझे गर्व है आप सब पर। बॉर्डर पर तैनात हर सैनिक को जाता है। इस ऑपरेशन से जुड़े हर व्यक्ति को उसका श्रेय जाता है। साथियों, आज हमारे पास नई और कटिंग एज टेक्नोलॉजी का ऐसा सामर्थ्य है जिसका पाकिस्तान मुकाबला नहीं कर सकता। बीते दशक में एयरफोर्स सहित हमारी सभी सेनाओं के पास दुनिया की श्रेष्ठ टेक्नोलॉजी पहुंची है। लेकिन हम सब जानते हैं, नई टेक्नोलॉजी के साथ चुनौतियां भी उतनी ही बड़ी होती है। कॉम्प्लिकेटेड और सोफिस्टिकेटेड सिस्टम को मेंटेन करना, उन्हें एफिशिएंसी के साथ ऑपरेट करना, ये एक बहुत बड़ी स्किल है। आपने टेक को टैक्टिक्स से जोड़कर दिखा दिया है। आपने सिद्ध कर दिया है कि आप इस गेम में दुनिया में बेहतरीन है। भारत की वायुसेना अब सिर्फ हथियारों से ही नहीं, डेटा और ड्रोन से भी दुश्मन को छकाने में माहिर हो गई है। साथियों, पाकिस्तान की गुहार के बाद भारत ने सिर्फ अपनी सैन्य कार्रवाई को स्थगित किया है। अगर पाकिस्तान ने फिर से आतंकी गतिविधि या सैन्य दुस्साहस दिखाया तो हम उसका मुंह तोड़ जवाब देंगे। ये जवाब अपनी शर्तों पर, अपने तरीके से देंगे। और इस निर्णय की आधारशिला इसके पीछे छिपा विश्वास आप सबका धैर्य, शौर्य, साहस और सजगता है। आपको ये हौसला, ये जुनून, ये जज्बा ऐसे ही बरकरार रखना है। हमें लगातार मुस्तैद रहना है, हमें तैयार रहना है, हमें दुश्मन को याद दिलाते रहना है, ये नया भारत है। ये भारत शांति चाहता है, लेकिन अगर मानवता पर हमला होता है तो ये भारत युद्ध के मोर्चे पर दुश्मन को मिट्टी में मिलाना भी अच्छी तरह जानता है। इसी संकल्प के साथ आइए एक बार फिर बोले, भारत माता की, भारत माता की, भारत माता की, वंदे 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 वंदे। बहुत बहुत धन्यवाद।
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The situation remains relatively calm along the Indo-Pak border, but Indian forces on high alert. Prime Minister Modi meets Air Force personnel at Punjab's Adhampur Air Base. Army sources say 3 Lashkar-e-Toiba terrorists were killed in an operation in J&K's Shopian. Defence Minister Rajnath Singh reviews the security situation at the border. Sources tell CNBC-TV18 that the DGMOs of both countries agree not to initiate any aggressive and inimical action against each other. Indian equities take a breather after Monday's breakthrough rally. Sensex and the Nifty dip around 1.5% each, but the Midcap index continues to trade in the green. The rupee strengthens against the dollar but is off its early highs on dollar buying by importers. Cipla meets the street in Q4, net profit up 30% on a year-on-year basis. FY25 margins come in higher than the company's guidance, announces a total dividend of 16 rupees for shareholders. India warns the World Trade Organization that it is considering imposing retaliatory tariffs on certain steel and aluminum products imported from the US, says the move is aimed at countering the Trump administration's imposition of 25% levies on Indian imports, adding that America's measures would hurt $7.6 billion worth of Indian-made products imported to the US. Donald Trump signs an executive order that cuts prices of some medicines in the US to align them to those paid in other developed countries. Trump says the order will apply to medicines procured via both commercial and public healthcare system, but does not disclose which exact medications the order will apply to. President Trump lands in Saudi Arabia in the first leg of his 3-day tour to the Middle East, holds talks with Crown Prince Mohammed bin Salman, covers a range of issues including investments, defense, regional security and Riyadh's civil nuclear program. Trump will head to Qatar and the UAE next. Justice Sanjeev Khanna retires as the 51st Chief Justice of the Supreme Court after a brief tenure of just over 6 months. Justice B.R. Gawai to assume office of CJI tomorrow. Well, the top story this evening, the situation along the Indo-Pak border continues to remain relatively calm. However, Indian forces remain on high alert. Prime Minister Modi visited Punjab's Adhampur Air Base, interacted with air warriors. Adhampur is India's second largest air force base, and it was one of the military sites that Pakistan attempted to attack last week. Prime Minister Modi also shared pictures of him with a MiG-29 jet and an intact Russian S-400 air defense system in the background, once again debunking Pakistan's claim that the missiles from its JF-17 fighter jet caused heavy damage to the Adhampur Air Base and destroyed the S-400. In an address to personnel at Adhampur Air Base, Prime Minister Modi said that Operation Sindoor was the new normal, called the IAF's contribution unimaginable, exemplary and outstanding.
जब हमारी बहनों बेटियों का सिंदूर छीना गया तो हमने आतंकियों के फन को उनके घर में घुस के कुचल दिया। भारत माता की जय! भारत माता की जय! भारत माता की जय! वो कायरों की तरह छिप कर आए थे, लेकिन भूल गए उन्होंने जिसे ललकारा है वो हिंद की सेना है।
And the Prime Minister reiterating that Operation Sindoor is the new normal for India's stance on terrorism. In his address to the nation yesterday, he added that India will not tolerate any threats of nuclear action. He said, "We will not stand for nuclear blackmail by Pakistan." Sources have told CNBC-TV18 that the DG military operations of both sides, India and Pakistan, have agreed to not initiate any aggressive action. Not a single shot should be fired, and have also committed and agreed to an immediate reduction of troops from the forward areas as well as the border areas. Parikshit is standing by with more on the Prime Minister's visit to the Adhampur Air Base as well as the current state of play between India and Pakistan. A significant move there by the Prime Minister to visit the Adhampur Air Base in Punjab, Parikshit, and, in many ways debunking Pakistan's claim of destroying the S-400 air defense system, of destroying the Adhampur Air Base as well. The Prime Minister there speaking to the air warriors and making it clear that our position on Operation Sindoor is now the new normal.
Absolutely. Adhampur Air Base in Punjab was one of the areas which reportedly came under fire from Pakistani forces. And this was India's message to the world and also Pakistan that you could not target, you could not cause any damage to the Adampur base or our S-400 air defense systems. It was to boost the morale of our armed forces, who played a critical role over the last 1 week or so. Also to send out a very strong message from an air base, from a military base, that this is now going to be the new normal. If there is going to be any attack from Pakistan, any terrorist attack from Pakistan, it will be treated as an act of war. Having said that, what's happening domestically? We've seen a massive counter-terrorism operation underway since the Pahalgam attack. This morning, at least 3 terrorists were killed in a counter-terrorism operation, and this was led by the police force in Jammu and Kashmir and the army as well. Domestically, we've not seen any ceasefire violation since about 11:30 p.m. last night. No drone sightings either, but before that there were drones spotted in different areas. So India is really keeping its guard up. Have the forces, has there been true production at the border? The answer is not immediately. It's going to take some time. There is a lack of trust between the two sides. Even though the DGMOs have decided to stop firing, pause military action for the moment, it will take some time to take shape of an actual ceasefire. For the moment, our operational deployments in the Arabian Sea with the Navy, with the Air Force and the Army are in the highest possible alert. This is not going to change. And we can also tell our viewers that the Parliamentary Committee on Foreign Affairs is going to hold a very important meeting on what's happened with India and Pakistan during Operation Sindoor, and Foreign Secretary will be briefing committee members on the 19th of May.
Parikshit, many thanks for joining us. And Prime Minister, during his address to the nation last evening, had also stressed that the time had come for greater reliance on made-in-India defence equipment. Now, Indian defence stocks surging, up 10% in today's trade on the back of that statement. Meanwhile, Chinese defence stocks were under selling pressure today. The Hang Seng China and Aerospace and Defence Index was down nearly 3%. Majority of the Chinese defence stocks traded with cuts of up to 7%. Now, as per the Stockholm International Peace Research Institute, China accounted for 81% of Pakistan's arms imports between 2019 and 2023. On to the day's market action. Indian equities took a breather after Monday's breathtaking rally. The Sensex and the Nifty dipped around 1.5% each, but the Midcap index continued to outperform. The Nifty Bank also witnessed some cuts, ending more than 440 points lower. Prashant joins us now to take us through the trading action. Prashant, so a little bit of a breather there. The market's giving up some of Monday's gains.
We gave back about 40-odd% of the gains, the big monster gains that we saw yesterday. The market in the Nifty ending about, 350 points lower. The Nifty Bank lesser, but about 0.75-odd% cut there. Nifty, mid-cap and small-cap indices much better, and that is the reason why market breadth was a clean 2:1 in favor of advances. I'll start with, what was up today as far as the index is concerned. It was once again a defense kind of a day. Last week, remember, you had a day when the defense index was up 5. Guess what? Today was a big one as well. So in the Nifty, there was Bharat Electronics, which was the biggest gainer in that space. Apart from that, Jio Financial Services did very well. Hero MotoCorp reported numbers, market liked them. And the pharma pack, Dr. Reddy's was up. Sun and Cipla were higher, small up, but nothing major, but they were higher nevertheless. On the downside, IT was a clear loser. Infosys, HCL Tech were the two which kind of stood out. Power Grid, Eternal, which is Zomato, was lower. There was Hindalco and Bharti, which were the other names which were down as well. Broader space, lots of stuff which was up more than down. So again, a lot of defense here. Bharat Dynamics, Idea Forge, which two of those names which were up big with strong volumes. Tanla Solutions, Vishal Megamart. There was Care Ratings. Z was up as well. TD Power, Afcons, Suvain. Birla Corp was up about 5.5% by close. Schaeffler India, 6%. Edelweiss, 7%. Nippon India was up about 6%. I could go on. A fairly robust list of volume-led gainers coming in. On the downside, Swiggy, K Fintech, TCS, and SRF, PG Electroplast. These are, some of them are simply reversals of the very large gains that each of these individual stocks saw as part of what we had yesterday. So a pullback, absolutely. A meaningful one at that, perhaps, yes. But the environment, the mood generally with regards to global trade after the US-China deal remains much more constructive. Back to you.
Prashant, many thanks for joining us. That was the market action, but let's talk about the big macro data point out today. The retail inflation number for the month of April out. dropping to 3.16% in the month of April. That's the lowest since July of 2019. The fall in inflation was driven primarily by the fall in food and oil prices. So that's good news coming in on India's inflation front. We are continuing to see that drop as far as vegetable prices are concerned, and all of that boding well. We'll of course get you more details. The big earnings of the day, Hero Moto met expectations in Q4. Price hikes boosted margins and realizations. Revenue surpassed expectations, growing 4% compared to the last year, and net profit and EBITDA margins were in line with estimates. The company said it remains cautiously optimistic about its near to mid-term outlook. And more earnings. Pharma major Cipla's numbers largely in line with street estimates. Net profit ahead of estimates. Margins missed the mark. Net profit up more than 30%, while revenue rose 9.2% on an annual basis. The company's announced a total dividend of 16 rupees for shareholders. Shares of Paytm down 5% after 4.1% of its equity changed hands in a large block deal, something that we had reported here on CNBC-TV18. While details of the seller have not been disclosed, sources have told us that Chinese fintech giant Antfin is the likely seller. The firm has offloaded its stake for over 2,000 crore rupees. The floor price for the deal was reportedly set at around 810 rupees a share. And shares of K-Fintech slumping in trade after Singapore-based promoter General Atlantic Fund sold around 10% stake for nearly 1,800 crore rupees. Shares changed hands in multiple block deals at an average price of 1,045 rupees a share. The floor price was at a discount of 8.3% to Monday's closing. With this, General Atlantic stake in K-Fintech comes down to 22%. President Trump has signed an executive order that directs pharma companies to lower drug prices to align them with those paid in other developed countries. The order has given drug makers price targets in the next 30 days. President Trump has said that further action will be taken to lower prices if firms don't make significant progress towards those goals. The U.S. leader said that the order will apply to medicines procured via both commercial and the public healthcare system. However, he hasn't disclosed which medications are covered by the order. Speaking to journalists, Trump said that he was seeking cuts of between 59% and 90%.
We'll no longer tolerate profiteering and price gouging from Big Pharma, but again, it was really the countries that forced Big Pharma to do things that, frankly, I'm not sure they really felt comfortable doing, but they've gotten away with it, these countries. European Union has been brutal. Some prescription drug and pharmaceutical prices will be reduced almost immediately by 50 to 80 to 90%. Big Pharma will either abide by this principle voluntarily or will use the power of the federal government to ensure that we are paying the same price as other countries.
It is really the Big Pharma products, because if you know how the market is split, 80% of prescription drugs by volume only account for 20% of the value. And it's 20% of prescription drugs by volume account for 80% of value. And that's the 80% he wants to shrink.
The way I would put it is the final executive order, which we saw yesterday evening from the US president, it's a much diluted version of what he had put out in September 2020, which, as Mr. Vaidi said, eventually faced legal challenges and was withdrawn by the Biden administration. But yesterday's version was much more diluted in a way that the focus is on patients who directly want to buy drugs from manufacturers. They will get the drugs at the most favored nation pricing.
And President Trump has commenced his first trip to the Middle East. His three-day tour will also include a visit to Qatar and the United Arab Emirates. This is his first official state visit of his second presidency. Saudi Crown Prince Mohammed bin Salman greeted Trump upon arrival in Riyadh. He was also accompanied by Tesla CEO Elon Musk, Nvidia CEO Jensen Huang, and OpenAI CEO Sam Altman. Trump will be expected to focus on securing major financial investments for the U.S. and having diplomatic talks on issues including a Gaza ceasefire. President Trump is hoping to secure a $1 trillion investment from Saudi Arabia, further boosting the Crown Prince's earlier investment pledge of $600 billion in the U.S. And India has warned the World Trade Organization that it is considering imposing retaliatory tariffs on certain steel and aluminum products imported from the U.S. India said that the move aims to counter the Trump administration's imposition of 25% levies on Indian imports. Manisha is standing by with more. Manisha, what does this mean now, the threat of India imposing retaliatory tariffs on U.S. steel and aluminum?
Well, yes, India has approached the World Trade Organization, and this is proposing to impose retaliatory tariffs on the tariffs from US on steel and aluminum. Well, this is expected to impact products worth $7.6 billion and a duty collection estimated at $1.91 billion as well. India has said, and it has said that it's keeping the options open when it comes to reviewing the list of products as well as adjusting rates as well. India also maintains that the measures taken by the US are not consistent with GATT. Also, India argues that the tariffs that have been put on India steel and aluminum do not augur well and actually impact the industry in Indian markets itself. So when it comes to steel, well, India's steel industry has less dependent on the US markets there. When you look at the numbers 2023-24, US imported 0.1 million tons of steel from India, and this is out of nearly 145 million tons of steel that India produces. So that impact is not expected to be so much. But aluminum really is the major point here. US is the largest importer of aluminum in the world. US is the second largest international market for the Indian aluminum products, and India is also the second largest producer of aluminum in the international markets. So there are various important metrics coming in here. Now, when you look at the numbers as well, Indian export of aluminum products to US in 16-17 were at $350 million, which has increased to nearly $946 million US in the year 2023-24. In some years in between, we've seen $1 billion also being crossing in sense of numbers there. So this is where the pain point really is. And it's not just India. Canada and European Union also have complained to the WTO when it comes to tariffs on US steel and aluminum there. Now, this comes in at an interesting point because US and India are negotiating bilateral trade. There also are reports on how the Indian team is going to US in the coming week to talk further about this. So this happening at this point in time, clearly, as I said, comes at a very, very interesting time.
Manisha, many thanks. In international news, Israeli forces have bombed the Nasir medical complex in Gaza's Khan Yunis, killing 2 people. Several people have also been wounded, including patients and medical staff. Meanwhile, Hamas has freed an Israeli-American soldier, Edan Alexander, after a deal was brokered by the Trump administration. Ukraine has said that Russia has ignored calls for a 30-day ceasefire made over the weekend by the US and Europe. The pause in military action was due to begin yesterday. Ukrainian President Zelensky said that the Russian shelling and assaults continue. He added that Moscow has also remained silent about the proposal for a direct meeting between the two leaders in Istanbul. Ukraine's military has said that there had been 133 clashes with Russian forces along the front lines until last night. China will commit credit lines of under $10 billion to South American countries. The credit line will be denominated in the yuan. The country's President Xi Jinping made the announcement while addressing a summit of Latin American and Caribbean officials in Beijing. Xi also said that China will implement a visa-free policy for 5 Latin American and Caribbean countries. We will head into a break, but up next, Justice Sanjeev Khanna retires as the 51st Chief Justice of the Supreme Court after a brief tenure of just over 6 months. Justice Gavai to assume the office tomorrow. That and more when we return. The Supreme Court bid farewell to Chief Justice of India Sanjeev Khanna, who passes on the baton to Justice B.R. Gavai. Addressing a ceremonial bench on the day of his retirement, Chief Justice Khanna said, and I quote, "The public trust that the judiciary has cannot be commanded and has to be earned," end of quote. Ashmit joins us now to sum up the 6-month tenure, which, though brief, wasn't without tension. Ashmit.
Well, I met the CJI Justice Khanna over a cup of tea just a few days before his retirement. And as a curious journalist, I inquired about the investigation into cash at Justice Yashwant Verma's residence. His reply was curt but pointed. He said, "If there's any news coming from the Supreme Court, you can rest assured it's not from me." Words that symbolize his 6-month tenure at the helm of the Indian judiciary. Justice Sanjeev Khanna retires as India's 51st Chief Justice, having taken over the reins in November of 2024. He's had a brief tenure of just a little over 6 months. As he walks out of courtroom number 1 in Supreme Court, taking his seat as India's 52nd Chief Justice will be Justice Bhushan Ramakrishna Gavai. Now, for someone who followed the media blitz of former CJI Justice Chandrachud, Justice Khanna's tenure was unusually quiet. But quiet did not mean without tension. The biggest issue during his tenure was a situation almost out of a 90s Bollywood production. On the night of March 14th, a fire broke out at the residence of Delhi High Court Judge Justice Yashwant Verma. On reaching the location, fire marshals discovered gunny bags full of half-burnt cash. An unprecedented crisis, social media fury, and public confidence at an all-time low in the judiciary. Now, to restore lost faith, CJI Khanna followed the mantra, "Sunlight is the best disinfectant." On March 22nd, in a first-of-its-kind move, CJI Khanna published all the details on the Supreme Court website. The website now had pictures and videos of the cash, reports by the Delhi police, as well as even reports by the Delhi High Court Chief Justice recommending a probe. Subsequently, CJI Khanna appointed a 3-judge inquiry committee, which submitted its report within 45 days on May 5th. And by May 8th, Justice Khanna had already dispatched this report and Justice Verma's response to the President and to the Prime Minister. Now, here's what's interesting. As per the Supreme Court's in-house procedure, the CJI is required to refer the matter to the President and the Prime Minister only if the inquiry committee has found substance in allegations and has recommended his removal and the judge has refused to resign. CJI Khanna may have paved the way for a rare impeachment proceeding. Moving ahead, another key feature of his tenure will be the judges disclosing their assets to the public. In a first, on the 6th of May, 21 out of 33 judges disclosed their assets and investments on the Supreme Court website. That figure has now risen to as high as 24. This was seen as another step by Justice Khanna to restore confidence after the Justice Yashwant Verma episode. What makes this unique is that similar resolutions for sharing asset details were floated in 1997 and 2009, but most judges chose to avoid any disclosure or scrutiny. On the judicial side, CJI Khanna left his mark on the Waqf case. In a power move, the centre passed the Waqf Act with much fanfare. CJI Khanna, however, stood in the way. He expressed concerns about non-Muslims in Waqf boards and Waqf Council. He also questioned the government on change of status of existing Waqf properties. Now, Justice Khanna had proposed a stay of this new act. Alarmed, the centre undertook that under this new act, no new appointments will be made and status of Waqf properties will not be changed. Justice Khanna also brought an end, at least for now, to the politics of Mandir Masjid. A spurt of cases and trial court orders directing surveys of mosques and dargahs for remnants of temples had led to religious tensions and violence. On December 12th, Justice Khanna passed orders barring any fresh suits for religious sites and stayed trial courts from passing orders directing surveys. Now, even before he became the Chief Justice of India, he had left his imprint on several key cases. Now, he's ruled that CJIs were subject to the RTI. In a landmark case, he was a part of a 5-judge bench that abrogated Article 370. Last year, he was part of another landmark 5-judge bench that struck down electoral bonds as illegal. Interestingly, he also granted bail to Arvind Kejriwal in an ED case to let him campaign during the Lok Sabha elections of 2024. Now, Justice Khanna has tried to play it by the book as a judge and as an administrator. But with cases like challenges to the UAPA, the PMLA and the CAA still pending, some are asking if, despite his brief stint, he could have done more.
Ashwat, many thanks for joining us. Change of guard there at the Supreme Court. Now, at least 15 people have died and several others remain hospitalized in Amritsar district after consuming illicit liquor. The victims belong to 5 villages, including Bhangli, Patalpuri and Theraval, and are believed to have purchased liquor from the same supplier. Authorities fear the number could go up, as signs of toxic alcohol can take 48 hours to manifest. The Mahila court in Tamil Nadu's Coimbatore has convicted 9 men 6 years after they were accused of sexually assaulting at least 8 women and blackmailing them. The judge ordered life sentences for all 9 convicts found to be guilty of gang rape. The accused have been in the Salem Central Prison since 2019. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute with more. Hello and welcome to Business 360. I'm Shireen Bhan. The top stories that we're tracking for you this evening. The situation remains relatively calm along the Indo-Pak border, but Indian forces on high alert. Prime Minister Modi meets Air Force personnel at Punjab's Adampur Air Base. Army sources say 3 Lashkar-e-Toiba terrorists were killed in an operation in Jammu and Kashmir's Shopia. Defence Minister Rajnath Singh reviews the security situation at the border. Sources tell us the DGMOs of both countries agree not to initiate any aggressive action against each other and also commit to a reduction of troops along the border and forward areas. Indian equities take a breather after Monday's breathtaking rally. The Sensex and the Nifty dimp around 1.5% each, but the Midcap index continues to trade in the green. The rupee strengthens against the dollar but is off early highs on dollar buying by importers. Cipla meets the street estimate in Q4, net profit up by 30% on a year-on-year basis. FY25 margins come in higher than the company guidance. Cipla announces a total dividend of 16 rupees for shareholders. India warns the World Trade Organization it's considering imposing retaliatory tariffs on certain steel and aluminum products imported from the US, says the move is aimed at countering the Trump administration's imposition of 25% levies on Indian imports, adding that America's measures would hurt $7.6 billion worth of India-made products imported into the US. Trump signs an executive order that cuts prices of some medicines in the US to align them with those paid in other developed countries. Trump says the order will apply to medicines procured via both the commercial and the public healthcare system, but does not disclose the exact medications that the order will apply to. President Trump lands in Saudi Arabia on the first leg of a three-day tour to the Middle East, holds talks with Crown Prince Mohammed bin Salman, covering a range of issues including investments, defense, regional security and Riyadh's civil nuclear program. Trump will head to Qatar and the UAE next. Justice Sanjeev Khanna retires as the 51st Chief Justice of the Supreme Court after a brief tenure of just over 6 months. Justice B.R. Gavai to assume the office of CJI tomorrow. Well, we bring you the special State of the Economy show. Retail inflation numbers coming in for the month of April, dropping to 3.16%. That's the lowest print that we've seen since July of 2019. And the fall in inflation driven primarily by a fall in food and oil prices. Lata is standing by now to take us through the inflation internals. Lata, good news there on the inflation front.
Well, the inflation number clearly, even for the month of April, coming in below street expectations. The average expectation was about 3.2. A goodish number of our respondents indicated 3.3 as well. But there were a few people with a sub-3 number. So the average was working out to 3.2. At 3.16, it is a tad below expectation. And it is the lowest reading since July 2019. So that makes it important. The fall in inflation is also important because it doesn't come off any high base. The year ago inflation for April of 2024 was 4.83. Now, that's not really a very high inflation number. To get to 3.16 over that number is important. It is clearly indicating a fall in prices. You can see it very clearly in cereal prices. For instance, vegetable prices normally start inching up in April. They have not done so. And of course, the number is 3.16 despite an increase in milk prices announced by Amul or Mother Dairy. Despite that, we've seen a 0.4% rise in month-on-month milk prices. We also saw LPG prices. I mean, that was much publicized. LPG prices rose. In spite of both these increases, we are seeing a 3.16 reading. So that clearly means inflation is running below the Reserve Bank's trajectory. Let's get our experts to weigh in on this. We are joined by Aditi Nair, the chief economist at ICRA, Sakshi Gupta, the principal economist at HDFC Bank, Anubhuti Sahai, the India head of economic research at Standard Chartered Bank, and Devang Shah, the head of fixed income at Axis Mutual Fund. Ladies and Devang, thank you very much indeed for your time. Let me start with you, Sakshi. What have you made of the numbers at 3.16 below your expectation?
So Lata, we were at 3.11, so it is close to our expectation. I think I think the street was expecting a low inflation print this month. I think what is encouraging in this print is the fact that on the food inflation side, if we move beyond, vegetables, which tend to be very, very volatile, of course, they've also kind of gone down month on month in April. But I think what is encouraging is the continuous decline in cereals and pulses inflation, right, which has been going on for some month, and that kind of continued. I think this bodes very well for the future, prints on inflation, and we are tracking inflation to be between this 3.2%, in the next two prints as well.
Okay, you would express the next print to be 3.2, you're saying?
Between 3 to 3.2%, I think the next two prints on inflation that we would get, we are anticipating that it's going to be close to, this range.
Okay. Aditi, what are your readings? The important number next month as well, or rather this month, May, the base remains the same, 4.8 for May of 2024. So it's the same base you're getting for April and May, around 4.8. But in June, it goes up a little over 5, the base. So I did get a few people telling me that for the month of June, they would get an inflation number which is closer to 2 point something. There are some people who are even guessing it's much closer to 3. What is your trajectory from now on?
Thanks, Lata. So our trajectory is a little bit different. What I fear is that while the first half of May we've seen very benign vegetable prices, temperatures certainly in the north have gone up very sharply in the last couple of days. So that seasonal uptrend in vegetable prices may still be ahead of us, and the intensity of that is something that we need to watch out for over the next couple of weeks. That is something that could lead to the May number being a little bit higher than the April number. But I do think that we're going to get a dip again in the June print. So the June print would be closer to the 3 to 3.2 that Sakshi just spoke about. But I do expect the May number to pick up a little bit, which is going to be a transient reading. On the whole, we are looking at about a 3.5% CPI inflation average for this year, and for the prints for Q2 and Q3 to be significantly lower than what the MPC had last indicated.
Okay. Anubhuti Sahai, I think the RBI number for April, May, June is 3.6. Is your expectation that the April, May, June actual number will be way below that 3.6 that Reserve Bank forecast?
The probability is definitely high, Lata, that we might see an undershoot in MPC's forecast of 3.6% for Q1 of fiscal year 26. That undershoot can be anywhere between, like 20 to 30 basis points. We will have to see. I think the food inflation trajectory is very benign. While there is a wide acknowledgement that probably the fall in food prices on a month-on-month basis is now behind us, the fall has been significant, and that will keep food prices very well contained. On top of it, the global commodity price environment is also likely to keep core inflation, excluding gold, pretty much under check. So I would, I would say that there is a high probability that we might see an undershoot vis-a-vis what MPC has forecasted for first quarter of fiscal year 26.
Okay, that will have very important implications for what the Reserve Bank might announce. Incidentally, we have to take on board the fact that this is the last inflation number that the Reserve Bank gets before it goes into the policy in the first week of June. And if, like all of you, the Reserve Bank goes with the view that April and May is going to undershoot its own forecast, then that will have important implications for its policy. But before I come to Devang on policy implications, let me just go through the internals. Cereals is up 5.3% year on year, but importantly, cereal prices are lower in April compared to March. Pulses prices are also lower compared to March, which is the usual form. But what is surprising is vegetable prices are lower compared to March. Usually you start seeing a little bit of inching up in April. So that is the positive surprise. And of course, on year-on-year levels, vegetables are down 10.9%. So that clearly is the surprise element. Among the negative surprise elements, of course, have been fruit, which is up 13.8%, and oils and fats, which have been a bugbear for some time now. They are still factoring in the rise in import duties, and that continues to remain high, 17.4% higher. We must look at the core inflation numbers as well. The miscellaneous numbers, which reflect services, is up 5%, And there it is the gold prices. I mean, core inflation itself has come in at 4.2. But over there, gold prices push up that element. And X of gold, perhaps it will be more like 3.5%. Sakshi, any more thoughts on that core inflation numbers?
Well, Lata, I think, a couple of months back when we were talking about core, we knew that, we had kind of hit the, bottom for core inflation. And because of the unfavorable base effect, of course, we will start seeing core inflation inch up. And as you rightly mentioned, I think gold prices continues, kind of to be the primary driver on the core inflation front beyond the base effect. I think if you look at all the other categories within core inflation, they've remained pretty much flat, and we haven't really seen a major increase within the core basket. I think going forward as well, our expectation is that core inflation kind of averages for FY26, somewhere between 4.5%. This is, of course, assuming that you do not see a significant increase in risk sentiments that leads to a further increase in gold prices. But our base case right now is that core inflation fairly remains manageable between this 4.5% range for the year.
Okay. Anubhuti, would you want to look at any of the internals of the food items? Are there any surprises which gives you a sense that inflation will be lower than expected for the year?
I think, the point which Sakshi mentioned about cereal, I think that is the biggest surprise for us. We got a downside surprise when it came to food CPI, and that primarily is from cereals. If you look at the cereals index on a month-on-month basis, I'm not talking about YOY, usually there are the episodes where cereal index falls on a month-on-month basis are rare. And this time, the fall is massive, minus 0.6%. We were expecting a minus 0.1%. So I think this is a very, very positive development because cereals has been a pain point for quite some time. I think the fall in pulses has been pretty much there. So I won't take it as a new piece of news. The same is also true for spices. So I think the cereal is the most important bit, which we'll keep an eye on going forward.
Okay. Aditi, what's any further observations on the food inflation? I mean, 1.78, I can't remember when we last had that number. I'll have to look up all the past data. But, I mean, the overall inflation itself is at a 6-year low. What's your sense for the full year inflation number? Will it undershoot the Reserve Bank's 4%?
I think it definitely will. Of course, there are many sources of uncertainty. One is how the inflation turns out. When does it start? How is the distribution, both in terms of time and geography? And then, of course, all of the external risks that we're facing with both tariff and geopolitical. So all of this can have an impact on how the CPI inflation trajectory pans out. However, we are now looking at an average of 3.5% for the full year. So significantly below the MPC's medium-term target of 4%. And that is clearly opening up space for more rate easing going ahead.
Oh, it does. It does open up a lot of place if it is indeed 3.5. But before I come to Devang on that, Anubhuti, what's your full year number?
So we are, closer to 4%, but with a continuous downtrend in food CPI and the global commodity space dynamics, we do see downside risk to it.
Downside risk to your 4% number. Sakshi, where are you at?
So we are expecting 3.7 with the further downside, risk for our forecast. So I think if this trend on inflation of being, close to 3.2 kind of continues for the next 2 months, then I would kind of pivot closer to Aditi's forecast, which is 3.5. But right now we are at 3.7.
Okay, in that case now, Devang, what is the expectation from the Reserve Bank? Will it be just another 0.25%, or are you expecting more dovishness?
So our perspective is that obviously I think 25 basis is surely given in this policy. I think for looking at the CPI number, and as the entire panel is talking about that, the expectation on CPI for the next couple of months continues to be on the lower side, I think 25 basis is given. Probably he'll continue with his liquidity measures, and I think he has already done a lot of liquidity measures. So local macro factors are all very, very positive for bond yields. And I think the important factor which markets will also be looking at is, I think, two things. One, what's the GDP print which gets released on the month end for the last quarter, because that will probably give more assessment on how the growth trajectory is panning out. I think inflation, even RBI is comfortable for the year, and that is why they were quite dovish. But looking at the important factor would be growth. And the second variable, which is probably keeping markets a bit concerned, is what's happening on the global front on the yields. Because US Treasury yields are continuing to remain on the higher side despite all this tariff uncertainty getting reduced. I think we have not seen too much of yields on the global front to lower. So our perspective is, I think these are the couple of things which market will look at. But looking at the CPI trajectory, 25 basis is for sure given. We believe that the terminal rate will be closer to, or in this cycle, the terminal rate will be closer to 5.5 on the repo.
5.5. That was the consensus the market was going with. But now that the annual inflation, FY26 inflation, is seen undershooting the Reserve Bank's 4%, now it looks like a given that it has to be, Anubhuti is giving a downside, but she herself says it could go all the way down to 3.5. Even if you take it as 3.7 and you add the 1.5%, real rate, which neutral rate, which Reserve Bank wants to add, then, we are looking at 5.25. So that question to you, Aditi, do you expect that the Reserve Bank can go to 5.25 in this cycle?
Yeah, Lata, I think so. So basically, we are looking at 25 basis points as a given in the upcoming policy, just as Devang said. In case we are seeing a GDP print for Q4 where there is no acceleration from the Q3 print, which was 6.2%, then we can't rule out a front-loaded 50 basis points rate cut in the upcoming policy. Otherwise, our baseline right now is 25, 25, 25 in the next three policies.
Okay, so 75 basis. I think today the Goldman Sachs expectation also was 75 basis more. What about your guess, Anubhuti? How many more rate cuts?
Lata, we are sticking with our rate cut call of another 50 basis points. I mean, I cannot deny the possibility of more rate cuts from 5.5%. Having said that, I think there are a couple of factors which we need to keep in mind. One, just a couple of months of negative surprise on vegetables. 2 months of bad increases in vegetable prices can very quickly take us back to 4% average of CPI inflation, and a couple of months of negative surprises on vegetable has become more of a norm than a rare thing. So I think that is something which we all have to keep in mind. The second part is on the global backdrop. The global backdrop is not as bad as it used to be before or till Friday. And given that global rates are higher, I think while the local dynamics will play a role, RBI will also be cognizant of what's happening globally. I think a lot of support for growth is already is been pushed via ample liquidity, and I think that will remain the main channel. At this point, we are still holding on to our view of 5.5%, and unless growth continues to decelerate, then it's a different scenario that we might see more rate cuts coming forth.
What is your Q4 GDP?
Lata, so we are looking at an average of around, I think, 6.5%.
Okay, fine. I'll leave you to it. I guess you have to still finalize your numbers. What's your number, Sakshi, in terms of GDP, and what is your end repo rate expectation at the end of this cycle?
So, Lata, on GDP for Q4, we are estimating 6.8. And that brings the full year FY25 number closer to 6.3. For FY26, again, for growth, we are currently at 6.3% overall for the year. In terms of what this means for RBI policy, our base call is for the repo rate to go down to 5.5%, with a rate cut in the June policy of 25 basis points and then another rate cut in August. Beyond that, I do believe there is space for the repo rate to go down further. But I think that would be a function of what sort of, not so much what happens to inflation, but in my opinion, what happens to domestic growth? And if there are signals that in the first, quarter or first 3 or 4 months of FY26, growth has meaningfully, kind of moderated, then I think it opens up room for another rate cut and a move to 5.25. But right now we are at 5.5 as a base call.
5.5 as a base call. So, Devang, do you expect that the market will react even more for the inflation numbers? Do you think anybody will pencil in a double cut in June at all?
So my understanding is that markets have already done that. So as you have seen that last 1 month, yields have rallied by more than 15-20 basis. Like last time when we spoke on the CPI print, yields were at 640-ish. Today they are at 6. The new 10-year is at 627.28. So yields have rallied quite a lot. In the last 2 months or so, yields are 30-35 basis lower. Our perspective is that local factors, as everyone highlighted, I think lower CPI, OMOs, ample liquidity, plus this entire dividend which gets announced this month. All of these factors will be very, very positive for bond markets. So yes, rally can continue. But as I highlighted, I think because global yields and if there is a delay in the Fed rate cut cycle, I think markets will start pricing in probably that RBI response can be also be slow and gradual and would be dependent on the outlook on growth. So because RBI has been so forward-looking, I think yes, 25 basis is given. I would still stick my neck to 25 and not go for a 50 basis. Markets on the swap curve are already pricing in 50 basis of cut. So over the next 2 cycles. So I think probably 25 in the June policy is what is our base call.
Okay. You're saying the markets are pricing in a 50 bips cut over 2 policies. Yes. They're not penciling in a 50 bips in June itself.
No.
Okay. Anyone here expecting a 50 bips from RBI in June? Aditi?
Lata, only if we get a negative surprise on the GDP print for Q4.
Yep. Okay, but if the GDP number, as Sakshi says, comes in at 6.8, which is cannot be ruled out, considering that there is a positive base impact as well. So chances of a slightly better GDP number coming in remain strong, and therefore the Reserve Bank perhaps will not move. And in any case, it's not as if growth is limping so much that a double cut is needed. As Devang points out, one has to keep perhaps a bit of an eye out for the global factors as well. At the moment, the dollar flows are not impeded at all, and interest rate differential will have to be looked at differently because the inflation differential is looking very different. I can't remember when for the last time the inflation difference between India and the world was as narrow as it is today. Probably you have to go back to the COVID times or even earlier. It's such a narrow inflation differential that perhaps the Reserve Bank will take the courage to allow for deeper rate cuts. But just a final point, Sakshi, to you. Do you think that the Reserve Bank should also worry that this year we have a very positive, base effect and a whole host of food inflation positives, but we may not be able to repeat a sub 4% number next year as well for inflation, and therefore going all the way to 5.25 would be a little adventurous, would you say?
Yeah, no, Lata, I absolutely agree with you. Not just for next year, but if you look at most forecasts, even for Q4 of FY26, because of base effects, inflation is going to move above 4%, right? So that is why, that is one of the factors, why we think that if growth is broadly, between 6.5 on average, right, over the coming quarters, I don't see the need for the RBI to, as you said, be adventurous and kind of deliver, excessive rate cuts. Because if you look at projections for FY27, we are tracking inflation to be, just based on base effects and making some assumptions on monsoon, inflation could be closer to, 4.7, 4.8. But that is for FY27. So I completely agree with you that I think that at this stage, it seems that the RBI would perhaps be a little bit more cautious in where it's taking repo rate and where that terminal rate is, keeping in mind forward-looking, inflation, not just for the next 3 or 4 months, but, 3 or 4 quarters and beyond.
Okay. Well, thank you very much, Aditi, Sakshi, Anubhuti and Devang for parsing the numbers for us. The key takeaway from the inflation number is that it is below the market estimate by a smidge. The market estimate was 3.2. So it's a little below market estimate. It is way below the Reserve Bank estimate. The Reserve Bank estimate for the 3 months, April, May, June, is 3.6. Chances are that this 3.16 gets repeated for May as well. If you look at the first 15 days data, which most people are going by, then we should have a 3.2 perhaps reading. And therefore, for April, May, June, the Reserve Bank's reading 3.6 is at least 30-40 basis points higher than what the reality will be. And therefore, the June rate cut itself is a given. What are the chances that the rate cut goes, the end rate cut is taking the repo rate below 5.5? That is where the debate comes. If the Reserve Bank indeed took it to 5/4, then you have a possibility that by the time you come to the 4th quarter of this FY, already the real rate will start looking much lower. So perhaps the Reserve Bank will stop at 5.5. That is the debate. The debate is not there for a rate cut. There is no debate as to the trajectory of the inflation. It is going to remain below 4%. If anything, the Reserve Bank will have to revise lower its full year forecast from 4% to perhaps 3.8 or thereabouts. Therefore, we are going to see a 5-quarter come in very soon. Maybe the Reserve Bank will not take it to 5/4 just yet, considering the fact that we could be seeing 4% plus inflation in calendar 2026. But that's a long way off. For the moment, it's good news from the inflation front. On that note, we wrap up on this edition of State of the Economy. Thanks so much for watching. More news and headlines lined up for you after the break.
The situation along the Indo-Pakistan border continues to remain relatively calm. However, Indian forces remain on high alert. Prime Minister Modi visited Punjab's Adhampur Air Base and interacted with Air Force personnel, calling their contributions unimaginable, exemplary and outstanding. Remember, Adhampur was one of the military sites that Pakistan attempted to attack last week. In his first address to the nation since Operation Sindoor, Prime Minister Modi said that India will not tolerate any form of nuclear threat from Pakistan and called for the use of made-in-India defense equipment. He added that the halting of hostilities between India and Pakistan does not mean that Operation Sindoor is over or that India is backing down. He reiterated that this is only a pause. He said that India's display of overwhelming force over the last few days was a warning to Pakistan and every other nation. He ended by saying that India will no longer tolerate terrorism in any form. But what could be the lessons from Operation Sindoor? Joining us to talk about this is India's former Home Secretary, G.K. Pillai. Mr. Pillai, thank you very much for joining us. I'd like you to first weigh in on the U.S. role in this crisis. How do you think the U.S. got involved, and what really made Donald Trump go to the extent of saying that they brought India and Pakistan to stop hostilities and stop fighting?
I think to an extent, we still do not have full information. But what I can make out from what has been said and what the Americans have said and what other news has come out, I think the attacks by the Indian forces on the Pak military establishment on the night of 9th-10th was serious enough where the Pakistanis, I think, felt a little threatened of their nuclear weapons cache. And I think they then took up the matter with the United States to say that Pakistan is being put into a position where we might have to react with nuclear weapons. And I think that was the time when I think all the top American officials moved in to intervene.
That is an important point, sir. What do you think is the big lesson from Operation Sindoor? We've emerged victorious in terms of hitting at the terror camps in Pakistan, the command control centers of the Lashkar-e-Toiba, Jaish-e-Mohammed. We were able to hit Pakistani air bases. But if there were certain lessons over the last 1 week, according to you, which would be perhaps the most important?
I think our initial plan that we would hit only terrorist bases, that was, I think, completely successful. I think casualties, we don't know the actual numbers, but at least we know that a few senior leaders of the terrorist groups were killed. The funeral proceedings, which were in fact orchestrated by the terrorist groups and had presence of senior army officers, is a clear indication that we have managed to kill a few senior persons. Some are still there, and I think a message has gone to them very clearly that they are not immune by being close to any army establishment or within Pakistan, even in the Punjab province.
Do you also believe, sir, it will be very important for India to also see how the propaganda war goes on in future? We were very good in terms of fact-checking all the propaganda coming from Pakistan. But do you think this also highlights an aspect of warfare that we must continue to win, the PR war, the propaganda war, not just between India and Pakistan, but globally as well?
Yeah, I think it is important. I think two important lessons which we have learned. One is our own TV channels, who I think completely deviated from the government position, if I might say, the official position by the Foreign Secretary and the armed forces, that we were striking at terrorist camps and we would retaliate only against Pak military bases. I think the media went totally berserk, talking of attacks on Karachi and Islamabad and Indian forces crossing the border and so on, giving an impression as though this was an Indian aggression against Pakistan. I think the media went totally overboard and we lost the plot a little bit there. The second I think is important is that now that you have a new administration and a new president of the United States, who, shall I say, says what he says off the cuff and what somebody tells him orally. We can see very clearly, somebody who talks of a 1,000-year war between India and Pakistan, when Pakistan has been in existence only for 75 years, obviously means that he has not been briefed. And therefore, I think it is important for us to be able to diplomatically convey India's position far more seriously to the Secretary of State, to the Assistant Secretary of State and others, so that when they brief and they talk to the Prime Minister, to the President of the United States, he has a much better nuance of the situation rather than, just talking about India, Kashmir, and mediation, and without realizing what the issue is of mediation. I think that the Prime Minister did bring out that the mediation is really only in terms of giving up terror and the Pakistan-occupied Kashmir. So that was clarified, but I still think the President of the United States still needs to be briefed by his staff so that he doesn't make the mistakes that he really made in those statements.
Right. Do you also believe, sir, that it's now time for India to realize not to put all eggs in one basket? And I'm talking about the India-US relationship. We've invested a lot. We've given them a lot of concessions since Donald Trump has come to power in terms of trade and non-tariff barriers. Do you think it's time to review our US policy as well?
I think we've had a balanced policy. I think our foreign policy has been extremely consistent, if I might say, right from Jawaharlal Nehru's time. Even now we have seen we have ties with the United States, we have ties with Russia, we have ties with Ukraine, we have ties with China, and we are, I think, ties with Europe. So I think the foreign policy of India has been consistent and has looked after India's national interests. So I don't think we've really gone wrong on that. We've now diversified a bit with a greater reliance on Israel and a greater reliance on the United States. But that is only part of the rebalancing exercise that we need to do. We were at one time too completely over-dependent on Russian arms.
Right. I'd like to ask you, sir, about the high-tech warfare that we saw over the last 7 days or so. And Prime Minister also referred to this, how we were able to dominate Pakistani forces in this new age technological warfare. Now, as we develop our ground capabilities, our air force capabilities and naval capabilities, what would be the lesson in terms of our military preparedness, in terms of ramping up our defense budget, and how we utilize it in the most optimum and efficient manner? Because we've seen one Indo-Pak conflict last week. There could be more in future. How do we now prepare ourselves for these short but high-tech warfare and high-tech conflicts?
I think we have learned, if you see the Russian-Ukraine war, where the use of drones has been extensively used. I think our forces have learned. I think the Indian Air Force, to which I have a great sentimental attachment to, I think they've learned their lessons. They've trained, they've acquired the sophisticated weapons, including drones. Our air defense system has, I think, worked out to be very good. It's managed to prevent most of the missile attacks on the military bases within India. And I think that's a success. But we have to now keep on upgrading the technology because every country learns from its last war. It's not, you can't even call it a war, but a small skirmish, if you want to put it 3 to 4 days. And they will come up with new weapons and new tactics. So we have to be completely prepared, including on cybersecurity and the fact that people will try to infiltrate your systems and try and bring them down without even firing a shot.
Right. My final question, sir, would be India is still hunting for those who were involved, those 3 or 4 terrorists who were involved in the Pahalgam attack. Yes, we've eliminated their masterminds, their command and control centers in Pakistan. Having said that, what do you think is the big internal security challenge from Pakistan, from General Munir, that India will have to be careful for and prepared for in the next few months and years?
I think the one very positive development we have seen has been the attitude of the people of Kashmir. I think we need to reach out more to the people of Kashmir, bring them more, as I say, into our fold. They are already willing to come and be mainstreamed in one sense, if you want to call it that way. And they realize what Pakistan can do. And I think it is important for us to reach out more to the people of Kashmir. I think our counterintelligence grid, counter-terrorist grid in J&K obviously failed. The fact that we allowed people to be able to come in and keep shooting people over a period of 10, 20, 30 minutes and then escape without being intercepted is a definite failure. And I think the security forces will have to learn from that and make sure that this sort of thing doesn't happen in the future. We've seen other reports that talk of, that, somebody was looking at the Pahalgam satellite maps over the last, in February and March and April. Those are all indications which a very active research and analysis wing people in the United States should have been able to pick it up, that somebody is looking at these satellite maps and why are they looking at it, and the alert or the red alerts should have gone out.
That's an important point, sir. Thank you so much for joining us on the program, giving us your views on the lessons learned from Operation Sindoor and the Pahalgam terror attack, in which Pakistani terror camps were deeply involved with the sponsorship of the Pakistani state. Thank you, sir, for being with us. We're taking a short break, but don't go anywhere. We will be joined by Sanjay Bhattacharya, former secretary in the Ministry of External Affairs, and Anju Gupta, strategic affairs expert, on why US brokered a ceasefire between India and Pakistan. Welcome back. US President Donald Trump has claimed that he helped broker an agreement between India and Pakistan to cease hostilities. Speaking at a press conference last night, Trump claimed that his administration stopped a nuclear conflict. He added that he had threatened to stop trade with both nations unless they agreed to end hostilities. He went on to say that US is negotiating a trade deal with India at present. He also disclosed for the first time that America also planned to start negotiating on trade with Pakistan as well. Sources telling CNBC-TV18 that the Indian government has denied the US leader's claims about using trade as leverage to broker peace. Remember, President Trump announced that India and Pakistan had arrived at an agreement before the leaders of either nation. So was Trump involved in brokering a peace deal? Sanjay Bhattacharya, former External Affairs Secretary, former Indian envoy to Turkey. Also joining me is strategic affairs expert Anju Gupta. She's also the former Director General of Police and a well-known expert on India-Pakistan affairs. Anju Gupta, let me begin by asking you, what made Donald Trump claim that he was the one who brokered peace, who stopped this nuclear conflict, and the condition that he put for both nations, that's what he claimed, is that if you want to do trade with Pakistan, if you want to do trade with the United States and have trade deals with the US, you need to stop fighting. There is a lot of bewilderment as to how he equated both countries together. What would be your reading of the situation about the manner in which the US acted and the kind of claims they made and why?
Good evening, Parikshit. Thanks for having me on the show. Very interesting question. Well, he first claimed on Saturday before either side could actually say that there was a ceasefire. And very soon, Secretary of State Rubio also vetoed that. Next day, he again makes that statement and he talks about, the topic of the talks is going to be Kashmir. I think that was a maximalist position that he was taking. That is typical President Trump style. Yesterday, but whatever he said yesterday appeared very well rehearsed and it kind of conveys something. So what did he stress? He stressed on a red line, which is no ceasefire, no trade. I don't think he is saying it for what has already happened. I think he's kind of hinting at what the future going to be with regard to US's view on any more fighting if it breaks out between the two sides because of terrorism or whatever. And he hinted at nuclear weapons. So when I put all these together, there are certain things which are very clear. One, that US officials have definitely played a role. Now, exact role is not going to come out in public domain. They will be claimed, there'll be leaks, but it will not come out. But it is certain that President of the United States and Secretary of State will not make statements which do not have any substance. I think it won't be prudent to actually not look at it like that. Secondly, I think by breaking the news, they may be trying to prevent a war of words between the two sides as to who got the ceasefire done and who said first and who agreed later, which he could not. But I would believe my government, I would like to go with what Government of India has said as to why it happened, how it happened. Third, trade is his favorite weapon. Yeah, we know that. He's been talking about trade because he really believes that trade is a weapon that he can use to further diplomacy and to get his point across. He takes a maximalist position, which is not to be taken at that seriously, but it's an indication. I would say one very important point, which was raised by Mr. Pillai also, is the information warfare. I think it created a disproportionate fear about maybe our intentions also, the way our TV channels went about, announcing that Karachi has been taken over, Islamabad has been ruined and what have you. I think it created disproportionate fear. And the happenings on the ground were absolutely not in line with that. I think we haven't even reached the stage of a limited war in terms of military parlance. And everybody knew that in conventional war, Pakistan can't match India's capacity. So there would have been a time, if things had continued to escalate, where Pakistan would have to kind of find a way to either stop this or go ballistic, which is to use nuclear option. And my last point is, I'm saying something very, different. I think US is not at all sure about General Munir. I think they don't have a relationship with him, unlike previous, chiefs of army staff. They hadn't even spoken to him in the second term. So that I think all this kind of created a disproportionate fear about things getting out of hand and Pakistan, General Munir using nuclear weapon in an act of desperation. So I think that may have prompted the US side to intervene. I wouldn't say intervene, to kind of help out both sides to talk, to, stop fighting. I think that's what reflected in President Trump's statement yesterday. Yeah.
Let me also get in Ambassador Bhattacharya at this point. Ambassador Bhattacharya, can we trust the United States? We've invested a lot in the trade relationship. We want to get a trade deal done. But would it be good to add more skepticism in the trade negotiations now?
Thank you for having me on the show, Parikshit. But can I just briefly comment on the issue of mediation, if there was any? before I come to this particular aspect, because
Sure,
I have
please.
that is slightly at variance. I believe that India and Pakistan have been speaking to several countries across the world as part of the briefing exercise, as part of the gathering of support and understanding that goes on in normal parlance in the diplomatic context. But I think none of this should be seen as an urge or a request for mediation. And I would say that this is the same with the United States as well. I do also understand that Pakistan was probably in a slightly different boat. And while it appealed to the Chinese and several countries in the Islamic world, it also maintained a certain level of engagement with the United States. As to whether the Pakistanis had sought mediation, I still do not know of enough information in the open sources that would be able to confirm that. But I think if you look at the two comments that came out from President Trump and from Secretary of State Rubio, I think we see that there are certain gaps which do suggest that it wasn't one in which they were really in the central role. But why they were there, I think it is for them to respond. The second thing that I wish to mention about mediation is that I do not subscribe to the view that Pakistan has a nuclear deterrence at all, in which it has that blackmail capacity. And I think I'll go back to Prime Minister's comment on that as well. And so I don't think there was any possibility of that being held out as a blackmail, which would have compelled the Americans to intercede if they did. So given that background, I think I will now come to the trade issue that you asked about. I think the trade issue is something that, as you know, we were early birds. Prime Minister Modi was one of the first visitors to the White House after the inauguration of President Trump. And of course, as has been mentioned, President Trump does have a penchant for the trade issue and linking it with tariffs in a very simplistic manner. And I think what India did, what Prime Minister Modi had done during his visit, was to expand the basket and say, oh, let's not just talk about a tariff, because that's not the only way out. We should really look at something that we can do on the tariffs, but more importantly, we should look for a package in which we have a much larger cake. In other words, that target of $500 billion of trade that we hope to seek is something that will give more for both sides. Also, the way in which it was linked up to India's linking up with the global supply chains and the possibilities of American investments and the possibilities of Indian investments in America, which will actually change the economic paradigm in which the two countries go together. I understand the negotiations on the trade front have been going well. Our minister, Mr. Piyush Goyal, was there sometime before all this had broken out, and I think he was optimistic. There are suggestions about 0 for 0 that we might have on certain aspects, which would be something, as I say, like an early harvest. So while it will not be a full-fledged free trade arrangement, it'll be something that will actually see us through and actually reap benefits for both sides. And sometimes these early harvest kind of paradigms are way more helpful in the short term while you build up the momentum for a longer term. I think President Trump has also brought up an important point. And just to finish off, what is the non-tariff aspects? And I think on this, the discussions with the Chinese that they had a couple of days ago were very important, because I think they brought it out to the Chinese that a lot of the parameters are really non-tariff. And when that aspect comes about, I think India stands to gain a lot, because we have, for various reasons, played more by the WTO book than many others have. So I'm optimistic on the trade.
Okay, so you're saying that you're still optimistic about India getting a strong trade deal and something that will benefit Indian interests as well. Anju Gupta, to get you in, would you like to respond to Ambassador Bhattacharya? And also, how does India now win this proxy war? We've been fighting a proxy war with Pakistan for many years. How do we now win this continuing proxy war? Operation Sindoor is not over. There is a pause. But your thoughts on the proxy war?
Well, there are 4 different ways in which responses given to a terror attack or any security related issue. One is diplomatic, then security, intelligence, and kinetic. So we've more or less seen all kinds of responses being given by India to terror attacks from across the border over the last, I would say, 36 years or so, ever since they started meddling in Kashmir, to a different degree. But of course, Operation Sindoor is at a different level. There is no denying of the fact that Operation Sindoor is at a very high level of kinetic response India has, given, and it is ongoing. My assessment is that we need to give a strategic response to this threat which is coming from Pakistan. And for that, I think the first shift we need to make it to accept that Pakistan will be part of our strategic calculus, which is not to say that let Pakistan die its own death, which one could hear, a couple of years that Pakistan is on a suicidal course because of very bad security situation, very bad economy, and that we don't need to factor them in. It's very important because Pakistan is a neighbor, and neighbor cannot be wished away. So that's the first thing.
Okay.
As we include it in strategic calculus, I think we'll start thinking. Second, there is a legacy of 3 partitions between India and Pakistan: partition of British India, partition of Jammu and Kashmir, and partition of Pakistan, which is creation of Bangladesh. I think these legacies have kind of created bitterness, mistrust, etc., tit for tat. And Pakistan, we know, is being ruled by Pakistani army. They are the ones who steer their security and foreign policy. We have to factor that in. And I think we need 2 things, I would say. One point is that if we can bring in more cohesion with our relationship with other regional partners, as in Bangladesh, China, I think it'll help us deal with Pakistan better. And my very last point is that international global alliances are very useful, have proven very useful in terms of tying down Pakistan. One example is FATF, Financial Action Task Force. And President Trump, in his first term, had initiated action to put Pakistan in the grey list, and which really helped with Afghanistan and with us in Kashmir. Because Pakistan agreed to deliver Mullah Baradar for the Doha talks, and they did not sabotage the Doha talks between US and Taliban. Second, the action was taken against Mumbai culprits.
All right.
Saeed and Sajid Mir. So I would very strongly, I strongly believe that I think we need to give a very well thought out, patient, strategic response to make sure that they have to give up their proxy wars.
Okay, we've completed our time. Ambassador Bhattacharya, very quickly, could you give us your sense on the role of Turkey in this conflict? Turkish drones were used against India. Do you see some direct help from Turkey to Pakistan and our own foreign policy towards Turkey now?
So it's well known that Turkey has had very close relations with Pakistan for a number of decades. And it's not just a very recent phenomena. I think what has happened in most recent times, particularly during the second element that has come about with Erdogan, is in his ambition for being the Caliph and the Sultan both put together, in which he has sought to enlist the support of Muslims from around the world. And given that he has very little support in the Arab community, where Islam was born initially, he has sought outside in Central Asia, in South Asia, in Southeast Asia, and in Africa, and the support of and Pakistan has been a very great ally of that. The third factor that has come about is that while Turkey's economy was a marvelous economy in the past, in recent times it has been floundering. But within that particular floundering, there is an element of the military-industrial complex of Turkey, which has actually done very well. And for them, the Pakistanis provide a very useful export market. So Turkey has its own ambitions. And Pakistan is merely a pawn in that particular game.
All right. Thank you so much, Ambassador Bhattacharya and Anju Gupta, for joining us. We've completed our time. Thank you for watching. Goodbye.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, India has set a target of record food grain production of over 354 million tons in 25-26, the crop year that will begin in the month of July. This comes after IMD predicted above normal rainfall in most parts in 4 years thanks to the bumper production. The government is confident of achieving the target of 33 million tons of wheat procurement. Joining us now to discuss this is Somnath Chatterjee, CPO at ITC Food Division. Mr. Chatterjee, hi, thank you so much for joining in. It has been an interesting year and a very eventful week at that. I know trades of all sectors are finding it quite challenging to go from here. But when it comes to wheat, the government does seem quite confident, one, on the crop and second, on the procurement. What is your sense on that?
Good evening, Manisha ji. Thank you for having me. Indeed, it's been a roller coaster ride for commodities buyers like us. This year, we initially had a fright that it's going to be a early onset of summer, and the period post Diwali is always a worrisome period for the wheat crop because sudden spike in temperatures can impact the crop. But the gods were kind. We got a bumper crop, and as is evident from the government's procurement numbers, we've done 29 million, as you've just pointed out. And yes, I think 31 million is a foregone conclusion. What that means is that after a period of 2 to 3 years, we are now once again going to be quite comfortable in our wheat stock position as a country. There are no thoughts of imports at the moment with this kind of a crop. The government will have enough in its granaries to meet all obligations of PDS and other allocations. There have been some very interesting developments. The government of India, for instance, has just issued 3 to 4 months supply in PDS in view of the border tensions, so that there is no fear in the minds of the public that India is blessed with enough food grains. So that is one of the things which is happening. Also, if we were to speak about India's food security and the quantum of wheat which is available, well, we are at about 31 million. We will be higher than the number which is prescribed for the Food Security Act. Having said that, this number has been arrived at by the 2012 census, and we are overdue a census now, and one is likely to happen perhaps in the next 1 year, where the number required as safety stock is likely to go up. So I think all in all, we are in a comfortable position. The private trade has been able to procure enough wheat. So I think in terms of wheat and rice, India is in a sweet spot.
Ms. Chatterjee, while we are looking at 115 of a target from India government from this year, the next year is even stronger because the government has put those numbers out as well. So 117 million tons for next year. What does it really mean for the trade?
It's good. Consumption has been rising, and as has been evident, whenever there is like in the recent border tensions, one of the big solace for India was the fact that it has this big stock of food grains and other food articles to be able to sustain any issues which come.
Okay.
We also saw the same thing was a big strength for India during COVID, right? So the fact that we had our granaries full at that point of time really helped millions of our countrymen.
Sure.
So I think after 2 to 3 years of touch and go crop, of very inflationary wheat prices, we have finally come to a good place. And if the monsoon is kind to us, as it is likely to be, because we hear from our sources within SkyMet and IMD that this is going to this promises to be a above normal monsoon with perhaps 105, 106% catchment areas should fill up. And that should be great for not only the Kharif crop, but also for the oncoming ensuing Rabi crop.
Well, absolutely. So while the supply side situation seems quite well right now, and as you rightly pointed out, import is something that is not on anybody's mind right now. What are the numbers that you're looking at in sense of consumption? Because there's a big range that the industry really seems to be talking about. Where would you put that one? And as you said that the private trade has been able to acquire quite a bit right now. Are those pipelines quite comfortable as well?
Yes, the private trade pipelines have replenished. For instance, let me give you an example. This year, the state of Punjab, which is Punjab and Haryana, in fact, contribute always regularly and the biggest quantity into the FCI procurement campaign. This year, Punjab has actually not really stepped up to the plate in terms of FCI. So the procurement from there is a little lower because there is a lot of private buying which is happening.
Okay.
That's great for the farmers. They're getting their MSP. And all in all, a larger crop, which is more or less all selling at MSP or higher, is great for money to go into the rural economy.
Oh, absolutely.
So I feel that, the private trade is comfortable. This may not be a year of very high inflation in wheat. Maybe people will get their cost of carry. But yeah, we are quite comfortable, and that's great for business. Because very high inflation often tempers demand, and we don't want that.
Absolutely. I also want to talk about when we are talking about all things nice here, and last year it was stock limits, it was disclosures as well. Do you see all of those measures not come in this time and not hamper trade?
Yes, ma'am. We don't see, while the stock declaration part is still on, we are hoping that maybe the government, in view of the comfortable situation, will do away with that as well. But there are no limits in place, and I don't think the government would like to put any limits because the stock positions are very comfortable. This allows us to focus on our main business, right? Rather than keep filling declarations and forms. Ease of doing business will improve. So I would request the government to even do away with this weekly formality, which is there on wheat at the moment.
I also want to talk about consumption one more time, because you talked about that the consumption has been on a rise as well. When it comes to wheat and when it comes to wheat products, have you seen those numbers move? Because wheat products seems to be doing better in sense of growth.
Yes, that's right. Our number for India's wheat, it's a large country and the statistics are not very accurate. But we feel that has been, consumption has been growing at about 2.5% per annum. And if indeed the crop is, around 115 million tons this year, then yes, our buffer stocks will build up and the private pipelines will also build up.
Ms. Chatterjee, thank you so much for joining in and taking your time out for CNBC TV18. So all seems good when it comes to wheat as a place, because last 2 years were not so nice. And this year, the numbers are great. Consumption seems well. Government has enough procurement and the private trade also seems to have replenished quite a bit. Well, moving on from wheat, let's focus now to soybean. The soybean prices have surged after United States and China agreed to substantially lowering tariffs for the 90-day period. The U.S. has cut duties on Chinese goods from 145% to 30%, while China proposed cutting tariffs on U.S. goods from 125% to 10%. What does this really mean for the edible oil sector? Joining me on the show to talk about that is Sudhakar Desai. He's CEO at Imami Agrotech and President at IVPA. Mr. Desai, hi, thank you so much for joining in. First of all, your reaction on this, because China is a big buyer. And do you see price reaction, as we've seen in the international markets yesterday, ease down a bit? And what does it mean for you as a sector?
Yes. With the size of 100 million tons of crushing in China, it's basically a market mover, definitely. And this particular move, after going up to 45%, and then coming back to normalcy, would mean that a lot of grains and beans and etc., which are offload to China and facing a uncertainty of tariffs and this and that, will get somewhat resolved. I think that's the good news for the global trade in this space. And China would typically buy about 60-70 million tons from Brazil, maxed out, and from US, normally about 25-26 million tons. So I think this trade resuming is a good news. But having said that, meanwhile, the US tariff revenues has gone up from $6.6 to $7 billion to about $15 billion currently due to the increase in tariffs on many of the items. So while that may not translate immediately into inflation, these revenues in US because the crude is down. But eventually, it is creating some kind of import fund out there due to these tariffs. But within the complex of soybean, it is a good news that the trade flows will. Last time I said that trade flows are going to be tremendously changed, but I think this will put it back in the track.
The second point I want to talk to you about is the USDA report. So while Argentina and Brazil crops looks good, the overall world stocks and the US output for that matter is slightly on the weaker side. Do you see this meeting, there's a meeting point between the two, or do you find the USDA report bullish for the sector?
USDA report at the production level is like neutral because they said about 4 to 5% lower acreage, but compensated by higher yields. But that's not it. With the exports that are resuming, they've actually surprisingly put the end stocks about a whopping 15% less. That is why you see the market has turned bullish for the beans, and eventually whatever is bullish for the beans is also going to be for the soy meal also and for the sector and eventually oil also. But there is one thing that is much awaited is basically the biofuel policy. It also showed a symptom that the biofuel policy in US will be maintained in the same manner or improved. But when you look at it more closely, I think if the UCO is not coming in and there is a question mark about whether canola will go in or not into biodiesel. So after all, this is about 15 million tons of biodiesel consumption. So if it is restricted only to canola and soya and no more used cooking oil and all that, I would see this as bullish Chicago also and bullish soya oil also. This is how I see it. As far as the global production is concerned, you're right, Brazil is 169 million tons, Argentina is 49, US at about 117 million tons. Does look like about 25 million tons of more soybean crop, but in terms of oil, it's hardly about 500,000 tons, which will easily compensate the UCO. And as you know, the demand for soybean oil has been very good. So this is how I see bullish beans and rest of the things. But the question mark is on biofuel. I think soon on the 20th May, there's going to be a further meeting on the biodiesel in terms of how much of impetus it will get in the US soybean sector.
You mentioned a point about used cooking oil. What is the overall global market when it comes to that? And is India even a stronger percentage there?
No, not really. Right now, it is very negligent. In China, there used to be a...
What is the kind of demand growth also that the Indian markets are looking at when it comes to edible oil?
Yes, on the third section, which is the domestic oil and oilseeds, you have the ensuing mustard crop, okay, looking firm, because the crop size is a big mystery. I think people are talking different numbers, but the harvest pressure will come for a month or so, I think. Indian stocks are tight because of the steep inverse in the palm market. People were buying hand to mouth, and now that the palm has really adjusted itself, I think India would buy and stock up some more palm. On the soybean domestic front, government has bought about 18 million tons during a harvest, but they've been consistently releasing about 3 to 4 million tons of soybeans into the market. So I think the consumption is a little bit question mark right now. We can't really say about consumption because it is the inventories which have come down because in the palm market, the forwards were appearing very cheap. So nobody was buying a hand to mouth, but now the buying has resumed. So I would say before we conclude, whether the demand is neutral or plus or minus 2%, I think we need another 3 to 4 months. And I expect import demand to resume. You are very well aware that the palm import demand has fallen to about 400,000 tons. I think India would require about 1.2, 1.3 million tons on average in the next 3 months, broken into palm, something like 700K on average.
Okay.
That is 7 lakh tons on average. Soya about 3.8, 4 lakh tons per month in the next 3 months. And sun oil, being a premium oil, would continue at about, let's say, 2 lakh tons. So in terms of global supply, I think well consolidated, stable. Indian demand will be good in the next few months. Palm market is supported.
Okay.
Much depends on the soya in terms of how much rally can it have above palm oil. I think that depends on the biofuel policy, which is going to be clarified somewhat in the rest of the month of May.
My final question really is on the price, because for most essential commodities, I mean, that really seems to be the narrative, really, that it is not a concern or a surprise anymore. Monsoon being a positive there as well. How are you looking at the prices for many of these edible oil within the sector? And also, I know you have been pushing for a lot of government policies as well. Any conversations or updates there?
Yeah, the update is basically, as you know, the Nepal, SAFTA country, zero duty imports are scaling up to about 78 to 100K per month. We definitely, as IVPA, wanted some solutioning out there. It is there in the horizon. I think I'm pretty sure government would like to rebalance this anomaly, I would say, in terms of non-level playing field for the Indian industry, especially the ones who are located in east and northern parts. You know, it's very obvious that the Indian importer pays a 27% duty, 35% duty on refined oils, but whereas via Nepal or Bangladesh, it's going to be zero duty. So this is one aspect of it. Otherwise, the refined oil imports are continuing because of the inverted duty structure in the origin countries. So these two are our fundamental issues. Things are moving in that direction. Let's hope some solution will come out with your right questions.
Oh, well, absolutely, Mr. Desai. Thank you so much for joining in as well and throwing a light on the concerns that the edible oil industry looks at. And of course, as you said, that the imports will be higher in the month of May and June versus what we've seen in the first part of this year. Well, on that note, it's time for a break. But don't go anywhere. We will discuss the outlook on India's sugar sector on the other side.
Up.
Welcome back to Commodity Champions. And India's sugar output is expected to rise in year 25-26. That will begin in the month of October. The U.S. Department of Agriculture's Delhi office projects that the sugar production could reach 35 million tons. This would be a rise of 26% from this year. This is thanks to the southwest monsoon received in key sugar-producing states in the previous marketing year. To discuss the outlook, joining us on the show is Kapil Nima. He's Deputy Executive Director, Sugar Business at Dalmia Bharat Sugar and Industries. Thank you so much, Kapil, for joining in. First of all, this year and the next year and the kind of rise that we're looking at, how is sugar industry looking at these numbers?
Thank you, Manisha, for having me again. Well, the numbers are looking positive, as you saw what USDA has given in their projected numbers. If you look at other consultants also, who are projecting, who has already given numbers for 25-26, it is, in the range of around 35 to 36 million tons. With the kind of reservoir levels and the plantings we are seeing in Maharashtra and Karnataka, I think these are still a median range compared to, the highs we have seen in 21, 22 or 22, 23. We are actually, looks like everything going fine. 35 to 36 million tons looks to be a possible range for next year.
Kapil, the major talking point for the industry this year has been the export of sugar, and even as 10 lakh tons was allowed as the market or industry asked for it, what are the numbers that we've seen of actually exported and contracted right now?
Well, we've seen around 700,000 tons of sugar getting contracted so far. Out of 1,000,000 tons, and out of around between 450 to 470,000 tons of sugar already shipped, and another 50K is in process, in pipeline at the port, or moved from the mill and ready to be exported. A pace is a bit slow. Earlier we were expecting that by June I should fish the entire allocated quota. But looks like with the global volatility, things are going a bit slow, and we might take another 2 months to 2 to 3 months to finish the entire availability.
Kapil, the other pain point clearly has been the rise in FRP yet again for a third straight year, but no increase in sugar MSP in sight. But even apart from that, ethanol really seems to be a bit of a concern, because the rice and maize guys really seem to be getting in more leeway of ethanol than the sugar people.
Yes, and rice and maize has got a lot of attention. After apparent peaking out of the sugar distilleries, there was a major focus on rice and maize, and we are seeing the results. Eventually, as we go forward, we believe there will be a sort of a balance which will come between the sugar-based ethanol and grain-based ethanol, and will continue to cater to the demand, because if you look at it, overall the gasoline consumption is decently increasing by around 7 to 8% CAGR. So the overall ethanol demand is going to increase, and kind of GDP growth we are seeing in India, ethanol demand is going to remain better and better. So yes, with FRP increasing in grain and sugarcane both, I think government is aware of this fact that they will have to at some point of time look into the ethanol prices to ensure that the ethanol sector gets its due returns when they're buying a higher feedstock, higher priced feedstock.
Kapil, my last question is on the Sugar Control Act, and something that the industry most of the industry clearly has given a thumbs up to. It is already effective. How have you seen that impact on ground?
Well, I think we will see the impact as we go forward. There's a lot of digitization which will be required to streamline the entire process. The first step was to bring the sugar mills online. Last, if I correctly remember, on 420 mills out of the 550 mills who are crushing are already online, who are submitting their monthly returns on through a digital platform. Once this goes through, the next step will be, to get all the other ancillaries also, where the whole data can find. And I think it's going to take time, but down the years, in 2-3 years, the overall idea of government looks like to have a dashboard or a data board ready, where on a daily basis you have the live update, so that the policies can be framed on a live manner, and there should not be delays in the policies, which should impact, which actually in long term will be very beneficial.
All right, that point is well taken. So a good year and even better next year. And with the government policies, there's a lot of transparency, digitization, as Kapil seems to be telling us. Thank you so much, Kapil, for joining us here at CNBC TV18 and making sense of a lot of things that really are going on in sugar and ethanol as a sector. With that, it's a wrap on this edition of Commodity Champions. News continues on CNBC TV18.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The situation remains relatively calm along the Indo-Pak border, but Indian forces on high alert. Prime Minister Modi meets Air Force personnel at Punjab's Adhampur Air Base. Army sources say 3 Lashkar-e-Toiba terrorists were killed in an operation in J&K's Shopian. Defence Minister Rajnath Singh reviews the security situation at the border. Sources tell CNBC-TV18 that the DGMOs of both countries agree not to initiate any aggressive and inimical action against each other. Indian equities take a breather after Monday's breakthrough rally. Sensex and the Nifty dip around 1.5% each, but the Midcap index continues to trade in the green. The rupee strengthens against the dollar but is off its early highs on dollar buying by importers. Cipla meets the street in Q4, net profit up 30% on a year-on-year basis. FY25 margins come in higher than the company's guidance, announces a total dividend of 16 rupees for shareholders. India warns the World Trade Organization that it is considering imposing retaliatory tariffs on certain steel and aluminum products imported from the US, says the move is aimed at countering the Trump administration's imposition of 25% levies on Indian imports, adding that America's measures would hurt $7.6 billion worth of Indian-made products imported to the US. Donald Trump signs an executive order that cuts prices of some medicines in the US to align them to those paid in other developed countries. Trump says the order will apply to medicines procured via both commercial and public healthcare system, but does not disclose which exact medications the order will apply to. President Trump lands in Saudi Arabia in the first leg of his 3-day tour to the Middle East, holds talks with Crown Prince Mohammed bin Salman, covers a range of issues including investments, defense, regional security and Riyadh's civil nuclear program. Trump will head to Qatar and the UAE next. Justice Sanjeev Khanna retires as the 51st Chief Justice of the Supreme Court after a brief tenure of just over 6 months. Justice B.R. Gawai to assume office of CJI tomorrow. For the top story this evening, the situation along the Indo-Pak border continues to remain relatively calm. However, Indian forces remain on high alert. Prime Minister Modi visited Punjab's Adhampur Air Base, interacted with air warriors. Adhampur is India's second largest air force base, and it was one of the military sites that Pakistan attempted to attack last week. Prime Minister Modi also shared pictures of him with a MiG-29 jet and an intact Russian S-400 air defense system in the background, once again debunking Pakistan's claim that the missiles from its JF-17 fighter jet caused heavy damage to the Adhampur Air Base and destroyed the S-400. In an address to personnel at Adhampur Air Base, Prime Minister Modi said that Operation Sindoor was the new normal, called the IAF's contribution unimaginable, exemplary and outstanding.
जब हमारी बहनों, बेटियों का सिंदूर छीना गया, तो हमने आतंकियों के फन को उनके घर में घुस के कुचल दिया। भारत माता की जय! भारत माता की जय! भारत माता की जय! वो कायरों की तरह छिप कर आए थे, लेकिन भूल गए उन्होंने जिसे ललकारा है वो हिंद की सेना है।
And the Prime Minister reiterating that Operation Sindoor is the new normal for India's stance on terrorism. In his address to the nation yesterday, he added that India will not tolerate any threats of nuclear action. He said, "We will not stand for nuclear blackmail by Pakistan." Sources have told CNBC-TV18 that the DG military operations of both sides, India and Pakistan, have agreed to not initiate any aggressive action. Not a single shot should be fired, and have also committed and agreed to an immediate reduction of troops from the forward areas as well as the border areas. Parikshit is standing by with more on the Prime Minister's visit to the Adhampur Air Base, as well as the current state of play between India and Pakistan. A significant move there by the Prime Minister to visit the Adhampur Air Base in Punjab, Parikshit, and, in many ways debunking Pakistan's claim of destroying the S-400 air defense system, of destroying the Adhampur Air Base as well. The Prime Minister there speaking to the air warriors and making it clear that our position on Operation Sindoor is now the new normal.
Absolutely. Adhampur Air Base in Punjab was one of the areas which reportedly came under fire from Pakistani forces. And this was India's message to the world and also Pakistan that you could not target, you could not cause any damage to the Adampur base or our S-400 air defense systems. It was to boost the morale of our armed forces, who played a critical role over the last 1 week or so. Also to send out a very strong message from an air base, from a military base, that this is now going to be the new normal. If there is going to be any attack from Pakistan, any terrorist attack from Pakistan, it will be treated as an act of war. Having said that, what's happening domestically? We've seen a massive counter-terrorism operation underway since the Pahalgam attack. This morning, at least 3 terrorists were killed in a counter-terrorism operation, and this was led by the police force in Jammu and Kashmir and the army as well. Domestically, we've not seen any ceasefire violation since about 11:30 p.m. last night. No drone sightings either, but before that there were drones spotted in different areas. So India is really keeping its guard up. Have the forces, has there been true production at the border? The answer is not immediately. It's going to take some time. There is a lack of trust between the two sides. Even though the DGMOs have decided to stop firing, pause military action for the moment, it will take some time to take shape of an actual ceasefire. For the moment, our operations, our operational deployments in the Arabian Sea with the Navy, with the Air Force and the Army are in the highest possible alert. This is not going to change. And we can also tell our viewers that the Parliamentary Committee on Foreign Affairs is going to hold a very important meeting on what's happened with India and Pakistan during Operation Sindoor, and Foreign Secretary will be briefing committee members on the 19th of May.
Parikshit, many thanks for joining us. And Prime Minister, during his address to the nation last evening, had also stressed that the time had come for greater reliance on made-in-India defence equipment. Now, Indian defence stocks surging, up 10% in today's trade on the back of that statement. Meanwhile, Chinese defence stocks were under selling pressure today. The Hang Seng China and Aerospace and Defence Index was down nearly 3%. Majority of the Chinese defence stocks traded with cuts of up to 7%. Now, as per the Stockholm International Peace Research Institute, China accounted for 81% of Pakistan's arms imports between 2019 and 2023. On to the day's market action. Indian equities took a breather after Monday's breathtaking rally. The Sensex and the Nifty dipped around 1.5% each, but the Midcap index continued to outperform. The Nifty Bank also witnessed some cuts, ending more than 440 points lower. Prashant joins us now to take us through the trading action. Prashant, so a little bit of a breather there. The market's giving up some of Monday's gains.
We gave back about 40-odd% of the gains, the big monster gains that we saw yesterday. The market in the Nifty ending about, 350 points lower. The Nifty Bank lesser, but about 0.75-odd% cut there. Nifty mid-cap and small-cap indices much better, and that is the reason why market breadth was a clean 2:1 in favour of advances. I'll start with, what was up today as far as the index is concerned. It was once again a defence kind of a day. Last week, remember, you had a day when the defence index was up 5. Guess what? Today was a big one as well. So in the Nifty, there was Bharat Electronics, which was the biggest gainer in that space. Apart from that, Jio Financial Services did very well. Hero MotoCorp reported numbers, market liked them. And the pharma pack, Dr. Reddy's was up. Sun and Cipla were higher, small up, but nothing major, but they were higher nevertheless. On the downside, I mean, IT was a clear loser. Infosys, HCL Tech were the two which kind of stood out. Power Grid, Eternal, which is Zomato, was lower. There was Hindalco and Bharti, which were the other names which were down as well. Broader space, lots of stuff which was up more than down. So again, a lot of defense here. Bharat Dynamics, Idea Forge, which two of those names which were up big with strong volumes. Tanla Solutions, Vishal Megamart. There was Care Ratings. Z was up as well. TD Power, Afcons, Suvain. Birla Corp was up about 5.5% by close. Schaeffler India, a 6%. Edelweiss, 7%. Nippon India was up about 6%. I could go on. A fairly robust list of volume-led gainers coming in. On the downside, Swiggy, K Fintech, a TCS, and SRF, PG Electroplast. I mean, these are, some of them are simply reversals of the very large gains that each of these individual stocks saw as part of what we had yesterday. So a pullback, absolutely. A meaningful one at that, perhaps, yes. But I mean, the environment, the mood generally with regards to global trade after the US-China deal remains much more constructive. Back to you.
Prashant, many thanks for joining us. That was the market action, but let's talk about the big macro data point out today. The retail inflation number for the month of April out. dropping to 3.16% in the month of April. That's the lowest since July of 2019. The fall in inflation was driven primarily by the fall in food and oil prices. So that's good news coming in on India's inflation front. We are continuing to see that drop as far as vegetable prices are concerned, and all of that boding well. We'll of course get you more details. The big earnings of the day, Hero Moto met expectations in Q4. Price hikes boosted margins and realizations. Revenue surpassed expectations, growing 4% compared to the last year, and net profit and EBITDA margins were in line with estimates. The company said it remains cautiously optimistic about its near to mid-term outlook. And more earnings. Pharma major Cipla's numbers largely in line with street estimates. Net profit ahead of estimates. Margins missed the mark. Net profit up more than 30%, while revenue rose 9.2% on an annual basis. The company's announced a total dividend of 16 rupees for shareholders. Shares of Paytm down 5% after 4.1% of its equity changed hands in a large block deal, something that we had reported here on CNBC-TV18. While details of the seller have not been disclosed, sources have told us that Chinese fintech giant Antfin is the likely seller. The firm has offloaded its stake for over 2,000 crore rupees. The floor price for the deal was reportedly set at around 810 rupees a share. And shares of K-Fintech slumping in trade after Singapore-based promoter General Atlantic Fund sold around 10% stake for nearly 1,800 crore rupees. Shares changed hands in multiple block deals at an average price of 1,045 rupees a share. The floor price was at a discount of 8.3% to Monday's closing. With this, General Atlantic stake in K-Fintech comes down to 22%. President Trump has signed an executive order that directs pharma companies to lower drug prices to align them with those paid in other developed countries. The order has given drug makers price targets in the next 30 days. President Trump has said that further action will be taken to lower prices if firms don't make significant progress towards those goals. The U.S. leader said that the order will apply to medicines procured via both commercial and the public healthcare system. However, he hasn't disclosed which medications are covered by the order. Speaking to journalists, Trump said that he was seeking cuts of between 59 and 90%.
We'll no longer tolerate profiteering and price gouging from Big Pharma, but again, it was really the countries that forced Big Pharma to do things that, frankly, I'm not sure they really felt comfortable doing, but they've gotten away with it, these countries. European Union has been brutal. Some prescription drug and pharmaceutical prices will be reduced almost immediately by 50 to 80 to 90%. Big Pharma will either abide by this principle voluntarily or will use the power of the federal government to ensure that we are paying the same price as other countries.
It is really the big pharma products, because if you know how the market is split, 80% of prescription drugs by volume only account for 20% of the value. And it's 20% of prescription drugs by volume account for 80% of value. And that's the 80% he wants to shrink.
The way I would put it is the final executive order, which we saw yesterday evening from the US president, it's a much diluted version of what he had put out in September 2020, which, as Mr. Vaidi said, eventually faced legal challenges and was withdrawn by the Biden administration. But the yesterday's version was much more diluted in a way that the focus is on patients who directly want to buy drugs from manufacturers. They will get the drugs at the most favored nation pricing.
And President Trump has commenced his first trip to the Middle East. His three-day tour will also include a visit to Qatar and the United Arab Emirates. This is his first official state visit of his second presidency. Saudi Crown Prince Mohammed bin Salman greeted Trump upon arrival in Riyadh. He was also accompanied by Tesla CEO Elon Musk, Nvidia CEO Jensen Huang, and OpenAI CEO Sam Altman. Trump will be expected to focus on securing major financial investments for the U.S. and having diplomatic talks on issues including a Gaza ceasefire. President Trump is hoping to secure a $1 trillion investment from Saudi Arabia, further boosting the Crown Prince's earlier investment pledge of $600 billion in the U.S. And India has warned the World Trade Organization that it is considering imposing retaliatory tariffs on certain steel and aluminum products imported from the U.S. India said that the move aims to counter the Trump administration's imposition of 25% levies on Indian imports. Manisha standing by with more. Manisha, what does this mean now, the threat of India imposing retaliatory tariffs on U.S. steel and aluminum?
Well, yes, India has approached the World Trade Organization, and this is proposing to impose retaliatory tariffs on the tariffs from US on steel and aluminum. Well, this is expected to impact products worth $7.6 billion and a duty collection estimated at $1.91 billion as well. India has said, and it has said that it's keeping the options open when it comes to reviewing the list of products as well as adjusting rates as well. India also maintains that the measures taken by the US are not consistent with GATT. Also, India argues that the tariffs that have been put on India's steel and aluminum do not augur well and actually impact the industry in Indian markets itself. So when it comes to steel, well, India's steel industry has less dependent on the US markets there. When you look at the numbers 2023-24, US imported 0.1 million tons of steel from India, and this is out of nearly 145 million tons of steel that India produces. So that impact is not expected to be so much. But aluminum really is the major point here. US is the largest importer of aluminum in the world. US is the second largest international market for the Indian aluminum products, and India is also the second largest producer of aluminum in the international markets. So there are various important metrics coming in here. Now, when you look at the numbers as well, Indian export of aluminum products to US in 16-17 were at $350 million, which has increased to nearly $946 million US in the year 2023-24. In some years in between, we've seen $1 billion also being crossing in sense of numbers there. So this is where the pain point really is. And it's not just India. Canada and European Union also have complained to the WTO when it comes to tariffs on US steel and aluminum there. Now, this comes in at an interesting point because US and India are negotiating bilateral trade. There also are reports on how the Indian team is going to US in the coming week to talk further about this. So this happening at this point in time, clearly, as I said, comes at a very, very interesting time.
Manisha, many thanks. In international news, Israeli forces have bombed the Nasir medical complex in Gaza's Khan Yunis, killing 2 people. Several people have also been wounded, including patients and medical staff. Meanwhile, Hamas has freed an Israeli-American soldier, Edan Alexander, after the deal was brokered by the Trump administration. Ukraine has said that Russia has ignored calls for a 30-day ceasefire made over the weekend by the US and Europe. The pause in military action was due to begin yesterday. Ukrainian President Zelensky said that the Russian shelling and assaults continue. He added that Moscow has also remained silent about the proposal for a direct meeting between the 2 leaders in Istanbul. Ukraine's military has said that there had been 133 clashes with Russian forces along the front lines until last night. China will commit credit lines of under $10 billion to South American countries. The credit line will be denominated in the yuan. The country's President Xi Jinping made the announcement while addressing a summit of Latin American and Caribbean officials in Beijing. Xi also said that China will implement a visa-free policy for 5 Latin American and Caribbean countries.
HSBC presents CNBC-TV18 Future Female Forward, co-presented by Cognizant. Close the Gap Knowledge Series in association with the Udayti Foundation.
Parity is the only antidote to discrimination. India's pharmaceutical industry, valued at an impressive $50 billion, stands as a cornerstone of the nation's economy and a global leader in generic drug production. It employs close to 5 lakh workers across NSE-listed companies. Yet, the system remains unfair to women. Only 11% of the workforce comprise women. Through Future Female Forward, we spotlight parity and amplify the call for greater representation of women in the workforce. Archana Solanki shares a report highlighting that women must continue to fight patriarchy, one statistic at a time.
The Indian pharmaceutical sector is growing rapidly but lacks gender diversity. To understand this better, let's focus on some numbers to put the spotlight on this critical issue. As a part of our special campaign, Future Female Forward, Close the Gender Gap Knowledge Series, we partnered with the Udayti Foundation, and here's what the research says. The Indian pharmaceutical sector is booming. It's valued at $50 billion, growing at a brisk 10% compound annual rate. It's a powerhouse of employing nearly 500,000 people in NSE-listed companies alone. Well, to be exact, this is 493,000 workers. But here's the catch. Only 11% of them are women. Now compare that to hospitals and labs where women make up 41% of the workforce, or even the broader NSE-listed companies average of 18%. And it's clear that pharma is lagging. Permanent roles tell an even starker story. Just 7% are women. This isn't just a statistic. It's a signal that women are still missing out on non-traditional livelihoods in a sector that's shaping India's future. Only 54% of pharma companies have at least one woman in a key management position. One more than one? That drops to a mere 13%. Why? Well, there's this thing called the leaky pipeline. Women start strong but progressively drop off at every stage, especially in demanding roles like sales. Now, post-maternity support and return-to-work policies are patchy at best, leaving little room to build a leadership pipeline. It's not just about getting in the door, it's about staying and rising. Now, let's talk about women on the ground. Medical representatives out in the field, they are visiting chemists, doctors and vendors, often late at night or during off hours. Now, safety is a real concern. Add to that hygiene challenges. Now, imagine limited washroom access, especially during menstruation. Then there's bias from clients and vendors, subtle or not, wearing them down. And there's an unspoken hurdle. You're expected to own a vehicle for these roles. Back in March 2020, only 6% of drivers' licenses in India belong to women. That's a massive barrier to even stepping into the job. Now, climbing the ladder isn't any easier. Women in middle management hit a wall when aiming for senior roles. The path's murky as well. Now, role models are very scarce. And look at the support. It's often missing. In technical roles, it's worse. Research shows only 52 women get promoted for every 100 men in technical roles, especially in core pharma tech jobs. And 81% of women in STEM report gender bias in evaluations. Now, organizations hesitate to push them forward and the gap widens. Finally, manufacturing, which is the backbone of pharma, remains a tough nut to crack. Shop floors are still male-dominated spaces where women don't feel at home. A survey found that 63% of women in manufacturing face peak discrimination, with the assumption about their skills and fit shutting them out. Now step into leadership there and resistance from male peers kicks in. Worse still, nearly half of women leave these jobs after maternity breaks because childcare support just isn't there. India's pharma sector is soaring, but it's leaving women behind. From the field to the factory to the boardroom, now more needs to change. Fast access support and a shift in mindset could turn this $50 billion giant into a true equal opportunity leader. The potential is there. It's time to unlock it.
HSBC presents CNBC-TV18 Future Female Forward, co-presented by Cognizant. Close the Gap Knowledge Series in association with the Udayti Foundation.
everyone, welcome to Startup Street. I'm Ritu Singh and with me is Arundhati Ramanan from the Mumbai studio. Here are the top headlines from the startup world. Real estate startup No Brokers operating revenue rose 32% on a yearly basis while reducing losses by 17% in FY24. However, the company disclosed little details on expenses, categorized 57% of total expenditures under a miscellaneous overhead.
QSR restaurant chain Biryani Blues adds $5 million to its cart. Round was led by Carpadium Capital's new fund, Ugadi Capital. The pre-series round will support expansion and upgrade operations and logistics.
Adopt AI, an agentic AI firm, gets $6 million in a seed round that was led by Elevation Capital. The startup will use the funds for its innovative platform that empowers applications with intelligent agent capabilities.
AI firm Hyperbot raises $6.5 million in a Series A round. The round was co-led by Arkham Ventures and Atira Venture Partners. Existing investors Kalari Capital and Sunicon Ventures doubled down on their bet. The fresh capital will be utilized to expand its go-to-market initiatives in the US.
Google is all set to launch a new fund aimed at investing in artificial intelligence startups. The startups being backed under this are called AI Future Fund. Will get investments from Google, early access to AI models, and hands-on support. Well, those are the headlines that we're tracking for you today on Startup Street. But in what's brewing today, healthy snacking brand Farmly has completed a $40 million Series C fundraise, which was led by L Catterton, a global consumer-focused investment firm. Now, the company says this transaction will help it strengthen its foothold in India's growing health snacking market, penetrating untapped regional markets, as well as developing new product formulations. For more on what the funding really means to the company and the path ahead, joining me now is the co-founder of the company, Abhishek Agarwal. Abhishek, welcome to...
So we closed our Series C round, $40 million, led by L Catterton. 70% of the round is on the primary, which will be used in the company for the expansion purpose, and 30% is for the secondaries on making exits to the initial and angel investors, and some for the ESOPs buyback from the initial employees.
All right, and can you share the kind of revenue multiple or give us a ballpark on the valuation at which this round was closed for Farmly?
So can't comment on that much, but the last year had been really great for us. We have seen almost 60% of growth in the last financial year, and seeing that growth journey and the kind of growth that this market is seeing, L Catterton has decided to put in the Series C round. Yeah.
All right, so no word on the numbers, but tell us then, how will you deploy these funds? What are these untapped regions that you're talking about that you want to get into, and what new product formulations are you working on?
The funds will primarily be used for expanding our infrastructure and modernizing our capex to meet the growing demands. Secondly, it will be on the expanding our distribution channels. We are already very strong in the e-commerce and quick commerce space. So now this fund will be used in expanding our offline distributions across pan-India, region by region. And some of it will also be used in getting into newer markets apart from India, where we are seeing decent traction coming on.
And what are these markets outside of India, if you could tell us, Abhishek?
So outside of India, I think US is one market where we are seeing decent growth on the back of our flavored makhana range. Makhana is going through a global trajectory. It is obviously 100% of the makhana is grown in India. So it's seeing a global traction now. So we are on the back of makhana. We are trying to expand into certain territories, as I mentioned, in USA, Canada, Australia.
Okay. Okay, US, Canada, and Australia are the markets you're looking at outside India. But, briefly give us a sense of how sales have been shaping up for you. Of course, it's been a while since you started the company in 2017. What are your monthly sales now? And also, your reported revenues last were at 370 crores. How's FY26 shaping up, and how close are you now to profitability?
Yeah, so it's been almost an 8 years of journey for us. So last year, as you mentioned, we have closed at 370 crores in revenues. We are currently at an ARR of roughly about 500 crores. And we are looking to continue the similar growth trajectory, about 70% growth in the next financial year. This year is the first year when we have seen EBITDA profitability. So profitability is one thing, where we have our keen eye on. We'll try to grow sustainably this year as well. Obviously, there will be some key investments on capex, on brand building. But yeah, the trajectory to profitability is there.
All right. Abhishek, also a word on the channel distribution strategy. And this is something we asked, I think, almost all of the players in this segment, because you've been present online. More recently, of course, you've also forayed into the offline space. How has that played out so far? And what is the split, if you look at sales or revenues, between offline, e-commerce and quick commerce, which is an important segment for you?
True. So, from past 2 years, we've started the offline distribution. We have been really strong on the e-commerce and quick commerce space, which roughly contributes to almost 75% of our sales, 35% coming from the e-commerce giants like Flipkarts and Amazons, and rest 45% comes from the quick commerce space, which is Blinkit, Instamart, and Zepto. And we are the category leaders in this space across all three channels. Offline, we started, as I mentioned, in last 18 to 20 months. We started with modern trade channels, and then we started foraying into the general trade in specific territory. In our good hero product range like flavored makhanas, healthy dessert like date bites, we have been seeing a good traction across different territories. So as of now, we have almost 15 to 16% of our sales coming from offline channels, and the rest coming from the institutional channels like airlines, some part of it from the government channels. But yeah, this is one segment which is offline, which is currently at about 15%. We are looking to get this number to 30% in the next 18 to 20 months. We are currently present across 20,000 stores in the offline channel, and the idea is to expand this up to 1.5 lakh stores in the coming 18 to 20 months.
All right, that's a big expansion planned in the offline space for you, Abhishek. But you spoke about your makhanas and date bites and whatnot that you have. When you're talking about this product innovation, again coming back to that point, are you looking at adjacent categories like protein snacks, breakfast cereals, or when should we expect these new launches, if at all you're considering them?
Yeah, obviously. So we invest heavily on the R&D on the product formulation side, which is one of our core USP on how do we maintain and how do we elevate the taste and not compromising on the health elements. So that's where we invest heavily on the R&D side. We are currently very strong in the flavored makhana space, healthy dessert space, your dry fruit mixes and trail mix space. Going along, yeah, we are on cards to launch more on the go snacking for making it more accessible at the price point of say 20 rupees, 30 rupees. That's where we are eyeing, to launch more products. And obviously, growth and the kind of number of stores that this kind of price point can cater to, that's where we are seeing the major expansion coming from.
All right. Finally, Abhishek, just to get a sense of how large the play for family could be. Of course, in India, you've been growing your business and you spoke about piloting in the US, Canada, Singapore, and so on. What is the response outside of India so far, and which markets look most promising, where you see meaningful possibilities for really scaling up your business?
I think all the markets where, this healthy snacking as a segment is picking up really well and where this segment has already matured. These are the two areas where, we are seeing good response. So I think US, Canada, Australia, I think these are three markets where we have received decent traction and decent response. Again, we are very early stage in the journey there. So yeah, learnings on the way, and then we'll see how to, capture markets there.
That, Abhishek, thank you very much for giving us your time today. It was a pleasure speaking with you. Thank you.
Thank you. Thanks for having me on the show.
Moving on the hot seat today, we've got Fuse, which has raised $12.2 million in a Series A round led by Galaxy and UAE telecom giant E&. Founded just 2 years ago, Fuse has already processed over $2 billion in digital assets and is now eyeing India for its next phase of growth. With new stablecoin and payments infrastructures in play, the startup wants to power banks and fintechs with regulated crypto solutions. Joining us now to break it all down is Arpit Mehta, the co-founder of Fuse. Arpit, thank you so much for taking time out and being here with us on Startup Street, and also congratulations on raising this Series A round. What sort of gap in the financial infrastructure landscape is Fuse specifically solving for, and how do you sort of differentiate from, existing digital asset providers?
Yeah. So if you think about the overall financial services space, right, largely you can think of wealth trading, you can think of payment, cross-border or domestic, you can think of lending, you can think of insurance, right? Most of these techs have not been rebuilt over the last several decades, right? What we are building is the infrastructure layer for some of these verticals, powered by crypto and by association blockchain. Right? We always sit on the infrastructure layer. We are very B2B, so we work with large banks, fintechs, enterprises to help them launch different crypto products, right? Some of the large banks here in Middle East work with us, right? Like where we are, so we are fully regulated from a crypto perspective and from a payments perspective in several markets. So we sit on the infrastructure layer, and then we power these large enterprises and help them innovate and launch different crypto products very fast, right? So we work with banks to help them launch crypto trading products. We work with payment companies and remittance companies to help them build blockchain-powered payment solutions, right? And so on.
Right, absolutely. And with over $2 billion in digital asset volume already processed, how are businesses and institutions actually using your infrastructure today, and where do you see the fastest adoption?
Yeah, so I think a lot of adoption over the last 1 year has been on the payment side, where within crypto, stablecoin has found perfect market fit. Right? And then especially on the cross-border side, where across the world, entities and consumers face challenge on moving money cross-border. Right? We have built a complete infrastructure for these stablecoin payments, be it wallet as a service, liquidity as a service, on-ramping, off-ramping in multiple corridors, regulatory compliance as a service, because that's a huge heavyweight for any institution who is trying to build a fully regulatory conservative solution in this market. Right? So Fuse provide that full stack. And then especially in the stablecoin payment segment, we have found a huge product market fit across multiple markets.
Right. And, we're going to delve into that a little bit further. But before we go there, you've raised this $12.2 million. How do you plan to use the funds?
So this whole space is very new overall as an industry, right? And in a lot of products that we are building, we are category first or the market first, right? Aim is to go deeper into launching some of these products, right? Second, growth across multiple markets, and which also means licensing across multiple markets, right? Which requires a significant regulatory capital investment.
Right, absolutely. And you're now eyeing India, right? And how are you sort of approaching the regulatory engagement here? And what would a green light from the regulators mean for your India playbook at this point?
Yeah. So India definitely is a huge market, right? But also being Indian founders, we understand Indian market very well. Right? At the same time, we are regulatory very conservative. So at this point, we have been continuously engaging with the regulators, with the authorities to figure out the overall play. We believe that the way regulators are looking at crypto versus how regulators look at stable coins and payments, these two are very different solutions for the regulatory framework that would be required for these products. We are waiting for the overall stablecoin and the payment infrastructure, payment regulations to be clear. That's where we will go deep in the Indian market.
Exactly. You actually preempted my next question. I was going to ask you about this. You've just launched a suite of stablecoin infrastructure products. What role do you see stablecoins playing in mainstream finance, especially in the Indian and, the MENA markets?
So it's a very interesting question, because India market or a bunch of other markets, I would actually comment on the larger markets like where we operate, mostly emerging markets where there is a currency devaluation against dollar. I think especially dollar stable coins like USDT, USDC have really picked up acceptance, right? It is both time and cost efficient. So we see last year, just to give you a number, right? Like the overall value transfer on stable coin was $3 trillion. Right? That's roughly about 15 to 18% of Visa plus MasterCard combined. Right? So from a market perspective, stablecoin have already picked up a lot of transactions or a lot of growth, and most of these transactions are in emerging markets, right? Where consumers and entities generally face a lot of issues moving around dollars, right? Like that's where the major acceptance has been.
Right. And if you could quickly tell us, we're running out of time. You did mention payments and you said that's where you're seeing most amount of traction, but it is also a new vertical for Fuse, right? So how does your infrastructure power payments innovation, and could we see you, partnering with existing fintechs or even traditional banks?
Yes, we do. So we already work with a lot of banks and a lot of payment providers across the world. Right? As I said, we always sit on the infrastructure layer, right? So we work with global payment providers, global banks, and power their payment solutions for cross-border use case and soon in some markets for the domestic use case.
Right. And what does your current revenue model look like? How has monetization evolved with the launch of all your new offerings like the stablecoin infrastructure and payments? If you could sort of take us through where you hope to end this year, what you're making now?
Sure. Yeah. So, well, numbers are not public, but our business model is charging on per transaction majorly, right? That's where we make money. We are always in the flow of funds if the regulated entity or regulated infrastructure provided on the back end, right? We aim to 3x the revenue that we had last year. I think we'll surpass that by a margin.
All right. So that's the plan going forward. All right, Arpit, thank you so much for taking time out and being here with us on Startup Street.
Thank you. Thanks a lot.
Well, on that note, we have to take a short break, but don't go anywhere. Up next, B2B e-commerce platform Jumbotail eyes a $120 million fundraise, which is expected to value the firm at $1 billion. A special conversation coming up on the other side.
Welcome back. It's with us on Startup Street. B2B platform Jumbotail, which connects mom and pop stores to suppliers, is in advanced talks to raise $120 million from SC Ventures, Invest and others in a fresh funding round that could value the company at $1 billion. My colleague Aishwarya Anand spoke with Ashish Jinnah, the co-founder of Jumbotail, to know more about the e-commerce platform's plans going forward.
I think we're big believers that small retailers and SMEs are the lifeblood of commerce in India. We will continue to build as we have done over the last 10 years. This is year 10 of the business. We are building for the long term. As and when there are opportunities, as good companies come along the way, we will definitely take a look. We've always done that. If there's culture fit, if there is, if it makes sound business sense, we will definitely look at that. But obviously the core business continues to focus on building a profitable enterprise that actually allows us to advance the mission that we are working towards, and that's something that will continue. Capital raises, acquisitions, etc., are things that any company that's looking to advance its vision with aggression and discipline will continue to look. So we are no different than anybody else on that.
Okay. So talking about profitability, I want to understand that the recent numbers that we have is from FY23, where your revenues doubled to 819 crore. The losses have also increased to 264 crores. So tell me, what does FY24 numbers look like, and what is the part of profitability here?
Actually, the numbers you're talking about, right, given that we are structured as a marketplace, it's, those numbers don't actually tell the full story.
Okay. What is the full story then?
So I think, focus, obviously, right? First 6 years of the business, we were a single city company, focusing on getting the right model.
Correct.
Through the process of COVID, we expanded the reach once we felt we had a model that actually made sense unit economically as well as providing value to the retailer. Over the last couple of years, especially over the last year, the big focus has been on substantially improving profitability. Every trip that goes out today, on a daily basis actually makes money. Every city from a contribution perspective makes money. There is still some burn, obviously, but that's actually been the big focus, and we're very, very excited about what's happened over the last year. At the right point in time, we'll talk about numbers, but I think big focus was, all new cities that we had opened up over the last 2 years, making sure that they get to the right scale, but also the right unit economics. That's something that we've made a lot of progress on. In fact, every trip that goes out and does delivery, and that's the unit metric that we measure, actually is profitable and covers, not just the cost of the trip, but also, large amounts of fixed costs. There's obviously still some burn, and that's what you raise capital, from time to time. We're very fortunate to be backed by, deep pools of capital. And so, as far as we're concerned, continue to keep building in that journey. And we're very excited about what the future holds.
So by the end of this year, are there any targets in terms of your ARR, whatever it is that you're planning to hit? Is there any numbers that, if you could shed some light on that? Or maybe like the growth rate, if you can talk about what growth rate do you expect to hit by the end of this year, if you don't talk about the exact numbers?
I think the goal is to continue to raise margins. The goal is to continue to, actually make sure that we generate more and more capital per trip, per delivery, in order to cover the fixed costs of running the business. I think we've made a tremendous amount of progress in that over the last year. I think the goal is to continue to keep doing that. And as that trajectory sort of proceeds forward, the numbers will take care of themselves. We don't necessarily set GMV goals or things like that. I think it's very easy to get GMV in the wrong ways in this sector. I think our focus is, it has to add value to retailers. It has to make sure that they are set up for success in the future. It has to help our brand partners, especially smaller regional brands, actually reach these retailers in larger numbers, actually have a level playing field to even some of the largest brands who are also good partners with us. I think as long as we're doing that, the numbers will take care of themselves. And we've had a long history of sort of seeing, when we plan something, sometimes, things take a little bit longer, sometimes you get there a little bit faster. But as long as you're executing with integrity, as long as you're focusing on your customer, both retailer and their consumers, as well as the brands, these are the three integral parts of our ecosystem. I think, it's a very, very large market that we're going after, and we're very excited about the outcome. I think as leaders in this space today, we feel very confident that, the path that we're executing on is the right path. Results will follow in due course. We've already seen significant outcomes on the profitability journey, and when those numbers come out, we'll be happy to sort of have another conversation with you. I think that trajectory is what we're looking to continue.
Okay, so there were plans to expand your J24 store network to 300 outlets. How far are you on those plans? And by when, what's the target that you have to reach those numbers, that by this year we want it to be done? See, At least give me something on the numbers.
I'll tell you, right? We have about a 70 store network in Bangalore.
Correct.
Right? It is, to me, again, I think in literally everything that we've done in this business, it's easy to, increase store numbers, right? But what's most important in this, right? There's about 2 million, Kirana stores in urban India,
Correct.
right? So there's no shortage of stores that you can actually help entrepreneurs run. So let me be very clear about what J24 does. J24 is an entrepreneur-run network that allows the entrepreneur to actually transform their store into a modern convenience grocery store.
Okay.
Right? We provide a series of services to these entrepreneurs to actually help them get more traffic, more consumers in. So a typical J24 store actually has about 2.5 times the traffic that a normal Kirana store has. So it elevates the standard of living for the retailer. It makes them, ready for the modern consumer and their needs, which are obviously changing rapidly.
Correct.
And what we're focused on is making sure that our entrepreneurs are making money, which they are now in increasingly large numbers. We are set up to, obviously we have a B2B network that operates across 10 different urban clusters. It's set up to actually, scale the J24 business. But we first want to make sure that, given that this is entrepreneurs that we're dealing with, we want to make sure that every single entrepreneur that comes in has a great experience. The consumers that are walking into these stores have great experiences. I think that's what we've spent the last couple of years working on. Once you get there, which we believe we are now at, you're now set up to actually scale. Again, we'll no reason to hurry, scaling on any of these parameters. We do it at, a store-by-store basis. But obviously, we have a strong base of 10 urban, agglomerations across the country where, you have about 50-60 million consumers. So, as we sort of look forward, each of those cities will start, seeing entrepreneurs come in. But there's a certain critical mass that we first want to get to in Bangalore. I think that's the focus for the rest of the year. And then, as those opportunities come up, we'll continue to scale.
All the best with all those plans. We wish to hear exciting announcements very, very soon. And thank you very much for speaking to us.
All right, so Jumbo Tail could be in line to become the next unicorn in India. But let's also take a look at some of the other news that we're tracking for you today. Japan's SoftBank Group has reported its first annual profit in 4 years at $7.7 billion. This was led by strong performance in its telecommunications holdings. The conglomerate also posted a net profit of $3.49 billion in the fourth quarter. SoftBank's Vision Fund 1, which invests in late-stage startups, made an investment gain of $6.1 billion in the quarter, while its Vision Fund 2, which invests in early-stage startups, booked an investment loss of $3.42 billion, and that primarily was because of the poor performance of some of the Indian-listed stocks like Swiggy and Ola Electric, which are part of its portfolio.
Starting June 17th, Amazon Prime users in India will have to pay more to watch ad-free content on the streaming platform. While the base price for Prime membership remains unchanged, an ad-free upgrade is going to cost users 699 rupees an annum or 129 rupees per month, depending on the package that they choose. This is in line with Amazon's global markets like the US, UK and Canada, where ad-supported viewing is already in effect. The changes will not affect users of Amazon's lower tier plan, Prime Lite, which already includes ads.
Well, Meta is also set to launch its Ray-Ban Meta smart glasses in India on the 19th of May, and those will be priced at rupees 29,990 rupees. Now, these are AI-powered glasses that support Meta AI and enabling features like answering questions about your surroundings, live translation in languages like English, French, Italian, and Spanish, sending out messages for you, making calls, and playing music through apps like Spotify and Apple Music. Pre-orders are going to be available on Ray-Ban's official website with in-store availability starting at the launch. Now, since their 2023 debut globally, Meta has sold about 2 million pairs of these smart glasses.
Walmart-owned Flipkart sees a churn in its top deck as 4 senior executives quit. The exits include a senior vice president and 3 vice presidents. Ankit Jain of grocery and large supply chain, Prajakta Kanaglekar of human resources, Anurag Singhvi from analytics, and Ganesh Ramaswamy, the CPTO of ClearTrip, have all quit and are moving out.
And Bangalore-based cloud kitchen startup Cure Foods has acquired pan-India rights for the donut and coffee brand Krispy Kreme. Now, with this move, Cure Foods will expand its presence in North India and lead Krispy Kreme's pan-India growth. And with this expansion as well, Cure Foods is going to get more than 100 or operate more than 100 Krispy Kreme outlets across India, a mix of dine-in stores and cloud kitchens.
And with that, it is a wrap on this edition of Startup Street. From Ritu and me, goodbye and many thanks for watching. More news coming up on the other side.
Shows like Game of Thrones and The Crown range anywhere from 8 million to 20 million an episode.
The Gates Foundation, one of the largest charitable foundations in the world, is marking its 25th anniversary. Now, the Silver Jubilee comes with a big commitment. Bill Gates is pledging to give away, in his words, virtually all of his wealth over the next 20 years, which means the foundation plans to spend $200 billion over the next 2 decades. Now, this accelerated timeline has meant a change to the foundation's charter, which had stated that the organization would sunset 20 years after the death of Bill Gates. The last big change to the foundation had come in 2021, when Bill and Melinda Gates announced their divorce. Melinda Gates resigned as co-chair in 2024, which left Bill Gates as the sole chairman of the Gates Foundation. Now, from combating infectious diseases to agriculture research and reproductive health, the Gates Foundation has been at the forefront of solving some of the biggest issues in the world today. And joining me now to discuss the foundation's future and his pledge to give away virtually all of his wealth is the man himself, Bill Gates. Bill, many thanks for joining us on CNBC-TV18. And let me start by congratulating you on 25 years at the Gates Foundation. But Bill, why this decision to set yourself a new deadline of 20 years to give away virtually all of your wealth? What has prompted this decision? Why this change from the original position?
Well, looking back on these 25 years, it's amazing what we've been able to accomplish. You know, together with partners, the one statistic of cutting the number of children who die every year in half has been phenomenal to be part of that. And so as I was thinking about that, I decided that we should essentially double down and spend all the rest of the money I'm lucky enough to have through the foundation on these causes over the next 20 years. And that'll allow us to be very aggressive, make some fantastic progress, and, we'll have real clarity. A lot of resources for 20 years, and then others can step in with whatever we haven't been able to finish off.
If I may, Bill, is this decision to accelerate or speed up the giving that you're doing linked to the overall environment that we're currently seeing, where there is a retreat from multilateral institutions, from multilateral arrangements, from development aid? How much of this acceleration perhaps is also linked to the change in the environment as we see it today?
No, this decision was made before all of these reductions were clear to us. I would say in the short run, it means the work we do is going to be challenged. Although I expect every year we'll have progress in India and some of the countries we work in. In Africa right now, these cuts to the aid budgets, the debt situation, some of the instability means the next 4 or 5 years will be difficult. But over the time period that all my money will be given, I still expect to see pretty incredible progress. So in the short run, I am very disappointed that aid generosity is down. But with the innovations in the pipeline, with, I think, going to people and saying that those aid budgets should come back to some degree, I'm super excited about what we can achieve in these next 20 years.
Bill, you talked about doubling down on the significant resources that you've already committed. $100 billion was the previous amount that you did over the last 25 years in spending. You're doubling down on that, $200 billion between now and 2045. So help me understand, these are big numbers. Prioritize for me how you intend to use this money and what are you hoping to achieve in terms of impact?
Well, the first 25 years, we got child-to deaths down from 10 million to under 5 million a year. And we also took the two other diseases, HIV and tuberculosis, and the deaths were cut substantially for both of those. We also came up with ways to save mothers who are giving birth. And so we're really putting most of the resources into the global health work. We hope to be able to cut the number of children who die more than in half again, and also to make dramatic reductions in all infectious disease. We need to finish our polio eradication. Still a lot of hard work left there, and we also think some other eradications, guinea worm, malaria, a number of diseases could be taken all the way to zero. And so by having, for the next 20 years, over 200 billion in resources, double what we spent in the first 25 years, we'll be able to partner with, scientists, and we have a great partnership with the Indian government to help them achieve their ambitious health goals. And this field, the field of global health, will be able to perform miracles, and our resources will be a meaningful part of that.
Bill, you spoke about the ability to deliver miracles. What have been some of the hardest fought battles over the last 25 years? You talked about some of the important outcomes, especially on the global health front, that you've been able to achieve. What's been the hardest part of making those a reality? Resource is one thing. Execution is another thing altogether. What's been the tough part on the execution front?
Yeah, so for the foundation, we both work on the R&D side, so like creating new vaccines. And so, with Serum, a great Indian partner, a meningitis vaccine was one of the first new ones the foundation did. Later, a rotavirus vaccine that was very low cost, a pneumococcus vaccine, then with other partners like Bharat, a rotavirus vaccine that also brought prices down. So it's the vaccine work, both in the R&D and the delivery, is probably at the top of the list of the impact that we've had. Vaccines, you need to keep them refrigerated, you need to make them cheaper, you need to convince mothers to bring their children in. So, there are plenty of challenges just in that one area.
Bill, you talk about India. Now, you've been spending a fair amount of your time here in India. And of course, the foundation has been working in India for a good part of the last 25 years. Let me ask you about what excites you about what's happening in India today. How important is India going to be for the Gates Foundation over the next 20 years?
Well, certainly India's a very, very important place for us. It's our biggest overseas office, and it plays two big roles. One is that the Indian government has very aggressive goals for improving health, and so we get to partner and try out the latest advances in medicine, and that we've seen great results from that. But the actual creation, the R&D of the new tools, whether it's diagnostics, vaccines, drugs, new seeds to help farmers, or ways of taking AI and helping with health and agriculture as well as education. India is going to be a place where there's so many smart people, so much desire to see these improvements that will pioneer a lot of things first in India, and the brilliant work there will then benefit the entire world. Paradigmatic of that is the work in digital finance, where Aadhaar and the ability to pay digitally, India really did an amazing job on that, and now we work with the Indian government to make that available to all countries.
But Bill, you've been spending more and more time here in India and doing lots of fun, interesting things, not just linked to the foundation, but even outside of the work that the foundation is doing. What about being in India, about making the connections here in India, the people that you're spending your time with inspire you today? I mean, is this a new romance with India that started over the last few years?
No, I've always been fascinated by India, and of course Microsoft has had a fantastic relationship in terms of the huge development offices that we have in India, as well as amazing people like Satya Nadella that have come and made huge contributions to the company. And so as I moved from Microsoft to the foundation, I took that understanding of the great talent that's there with me. And so, I get to India on a regular basis and get to meet with the partners there. The majority of the world's vaccines by volume are made in India. We've had, so many important partnerships with that, and that's really growing. The quality of research in India, its desire to go even beyond vaccines with the tools that are provided, it's very timely. And, part of that is Prime Minister Modi's been very generous at sharing with me his goals, and so we can talk about how the foundation helps with that.
Bill, you've referenced vaccines, and I want to ask you this in the context of the last conversation you and I had, which was in September in New York last year. Now, there you had talked about being a salesman for Gavi, the Global Vaccine Alliance, in its quest to raise funds. You've been central to Gavi's ambition and aspiration of providing affordable vaccines to the world. At this juncture, with the very real possibility of funding drying up, specifically from the US, how concerned would you be about Gavi's future?
Well, I'm very, very concerned. It would be tragic if Gavi weren't able to raise as much or more money for this next 5 years as it's had for the last 5 years. And yet, it's pretty clear that we're going to see a reduction. I continue to talk to all the governments about the impact. There's nothing more amazing than making sure all the children of the world have these miraculous vaccines. So we'll see what we're able to raise, but it's looking tough. I'd say the next 5 years, the whole aid picture, whether it's Gavi or Global Fund, are going to mean that we might go backwards a little bit before we resume the progress we've seen since the turn of the century. And that's just a mistake, and I'll be speaking out very loudly, try to get the U.S. back in, try to get others to maintain or even increase, in some cases, their giving.
But do you feel confident or optimistic about that? You said you're going to try and draw people back to the table. But at this point, with the global retreat that we are seeing, especially from development goals, Bill, how much of a slide back do you believe we should be prepared for? Are we set for?
Well, we have two forces. One is the power of innovation, that is new tools, whether that's new drugs, new vaccines. We have AI to even help with the delivery, to talk to patients and give them advice about care seeking, things like the ultrasound that'll help figure out about the whether a pregnancy needs special care. So the innovation side is, if anything, going faster than ever. The generosity on resources for the delivery side, the next 5 years are going to be tough. And that might mean some of our statistics that have been improving, we might have a period where they'll get somewhat worse, particularly in Africa. And that's tragic. That shouldn't happen. If you look at the full time frame that all my money will be given over, I'd say we will be much better off by the end of that than we are right now, despite this period where the aid budgets are really going to hurt our work, particularly, as you said, things like Gavi and Global Fund not being fully funded.
Well, we are going to head into a break and continue our conversation with Bill Gates on his big pledge to spend $200 billion as part of the Gates Foundation over the next 20 years. Welcome back. You're watching the CNBC-TV18 exclusive. We're in conversation with Bill Gates on the big pledge of accelerating the spending being done by the Gates Foundation, $200 billion over the next 20 years. Bill, the last 25 years, the Gates Foundation has worked very closely with Warren Buffett. He's been instrumental in the $100 billion that you've spent in the journey so far. Is there a disappointment that he isn't going to be a fellow traveler over the next 20 years for you at the foundation?
Well, I'll certainly be very sad not to have Warren's regular advice. I mean, Warren is so wise, so generous. He's been a great friend to me. His example as a philanthropist, I think, has influenced many people besides myself. As you say, he's a huge contributor to the foundation. His family is very committed to the causes the Gates Foundation works on, and so they'll continue to be, his children will be great partners of ours in many of these areas. But no, it'll be tragic if Warren's not around. He's 94. I hope he lives this whole 20 years, but he might not.
Well, speaking of milestones, it's 25 for the Gates Foundation, it's 50 for Microsoft, and it will soon be 70 for you in October. As you look back and reflect on the many milestones that you've achieved personally and in your careers, if you had a chance of a do-over, would there be anything that you'd change, anything that you'd do differently?
Well, I'd be very reluctant to go back and change things since I've been so unbelievably lucky. My parents, who I got all my values from, and they made sure I got a great education. I've had amazing friends like Paul Allen, who helped found Microsoft, Steve Ballmer, who allowed Microsoft to be so successful, and now an unbelievable number of great partnerships at the foundation with the incredible team there, and partners all over the world. So I'm the luckiest person in terms of what I've been able to be involved in. So yeah, I've made plenty of things that I've had to learn and do better, but I don't think I'd want to risk going back and making any changes.
Well, speaking of wanting to do better, you're no stranger to criticism, and it's been constant, but perhaps post-COVID even more so. Questions about the influence that organizations like yours build on decisions that have been taken. Many call it the tyranny of the unelected. How do you now respond to that criticism, Bill, and how do you believe the foundation should learn and position itself over the next 20 years to take some of that feedback and criticism on board in some constructive way?
Well, I think the agenda of saving children's lives, and making sure they're well nourished so that their brains and bodies fully develop, fortunately, that's not a super controversial agenda. All the governments we work with, including India, have goals to reduce those deaths, and so we're able to work together. Vaccines themselves, we test them to make sure they're incredibly safe, and so there is some controversy about those. But for example, with polio, there's not a single kid in India who's been paralyzed since 2011, when the final case, which was tragic, was taken care of, and so we get pretty strong support for the work we're doing. Sometimes seed technologies or contraception, we have to make sure we're communicating well about those things. I wish there were more people involved in, critiquing what we're doing in malaria and TB and HIV. Some of the work we do can actually be pretty lonely because it doesn't get the attention, the resources or the number of people engaged. So, I'd love somebody to criticize our TB drugs or vaccines or diagnostics and, share their ideas, because TB is back to being the world's biggest killer, and there's just so few people funding the work there that we wish there were more.
You talked about TB, malaria, and you're hoping that we see breakthroughs on both those fronts. But outside of health, the innovations on energy, the R&D work that's happening on Alzheimer's, I know that there's been a large part of your mind space and as well as your resources that have occupied these areas in the last few years. What are you most optimistic about, both on energy, specifically nuclear energy, and the work that's happening on things like Alzheimer's, the tuberculosis vaccine, etc.?
Well, if I had to pick one, I'd say, getting to the bottom of malnutrition and really solving that might get to the top of the list. It's a tough competition because we've got a HIV vaccine, a TB vaccine that you mentioned, a malaria vaccine, all very important. I also support new energy innovation. I do that through for-profit investments, including, for example, TerraPower, that's working on new lower-cost nuclear reactors. And so climate change, avoiding the worst of that, and getting cheaper energy is important. But I'd say the malnutrition would be at the top of the list.
Well, it's clear that you're definitely not retiring anytime soon, Bill. What keeps you going? I know pickleball is definitely not going to be something that's going to occupy a lot of your time outside of the foundation's work. But what keeps Bill Gates going today?
Well, I'm very lucky. I love reading. I love, traveling. I have great sisters and friends, and I love tracking the innovation. Meeting people who are out in the field doing the tough work. So it's fascinating. And, even though we'll have setbacks overall, the possibility of what we can achieve in these next 20 years keeps me going, makes me want to travel and work hard.
And the possibilities that you alluded to, what we're seeing on the AI front at this point in time. But for AI to really address the world's real challenges, healthcare, finding solutions to the many access deficits that exist. What are we talking about? Are we 5-10 years out before we start to see an inflection point on some of these big, real transformational challenges?
Well, there's no doubt in the next 5 years it'll be pretty radical, both in terms of how we discover new things, where the AI will help, and even healthcare delivery, where the patient will be able to talk with the AI and share everything that's going on with them and how they should interact with the health system. And so, no, that's near term. We have a lot of partners who are doing pilots even this next year.
Well, you've been part of the private sector and, of course, then moved to the development world. If I were to ask you for your message to the private sector in the current volatile environment that we're in, to other philanthropic organizations as well, organizations that you're perhaps partnering with or you're hoping to partner with in the future, what would your message be to them? What would your message be to governments today? You said you want to ensure that your voice is heard. What would you tell governments around the world today as we perhaps face what could loosely be called a leadership recession?
Well, the value of helping other people is pretty strong in all the world's religions. And so, that should extend to the poorest, those most in need. And so the idea that we're having less money to buy vaccines for the world's children is a bit of a surprise. And my advice is, hey, let's reverse that and accelerate the progress we've seen, which we should all be so proud of.
Well, Bill, with that, thanks very much for joining us here on the Global Dialogue today. Thanks very much for giving us a roadmap of where the Gates Foundation is headed. It's going to be an accelerated timeline for you to spend $200 billion over the next 20 years. It's a significant amount of money and, of course, a big change as far as the foundation's charter is concerned. Bill Gates, always a pleasure. Many thanks for joining us here. We will take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment with more.
Welcome to a special edition of Newsmakers. The biggest news in the market, other than, of course, the big political news, is SMBC buying a 20% stake in Yes Bank. This means a seminal change for the bank itself. 5 years ago, it was in trouble. Now it looks like the SBI prop is no longer needed. The bank can stand on its own feet and someone is willing to buy it for capital investment. But what other advantages accrue to Yes Bank because of this relationship with a very big global bank, Japanese bank, SMBC? To answer all those questions, I have with me the Managing Director and CEO of Yes Bank, Prashant Kumar. Good morning, Mr. Kumar, and thank you very much for your time. Congratulations first. This is a seminal change for the bank itself.
No, thank you so much. I think it's a very, very significant transaction in the transformation journey of Yes Bank.
First, if you can tell me, when does it get completed? Because I'm still seeing Sumitomo Bank to buy a 20% stake. When do we say they are holding a 20% stake?
So now it would require the approvals from Reserve Bank of India and Competition Commission of India. And we are hopeful that the whole transaction would be completed in the second quarter of this financial year.
Okay, so we understand that at that time, the Japanese bank will be able to appoint 2 directors on the Yes Bank board. Now tell me the journey from there. How does life change for you? Are you, how will you liaise? Will they give you more trading partners? Will they give you MNC clients? What will they give you?
I think the first important thing, there has been a overhang on the bank where the question was that SBI being 24% equity holder cannot continue for a long time. It means we need to have a strategic partner. And that was very critical for us. I think the SMBC, who are the second largest financial banking group in Japan and 15th largest in the world. And they are known for their corporate governance, reputation. They coming and investing into Yes Bank at 20%. That is also a confidence.
Yes.
That is a confidence in the franchise. That is one thing. Second thing, they are, as a strategic investor, always a very long-term investment. Unlike private equities, where always there is a short-term objective, it's a long-term investment strategy. So this investment would definitely build this franchise for future. So we are quite hopeful that this investment would be an opportunity for re-rating of the bank. Because this overhang...
That is discussed.
Yes.
The re-rating is there because you don't need SBI crutch anymore. Somebody has respected Yes Bank for the franchise it is.
Right.
And someone very reliable. I'm asking you for life after second quarter.
No, I think it's important because the life, when we talk about what is going to happen in the future, how it is going to give that kind of support. Re-rating itself would give us a lot of opportunities, both on funding side as well as on the lending side. Because there are a lot of corporates, government entities, who don't place deposits, who don't allow you to work with them unless there is a minimum threshold of the rating. That is one part.
Oh, you expect a rating upgrade shortly?
That's why I was talking about we are looking for a re-rating of this stuff. Because in the re-rating, one of the issues was always in terms of what is going to happen to the SBI stake.
Yes.
That is one part. The second part, that with the re-rating, definitely your funding cost would also come down. Right? The third part, if such a respectable foreign institution investing in you, it also gives you the mileage in terms of opening your door for a lot of other things. In terms of, I'm not saying a direct connect, but definitely the doors for large corporates in doing their transaction banking, in terms of providing our digital solution to them, definitely would open up for us.
You expect more fee income from the third quarter onwards because of trade finance or whatever?
It never happens like this. It's not like a switch. They would come in and the third quarter there would be fee income. This is a journey. But I think this kind of investment would definitely leap forward in the second phase of the transformation journey.
But are you sure of the re-rating very soon? Because it is only 20%. It's only 2 board seats. Can re-rating come like as early as a quarter or 2?
No. So fundamental issue was more in terms of a question from the rating agency was always what is going to happen to the stake of State Bank of India.
Yes.
And everybody wanted to see the entity who is going to replace State Bank of India, whether that would be a long-term strategic player Because if it is not a long-term strategic player,
piecemeal
shareholder. So I think it would definitely give a confidence. The second aspect is in terms of if bank require capital in future, okay, there are no uncertainties. So I think that is also an important point for consideration whenever the rating agencies consider for the rating upgrade.
Any reason why they went for 20? Because we were expecting at least 24.9, as it were, you know, so that open offer is not triggered. There were a set of people who were expecting 26 and open offer. Why, in your opinion, they didn't go for that?
No, I think they can answer that. But the question is always, you always keep a room for certain eventualities. Because the moment you cross 24.99, right, then the open offer would trigger. Okay, if you are having a 20%, and maybe if there is any capital requirement from the bank side, at least there is a room available for them.
Is that the reason why they didn't?
No, I'm not making any comment on this. I'm only saying anybody would definitely, if they know like 24.99 would trigger a open offer, they would just like to keep a room available for any such kind of requirements.
You mean we can always do it later,
yes.
Is what you're saying?
Yeah.
But I'm sure you met the top management of SMBC will have met you several times. They are buying your bank. They are not buying SBI. So more meetings with you than SBI. What is the impression you got? Will they be okay with 26% voting right, but 51% stake? Or, you know, equity stake at 40, 50, whatever, but voting only 26. Will they be open to it?
So my impression is that first, they are very bullish about the Indian banking industry.
Yes.
Very bullish about the Indian economy. And they have respect and the confidence in the franchise which we have built up. Okay? The other part which you are asking is something which they need to decide and take it forward.
Okay. I am still not able to wrap my head around why 20 and not 24. Because I'm sure SBI was willing to give more and all the banks were willing to give more stake. For them, it was only a financial investment. You never tried to crack why not 24?
No, I think it makes sense. Like if you know that you are breaching a particular threshold, you never do that. Okay. You always keep a distance
from that
with the car which is running in the front. No?
Yeah. Okay, what about the stake that they have in Fullerton, or rather now it is called SMICC? They bought that NBFC. Is there a plan to merge that into Yes Bank? Because ultimately RBI is saying all lending business, a bank should not do lending through the bank and through a NBFC. This is not a subsidiary because they are not yet owners, but is that part of the game plan to merge that NBFC?
No, I think this is too early to make that comment because now they are coming with a 20% and they would be like a public shareholder.
Okay, yeah, so they don't get any special reasons. Yes. But will you look at it since it is common management? From your point of view, will it make sense?
No, that's why I'm saying this is too early. I think this is the first time we need to see that how we need to take this forward.
Okay. Will they keep their 3 branches or will that need to be merged?
No, again, it would depend on their own strategy and how the regulator would think about it.
But if they went beyond 25, if they went to 25, then they will have to give up those branches, right?
I think I'm not so much expert on the regulation.
Okay, so that's a question for RBI and SMBC.
They need to answer.
Okay. Now, coming back to your relation with SMBC, have you all drawn up any game plan of regular visits after the deal is completed to improve liaison?
No, I think this would be too early. I think the first thing would be to close the transaction. Their 2 nominees, directors, would be inducted into the board. And I think once that process is over, then we would start thinking in terms of going forward.
Okay. You know, the news that SMBC is looking for a stake in Yes Bank is at least 1 year old. And now, even in the last 1 week, the media was full that it is almost a done deal. It has inched closer. have you already noticed a fall in the cost of funds, a better openness on the part of bulk depositors to give you money a little cheaply?
Lata, you are a veteran in this field. You know much better than me. These kind of news items would not result into any such kind of change in the business dynamics. Okay. It takes its own time.
Okay. Well, just tell me this. What is your new goal in terms of ROA and ROE for the bank, or at least ROE? Now that you have the confidence of capital, can you give us some guidance?
So we actually came out, and this is the guidance which we have given to the investors, that we are looking for a 1% ROA by FY27, and we would like to exit the FY26 with 1% ROA. It means the fourth quarter. Fourth quarter, we would like to exit with a 1% ROA, and for the full FY27, we would be targeting a 1% ROA.
Okay.
So this is our business strategy. I think once SMBC deal is concluded, their nominee director would come. We would definitely, as a part of the annual exercise, we would examine whether there is any need for changing our strategy or changing the goals.
Welcome back to our special edition of Newsmakers. The newsmaker of the moment undoubtedly is Yes Bank. I have been speaking with the Managing Director and CEO, Mr. Prashant Kumar. Mr. Kumar, thank you again for your patience for staying on. Let me come to the actual running of the bank. Have you seen a fall in the cost of funds, considering the kind of liquidity Reserve Bank has poured into the system?
I think what we are seeing last 18 months, there were a lot of headwinds for the liquidity. Okay, we as Yes Bank were able to contain our cost of deposit. If you see last 18 months, our cost of deposit has remained around 6.10%. So we have not allowed it to go beyond that. If you see, our deposit growth has been good. CASA deposit is better than the overall deposit. This year end, we have not looked for any bulk deposits by offering a higher rate of interest. Okay. We have not participated in any CD programs. Our focus was only on the retail deposit. And actually, like if we see the average deposit for the bank in FY25, the growth was 16%. Current account was more than 20%, and saving was 32%. Okay. I'm saying average.
Yeah.
So we are continuously working in terms of improving our liabilities from the retail franchise, and we really don't want to go for the offering the higher rate.
Okay, just after the fourth quarter, have you seen a fall in?
So after the fourth quarter, we have done two actions. Okay, we have reduced our rate of interest on the term deposits, and we have also reduced our rate of interest on the saving banks significantly.
Yes, yes.
So I think that result of that would start happening now.
Will you be able to see improvement in NIMs as early as current quarter, or will it take time because more repo cuts are on the off?
I think the current quarter would be challenging because your loan book start getting repriced very fast.
Yeah.
Whereas whatever you do on the term deposit would take its own time.
Yes.
Right? But what we have done on the saving side would be able to neutralize the negative impact because of the repricing of the loans.
So you think NIMs can be steady?
Steady, yes.
Okay. No change in NIMs.
No change.
What is the extent of your loan book which is priced immediately, which is linked to EBLRs, any external benchmark?
So almost like 60%,
okay,
which would be linked to either repo or the treasury bill kind of things. So 60% is that.
Okay, so that you have that much which will be priced lower.
Yes.
And you think the savings bank cut can neutralize all that?
Can neutralize by and large
for the current
yes.
quarter. Okay, and what kind of an end year NIM or FY20, 26 fourth quarter NIM you think is possible?
No, I think difficult to pinpoint a number. Okay. But if you see that continuously, even for last 18 months, NIMs have not fallen. We were able to protect. Whereas in the banking industry across, we are seeing the NIMs are coming down.
Yes, yes.
And actually for us, last quarter, there was a NIM expansion by 10 basis points. It has moved from 2.4 to 2.5.
No, many congratulations on that.
Yes.
I'll tell you the understanding of the analyst community. There is a lot of appreciation for Yes Bank for the ability to garner liabilities. The way the bank has succeeded in deposits is seen as A-class, but it is not the same in terms of assets. The asset book has repeatedly shown pressure, both retail and non-retail. Can you tell us the breakup in terms of slippages? Where is, how much of it is contributed by retail, how much by non-retail?
You're talking of a growth or slippage?
Slippage.
Slippage, okay. So slippage, like if you see on the wholesale side, okay, there is hardly any credit cost. Large corporate, no slippage at all. Commercial banking, which is the medium corporate, the slippage is hardly 0.2%. Okay. SME slippages are around 1.5%. Retail, we have seen the slippages, which was high. And this is what is happening in the industry also.
Yes.
But what we have seen that Q4, actually it has reached to the peak. Actually, it reached to the peak at Q3. Q4 slippages have improved on the retail side.
Yeah, overall slippage ratio improved.
Yes. No, even on the retail, it has come down in the Q4.
Okay. So you're expecting that in the current quarter,
yes, things would further improve.
The experience has been that even unsecured loans are doing better?
Better than the previous quarters,
okay.
Yes.
Which asset class is going to be your, winning horse? Will it be corporate? Will it be MSMEs, SMEs, or retail?
I think as a part of the transformation of the entire bank, what we have done is in terms of distribution of risk across the asset class. Okay. So currently, if you see, we have the corporates, large corporates, and the mid-corporate, which is constituting almost 40%. Retail and SME together, they are around 60%. I think we would like to keep this mix. Okay. Corporates are growing, large corporate is growing around 10 to 12%. We will be happy with this kind of rate growth. If you see the mid-corporate and SME, they are continuously growing between 20 to 25. Retail, in the last year, it was also a calibrated call not to grow in those kind of assets where there is a higher slippage. So actually only on the retail there was a degrowth in the FY26, and we are quite hopeful that in the current financial year, retail would also grow around 10%. So our objective is to grow the loan book between 12 to 15%, where the large corporate around 12%, mid-market and SME around between 20 to 25, and retail asset would be around 10%.
Are you confident of the quality of MSME? Because every banker I met, not every, or many bankers whom we interviewed after the Q4 are banking on MSME and SME. Of course, they were in deep pain during COVID, and now there is a burst of activity. But if all of you enter there, like in retail, are you expecting trouble?
I think we have been very strong on the SME right from the beginning. Okay. If you see last 5 years, every year growth was more than 20%, and the credit quality was the best. Okay. Even during the COVID time, our SME portfolio has not suffered.
Let me come to the big question that you may have already answered during Q4. How much are you saving on LDR? Everybody had more liquidity deposit because the expectation was the draft rules will have 40%, will have 100% on wholesale loans. And now that has been reduced to 40%. If it is from LLPs, trusts.
Yeah.
Are you saving, where are you on LDR?
So these are going to be implemented from 1st April. Okay. And we have done our calculation. There would be a positive impact on us to the extent of 6 to 7%.
Okay. Yeah. So you can lend that much more.
Yes.
As loans. The expectation of cost to income, because that's substantially reduced in the Q4, you came down to the mid-60s actually, 67%, whereas you were above 70. What is the goal there? By this quarter or half year? Is there anything that you have?
No, I think we would continuously working on both income and the cost side. Okay, and in our 5-year strategy, we would like to bring it down to below 50% by the FY29 and FY30 kind of thing.
Okay, so that's the 4-year plan.
Yeah, 4-year plan, but every year, if you see, like we are not just looking for what is going to happen in FY29. Every year we would be seeing an improvement by at least 5%.
If you have to reach 50, it will be. And this year you have shown, FY25, you have shown a 4 percentage point fall in cost to income. Will that be speeded if SMBC's partnership improves?
Yes, because ultimately our issue is not so much on the cost side, I tell you. Our issue is more on the income side.
Yes.
So I think this strategic partnership would definitely help us in terms of improving our income.
Okay. How?
Though again, income is more in terms of both when you have more lending opportunities and also the fee-based business.
Okay.
So I think since we are very strong on the transaction banking and the digital banking, we would be getting a lot of opportunity to offer our solutions and also a lot of lending opportunity.
Okay, but will it be more fee income or will it be more growth in loan book?
No, so it's a combination. Okay. I would be saying, and this would also be helped by reducing the cost of deposit.
Oh yes, as you pointed out, a rating upgrade.
Another big factor, I think, where the bank was impacted in the past, 11% of our assets were sitting in the RIDF because the bank was not compliant on the PSL.
So even last time, I think it was 7% or something, no?
So it has come down to 7.8%. Okay, it was 11%.
A large number.
Large number, and FY24 and FY25, bank is fully compliant on the PSL.
Okay.
Actually, in FY25, we have sold the excess PSL in the market and earned the money.
Okay.
So we have reached to that situation. So going forward, whatever is lying in RIDF has started coming back to us.
Okay.
That's why 11% has come down to 8.7%. It would be below 5% in next 2 years.
Do you think the Reserve Bank will be equally adventurous, or not adventurous, that's the wrong word, equally bold enough to strike a new path in terms of ownership? Do you see them stuck on 26%, or do you think that now that Indian banks are very strong, why not allow foreign banks more than 26%? You see that possibility?
I think the first part, it's important for, I think, all of us to remember this kind of solution which has come, could not have come without a very active support from the government, Reserve Bank of India, and State Bank of India and other banks. That was not possible. So I think everybody came together, and I think the whole solution was found in an absolutely time-bound manner, which has not been seen in the past. We have been able to take it forward, but your second question, I think that would be beyond my pay scale.
Okay. Well, I'll leave it at that, Mr. Kumar, and I will be back probably at the end of the second quarter when the transaction will be complete and you will be taking guard for perhaps another innings to see how the bank goes from there on. Thank you very much and many congratulations.
Thank you so much, Lata. Thank you.
Well, that's the word from the biggest newsmaker at the moment, other than, of course, the political news. The biggest commercial news at the moment, the Yes Bank transaction. The expectation is that the bank will be able to see, a lower cost of credit simply because there is a large global bank backing it. And more importantly, they're expecting their ROE to reach 1% by FY27. Very welcome moves for investors. Let us see how it goes from here. Thank you very much for watching this special edition of Newsmakers.
The Gates Foundation, one of the largest charitable foundations in the world, is marking its 25th anniversary. Now, the Silver Jubilee comes with a big commitment. Bill Gates is pledging to give away, in his words, virtually all of his wealth over the next 20 years, which means the foundation plans to spend $200 billion over the next 2 decades. Now, this accelerated timeline has meant a change to the foundation's charter, which had stated that the organization would sunset 20 years after the death of Bill Gates. The last big change to the foundation had come in 2021, when Bill and Melinda Gates announced their divorce. Melinda Gates resigned as co-chair in 2024, which left Bill Gates as the sole chairman of the Gates Foundation. Now, from combating infectious diseases to agriculture research and reproductive health, the Gates Foundation has been at the forefront of solving some of the biggest issues in the world today. And joining me now to discuss the foundation's future and his pledge to give away virtually all of his wealth is the man himself, Bill Gates. Bill, many thanks for joining us on CNBC-TV18. And let me start by congratulating you on 25 years at the Gates Foundation. But Bill, why this decision to set yourself a new deadline of 20 years to give away virtually all of your wealth? What has prompted this decision? Why this change from the original position?
Well, looking back on these 25 years, it's amazing what we've been able to accomplish. You know, together with partners, the one statistic of cutting the number of children who die every year in half has been phenomenal to be part of that. And so as I was thinking about that, I decided that we should essentially double down and spend all the rest of the money I'm lucky enough to have through the foundation on these causes over the next 20 years. And that'll allow us to be very aggressive, make some fantastic progress, and, we'll have real clarity. A lot of resources for 20 years, and then others can step in with whatever we haven't been able to finish off.
If I may, Bill, is this decision to accelerate or speed up the giving that you're doing linked to the overall environment that we're currently seeing, where there is a retreat from multilateral institutions, from multilateral arrangements, from development aid? How much of this acceleration perhaps is also linked to the change in the environment as we see it today?
Now, this decision was made before all of these reductions were clear to us. I would say in the short run, it means the work we do is going to be challenged. Although I expect every year we'll have progress in India and some of the countries we work in. In Africa right now, these cuts to the aid budgets, the debt situation, some of the instability means the next 4 or 5 years will be difficult. But over the time period that all my money will be given, I still expect to see pretty incredible progress. So in the short run, I am very disappointed that aid generosity is down. But with the innovations in the pipeline, with, I think, going to people and saying that those aid budgets should come back to some degree, I'm super excited about what we can achieve in these next 20 years.
Bill, you talked about doubling down on the significant resources that you've already committed. $100 billion was the previous amount that you did over the last 25 years in spending. You're doubling down on that, $200 billion between now and 2045. So help me understand, these are big numbers. Prioritize for me how you intend to use this money and what are you hoping to achieve in terms of impact?
Well, the first 25 years, we got child-to deaths down from 10 million to under 5 million a year. And we also took the two other diseases, HIV and tuberculosis, and the deaths were cut substantially for both of those. We also came up with ways to save mothers who are giving birth. And so we're really putting most of the resources into the global health work. We hope to be able to cut the number of children who die more than in half again, and also to make dramatic reductions in all infectious disease. We need to finish our polio eradication. Still a lot of hard work left there, and we also think some other eradications, guinea worm, malaria, a a number of diseases could be taken all the way to zero. And so by having, for the next 20 years, over 200 billion in resources, double what we spent in the first 25 years, we'll be able to partner with, scientists, and we have a great partnership with the Indian government to help them achieve their ambitious health goals. And, this field, the field of global health, will be able to perform miracles, and our resources will be a meaningful part of that.
Bill, you spoke about the ability to deliver miracles. What have been some of the hardest fought battles over the last 25 years? You talked about some of the important outcomes, especially on the global health front, that you've been able to achieve. What's been the hardest part of making those a reality? Resource is one thing. Execution is another thing altogether. What's been the tough part on the execution front?
Yeah, so for the foundation, we both work on the R&D side, so like creating new vaccines. And so, with Serum, a great Indian partner, a meningitis vaccine was one of the first new ones the foundation did. Later, a rotavirus vaccine that was very low cost, a pneumococcus vaccine, then with other partners like Bharat, a rotavirus vaccine that also brought prices down. So it's the vaccine work, both in the R&D and the delivery, is probably at the top of the list of the impact that we've had. Vaccines, you need to keep them refrigerated, you need to make them cheaper, you need to convince mothers to bring their children in. So, there are plenty of challenges just in that one area.
Bill, you talk about India. Now, you've been spending a fair amount of your time here in India. And of course, the foundation has been working in India for a good part of the last 25 years. Let me ask you about what excites you about what's happening in India today. How important is India going to be for the Gates Foundation over the next 20 years?
Well, certainly India's a very, very important place for us. It's our biggest overseas office, and it plays two big roles. One is that the Indian government has very aggressive goals for improving health, and so we get to partner and try out the latest advances in medicine, and that we've seen great results from that. But the actual creation, the R&D of the new tools, whether it's diagnostics, vaccines, drugs, new seeds to help farmers, or ways of taking AI and helping with health and agriculture as well as education. India is going to be a place where there's so many smart people, so much desire to see these improvements that will pioneer a lot of things first in India, and the brilliant work there will then benefit the entire world. Paradigmatic of that is the work in digital finance, where Aadhaar and the ability to pay digitally, India really did an amazing job on that, and now we work with the Indian government to make that available to all countries.
But Bill, you've been spending more and more time here in India and doing lots of fun, interesting things, not just linked to the foundation, but even outside of the work that the foundation is doing. What about being in India, about making the connections here in India, the people that you're spending your time with inspire you today? I mean, is this a new romance with India that started over the last few years?
No, I've always been fascinated by India, and of course Microsoft has had a fantastic relationship in terms of the huge development offices that we have in India, as well as amazing people like Satya Nadella that have come and made huge contributions to the company. And so as I moved from Microsoft to the foundation, I took that understanding of the great talent that's there with me. And so, I get to India on a regular basis and get to meet with the partners there. The majority of the world's vaccines by volume are made in India. We've had, so many important partnerships with that. And that's really growing. The quality of research in India, its desire to go even beyond vaccines with the tools that are provided, it's very timely. And
Hello and welcome to India Business Hour. I'm Shireen Bhan. The top stories that we're tracking for you this evening. The situation remains relatively calm along the Indo-Pak border, but Indian forces on high alert. Prime Minister Modi meets Air Force warriors at Punjab's Adhampur Air Base, reiterates that Operation Sindoor is the new normal when it comes to India's stance on terrorism. The Indian government says that trade did not come up in any talks with the United States on the evolving military situation. This comes a day after President Trump claimed that he threatened to cut trade with India and Pakistan to broker a ceasefire. The government maintains that Jammu and Kashmir issue will be solved bilaterally. Indian equities take a breather after Monday's breathtaking rally. The Sensex and the Nifty dip around 1.5% each. The Midcap index continues to trade in the green. The rupee strengthens against the dollar, but is off early highs on dollar buying by importers. Tata Motors beats estimates with its Q4 numbers, helped by strong traction its commercial vehicle business. JLR achieves the lower end of its FY25 EBIT margin guidance of 8.5%. Also meets its target of becoming net cash positive, but the outlook remains cautious as it points to uncertainty from tariffs and geopolitical actions. Bharti Airtel reports a strong Q4 with revenues rising better than expected, 27% year-on-year. Performance is helped by strong growth in Africa and average revenue per user rising 17% to 245 rupees. Inflation falls to a near 6-year low in April, eases to 3.16%, driven primarily by lower food and oil prices, gives the RBI elbow room to cut rates in June. President Trump lands in Saudi Arabia for the first leg of a 3-day tour to the Middle East, holds talks with the Crown Prince Mohammed bin Salman, covering a range of issues including investments, defense, regional security and Riyadh's civil nuclear program. He will then head to Qatar and UAE. Products from Turkey caught in the crosshairs of the India-Pakistan tensions. Boycott Turkey trending across Indian social media after Ankara condemned India's military strikes on terror camps in Pakistan and Pakistan-occupied Kashmir. Travel aggregators urge tourists to avoid non-essential travel to Turkey. Justice Sanjeev Khanna retires as the 51st Chief Justice of the Supreme Court after a brief tenure of just over 6 months. Justice B.R. Gavai to assume the office of Chief Justice tomorrow. But straight to the top story this evening. The situation along the India-Pakistan border continues to remain relatively calm. However, Indian forces are on high alert. Now, Prime Minister Modi visited Punjab's Adhampur Air Force Base and interacted with air warriors. Adhampur is India's second largest air force base, and it was one of the key military sites that Pakistan attempted to attack last week. The Prime Minister also shared pictures of him with a MiG-29 jet and an intact Russian S-400 air defense system in the background. The pictures debunk Pakistan's claims that missiles from the JF-17 fighter caused heavy damage to the Adhampur air base and in fact destroyed the S-400. So that's a very clear indication of the lies being peddled. In an address to personnel at the Adhampur air base, the Prime Minister said that Operation Sindoor is the new normal and called the Indian Air Force's contribution unimaginable, exemplary and outstanding.
जब हमारी बहनों बेटियों का सिंदूर छीना गया तो हमने आतंकियों के फन को उनके घर में घुस के कुचल दिया। भारत माता की जय! भारत माता की जय! भारत माता की जय! वो कायरों की तरह छिप कर आए थे, लेकिन भूल गए उन्होंने जिसे ललकारा है वो हिंद की सेना है.
That's the Prime Minister at the Adampur Air Base. The Indian government has said that trade did not come up in any talks with the US on the evolving military situation. Now, this comes after US President Donald Trump claimed that he threatened to cut trade with both India and Pakistan to broker a ceasefire. Listen in to what President Trump had to say yesterday and the response that's come in from the Ministry of External Affairs in India.
We helped a lot. And we helped also with trade. I said, come on, we're going to do a lot of trade with you guys. Let's stop it. Let's stop it. If you stop it, we're doing trade. If you don't stop it, we're not going to do any trade.
There were conversations between Indian and US leaders on the evolving military situation. The issue of trade did not come up in any of these discussions.
Well, that is the Indian government saying clearly that the issue of trade did not come up in the conversations between the US officials and Indian officials in any form or fashion in response to what was going on in India and Pakistan. Now, the Indian government has also clarified that Jammu and Kashmir issue is a bilateral issue and it is not open for any third-party mediation. Also making it clear that India will not fall for any nuclear blackmail. Remember, Prime Minister Modi, during his address to the nation and again today in the Air Force Base in Adampur, issued a similar warning to Pakistan. Parikshit is standing by now to take us through where things currently stand. Pakistan being sent a clear message yesterday by the Prime Minister and, of course, being reiterated today. But the significance of the Prime Minister's visit to Adampur, which is a strategic base for the Indian Air Force, Parikshit, and the Prime Minister's images there standing next to the S-400 and the MiG-29 debunking Pakistan's claim that Adampur had been decimated.
Yes, this is India's second largest Air Force base, and Prime Minister sent a very strong message by standing with the air warriors that he backed them fully, that Operation Sindoor against terrorists was successful and India was able to disable and severely damage at least 11 air bases in Pakistan. We also sent out a message that contrary to what Pakistani forces in the media were claiming, Adampur Air Base had not been damaged. Having said that, India has also now gone on to record to counter Donald Trump, who said that he has been a mediator in the India-Pakistan conflict, and he played mediator by offering to trade with both India and Pakistan and told them that if you want to trade and if you want to have trade deals with the United States, then you need to have to stop the conflict. The Ministry of External Affairs spokesperson today went on record to say that the issue of trade did not come up in any discussion with the United States since 7th of May, when we began Operation Sindoor, targeting terror camps on Pakistani soil. On Kashmir, India has once again made it very clear, and this is after Donald Trump said that he's willing to find a solution on Kashmir. Kashmir is and will always be a bilateral issue, and the only thing that can be discussed is when POK can be handed over to India. Having said that, we also have said on record that it was only the force of the Indian firing that made Pakistan rush to the US to seek talks and rush to India to stop and seek DGMO talks as well. On the Indus Waters Treaty, the government has said there's going to be no change. The Indus Water Treaty remains in abeyance as Operation Sindoor is still on. As far as the nuclear angle is concerned, the government going on record to say that we will not be threatened by any blackmailing with the use of nuclear weapons of any sort, and we've made this very clear to everyone around the world as well. As far as hyphenation of India-Pakistan, the government said this is not possible. There is widespread understanding in the global community that Indian civilians were ruthlessly killed by terrorists in Pahalgam, and the world understands that it is important for terrorists to be booked, to be punished for what happened in Pahalgam.
Absolutely, Parikshit. Many thanks for joining us. Now, as a consequence of what has been happening overnight, where there was some drone sightings in a region like Samba, which is close to Jammu and Kashmir, we've seen the impact of that on Indian aviation. Indigo and Air India have cancelled flights to some regions in Jammu and Kashmir, Punjab and Gujarat till today. Now, this despite the fact that the government has opened up the Indian airspace for all commercial operations. Madiha is standing by with more details. Madiha, what are your sources telling you? So, at this point in time, there is no TAM to suggest that these airports are going to be closed for operations again, but yet airlines have cancelled flights, at least for today, to some of these key locations.
Absolutely. There is no NOTAM, and that's a sign of relief. Before I tell you about why Air India and Indigo cancel flights today, the Aviation Minister Ram Mohan Naidu met airlines today to take stock of the situation of how flights were reorganized and cancelled since the 7th of May. So sources tell us that representatives of all major airlines were present at this meeting, and airlines raised concerns about the declining passenger loads during peak travel seasons. We also have been highlighting that airlines are seeing declining passenger traffic. Airlines requested the ministry for ATF relief. We are told that regional airlines highlighted the loss of viability gap funding that they received from the government during the 6 days of flight cancellations and urged the minister to adjust that amount at the end of the route tenure. On the situation with respect to the 32 airports, we had reported yesterday that flight resumptions to the border airports will take some time. Airlines had announced that they will resume flights gradually to these airports, but two major airlines, Indigo and Air India, cancelled flights for today. Indigo cancelled flights to Jammu, Srinagar, Leh, Amritsar, Chandigarh and Rajkot, while Air India cancelled flights to Jammu, Leh, Jodhpur, Amritsar, Bhuj, Jamnagar and Chandigarh. The cancellations probably came after what happened yesterday with Indigo flight. Indigo was the first airline to resume operations to the closed airports with 3 flights yesterday. The Delhi to Jammu flight landed safely. Delhi to Chandigarh flight landed safely, but the Delhi to Amritsar flight had to return midway, and sources say the aircraft wasn't given permission to land after some drones were sighted in the airspace. So both Indigo and Air India have stayed away from border regions for today, and other airlines like Air India Express resumed flights today. The airline started with 4 flights: Hindon, Bengaluru, Jammu, Delhi, Jammu, Srinagar and Srinagar to Delhi. SpiceJet too started operations with Delhi to Srinagar flight today. The airline will also restart Hajj 2025 flights from Srinagar starting tomorrow. So things are crawling back to normalcy given how dynamic and evolving the situation is. But as you mentioned, at least no notices so far to close the airports. So that's a major sign of relief.
Madhya, many thanks for joining us. Well, let's talk about the market action for the day. Indian equities taking a bit of a breather after Monday's breathtaking rally. So we saw the Sensex and the Nifty dipping by about 1.5% each. So the Sensex closing 1281 points low, 346 points low on the Nifty. The bank index lost about 442 points, but the mid-cap still closed in positive territory, up by about 100 points. That is where we closed for the day. But big day for earnings. Let's start with Bharti Airtel, ahead of street estimates with its Q4 numbers, helped by a higher than expected 27% jump in revenue. Net profit coming in at over 11,000 crores, largely due to a deferred tax gain of 4,200 crore rupees. But even adjusting for this, net profit is higher than the widely expected 6,500 crore rupees. EBITDA and margins also higher than expectations. The company's average revenue per user, or ARPU, has surged over 17% to 245 rupees from a year ago period. So that's certainly good news there coming in for Bharti Airtel. Tata Motors Q4 performance ahead of expectations, helped by strong traction in its commercial vehicles business. Jaguar Land Rover achieving the lower end of the FY25 EBIT margin guidance of 8.5%. JLR also met its target of becoming net cash positive. However, Tata Motors has said that the outlook remains cautious on account of the uncertainty from tariffs and geopolitical actions. The auto major has also announced that it had gifted the Curve and the Tiago EV to the Rashtrapati Bhavan. So now you'll see the Tata EVs at Rashtrapati Bhavan. Hero Moto ahead of expectations in Q4 as price hikes boosted margins as well as realizations. Revenues ahead of expectations, up 4% compared to last year. Net profit and EBITDA margins were in line with estimates. The company said it remains cautiously optimistic about its near to mid-term outlook. And on to Pharma. Cipla's numbers largely in line with expectations. Net profit ahead of estimates while margins missed the mark. Net profit rose more than 30%. Revenues up 9.2% on an annual basis. The company's announced a total dividend of 16 rupees for shareholders. So that's Cipla for you. The big macro story today. Inflation down to a near 6-year low for the month of April. The consumer price index easing to 3.16%, driven primarily by lower food and oil prices. Lata joins us now to take us through the inflation internals. Certainly good news there, Lata.
Yes, it's really good news on the inflation front. The number coming in at 3.16 is a 5 or a 6-year low. The last time we saw this kind of a number was in 2019. As well, the food inflation is a 42-month low. The last time we saw this number, this kind of a 1.78% food inflation number was way back in 2021. So both food inflation and overall headline inflation coming in below expectations and coming in at multi-year lows is good news for the Reserve Bank and the expectations of a rate cut. To get into the nitty-gritties, what has clearly surprised the market is that cereal inflation and vegetable inflation are below the March levels, which is a surprise because you normally see vegetable prices rising in April, but they are way below, of course, year-ago levels. The vegetable inflation is down 10% compared to last year's levels. The surprise element has been fruit, which has been rising, but it's a volatile item and it is not very weighty in the CPI index. The core inflation has come in at 4.1%. But if you take away the impact of gold, that also falls to around 3.5%. So really, the Reserve Bank has comfort on all indexes when it meets for the monetary policy on the 6th of June. LPG prices and milk prices were raised in the month of April. In spite of it, the headline inflation is coming in below market expectations and way below the Reserve Bank expectation. That will be another positive. So one can be very sure that with this kind of an inflation number, which is the last number the Reserve Bank has when it meets on June 6th, a rate cut is a given.
Thanks very much. Good news on the inflation front. Now, President Trump has commenced his first trip to the Middle East. His 3-day tour will also include a visit to Qatar and the UAE. Now, this is his first official state visit of his second presidency. Saudi Crown Prince Mohammed bin Salman greeted Trump upon arrival in Riyadh. Tesla CEO Elon Musk, Nvidia CEO Jensen Huang and OpenAI CEO Sam Altman have accompanied Trump to Saudi. Trump and the Saudi prince signed an economic partnership agreement. They also announced cooperation in energy, mining and defense, among others. An industry has written to the Finance Ministry flagging issues with the input tax credit system. Timsy is standing by to explain to us what they are concerned about. What does industry want from the government, Timsy?
Well, that's right. Sources have told CNBC-TV18 that the industry has written to Finance Ministry flagging off issues with respect to input tax credit system under the GST regime. According to the representations, industry has requested reforms including tradability and transfer of accumulated credits. It has also sought that government should consider allowing to use credits for reverse charge mechanism, for releasing payments and much more. Industry says that there is an urgent need to resolve ITC issues and these reforms can lead to a more business-friendly environment. It can unlock capital and will also help drive investments and boost India's position in global trade. Currently, the industry is unable to use ITC due to mismatched outward supplies, which is creating cash flow issues. Also, there are cases with accumulated ITC where industry is facing financial strain due to mandatory cash payments under the reverse charge mechanism. The companies are also facing operational inefficiency due to restrictions of transfer of ITC between distinct entities. The industry is also asking the government that if it can consider aligning this space with international best practices, also allowing companies to use accumulated ITC for reverse charge mechanism payments. They've also suggested introduction of an annual refund system to liquidate accumulated ITC. Also, they've come up with their view that government can consider allowing ITC transfer between distinct entities within the same organization, extending inverted duty refund formula to include service-related ITC, helping cut ITC accumulation, and a lot more. Now to be seen is whether these suggestions actually come down to ground, and if the government actually gets some of these suggestions into action, will they ease the burden that the industry is citing or not? Something that we'll have to wait and watch for.
All right, Timsy, many thanks for joining us. Now, the Supreme Court bid farewell to Chief Justice of India, Sanjeev Khanna, who passes on the baton to Justice B.R. Gavai. Ashmit joins us to sum up Justice Khanna's 6-month tenure, which, though brief, wasn't without tension. Ashmit.
Well, I met with CJI Justice Khanna over a cup of tea just a few days before his retirement. And as a curious journalist, I inquired about the investigation into cash at Justice Yashwant Verma's residence. His reply was curt but pointed. He said, if there's any news coming from the Supreme Court, you can rest assured it's not from me. Words that symbolize his 6-month tenure at the helm of the Indian judiciary. Justice Sanjeev Khanna retires as India's 51st Chief Justice, having taken over the reins in November of 2024. He's had a brief tenure of just a little over 6 months. As he walks out of courtroom number 1 in Supreme Court, taking his seat as India's 52nd Chief Justice will be Justice Bhushan Ramakrishna Gavai. Now, for someone who followed the media blitz of former CJI Justice Chandrachud, Justice Khanna's tenure was unusually quiet. But quiet did not mean without tension. The biggest issue during his tenure was a situation almost out of a 90s Bollywood production. On the night of March 14th, a fire broke out at the residence of Delhi High Court Judge Justice Yashwant Verma. On reaching the location, fire marshals discovered gunny bags full of half-burnt cash. An unprecedented crisis, social media fury and public confidence at an all-time low in the judiciary. Now, to restore lost faith, CJI Khanna followed the mantra, sunlight is the best disinfectant. On March 22nd, in a first-of-its-kind move, CJI Khanna published all the details on the Supreme Court website. The website now had pictures and videos of the cash, reports by the Delhi police, as well as even reports by the Delhi High Court Chief Justice recommending a probe. Subsequently, CJI Khanna appointed a 3-judge inquiry committee which submitted its report within 45 days on May 5th. And by May 8th, Justice Khanna had already dispatched this report and Justice Verma's response to the President and to the Prime Minister. Now, here's what's interesting. As per the Supreme Court's in-house procedure, the CJI is required to refer the matter to the President and the Prime Minister only if the inquiry committee has found substance in allegations and has recommended his removal and the judge has refused to resign. CJI Khanna may have paved the way for a rare impeachment proceeding. Moving ahead, another key feature of his tenure will be the judges disclosing their assets to the public. In a first, on the 6th of May, 21 out of 33 judges disclosed their assets and investments on the Supreme Court website. That figure has now risen to as high as 24. This was seen as another step by Justice Khanna to restore confidence after the Justice Yashwant Verma episode. What makes this unique is that similar resolutions for sharing asset details were floated in 1997 and 2009, but most judges chose to avoid any disclosure or scrutiny. On the judicial side, CJI Khanna left his mark on the Waqf case. In a power move, the centre passed the Waqf Act with much fanfare. CJI Khanna, however, stood in the way. He expressed concerns about non-Muslims in Waqf boards and Waqf Council. He also questioned the government on change of status of existing Waqf properties. Now, Justice Khanna had proposed a stay of this new act. Alarmed, the centre undertook that under this new act, no new appointments will be made and status of Waqf properties will not be changed. Justice Khanna also brought an end, at least for now, to the politics of Mandir Masjid. A spurt of cases and trial court orders directing surveys of mosques and dargahs for remnants of temples had led to religious tensions and violence. On December 12th, Justice Khanna passed orders barring any fresh suits for religious sites and stayed trial courts from passing orders directing surveys. Now, even before he became the Chief Justice of India, he had left his imprint on several key cases. Now, he's ruled that CJIs were subject to the RTI. In a landmark case, he was a part of a 5-judge bench that abrogated Article 370. Last year, he was part of another landmark 5-judge bench that struck down electoral bonds as illegal. Interestingly, he also granted bail to Arvind Kejriwal in an ED case to let him campaign during the Lok Sabha elections of 2024. Now, Justice Khanna has tried to play it by the book as a judge and as an administrator. But with cases like challenges to the UAPA, the PMLA and the CAA still pending, some are asking if, despite his brief stint, he could have done more.
Well, a short stint as the Chief Justice of India, but otherwise a long career there and many landmark judgments that he was a part of. That's Justice Khanna for you. And he's also said very clearly that he will not be taking up any appointments post this. Up next on India Business Hour, products from Turkey got in the crossfire of the India-Pakistan tensions, boycott Turkey trends on social media. That and more when we return. You can catch all of CNBC TV18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. Well, the other big story, Commerce Minister Piyush Goyal will visit the US from the 17th to the 20th of May. Sources tell us that the Commerce Minister will meet US Commerce Secretary Howard Lutnick and Trade Representative Jameson Greer. Abhimanyu Sharma joins us now. Abhimanyu, so the next round of talks between India and the US, tell us more about what is likely to be on the agenda as the Commerce Minister heads to the US.
A fresh round of developments is expected between India and the US for trade talks for a bilateral trade agreement between both the countries, which is being negotiated by negotiators from both the sides. India's Commerce and Industry Minister Piyush Goyal is expected to travel to the United States and speak to the US Trade Representative and the US Commerce Secretary between 17th to the 20th of May. Also, chief negotiators from both the sides would be engaged in discussions from the 19th to the 22nd of May in the United States. It remains to be seen what exactly comes out of these talks and how early both the sides are looking to conclude the first tranche of a bilateral trade agreement between both the countries. Also, the proposal at the WTO for retaliatory tariffs on steel and aluminium is not binding. That is something which sources have indicated. They have added that it's entirely up to India whether it wants to impose those retaliatory tariffs, and India reserves the right to impose retaliatory tariffs after a period of 30 days. And even in the past, there have been instances when India had the opportunity but did not levy tariffs as far as the ones which were proposed before the WTO is concerned. Also,